But only down by 0.1%. Elsewhere, you're getting some positivity return to the FTSE 100, which got hit hard yesterday by AstraZeneca. DAX futures absolutely flat. So it looks like we're going to see a little bit of calmness into the Friday session, but there's still obviously a weekend to come, and we're going to be watching very carefully what happens in the Gulf as a result, Lizzie.
Perhaps not calmness, though, for EasyJet, Guy. It's indicated higher by double digits on TradeGate after that fresh from Apollo. Of course, that beats a rival proposal from Castle Lake, so we're all in the mix now. We'll keep an eye on EasyJet. Also watching Volkswagen. They had this showdown at the supervisory board meeting yesterday. The CEO pushing for job cuts, didn't get them, but they are looking to halve their model lineup after the impasse. So TradeGate not suggesting much of a move, but we'll keep an eye on them. And then also in Germany, Deutsche Bank upgraded to market perform at KBW. Do we see outperformance for the individual shares this morning on the DAX, Guy?
Okay, here we go. Let's talk about the market open. Let's give you an idea of what the numbers are actually going to tell us. We think it's going to be relatively quiet. Look below the surface, though. There could be some really interesting narratives beginning to develop. The airline sector, I think, is going to be fascinating today. We'll see exactly what happens with this extra Apollo bid coming into the market for EasyJet. But keep an eye on the oil story as well. Anyway, let me show you some numbers, give you an idea of what is going on. This is the picture. We're anticipating a fairly flattish start for the FTSE 100, maybe a little bit of upside. Got battered yesterday by Astra. We'll come back to that, I think, over the next few days. The FTSE is, it's expected to be 0.2% higher. Elsewhere, I think you're going to see not a lot of activity. The Stock 600, absolutely nothing to see here. Europe feels, again, after the volatility of the Asian session, like a sort of area of calm. Does that signal something about it as a diversifier, it as an area of reduced volatility, a place to hide maybe from some of this volatility we're seeing both up and down, obviously, with the story surrounding tech? So here we go. Fuller picture. Stock 600, nothing to see here. FTSE's up a little bit more. CAC's doing nothing. AEX is down by 0.4%. We'll dig into the details of why in just a moment. The IBEX has got nothing to show for itself this morning. The DAX is a non-starter yet. We'll come back to that market in a moment, and we'll look deeper into the FTSE 250 for some of the stocks that are moving there, particularly in the airline sector. Lizzie Burton.
Well, let's take a look at the sectoral breakdown. You've got about 3/4 in positive territory this morning. At the top of the basket, basic resources at 1.3%. Autos up 0.6%. And I'm just checking in on Volkswagen. Those shares actually up 0.9%. As I say, they didn't get to a decision on job cuts at that supervisory meeting yesterday. But at the bottom of the basket, energy, you'd flagged that, Guy. If you look at the oil price this morning, Brent is weaker by 0.2%. It's been in flux throughout the session, but $76 a barrel is where we trade. We have reported that the US side, at least, in the US-Iran talks, wants to keep talking despite the strikes both ways. And then we're also keeping an eye on airline and EasyJet in particular. So where are we for that? Not trading yet. So we'll wait for that. But other sectors moving. Tech, bottom of the basket, down 1.1%. So not following on from that enthusiasm that we'd seen for the AI trade in the Asia session.
No, but is that something that tells you, if you're looking for a diversifier at the moment, if you're looking at the tech trade, if you think it's over its skis, if you're worried about the volatility that you're seeing within that space, you come into the European sort of space, you can breathe a sigh of relief, you can sort of sit down, figure out what's going on. Are these assets that represent, therefore, if you are looking for the rotation, if you are looking for some safety, a place maybe to hang out and hide out.
Well, let's call the ref. We can speak to Sophie Wynn, who is Portfolio Manager and Dynamic Asset Allocation Strategist at BNP Paribas Asset Management. Welcome back.
Hello.
Before you sat down, you said it was going to be a quiet summer, which I feel is very confident. Talking of the tech trade, we've had all of this geopolitical uncertainty reignited this week. Some people thinking tech's where I want to be when you have that, because, you know, this is the thing that grows regardless. Do you agree with that? I mean, do you just bat away the geopolitics, look through it and think the two sides have got to come to a logical conclusion because we've got the midterms later and it hurts everyone?
I think I agree with you medium term, as in we're still in this phase where we're in this physical AI stage. There's going to be this build out of data centers, need for power and so on. But in the short term, given the high level of volatility on this high momentum trade, which is the AI trade, how do you go on vacation? So you need to manage.
I'm on holiday next week. Don't say that.
You need to monitor your factor exposure and duration exposure, as you mentioned with Middle East, but also potential ripple effect from higher JGB yield. So I think that means what we've seen so far has been this technical rotation where there's been this factor neutralization because we're going on vacation. But at the same time, I think where are you going to find some safe haven? And if you think about like the Venn diagram of factor exposure, where it's more short momentum, a bit less exposed, and also less duration exposed, I think Europe makes sense in some of the laggard sector where earnings momentum have been more disappointing versus the AI-related stocks. But I think the big, like where you should put your money at this point is China.
Oh, okay. Where in China?
China internet names have rebounded, and if you look at some of the names, the fact that we got all this announcement about data centers investment, so compared to the US peers, it's nothing. As in, like this year, they have been investing 600 billion renminbi compared to 700 billion on the US side. But it's clear that they're stepping up. They have an independent supply chain. They are making an effort to become much more independent on the semi side as well. I think that's where you want to hide as we wait for this factor rotation to finish.
It's interesting. Our big take today is about CXMT.
Yeah, looking for an IPO.
Yeah, and how we don't really know much about it. We haven't really learned much about it as the details have come out through the filings.
Yeah.
And yet this is trying to rival the likes of SK Hynix and Samsung coming out of Korea.
That's an interesting. So how do you invest in China? A lot of Western investors don't know enough about the nuance and the detail to invest there. Can you go single stock? Do you buy baskets? How would you make that move into that market? How specific would you get?
So one way to look at it, so we're still long the China A shares, and they have been lagging peers, and they will benefit from, on top of it, consumer demand recovery because we're expecting more fiscal, and also the property green shoots that will start to appear. But I think you also have some indices that are just purely China internet names. They are trying to find a way to monetize AI. They're investing in data centers, but at the same time, the drag we've seen in the past due to subsidies that was very negative for the cash flow, it's finally behind us. So we're looking ahead in terms of AI. But I think one important point as well is in a world where Europe is stuck in the middle, we could come like in a world where, like the AI frontier models in the US stay in the US, but China at the same time are just 6 months behind. The models are not by their open source, and it could be, like a source of opportunities there.
EasyJet's opened up by 14%. We'll come back to that story in just a moment. Is the Chinese, if I do that, if I make that trade, has the Chinese government got my back? Because it feels like the Chinese government's trying to impose quite a lot of rules around the AI narrative at the moment. Is that going to throttle back the AI story in China? How do I invest around that narrative? They're very keen to make sure that they control the story.
They are investing in terms of the hyperscalers. Like internet companies are investing.
Yeah.
If you look at the power, it's not a problem for them. So they're going to be much more, I think, resilience in terms of infrastructure build out. They don't have any shortage of materials. They have so much stockpile and inventories of energy, base metals. So they're much more independent on that. We're not going to hear about shortage stories, delay of plans. They're powering ahead. I think the only point is, yes, the government is behind, but at the same time, it's going to make like the path a bit smoother. As in, like, you have government support. Yesterday, there was an announcement about utilities companies allowed to invest in data center capacity. I think that's where we're going. So government support, in a way, is not that bad. But I think I'm thinking about, we live in Europe, where are the plans?
Okay. So you like China, but what about Korea? I mean, we're talking a lot about SK Hynix today, all of the oversubscription. Do you read that as a sign of genuine enthusiasm? Do you buy dips when they arise for the Kospi?
We're buying dips, as in, like, we still believe in the AI story, but I think from a portfolio perspective, it's hard to hold on to markets and also names that were highly volatile. And, you know, like, you got this exuberance from the leverage ETF. So that's why we're waiting for the vol to come down a bit at this point, and playing this rotation that could or could not be confirmed by, you know, like the earnings season. So kind of hiding a bit, but medium term, Korea and Asian equities really make sense.
And would you expect that volatility to be imported to the US with the US listing for SK Hynix?
I think it's a hard thing to say, as in, like, the volatility would only, there's going to be only some contagion if you start to see retail investors disinvesting from Korea and buying the stocks in the US. But from a tax perspective, I don't think it's that attractive. So it means that retail investors, I think, will remain in Korea for now.
Can I assume, therefore, you're not wild about Europe in all of this? I just, a bit moments ago, you said Europe is the sort of diversifier, but is China a better diversifier? Where, if you were ranking places to hide out, where would Europe sit? Are there better places to hide out than Europe?
I think second after China.
Okay, second after China.
So it's more like we're looking for the earnings season. The earnings season, if you look at the non-AI sectors, the earnings momentum has started to come down a bit. You got earnings downgrade since the start of the year. So it's not as if, like, you got high expectation on the laggard sectors, such as, like, let's say, auto, discretionary, all the sectors. So if their earnings season turned out to be not that bad, I think that's where you could have some safe haven, like a place to hide, because they are short momentum. I think positioning is quite bearish on them. So that's how you want to rotate at this point.
Nice to see you. It's going to be hopefully a quiet summer, but an interesting summer. Yes. Sophie Wynn, Portfolio Manager at BNP Paribas Asset Management. Call 6 looks a little bit like this. We're certainly watching the tech trade quite carefully. We'll keep an eye on ASML, but there's other big stocks out there that are on the move. EasyJet is one. Vodafone is another. We'll come to that Etisalat stake in just a moment. But as you can see, broadly, actually, some of the big stocks are weaker this morning. ASML is down by nearly 2%. You've got some of the defense stocks under a little bit of pressure. Even some of the kind of safe haven places like Nestle under a little bit of pressure as well. But there are areas of the market that are flying higher. Sorry. Chloe Melly, over to you.
Good morning, Guy. Indeed, as expected, EasyJet is soaring this morning, up more than 13% after receiving that rival offer from Apollo, which is actually superior to the bid from Castlelake. Earlier this week, it looked like it was set in stone that Castlelake would get its way and buy EasyJet, but we've got now this surprise twist, and we can see that this is leading to a lot of movement in that stock. So we'll be watching out for any further developments there, but we're up, very strongly there. Moving on to another big mover in the UK market, and that is Vodafone, which is up 12% after its biggest shareholder, Emirates Telecom, sold its entire 16% stake in Vodafone at a premium. So we're seeing that really boost the shares this morning here in the UK for Vodafone. Moving on to some steel stocks. So we've got an upgrade from JP Morgan, upgrading Voestalpine, Salzgitter, and also ArcelorMittal, and that is really driving those companies this morning. This is a sector that's really already benefiting from the EU imposing those tariffs on steel imports, which is something that is said to kind of safeguard that European steel industry. And so we're up actually very strongly, as we can see here for Salzgitter, up almost 10%. Moving on to Bayer, which is also in the green this morning after selling its minority stake in its contraceptives business to Apollo, which seems that they are everywhere. We're up about 2% on this, and they said they would take those proceeds and reinvest that in their capital structure. So we're up there on the back of that. And finally, let's end on one downside mover. We've got St. James's Place down this morning more than 5% after a report that one of the biggest advice firms within its network had decided to exit, which is pointing to maybe some retention problems at the company. And so we're down quite a bit there on the back of that this morning for St. James's Place.
Chloe, great stuff. Thank you very much indeed. As you say, Apollo, very busy this morning. You got the Bayer story that we're watching carefully as well, plus also this offer for EasyJet that has come through. So where are we trading on EasyJet right now? 667. So just think about kind of where the bids are. You've got Castle Lake at 690. You've now got Apollo coming through at 715. We're still not at those levels. Why is we've seen a big jump higher this morning, but you do wonder whether or not this is increasingly looking like an offer will be successful by one of these firms. Why aren't we trading at offer price? Kind of what is going to happen next? Are there still, and this is maybe what the market is worried about, issues surrounding whether or not either of these two firms can get around the ownership issue?
Yeah, surely Apollo would need a European partner there.
Yeah, it does. And we don't have details on that, but hopefully we'll learn about that next week. But they are going to need to figure that one out. The Castle Lake team have put a couple of Irish guys on the board, and we're hoping that would be enough to maybe get round that. And you do wonder whether this is a kind of short-term story. Do you need to just get the acquisition done, and then you can break it up, and then you don't need to worry about that kind of ownership thing? You just need to kind of tick the box and make sure you can kind of deliver upon that. But yeah, it's like Apollo's decided that it wants to step in with a higher offer. EasyJet got very depressed in terms of the share price. If you take a look, let me just quickly check where the GP is on this one and when we last traded at these kinds of levels. It's not been for a year. Obviously, we've been dealing with the Gulf War, and obviously that's been a factor. But I think you've got to go back until you've got to go back into 2022, early 22, before it was when it was last trading north of 7.
And you have to wonder if there's going to be a different way that Apollo would run EasyJet. I mean, when we had the takeover potentially from Castle Lake, we were reporting that pilots were worried about their job security and who'd be in charge going forward.
Yes. Why are you buying this asset?
Yeah,
are you buying this asset to run it, or are you buying this asset to break it up? The holidays business, you wonder whether there's talk of a lot of people are talking about that being a spin out. That's kind of worth more if you spin it out potentially. But it's been quite successful. So kind of that is one area that you could see certainly that working. But it's got a lot of delivery options coming out of Airbus with the 320 family. Those at the moment those narrow body assets are worth quite a lot. Just having those delivery slots from Airbus is worth quite a lot of money. But you've also got a whole load of quite valuable airline landing slots as well, which potentially... So is this a breakup target? I talked to the Lufthansa CEO a few days ago. I talked to the IAG CEO a few days ago, Air France CEO a few days ago, all telling me, yeah, there's nice assets in here. If they came on the block, we'd be interested. So is this a sum of the parts argument, or is this an operating argument? Do I run it, or do I break it up?
Okay, it's going to be interesting to hear from Apollo when the time comes. But for now, EasyJet shares really flying this morning off the back of this news.
That was better than mine.
I didn't actually mean to do it, I promise you. Look, coming up on the programme, the World Cup with a Bloomberg skew. We're going to be discussing the global sporting contest and perhaps who'll win with Carlos Carranza, Senior Emerging Markets Debt Fund Manager at M&G, who's been building a model to tell us exactly that answer. That's next. This is Bloomberg.
weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
Welcome back to the opening trade. 19 minutes into today's session. Here's how we're looking. The Stock 600 up 0.2%. Not such an enthusiastic end to the week, really. The DAX up 0.1%. The CAC 40 and the FTSE 100 both up about 0.2%. We are seeing outsized moves from the likes of EasyJet this morning, Guy, up 13% off the back of that Apollo bid. So really, it's more exciting when you look under the hood.
It's always more exciting when you look under the hood. OK, I didn't watch the game last night. I hear Kylian Mbappe had a pretty good night, though. A goal, an assist, France are through. I don't think it's a massive surprise. We were expecting France potentially to go all the way. So they've got a semi-final now, beat Morocco 2-0. The results, surprisingly, maybe not surprisingly, was predicted by the Bond Vigilantes team at M&G, who have developed an economic sport model that is called the correct team to go through in 15 out of the 16 games in the round of 32. If you're wondering who's going to join them next, what does the model predict? Look away now if you don't want to know. Spain, England and Argentina apparently will all make it. That's going to make for a much more relaxing Saturday night for me. Joining us now is one of the minds behind the model, Carlos Carranza, Senior Emerging Markets Debt Fund Manager at M&G. Not a sports prediction model kind of builder in his day job. This is the side hustle. Yeah. Okay, so why does this model work? Because it seems to be, I looked at the data this morning, it seems like you're having a fairly good run. So why is it working?
Yeah, so I would say the following. The model is intended to generate two things. The first one is to connect two things we like, which is, for example, football and macroeconomics or financial markets. So we try to think of a connection between the two, and the model is basically a 50-50 blend, where the 50% is using actual football data, where we look into FIFA's ranking of countries in the World Cup, and the other 50% is where we look at macroeconomics of the country, and based on that we look at GDP growth, population size, inflation dynamics, and very importantly fiscal dynamics, which are a key point of discussion when we look at all these games that are coming ahead of us. And based on that, we create this formula where we predict the score. Yeah. But it's important to keep in mind that the idea is to think of a way in which we can connect football that everyone is talking about, but channel that through an angle of macroeconomics. Because
Lizzie's just waiting. She's so sceptical.
No, because all of these brilliant international players from such an early age go and play elsewhere outside their home country. I'm thinking of Haaland, right? Playing in Manchester. Why would the success of the Norwegian team then be tied to the macroeconomics of Norway?
Yeah, it's a fair question. It's a good question. We've been thinking about that ourselves too. Sometimes it's the law of the large numbers. The larger chances you have to fund sports in the early stage of any country, then the higher the likelihood that you can find stars that will eventually play for that country. And then, of course, there's exceptions. There's Messi, for example, is a player that most of his professional career was in Spain, yet he's playing for Argentina. He was born in Argentina, spent his early years in Argentina. But Argentina did not have, at that time, enough money to fund the treatment that he required in the young years of his life. And he was very, very close to playing for Spain in the World Cup. Eventually, he ended up playing for Argentina, but there was a point where apparently there was some debate which country was he going to play for.
Well, yeah, people always ask Haaland if he would have played for the UK had he stayed for longer, yeah.
Right, exactly. So, but the size of the country sometimes, it's less relevant, but the funding towards sports in countries that have been developed for longer, they have a higher likelihood of making a sport a big deal into the country.
Is that why Europe's doing so well?
In part, yeah.
But if it's a numbers game, why isn't the US winning the World Cup year after year after year?
Yeah, it's another question, but I would say the following. The US also, soccer or football,
that's the fundamental problem. They don't understand that you play with your feet. They call it soccer. It's football.
Well, the president thinks if you call teacher, you could win.
But it's true that the US has a variety of sports. It has basketball. It has so many other sports where young kids play. Yeah. It's not just football alone. Other countries have. Argentina has the majority of the kids play football, right? So then that what happens we get cases like Maradona or Messi, right? Whereas in the US, I think they have resources to invest in sports and they have a large population, but they have so many other sports which are more mainstream to their day by day.
So basically, if England win, Keir Starmer can take the credit for it as his final act.
On the economic stability model. Yeah. But you would have thought China, so in theory, China should do very well, but doesn't. You would have thought India do very well, but doesn't. India plays cricket. That's not kind of where they focus their attention.
Exactly. It has to be the main sport that they care about, the main sport that they're passionate about.
Are you surprised how well the model has done in terms of predicting the outcomes?
Well, I mean, in part, there's two things to that, right? I believe the model has had great traction in terms of generating synergies, in terms of discussing stuff, in terms of thinking, how do we think of the macroeconomics of this country versus the macroeconomics of the other country, especially with what's going on today with fiscal dynamics being so important for the world in terms of investing. Now, as for the score of the model, I'm not that surprised because also in football, there's always this randomness component. Yeah. For example, if a team goes to penalties, some statistics say that it's almost equal to flipping a coin. So you put the best team in the world, the team number 1 ranked by the FIFA, and a team number 10 ranked by the FIFA, and they go to penalties. Yeah. And it's almost equal in terms of who can score, because players get super stressed. Messi has missed so many penalties.
Emotion comes into it,
Yeah.
So, who's going to win?
Well, the model predicts only one game per time, so we don't put the full stream. But let me tell you one interesting scenario that we have analyzed. Argentina is one of the top 3 in the FIFA. It has Messi. And France is definitely a very, very strong, probably the best candidate. By far, we've seen an excellent performance in every single game. If you put them together in the final, you will have a football clash, obviously, but you will also have a fiscal clash, because Argentina is the country, one of the countries in the world that delivered the best fiscal adjustment almost in the entire world over the past 2 years. And France has a 5% fiscal deficit, still very large, debt to GDP at 120%. So fiscal clash, football clash, very interesting.
Carlos, it's going to be a big weekend for you and for us. Carlos Carranza there, Senior Emerging Markets Debt Fund Manager at M&G. Well, coming up, SpaceX has shown the might of American space and technology with its record-breaking IPO. That's next on Bloomberg Tech Europe. This is Bloomberg.
Western countries, all of them are cutting funding to Africa. And some of these programs were supported by funding coming from Western countries, like for human resources, for testing, for transportation of samples. And suddenly, African countries have to think how to fund money and to cover this gap. But it takes some time. And I think the combination of all of these factors are fueling this mistrust that we see at community level. We value the support we got and we are still getting from the US. And we think that if we continue to work together, and there is no reason for the US not to work with Africa CDC, Africa CDC is the leader in terms of public health in Africa.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burke.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
You are watching Bloomberg Tech Europe. Coming up, the hype around SpaceX's historic IPO made it the hottest ticket on Wall Street and proof that the US dominates the race for space. Europe's space industry, meanwhile, might lag well behind both America and China, but it's not backing down as it pursues its own path to space autonomy. Those involved in the mission say success will require an all-hands effort from Europe.
We see now, of course, with the IPO of SpaceX that the support of NASA and the Space Force really leads to world-dominating space companies. And this is something, of course, where volume is just as important as excellence.
We speak to European companies and policymakers leading efforts to develop the homegrown space economy, including Hélène Huby from the Exploration Company, the head of the European Space Agency, and the chief executives of Pulsar Fusion and BioOrbit. Welcome to Bloomberg Tech Europe. In this episode, then, we are asking what is needed for Europe to compete in space and whether any of the pieces are already in place or still years away. Europe has world-class satellite infrastructure. It has Galileo for navigation, Copernicus for Earth observation, and major players like Eutelsat, Airbus, Thales, and Leonardo. But the weakness is access to orbit. Last year, the US attempted around 181 orbital launches. China attempted 92, Europe just 8. Europe did actually improve last year, but Ariane 6 is still not a reusable, high-cadence, low-cost launcher on the scale of Falcon 9. That matters because the new space race isn't simply about rockets, it's about overall control of launch, data, and communications. And the region's strength in satellites is offset by weakness in launch and reusability. Europe's aim is not necessarily to beat SpaceX, it's to avoid being dependent on SpaceX.
I give SpaceX less than a 10% chance of succeeding at all, to be clear. In fact, I told people this. I said, look, we're probably going to fail, but, we should give it a try because If we don't, if there's not a new company that enters space, we will never be a truly spacefaring civilization.
The European Space Agency now has a record 3-year funding package, and private investment is picking up, with European space tech startups raising $1.3 billion in 2025. But the gap with the US remains large. So the risk is clear. Europe could be excellent at building satellites, but still dependent on US launch, US platforms, and US low Earth orbit networks. One aerospace manufacturer developing and operating reusable modular spacecraft and keeping Europe in the space game is the Exploration Company. CEO and co-founder Ellen Ubi told me the company's goal is to overcome the barriers currently limiting access to space.
It's all about transportation. Transportation is what is very difficult to master, the highest barriers to entry, so very few are going to succeed. But once you make it, you open space to, of course, Europe, but also as many nations as possible in our case.
What does that full stack in space transportation look like? What is the cadence that you're targeting?
So we've done things a little bit the other way around, because we didn't start with a rocket. We started with the capsule, right? One reason for that is that Europe never had its own capsule. So every time I want to fly an astronaut, we need to give cash to our dear friends of SpaceX. And I kind of, hey, we could use that money to build the technology here and also to inspire people.
What does sovereign and sovereign space mean to you?
So it means for us in Europe the capacity to be a leading space nation with our own technologies.
How big is the gap right now versus the US?
The gap is significant. The gap is significant, especially in space transportation. We are very good in satellites, but the gap is significant in space transportation. That's why we've also, we've been very focused on that, because I want to have an impact where there is a gap, basically, and we can significantly contribute to this European sovereignty. The market is going to go towards very, very big launchers, because on the demand side, you have more satellite constellations, the satellites becoming bigger, and also you have more like exploration demand, and on the supply side, you have Starship. So the market is going to go to very, very big launcher. And if we want to have a capacity in Europe that can serve not only European sovereign demand, but also other countries, because I very much believe in the collaboration across countries, and this is one of the very big strengths of Europe. We've been able to build this collaboration across nations. And with the Exploration Company, I want not only to reinforce Europe as a space power, but also to scale this collaborative spirit worldwide.
Is Elon Musk an inspiration for you?
So he's an inspiration for many great things he has accomplished. I mean, what he's built with SpaceX in terms of products, it's outstanding. And if you want to build something that lasts and something which is among the best in the world, you need to be inspired by the very best. Like, you're a componist, you're going to listen Bach and Mozart and etc. So you can really write the best music. Doesn't mean that you're going to write the same music, right? So this is exactly what we're doing. We are, with humility, learning from the best while building our own style. And we don't want to occupy Mars. We want to build a space future which is more peaceful and more collaborative.
Is SpaceX a catalyst or a major challenger?
I hope they will become a major challenger, because then it means that we will have become also a challenger.
Let me push you on the timeframes then, to get to the point where SpaceX is with their reusable rockets. What timeframes are we realistically looking at for the Exploration Company? Is this something achievable within this decade, Ellen?
Absolutely. Within this decade, absolutely. We plan to fly to the International Space Station with our cargo capsule in November 28. This is the date we have in the schedule right now. So we might have a little bit of delay here and there, but the team is working very, very hard to make it happen. And so far, since company creation, we have accumulated about 10% of delays on all of our programs. We've delivered all of our programs on cost. and we've met our cash target every quarter but once. So it gives you some data points. So I hope we continue that way. For the rocket engine, we again have an aggressive planning, which means we might be a little bit late. But like, because you have an aggressive planning, it means you're going to reach your aggressive goal with like more probability than if you have like a very comfortable planning. So we plan to perform the engine demonstration test end of 28. Again, very aggressive. And then in the business plan that we're sharing with the investors, we plan to fly this very big rocket in 2033. Again, it's aggressive, but this is benchmarked on the industry. You take the best, you take SpaceX, you take Rocket Lab, and you look at how much time they needed to build the rocket and then to build the next generation of the rocket and bigger rockets. We are within this benchmark.
The exploration company CEO and co-founder Ellen Ubi. Now, the man who oversees Europe's space agenda is Josef Achbacher, the Director General of the European Space Agency. He acknowledges that while the United States is an important partner, Europe needs to do much more as it pursues greater autonomy in space.
One is never comfortable with any dependency, because you always have to evaluate, what does it mean and how much independence or autonomy you want to achieve for Europe. And this is something that I have discussed with the ministers just last year when we had the ESA Ministerial Conference, which brought a record budget for ESA, 22.3 billion or 31% more than the previous Ministerial Conference. And the argument of independence or autonomy was a very strong one, that we need to build up our strength, not to be isolated and to be, I would say, alone with our capacity, but really being a strong partner, also for international partners in the US, in Japan, in the UAE, in India, and in other countries. So this is really something where we build up our strength, more autonomy, but also more autonomy to be a stronger partner in global space programs, of which we are having quite a large number.
And to your point, you have successfully increased the funding now available for the European Space Agency as you coordinate all of these efforts. Is it enough, though? Is Europe doing enough to fund its space economy and its space industry?
No, it's not really enough. I mean, we have made huge progress, and the success was quite outstanding, as you mentioned. But if I compare the figures of public funding in Europe with those in the United States, for example, which is always our benchmark, the United States is spending 6 times as much as in Europe. So if Europe has 1/6 of the public funding, that means in Europe it is the European Space Agency, it's the European Commission, it's national agencies and member state activities, then if you only have 1/6, you can be brilliant and excellent, but of course with much less money you can never achieve the same. Or the other way around, of course, if you have much more money at your disposal, you can develop very different space companies. We see now, of course, with the IPO of SpaceX, that the support of NASA and the Space Force really leads to world-dominating space companies. And this is something, of course, where volume is just as important as excellence.
Is SpaceX good for Europe or bad for Europe, a challenge for Europe?
I mean, first of all, SpaceX is, of course, a US company, but it operates globally. I take a lot of inspiration and a lot of motivation for Europe to really see what can be done with a very, I would say, a very ambitious, a very aggressive schedule and a very aggressive set of goals. So I have been in SpaceX quite a few times. I know their factories, also the leadership pretty well. We have also interactions and cooperation with SpaceX. For me, it's really something that helps us also in Europe to say, look, this can happen if you do a number of things right.
And above and beyond funding, and maybe that is key, what would be your 1 or 2 priorities in that clarion call for governments around Europe to support this ecosystem, the incumbents and the startups? What would you prioritize to them? What would you say needs the most urgency right now to support that ecosystem?
What is needed is always funding. This goes without saying. But what is also needed is acceleration. We need to be simpler, faster, sometimes a bit leaner in the processes. and certainly avoid fragmentation. That means that member states of within Europe, of the European Space Agency, have to work together in one common project rather than doing it nationally, because fragmentation also weakens us. And in times like these, where security pressures, economic pressures are so high, we need to stick our heads together, and united we can be extremely strong.
Okay, that was Josef Aschbacher, Director General of the European Space Agency. Coming up, I speak to the leaders of two firms making big bets on the growing space economy. We're going to hear from Richard Dynan from Pulsar Fusion about his ambitious plans for orbital energy, and Katie King from BioOrbit joining me in studio to discuss developing new medicines in space. That is next. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Welcome back to Bloomberg Tech Europe. Now, Pulsar Fusion is a British company that builds Stage 2 propulsion systems. These kick into gear once a rocket has delivered its cargo or satellite into orbit and are designed to operate in the vacuum of space. I spoke to CEO Richard Dynan about making the economics of space work from the UK and his ambitious plans to develop fusion power in space.
So for us, we need to be in a situation where we're delivering 30 engines a month to clients, which doesn't actually sound like a great deal. But these engines have to be built in a clean room here in the UK. They then have to be qualified in a vacuum chamber and delivered to various client satellites. So doing this at scale is the challenge.
And you will be shipping these products from next year. Can you tell us about your clients, your customers? What is driving that demand?
It's the demand of, as the access to space gets cheaper due to launch technologies improving, it means that all these nations are looking for their own sovereign capacities of satellites, and whether they want their own Starlink or they want their own constellations. All of these satellites need their own engines. On top of that, the market starts to look at a cis-lunar economy or a cis-Martian economy, and people deploying assets further out into the solar system. All of these depend on their own maneuverability and their own stage 2 engines. I think the market has never had such a demand, and I think it's actually the supply of engines that can restrict what missions are possible at the moment.
To what extent has the innovation that we've seen at Blue Origin, at SpaceX, the focus on data centers and space, been a catalyst for your business in terms of driving interest, in terms of driving customer interest, investor interest?
I mean, it's been absolutely enormous. I think, as you know, we've been doing this for 15 years now, and I can tell you that I think suddenly seeing that the appetite, we know how many times have we used a satellite today on the way in, you know, for just getting here, for checking the weather. Several mobile apps are using their own satellites. A lot of this technology needs to be replaced. So again, for England, this is a very big opportunity because we don't have a launch provider like a SpaceX or a Blue Origin, but we do have skill set to manufacture these stage 2 engines and the plasma physicists and sort of key personnel and talent pool. And it's Pulsar's ambition to be the first company to do fusion in orbit, and we have every chance of doing it.
This is fusion in orbit by 2031 is the target.
We want to demonstrate fusion in orbit by 2031.
Okay, that was Richard Dinan, CEO of Pulsar Fusion. So from energy in space to medicine. UK startup BioOrbit is making a bold bet that by sending drug making towards the stars, it can help save lives and billions of dollars potentially from health providers like the NHS, and potentially pave the way for novel cancer treatments that are easier to use. The company has a lofty goal. It wants to harness weightlessness or microgravity to produce protein crystals that could pave the way for cancer treatments that people can inject at home instead of receiving by IV. In March, BioOrbit won a £250,000 contract from the UK Space Agency to develop the technology. Katie King, BioOrbit's co-founder and CEO, is with me now in the studio. Katie, thank you for coming in. When I was talking to people about what you do, people who are not in your space, in your sector, excuse the pun, there was kind of befuddlement. Wow, that sounds like science fiction. But you have come through with a really important proof point just in the last few months. Talk us about the progress that you and the team have made.
Great. Hi, Tom. It's great to be here. Thank you for having me. It's a really exciting time for BioOrbit. We've just launched a record-breaking mission to the space station, producing the largest scale production of protein crystals in a space environment by one order, if not 2 orders of magnitude. And this is a necessary stepping stone towards taking those cancer treatments and enabling them to be self-administered at home.
Why is this so important, and what can space allow you to do that we can't do back on Earth?
So to get a self-administered cancer treatment, you need to take all of that drug from that IV bag and get it into a small pen, tiny, tiny volume. And that is a huge challenge to do. The solution to that is making crystals of these drugs, and it can get it really concentrated in that small volume. The problem is that gravity inhibits that process, so we cannot achieve that quality of crystal here on Earth. We need space to make that happen. So at BioOrbit, we are taking it from small-scale R&D into a scalable production of these crystals so that we here can benefit from it.
Okay, so you sent these up. They've come back down. They were up there for about 6 weeks in space, launched via SpaceX. You're now analysing what you were managed to achieve up there. Success, what does it look like? How does it set you on the path going forward? What are the next milestones that you hope to achieve?
So with this mission, it was successful with what we set out to achieve. We have shown that crystals can be produced in a continuous way that's scalable for the future. So this is a massive step change for the industry away from this experiment into production. And so for us now, the next step will be to test the capabilities and the limits of the system. Crystals can bring benefits to a wide range of drugs, not just the oncology drugs. So we really want to see which of these other markets that we can also bring benefit to.
Okay, so you talked about scalability, because cynics would say that that's one question, is how do you scale this? And they may also bring up the question of cost. How do you make this cost effective? How do you respond to those?
Yes, so when we think about factories, we think of massive football field type factories. The fact is that for this, we're just doing the crystallization step. So the factory is about the size of a microwave. And so to hit global scale production of these crystals for, say, Keytruda, world's best-selling drug, we would need maybe 10 or 15 of our microwaves to then be able to form the correct quantity of these crystals. So that's possible. And with how infrastructure's changed and cost of launch and cost of return has plummeted, scale is possible. It's not science fiction.
What is the timeline then between what you're doing now, the progress that you've made, the proof points that you've achieved, and us actually getting access to drugs that have at least partly been made and produced in space?
So before anything can be given to a patient, to a human, everything must be regulated.
Yes.
So we have to produce these drugs just in the same way with regulation as any other drug that's produced. And so that's the first stepping stone. We're working with the MHRA, with the Regulation Innovation Office, UK Space Agency, and CAA about this roadmap to what does pharma production in space look like. And the UK is leading globally on this.
Are regulators aligned with your vision? Are they proactive?
They are incredible. The UK has been fantastic. Yes, they are backing it, and we see the benefits of this and want to make it work. So again, we're working with the regulators so that that is possible, and that is really where the UK will win.
Okay. So in terms of getting these drugs onto the market, are we talking early 2030s potentially?
So we have to go through these trials first. So for regulation by the end of the decade, and then we can go into these human trials. So then it will depend on if we're taking a drug that's already in existence, then that's an accelerated process. If it's a novel drug, it will take a bit longer, but we're looking at 10 years.
Okay, about a decade away. Are you partnering with pharmaceutical companies? We've obviously got some significant strengths in the UK when it comes to pharma. Is that something you're working on?
That is definitely something that we're working on. Again, working with big pharma to then bring about and unlock these new drug formulations for their pipeline and their portfolio.
Okay. What is the investor appetite? You're backed by the likes of Local Globe, who are really significant investors, particularly in deep tech. Are you raising capital again? It's capital intensive, presumably. What is the state of funding right now?
So because we're just focusing on the product and we're not doing end-to-end, the capital required is less than if you were building a rocket company.
Okay.
So that's a really key point because the infrastructure's there. We will be raising at some point in the near future, again, to take us to our next step, to then scale and then to be able to work with all of these pharma companies. So that is the next step for us.
You work with SpaceX very closely. Are they a good partner? Do we need a SpaceX? Do we need the exploration company, what LNUB is doing? How important would that be for your business?
It's so critical. It's infrastructure. And once the infrastructure's there, they were effectively being our courier system to space and back from space. So then companies like BioOrbit and others can then use that infrastructure. They don't need to build it themselves and then bring about the new markets and new applications of using space.
Okay, so you're at the application layer, they're at the infrastructure layer. Europe needs to play its part as well. Focused on oncology right now. Do you expand that portfolio into in the future? What are your ambitions beyond the oncology?
Yes, so again, the benefits of crystals, one of them is to then turn IV treatments into self-injections. Another one is extended release rates. So if you have injections that you have to typically take daily, through using crystals, that could become a monthly injection. So for the same technology, there are many benefits that can come depending on the drug class. So we will be that expert across the board when it comes to crystals.
Okay, really fascinating. Thank you for giving your time and explaining the progress that you and the team have made, of course, and the potential future as well of this technology. Katie King, co-founder and CEO of BioOrbit. That is it for this edition of Bloomberg Tech Europe. In the next episode, we're going to be looking at how Europe's robot revolution is changing the future of work. Join us for that episode. August the 14th here on Bloomberg Television. That is it for Bloomberg Tech Europe. The Pulse is up next. This is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance. Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Newsmakers and market movers. This is The Pulse.
Good morning and welcome to The Pulse. I'm Tom McKenzie in London. These are your top stories. Nasdaq futures pointing lower after the AI rally returned to Asia. SK Hynix makes its debut today, confirmed as the biggest ever US listing by a foreign company. EasyJet shares jump after the budget carrier receives a surprise offer from Apollo that sets up a potential bidding war with Castle Lake. The yen gains after the Japanese finance minister calls on pension funds to invest more in domestic assets. Meanwhile, Goldman says carry trades face the best conditions in more than 2 decades. Plus, don't miss our exclusive interview this hour with the Spanish economy minister, Carlos Cuerpo, as Spain calls for Europe to pull more of its debt. Let's get to the markets then. We said in the headlines, pointed out that Nasdaq futures then, after the gains of yesterday, currently pointing lower by around 0.5% of a percent. We're getting a redhead across the terminal as we consider what is happening cross-asset across these markets. UAE oil output hitting a record of 4.1 million barrels per day in June. Barrels per day, 4.1 million barrels per day. Let's check in on the oil price then. You're currently looking at Brent at $75 a barrel, down 1%. WTI at 71.34. The Japanese yen in focus. Strength today then on the back of those comments from the Japanese finance minister. We'll unpack that story for you throughout this hour. Currently up 0.4% versus the US dollar, and it's the weakness in Brent that is giving some relief across the fixed income markets as well, at least for today. Let's take a look at the European markets map. Across the benchmark, the stock 600 is currently essentially, well, it was flat, now it's up about 0.1%. You're seeing the gains coming through for the FTSE 100, up 0.2%, pretty modest, just adding 22 points. Stronger gains over in Italy. The FTSE MIB is up 0.5%, and 0.4% is the gain coming through on the IBEX over in Spain. The DAX in Germany at 25,145, just adding 20 points so far in the session. So modest upside coming through for European equities broadly across the board. Now, US futures pointing low then after another volatile week, of course, despite sentiment getting a boost from SK Hynix, raising $26.5 billion in its ADR offering. Shares start trading today. Let's bring in Bloomberg senior strategist Neil Campling for the details. Neil, there is strong investor appetite, it seems, then, for SK Hynix. What does it tell us about the broader sentiment in this space? How much, and what kind of indicator is this listing giving us?
I think one of the indicators we had into the deal, Tom, is we've seen the likes of some of the Mag 7 stocks, in particular NVIDIA, as being a funding trade and positioning trade to allow some of the investors to prepare assets into this listing. There's clearly huge appetite for the memory trade. The memory stocks themselves, Hynix and Micron, trade at very low valuation multiples relative to the market. There's reasons for that around cyclicality. But in terms of giving access to the liquidity here, from discussions with clients, we actually felt there was more institutional interest potentially in this trade than there was actually in the SpaceX IPO, because this is an established AI business in terms of the HBM4 memory chips that go into AI, as opposed to SpaceX that is at the early stage of building out its own AI platform. So it's of huge interest. One thing, though, to be aware of is that investors are cautious on, I think, in the medium term, is around volatility. These stocks are very volatile relative to the market, and that's likely to continue when you think that, as Bloomberg reported overnight, there are a lot of leveraged ETF funds that are going to be partaking in this memory listing to have Hynix on the list. So, and potentially, there could be a way of Hynix moving into the benchmark chip index, the SOX index, in due course this year as well.
Yeah, that's interesting, isn't it, in terms of what's happening with the leveraged ETFs, and we've seen, to your point, the role that they played in the volatility, arguably, at least when it comes to the Kospi. Neil, what is your sense? Are we getting any signals that this opens the door for other Asian companies looking to list in the US?
We've been down this route before, Tom, but I think what we need to be a little bit cautious here, because this particular listing tapped into the AI trade, it tapped into memory, it tapped into momentum, and it tapped into parts of the market that there's huge appetite for. If you look at other Asian companies, there's less obvious routes to US listings, especially when a lot of the kind of tech positions that are there are around sort of some of the Chinese blacklisted companies and stuff. So I wouldn't necessarily mean it opens the floodgates for listings, but if there are some unique opportunities that play into the same types of the part of the market that there's appetite for, then it might well do. It's something to keep an eye on, but I wouldn't expect a deluge of offerings to come to market, to be honest.
Okay, maybe not a deluge, but something to monitor. Neil, thank you for the context, the details as ever. Bloomberg's Neil Campling. Meanwhile, Bloomberg's Ed Ludlow will be speaking with the SK Group chair. Catch that interview at 3:30 p.m. London time today. That is one certainly to mark on your calendars. Make sure you tune in for that conversation. Now, to talk about some of the concerns around AI CapEx spending, let's bring in Marina Zavalok, Chief European Equity Strategist at Morgan Stanley. Marina, good morning. Always lovely to see you. Thanks for coming in this Friday. How are you thinking about the AI trade right now and Europe's place in that story?
Yeah, I mean, I think this is a healthy pause. We were seeing parabolic rises in some of these AI CapEx share prices, especially in the US, but also in Europe. if that continued, we'd be reaching the end of the cycle pretty soon here. So I think this debate on, whether we're at the end of the cycle is a healthy debate. It tends to happen as we go up into the end of the cycle. I don't think we're there yet. When you look at indicators like M&A, even if you look at IPO volumes, we're not at peak cycle levels. We're going to get there, at some point, but we're not there yet.
Is that a this year story? Is it more of a 2027 story? Timelines I know are difficult to pin down. But
M&A, like we published this in our note today.
Yeah.
If you look at global M&A volumes, and you draw a line across the peaks, we're like 2/3 of the way to a peak. I'd be more worried if we were at that peak, then we'd be evaluating this a lot closer. Earnings trends are really positive. A lot of the AI kind of spenders on AI are actually upping their CapEx guidance at the moment. So I'm generally not concerned, and I think it's healthy that we have a pause and we have this kind of choppy sideways trading. But in Europe, going back to your question, the perception is we don't have AI. We do. We estimate about 14% of the weight of the MSCI Europe index is direct AI CapEx beneficiaries.
And those are companies that play into the data center and infrastructure story.
Exactly. Yeah.
Okay.
And they tend to have exposure outside of Europe. So to the buildup in the US and Asia.
Is that underappreciated still? Is there a valuation gap? Is there still an opportunity for investors to get exposure to those names?
The valuations on most of those names are high. And we have this kind of scarcity premium in Europe among those names. But I think from an earnings point of view, some of those names like European semis, the earnings trends are just starting to take off more strongly, more sharply compared to the US. So you're going to have that a bigger earnings kicker, I think, in Europe.
Okay, so there's a catch up.
Yeah, on the earnings front.
And investors maybe can get exposed.
Yeah.
Yeah.
Plus we have less levered ETF exposure, so the volatility is not as high. Positioning is not as high.
Which ties into, of course, what Neil was talking about when it comes to SK Hynix and the story over in Korea in particular. You talk about a barbell approach.
Yes.
Explain that. What is the rationale for that? And what's the conviction in that barbell approach?
Yeah. So with this pause in the AI CapEx trade that we've seen recently and the volatility and the levered ETF exposure, what I've been noticing is investors are coming to me, non-dedicated investors, for the first time in a while since earlier this year. And they're saying, I love the AI CapEx trade. I have a lot of that in my portfolio already, but I'm concerned about this volatility. It's impacting, my risk-adjusted returns, and I need to diversify. And I see Europe as possibly a good diversifier. And so we are recommending an approach of you hold on to the AI CapEx plays, but you also diversify. You go back to, you stop ignoring the kind of multi-year compounders, the areas where fundamentals are improving. So you have a bit of both. And having those non-AI compounders allows you to reduce the volatility in your portfolio. And we're seeing demand for both sides of that trade. And we've been recommending broadening, and you're seeing, like we just published our earnings preview for Europe today. We're really constructive. Earnings strength in Europe is led by the AI complex, but you have broadening elsewhere as well. So you have quite a lot of strength outside of the AI complex as well.
You're really constructive on European equities.
Yes.
Part of that is being led by the AI stories you just said, but there's a broadening.
There's a broadening.
Does that broadening continue if the energy and inflation shock comes back? This time last week, it was all about lower oil prices, lower yields, maybe an expectation central banks can be on hold. That has been put into question again as a result of the geopolitics and Iran and the Strait of Hormuz. What is your level of conviction that we can broaden out and diversify, that we can broaden out the trade in Europe if oil prices come back up, if inflation becomes a challenge again?
Yeah, so, part of our constructive view on Europe is inflation. So I think in contrast to popular perception, inflation is good for European equities in particular. We have a lot of real asset exposure. We have banks exposure, but banks benefit from inflation.
You're overweight banks?
Yeah, we're overweight. That's our primary, our number one diversifier recommendation is banks, but then we have more broad exposure. We have that AI CapEx exposure, also inflationary. So if you add up the areas of the European earnings pie that benefit from inflation, 60% of the European earnings pie. So I think people don't realize how much we benefit from inflation. Consensus earnings growth for Europe this year now are 17%. the last time we were anywhere near this was 2022. The last time we had inflation and kind of moderate low growth. So inflation is great for European equities, just given the exposure of the index. And then people were getting really excited, and I saw some of our competitors were saying, you know, oil's going to go down to 60, or clients were saying maybe we go down to 50. I think actually if we stay 70 to 80, that's actually a very, very healthy range for European equities, given our exposure. We need a little bit of inflation to keep earnings healthy, and margins have just broken out to all-time highs in Europe as well.
Okay, 70 to 80 could be the sweet spot for European
equities. Is the
equities.
sweet spot, yeah.
Overweight banks and with a barbell approach. Marina, really fascinating insights on these markets and how to position. Marina Zavalok, Chief European Equity Strategist at Morgan Stanley. Now, EasyJet shares soaring this morning after the airline received a fresh offer from private equity firm Apollo. Let's get more and bring in Bloomberg's managing editor for space and aviation, Benedict Carmel. Benny, a surprise twist then in this takeover saga. Did you see this coming? Did we see this coming? What happens next? How real is this offer from Apollo?
No, I absolutely did not see that coming. I was just settling into my desk this morning when the offer came, so a surprise. We thought that over the weekend, EasyJet and Castle Lake had reached an agreement. To remind everyone, Castle Lake has sort of been the original suitor. They had, for the past month, sought to take over EasyJet and made a number of offers, and the last one over the weekend seemed to get them over the line. And then suddenly, out of nowhere, literally, Apollo comes in this morning and says, we are offering more. It's also interesting that they are sort of striking a very different tone. They're quite sort of consensual and say that they are sort of on EasyJet's side. They want to keep management intact. They want to keep the brand intact. That obviously speaks to some of the concern on the EasyJet side that the company would be broken up under Castle Lake. So Apollo trying to sort of be a sort of the friendly owner, shall we say, and obviously offering a higher price. £7.15 is what they're offering, and that compares to $6.90 on Castle Lake.
Benny, thank you very much indeed for that update on that Apollo bid, and we'll see, of course, how that story transpires. That friendly offer then coming through from Benny, and clearly the stock price, EasyJet, benefiting on the back of that story. Our aviation lead, Benny Carmel, joining us with the details. Coming up, how US-Iran tensions and the AI trade are playing out in emerging markets. We're going to discuss with Felix Callan, head of EM research at SocGen Corporate and Investment Banking. Stay with us for that conversation. This is Bloomberg.
up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Japanese bonds rallying this morning. The yen also rebounding from multi-year lows after the finance minister called for Japanese pension funds to invest more in domestic assets. Let's get more from Bloomberg senior editor Brian Fowler in Tokyo. Brian, some pretty significant, sizable moves, particularly when it comes to JGBs, and we're seeing that with yields down pretty sharply on the back of these comments. What is the thinking then behind this call from the finance minister? Was this a non-scripted and unscripted moment, or is this a thought-out plan from the Ministry of Finance to get those domestic flows going?
Yeah. Tom, I think the context is important. So she made these comments at a regular post-cabinet meeting press conference. She talked about various other things as well, BOJ independence among them. And so it's not like she said, stopped everybody and said, hey, I want to announce this initiative. She was asked a question about the growth strategy plan that was announced last week. That's the one where they're going to spend a couple $1 trillion investing in 17 key industries over the next 14 years. And the question was, well, what does that do for ordinary citizens? And Katayama's response was, well, I would like to encourage pension funds and individuals to put more investment in domestic assets. The thought being presumably that if the CapEx boosts the values of these companies, then that would boost the stock valuations as well. So it's not really clear how far she's thought this through. It came across a little bit as an off-the-cuff remark. On the other hand, it also comes against the backdrop of consistent inflation now in Japan. First time we've seen that in a while at 2%. Benchmark rate at 1% at the BOJ. So there is definitely a sense on the government side that individuals really need to be invested more in financial assets if they want to keep up with inflation.
Brian Fowler, thank you very much indeed with an update out of Tokyo and what we've been hearing from the Japanese finance minister, of course, Bloomberg senior editor Brian Fowler in the Japanese capital. Let's check in on Japanese assets then before we bring in our next guest. As I mentioned, yields down sharply, bonds are bid, JGBs are bid. You're looking at the 10-year yields down 13 basis points, yielding 274. And the Japanese currency, as you can see, 161.70, so up 0.4% versus the US dollar. But will this be sustained? How real is this, given that the yen has been at near 4-decade lows? Let's bring in Phoenix Callan, Global Head of EM Research at SocGen Corporate and Investment Banking. Phoenix, good morning. What do you make of what we've been hearing from the Japanese finance minister? Relief in terms of the pressure we've seen on the yen, or is this going to be short-lived?
I think it makes sense for them to want to try to encourage for domestic investors to invest more in local assets, because that's going to help equity prices and also bring down bond yields, which is going to alleviate some pressures on the fiscal side. So it's important to try to do that. Ultimately, I think the growth equation out of Japan is still really lackluster compared to other DMs like the US. And I think in terms of those underlying fundamentals, it's still not great to have a context where you can have sustained appreciation. So I think we're likely to see still interventions in the Japanese yen to try to get it to strengthen. And we can see that over the course of many decades, if you have periods of very sustained, strong appreciation that goes well beyond kind of the fair value models, that can actually cause the seeds of there to be huge unwinds that can last many, many years. And then we get huge periods like right now of sustained depreciation. And you don't want for that to go too far, because the farther it goes, the more painful it is on the way back, as you have these multi-decade cycles through the yen. So I think for us, we're expecting for more interventions, but we don't think ultimately at this point, because of the growth dynamics, that is going to be very effective. Okay, so more interventions, they won't be effective. So then the spotlight shifts back to the BOJ. I mean, is this a BOJ that's behind the curve? Do you expect them to hike more aggressively than maybe the markets are expecting? What is the cadence for the BOJ then? Yeah, I think they have to kind of approach that quite cautiously, right? Yeah. They want to defend kind of the growth that they're nurturing in the market, and at the same time kind of fight against the inflation pressures, but they are going to be quite cautious, we think.
Okay. From the yen to the Korean won, there's SK Hynix listing, some reporting suggesting there's going to be flows back into Korea. Maybe that's going to be supporting the Korean currency, which has been also at decade lows and been under significant pressure, despite, of course, this historic rally that we've seen for the Kospi. Part of that is portfolio rebalancing. What is the trajectory for the won? Does the ADR of SK Hynix, to what extent is that supportive for the Korean currency?
Yeah, I think that has been quite supportive this week in terms of those flows. Yes, and in terms of the investments that come on the back of that. But overall, what we've seen is that the dynamics around the Korean won has really shifted from something that's more trade related to now something that's much more portfolio flows related. So whenever we have the huge kind of upswings in Korean equities, as we've had over the course of the past 12 months, then you have these huge rebalancing flows from foreign investors to take money out and try to rejigger between the Asian markets. And so that causes outflows and weakens the won. And at the same time, on the other side, if you have periods of risk off, that also causes outflows and weakness in the Korean won. So it's impacted by all of these kind of external dynamics one way, which is weaker.
Korea is energy dependent, so there's a challenge there, of course, when it's buying so much energy, and the Korean won at the levels that it's currently at. It's a boost for manufacturing, but a challenge in terms of the inflation story and the energy cost story. Is there a policy response on the back of this? Do we expect intervention from the Korean finance ministry?
We have actually seen intervention this week.
Yeah.
We are expecting for them to continue interventions. We're expecting for them to continue rate hikes as well. So rate hike at the next meeting, July 16th. That will help to curb a little bit of the pressure, but overall, it's still one in which we're likely to see short-term more weakness in Korean won.
What else are you seeing? What are your favorite trades, favorite FX crosses now in the space, in the EM space on which you focus?
Yeah, so our favorite trades are very much in LATAM, especially. So we still like the terms of trade kind of buy the winners theme. So we're still expressing that via a number of long BRL positions. So long Brazil versus Euro, long Brazil versus Chile, long Colombia versus
And that's
Chile.
a balance of trade story.
Yes.
That's a commodity story.
Yes.
And what assumption?
It's a carry story.
It's a carry. It's a carry
huge
story.
Carry story.
Okay. And there's the window is open for that carry story.
Still, very
for the
much
BRL,
so.
still.
Yes. BCB is still relatively hawkish.
Yeah.
Market is actually pricing in more hikes for the BCB later this year. And so, yes, that carry story is still going to be there and still is quite substantial. And on the political dynamics, of course, Brazilian elections in a few months, that is causing some consternation about headline risk, fiscal loosening. We think that because the market has actually largely priced in a Lula win, then that removes some of the risk around further currency depreciation, because this is what is already anticipated.
What assumptions are you making about the greenback, about the dollar, then, as you look at the EM space?
So we're expecting for the dollar to slightly appreciate, but that appreciation we think is going to be more against the DM currencies than against the EM currencies. So we think in LATAM, a number of those currencies are likely to appreciate against the dollar. So MEX, BRL, COPI. We think that, some of the Asian currencies might depreciate against the dollar. So most of the bloc outside of China will probably depreciate.
Okay. Is it a balance of trade story when it comes to Central and Eastern Europe? What are you looking at when it comes to CEE in that space?
So in that space, it's more about kind of the tension between how much the central banks are now having the scope to continue some easing. As oil prices are kind of medium-term much lower in expectations. And so, there have been some indications like from Poland this week, right? They were much more dovish than expected, and that hurt the currency. But overall, we think that the currencies are broadly going to be quite stable there in that space. And so, there would be some opportunities to still get back into some strong narratives, like Hungary, for instance.
If we were to get another oil price shock, if there is another step up in aggression and violence in the Middle East, to what extent would you have to rethink some of these calls in FX, or is that kind of factored in?
So a lot of the trades around kind of the terms of terms of trade, those are already positioned for any kind of re-escalation. So the Brazil, Colombia type trades are still going to do really well, actually, going to be magnified in their performance if we have a re-escalation. We've got some bullish trades on like long Turkey, and so that might be under pressure.
Phoenix, thank you very much indeed for bringing your views to us this Friday morning. Phoenix Callan, Global Head of Emerging Markets Research at SocGen Corporate and Investment Banking. Coming up, we're going to bring you an exclusive interview with the Spanish Economy Minister, Carlos Cuerpo, as Spain calls for Europe to pull more of its debt. What will the Germans say? That is next. This is Bloomberg.
Old mentor Roger Staubach, when I transitioned, football will never leave you, but you need to leave it. Wow. Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. Welcome to The Pulse. I'm Tom McKenzie in London. These are your top stories. Nasdaq futures pointing lower after the AI rally returned to Asia. SK Hynix makes its debut today, confirmed as the biggest ever US listing by a foreign company. EasyJet shares jump after the budget carrier receives a surprise offer from Apollo that sets up a potential bidding war with Castle Lake. The yen gaining after the Japanese finance minister calls on pension funds to invest more in domestic assets. Meanwhile, Goldman Sachs says carry trades face the best conditions in more than 2 decades. to the auto sector now. Volkswagen has announced it plans to cut its model lineup by as much as 50%. 50%. The move is part of a savings plan announced after a supervisory board meeting that stopped short of agreeing on deeper workforce reductions. We're joined by Bloomberg's Autos reporter Stefan Nicola, who is across all the details of this. Stefan, talk us through what was agreed then by the board last night.
Yeah, this was a key board meeting for Oliver Blume, the Volkswagen CEO. He wants to make Volkswagen smaller, faster, more profitable, and he presented sweeping restructuring push in yesterday's meeting. The board didn't agree on a lot of things. It pushed back on some aspects of it. Labor has pushed back against job cuts and plant closings. But what transpired from the meeting is that VW wants to halve its model lineup. So that means cutting derivatives of individual models, reducing overlap between the different brands, and just become more efficient to focus on the most profitable segments.
The challenges are acute, Stefan, obviously, as you know all too well, not just for VW, but for the broader auto sector in Europe. There's the price pressure, of course, there's the competition from China, there's the wrangling then amongst the board, the unions, and you kind of nodded to that with the focus on labour. What are the chances at this point of further cuts, or are we done?
I don't think we're done yet. The halving of the model portfolio, I think, is the first step. Blume will go into further negotiations with the board, with the labor side. That's broadly expected. Sure, capacity cuts will have job reductions. Also, we would expect those. The devil is in the detail, in the fine print, and that's going to have to be ironed out over the coming month for Volkswagen. This is a slow-moving tanker. You have to get almost everybody on board for these sweeping decisions. So the CEO has a lot of work cut out for him, and yeah, it's going to be tough in the coming months.
Yeah, a slow-moving tanker. That is the part of the problem, isn't it? In an environment of rapid innovation and increased competition. Bloomberg Stefan Nicola with the details on a deeply significant story, of course, for the European auto space. Thank you. Meanwhile, zooming out to the macro picture in Europe, Bloomberg understands that Spain's push to boost joint EU debt issuance has been met with scepticism from some of the bloc's top economies. Sources say, surprise, surprise, Germany and France were among those who questioned the proposal at yesterday's Eurogroup meeting. Let's go to Brussels, from where our chief Europe correspondent, Oliver Crook, has an exclusive interview. Ollie.
Yeah, that's right, Tom. We have a lot to unpack here with the Spanish Economy Minister, Carlos Cuerpo, including his sort of pitch to joint debt. He's here in Brussels, of course, for that Eurogroup meeting, but a lot of other things to talk about, including the sort of trade discussions we've been hearing over the last couple of days at the NATO meeting, Spain really playing a starring role there in the mind of the President of the United States. So I'd like to start there, Mr. Cuerpo, if we could, about basically what has the communication been from the United States. He arrived in Ankara, the President of the United States. He says he's going to cut off all trade with Spain, going to cut off effectively relations to a certain extent with Spain. By the end of the meeting, we were somewhere completely different. What are the conversations that have been transpiring over the last few days?
Well, you know, the main message I think that has transpired is that Spain is making good on its commitments towards defense spending. Actually, President Sanchez was very clear at this stock-taking meeting of NATO that Spain is the 7th largest defense spender amongst the 32 NATO members. So that actually positions us, as we've always said, amongst those countries that are fulfilling their commitments, that are covering for the capabilities that we did commit to, and therefore being a reliable partner. And I think that's the main message, again, that transpires from the data that is actually speaking for itself.
And the President made some allusion, though, that Spain would say that they made and they will honor requests for lots of payments, and that if they didn't, we wouldn't even talk to them. Did anything change in Spanish policy, from Monday to Thursday?
Well, again, last year we increased our defense spending by more than 10 billion. Again, making good on all the commitments. and being a reliable partner. That's a message that we've been trying to convey all along, and that I think now is finally getting there as we see that we made good on that pitch by actually proving it with the numbers. So that's good news.
But the 5% commitment is still off the table for Spain.
Nothing has changed on that front. As we said already, we will cover for the capabilities that are assigned within NATO. You know how this goes. We have an update of the threats that all members will be facing, and then you assign capabilities to cover for those threats, and our share will be covered by Spain for sure.
But then I want to talk more broadly about the sort of approach of the President of the United States now, threatening the tariffs against Spain. He's done similar things to France about just sort of digital taxes. I'm sure you're thinking about a lot of different scenarios about if these things were to materialize, if there were an effectuation of a tariff threat on Spain, if he were to impose it, would that automatically kill the Turnberry deal?
Well, let's go back somehow to the last 18 months, where there's been somehow a lot of discussion on the new tariff context, and where we've been actually negotiating from the EU side, because as you know, it's an EU negotiation that goes on. All member states are dealt with in trade terms by whatever the EU or the Commission agrees upon. So the August agreement is the one that is valid for French companies, for Spanish companies, or for German ones. And what has gone on, despite all the uncertainty, for example, is that investment from American companies in Spain in 2025 grew by around 18%. So somehow the relationship is so strong that it's actually still ongoing. There's a strong inertia around it, and we have to make the best out of that existing relation. And that's what we're trying to do also from the Spanish perspective, trying to help our companies navigate this new situation, opening new trade offices in the US. I've been 10 times in the last 18 months to the US, again, trying to really strengthen that relationship.
But I think for those companies, it's important for them to try to understand what the reaction function will be from the European side if we do see unilateral tariffs with a single member state. So I guess the question is, if the United States imposes tariffs on Spain, have you spoken to the Commission? Does that, in their mind, there are a lot of clauses that were added to that trade deal, basically kill the US-EU trade deal?
Well, we don't have, let's not speculate on what can happen. There is no specific executive order or measure against any specific country within the European Union. But the Commission has been very clear also this week on the fact that they would, of course, always protect the interests of the Union and of each and every one of its member states. And again, trade is an European policy, European Commission policy. And I think a message to the business community as well. We want to give them predictability, stability going forward. So the reaction function somehow should be that we will make good on the agreement that we signed from the European side. Everything is set so that we can go on with it. We expect also the same from our US peers in the next few weeks. Let's give that positive message to businesses.
And so trade falls under the European remit. You would like to see more debt fall under the European remit. You'd like to see a third of debt issued from the major European economies come from the EU. This obviously debate of joint debt is one that's always been heated here within Europe. You've renewed it. You've come out in the Bloomberg opinion pages to explain it. Give us your pitch.
So somehow it's about efficiency in how we issue debt. So it's reducing fragmentation. This is not about new debt or increasing the overall level of debt in the European Union. What we're proposing, what we're putting on the table is the fact that fragmentation is costing us dearly. So we need a safe asset to back our capital markets union within the European Union. And that safe assets need to be liquid enough, need to actually have a deep market so that we can cover for the demand. There's a strong demand, but there's no supply of jointly issued assets. So it's a very short, small market. And what we're proposing is to increase that market by substituting part of the upcoming national debt, 1/3 of annual redemption, and whatever is allowed by European fiscal rules. So we keep this moral hazard concern in check by saying that we have to comply with fiscal rules in any case. So that would help the joint issuance to reach the 5 trillion threshold, which is what is considered as a genuine benchmark going forward, and that will reduce financing costs. And we estimate, and I will finish with this, that the overall savings would amount to up to 25 billion on a yearly basis. This is taxpayers' money being saved.
But of course, there will need strong political consensus on that. How is that message cutting through, particularly in Germany?
Well, we know that this discussion historically has been a difficult one, but there is a new window of opportunity, and the context is completely different. We're not talking about new debt. We're not talking about a fiscal union or a mutualization of risks. We're talking about efficiency in debt issuance. We're talking about reducing fragmentation costs, as we're doing on other areas. And you know, also, for example, the firms could benefit from us having a safe asset, and therefore lower financing costs being translated also to lower financing costs for businesses. So it's a no-brainer, and we really have to circumscribe that discussion to the current context.
And another sort of difficult conversation is one around China at the European level. You're one of the nations in Europe that is advocating a much stronger relationship with China, yet you acknowledge some of the issues with the trade imbalances. How does Spain suggest that we should deal with those imbalances, and what are the next steps you think at the European level?
Well, we need to be a key player going forward, and that means engaging on a par basis with both the US, China, or other key players. And so engaging means negotiating, having a fully fledged open dialogue with Chinese authorities, both to try to solve these, as you said, trade imbalances, but also to see how we can have a win-win situation in terms of attracting investment towards the EU within our security agenda, but that also produces value added within Europe, that generates technological transfer also to Europe, because we have to admit it, in some sectors there is a technological gap or lag in Europe with respect to China. And so we need to, again, foster these investments that are productive for the European Union and rebalance trade.
And I want to get your perspective also, because another piece of news we got over the last few days was potentially the restart of the war in Iran. Obviously, this will have consequences for the European economy. Inflation is still very high in Spain. What do you anticipate the impact is going to be on the economy? How should the European economy prepare?
Well, somehow, as you said, we had some piece of good news over the past few weeks, although over the past few days, volatility has come back, but prices of oil are still way below what they were around a month ago. What we'll be doing in Spain is putting in place specific measures to protect the industry, to protect sectors like transportation or the agricultural sector as well, and to protect citizens. 5 billion program, fully fledged one, to protect during the first 3 months, and now we extended that program to protect also citizens up until September, although there is a phasing out, understanding that somehow the situation will slowly also be better in the next few months. But in case it's not, we're still ready to come back to the previous level of support.
And one quick final question. We've talked a lot about very important topics. One final important topic. I spoke to your deputy, your counterpart, Deputy Prime Minister of Belgium earlier this week. He predicts a win for Belgium 2-1 tonight with Spain. What is your prediction?
Well, you know, I don't want to jinx it, so I won't say a specific score, but I'm very confident that we can make it, and then Spain has one of the best teams, and we will all be rallying behind our national team.
Well, Carlos Cuerpo, thank you so much for your time there, the Economy Minister of Spain. And if we don't hear from the Prime Minister or the King, I think we'll take that as the official Spanish position on the match tonight.
Okay, we'll take that. That is the essential question, Oliver Crook, ahead of that game between Spain and Belgium later tonight. Belgium, of course, Oliver Crook there with us and with the Spanish Economy Minister. Ollie, excellent conversation as well on the trade story, the dynamics with the US, China, of course, and that joint debt proposal. Ollie, thank you. Other stories that we are following this Friday morning. Andy Burnham's path to becoming the next UK PM looks almost certain after 322 of Labour's 403 MPs nominated him to replace Keir Starmer as party leader. Burnham said he was, quote, deeply grateful for the support, saying it reflected a shared belief that Britain needs a new approach to politics. He said the, quote, circuit breaker he is offering means shifting power out of Westminster and rewiring the economy for ordinary people. Vodafone shares are up after French billionaire Xavier Niel agreed to buy a stake from Emirates Telecommunications Group. Vega, an investment vehicle controlled by Niel's family, will acquire more than 16% of Vodafone's shares for about 112.5 apiece in a $6 billion deal. And former Fed chairman Ben Bernanke has been appointed to Anthropic's Long-Term Benefit Trust. It's a governance body designed to safeguard the startup's public interest mission, advising management on decisions around AI risks and impacts. Bernanke and 3 fellow trustees hold no financial stake in the company, but will have the power to appoint and remove board members. Now, with home ownership out of reach for many young people and AI reducing their job prospects, many are turning to investing in the hope of securing their future. But with index funds seen as too slow an investment, more young investors are putting their money into meme stocks, options and crypto. Bloomberg Originals has been looking at why they are prepared to take on so much risk.
There are many types of risk, and now even trading is an extreme sport.
In this video, I will start with risking only $100 per trade.
Bro, it's simple. If you can scroll TikTok, you can trade.
You have the fear of missing out on a trade.
And judging by social media, everyone is getting rich.
We're at $232,000.
Just today, I made $16,000.
More young people are investing than ever before, and they're learning about markets in a way no generation has.
Gen Z really is distinct from other age groups. If you go on social media now, you will see a lot of sophisticated trading techniques used in ways that I think no one would have imagined a 20-year-old in 1990, 2000, or even 2010 doing or even knowing about.
I want to show you this trade I'm taking.
A lot of that activity has also broadened to sports gambling, for instance, or trading on prediction markets.
But there are worries that these investors are over-leveraged, taking one too many risks.
I've always been a big risk taker. It's kind of just part of who I am.
3, 2, 1, to the moon! Holy Well, you know what?
Gen Z has a highly differentiated view of risk.
They don't drive, they don't date, they don't drink. On the other hand, they are also this extremely risk-taking generation.
And for many, it's the only path they see to getting ahead.
YOLO stands for you only live once. So YOLO bets would refer to risky investments where the trader has an attitude of, you go big or you go home.
Well, subscribers can watch that full documentary right now on the terminal and at Bloomberg.com. Next week, Bloomberg is hosting a webinar on the new wealth playbook, exploring alternatives and the so-called next-gen client. You can scan the QR code right now to register and take part in the audience Q&A from 3 p.m. London time next Tuesday. Coming up inside the secretive Chinese semiconductor maker that is set to shake up the trillion-dollar memory chip market, our big take is next. Some fantastic reporting. This is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Every
weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
AI pioneer Yann LeCun says he believes Europe has missed the boat in the race to develop large language models in AI. LeCun was met as chief AI scientist, but left to launch his own company, Ami Labs. He told me at the Race Summit yesterday in Paris why generative models don't work in the real world.
Most of the details in the world, in the physical world, are not predictable. And so the very idea of a generative model does not work in the real world. It's relatively easy to predict the word that follows a sequence of words, which is really what LLMs are doing, whether it's natural language or code or whatever, right? You show the system a long sequence of words, and you train it to predict the next word. It can never exactly predict the word that follows, but it can produce a score for every possible words in your dictionary or a probability distribution, right? So then you pick a word from that probability distribution. That's the word the system is going to produce. You shift that into the input, and now you can produce the second word, shift that into the input, third word. That's called autoregressive prediction. It's a very old idea, and that's what LLMs are based on. If you want LLMs to reason a little bit, you have it produce lots and lots of those sequences, and then you have another neural net that selects the best answer among all of the ones that are produced, which is ridiculously expensive. But this is how those, coding, mathematics kind of system work, more or less. Now, if you want a system to understand the real world, why not use the same technique? Take a piece of video and train the system to predict what's going to happen next in the video. And if you train the system to predict at the pixel level, it simply doesn't work. Because most of the details in video are not predictable. Most of the information contained in video is entirely unpredictable. If I take a video of this room, I put the camera on this side, I slowly rotate the camera, I stop here, and I ask a system, fill in the blanks, tell me what's going to happen next in the video. Probably going to predict the camera is going to continue rotating. There's absolutely no way it can predict what every one of you looks like. There's just no information from which that it can use to make that kind of prediction. So if you train a system to make that prediction at the pixel level, you kill it, because you basically are asking it to solve a task that is completely unsolvable. Now, of course, you're going to say, but wait, we have systems that can do video generation. Yes, they can, but they're going to make a prediction that is false. They're not going to predict what you look like. They're just going to put random people there, right? And those systems don't really construct a good understanding of the underlying physics or reality of that. So the technique we've been working on for a number of years, while I was at FAIR, and since we created Ami Labs, is called JEPA, and it consists in training a system not to generate and predict all the details of a signal, but to construct or learn an abstract representation of that signal, of a video, and then to make predictions in that abstract representation space.
Yann LeCun, Executive Chairman of Ami Labs. Now, as China ramps up its focus on tech self-reliance, there's more attention on its homegrown chip makers. One such company is CXMT. It's launching China's biggest IPO this year as it seeks to double output. The secretive company is the focus of today's Bloomberg Big Take. For more, we are joined by technology reporter Gao Yuan, who has all the details and will be covering this for us. Gao, what do we know about CXMT? It's secretive, as you say. What have you discovered about this company? And is it really a challenge to Samsung and SK Hynix in the memory space?
Good to see you, Tom. Yes, well, CXMT is emerging from a nobody to arguably the most important chip maker in China, all because of this memory chip shortage. So Chinese AI companies need memory chips, the filmmakers need memory chips, and they have to rely on Samsung, SK Hynix, and Micron for those kind of products. Now with the StackSMT, they can source from a local supplier, which is great news for them. What we found was that apart from StackSMT, it has 3 companies helping them with chip design, chip manufacturing, packaging, and testing, so that they can fast, forward with their plan to expand the capacity, which is very critical for not just for them, but also for China's AI effort.
Is it feasible that Apple uses these chips at some point?
Potentially, yes, but it's a long way to go. Again, they have to expand their capacity first, especially for AI. They need to start to make HBMs for Apple. It will need lots of DRAMs, which StackSMT is doing. But in the future, if they want to supply it to a bigger client, they will need a lot more capacity. That's the bottleneck for them right now.
Okay, so capacity is the bottleneck. They're building out the supply chain in China, and they could end up being a significant player in the memory space. The IPO coming up, of course. Gao Yuan with a deep dive, and the Bloomberg Big Take is really worthy of your time today. Bloomberg technology reporter Gao Yuan with that fantastic reporting. So look at that on Bloomberg.com and on the terminal, of course. US futures then, talking of tech, NASDAQ 100 futures pointing lower right now by 0.5% after the gains of yesterday. Here in Europe, the Stoxx 600 is currently down 0.1%. Up next, it is Bloomberg Brief. Stay with us. This is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
On AI, some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers, and it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. A blockbuster debut. SK Hynix raises $26.5 billion in the biggest first-time share sale in the U.S. by a foreign company. The US says talks with Iran are continuing despite 2 days of clashes this week, a relatively quiet night last night. And Fed Chair Warsh names the leaders of 5 task forces that will examine the central bank's policy approach. Let's get a check on markets around the world now. Some interesting developments in Japan. Let's start off in Hong Kong with Winnie Su for the latest from Asia. Winnie.
Yeah, morning, Bonnie. It's quite a nice way to wrap up our week here in Asia after a very volatile week. Now we have the MSCI Asia here up almost 1%, supported by technology shares that were gaining on the back of Micron's spending plans. But also in the afternoon, we did see those gains trimming a bit ahead of that U.S. listing by SK Hynix. As you just mentioned, this is going to be the biggest U.S. listing by any foreign company, and also the third biggest listing in the world in history. But we also see a bit more caution ahead of China's memory giant CXMT's IPO next week, and hence you did see that dragging down the benchmark CSI 300 down about 2%. Flip aboard, we take a look at Japanese assets. Very interesting. You mentioned this triple rally we are seeing across assets, with the Japanese yen strengthening about 0.5% and yields down about 10 basis points across the curve, and Japanese stocks extended a bit of gains. And that's coming after Finance Minister Satsuki Katayama urged pension funds to buy more domestic assets as well. Back to you, Bonnie.
Certainly helping the yen today, Winnie, as well. Winnie Su there in Hong Kong after a big week. Now let's get over to London for a look at Europe with Justina Lee. Justina.
Good morning, Bonnie. Now, the Stoxx Europe 600 is down a little bit today, but not as much as U.S. futures right now. You know, tech shares are falling, but a lot of those cyclical sectors, like car makers and miners, are doing better today. 2 big movers out of Europe today. EasyJet surprisingly got a counterbid from Apollo that beats the original proposal it got from an investment firm called Castlelake. And another kind of big mover today, Vodafone, its biggest shareholder, just sold their entire stake to a vehicle controlled by the billionaire Xavier Niel at a premium, and that's why it's surging today. Now, if we flip the board here and look at fixed income, generally, we're seeing yields down a little bit. The news out of Japan that Winnie talked about probably helped. And also oil falling a little bit. And so it does feel like investors are going into the weekend kind of with quite a bit of calm. But of course, it all depends on what headlines we get out of the Middle East over the weekend as well.
Exactly, Justina. Thank you, Justina Lee there in London. And essentially, markets have erased all of that war shock already, absorbing it pretty much in the tech sector. We had the Philly Stocks Index up for 2 days straight, more than 5% put on to the Philly Stocks in the last 2 sessions. As you can see, we do have futures pointed a little lower today after those gains. We are expecting the SK Hynix offering, though, and that may buoy things a little bit later on in the session. And that all said, volume is extremely low. We seem to have started into the summer lull when it comes to trading after a massive month of June. Same deal for treasuries, although we have a little bit more clarity now as to what Fed Chair Kevin Warsh is planning in terms of task forces. We have many names. We'll be talking about that a little bit later on in the program. As you can see, yields coming down, but just ever so slightly, a couple of basis points across the curve. And then oil also, while it did hold on to some gains, it is not putting on any extra gains. We're staying around $76 a barrel for Brent, and we're approaching that $70 a barrel mark once again for WTI. The VIX index, by the way, back down to a 15 handle. All right, let's get to some individual market movers this Friday. Over to London and Chloe Melly.
Good morning, Bonnie. Netflix is in focus this morning after a report from the Wall Street Journal that the company is considering adding live channels and bundling some streaming services in an effort to counter this declining subscriber engagement. And so we had seen the shares as weak a little bit at the beginning of this pre-market trading, but now we're up slightly as investors try and digest those potential changes. Moving on to CCC Intelligent Solutions, which is an insurance software firm which is rising quite strongly this morning, about 8% after Reuters reported that the company is exploring a potential sale. Analysts are saying this makes sense because of the depressed valuation and very inconsistent results of the last few years. And finally, WD-40, the maker of lubricants and cleaners, is also up this morning after boosting its revenue forecast
analysts are saying that there's a higher cost that might eat into margins, but it seems that investors are a lot more focused on this boosted guidance than anything else. And so we're up almost 15% this morning for that company.
All right, Chloe, thank you so much. Chloe will be back a little later in the program. Also coming up this hour, we're going to be discussing the U.S. economy's resilience with Seema Shah of Principal Asset Management. And later this hour, Nadia Martin-Wigan of Svelland Capital joins on the volatile week and several months, in fact, for oil products, shipping, and much, much more. SK Hynix begins trading on the Nasdaq today. It raised more than $26 billion in its ADR offering, the largest first-time share sale by a foreign company in the United States. Joining us now is Bloomberg's Charles Capel. Charles, how does this work? Is it just like a typical IPO where we have price discovery, delayed pricing, delayed trading, and so on today?
We're going to expect this to start trading when the US opens this morning. It isn't exactly like another IPO because, of course, we're offering ADRs as opposed to ordinary shares. What I would say is that we won't have that pre-opening auction, so we won't have that time when we're sort of finding those bids. We obviously had the trading in Korea today, and it was a relatively muted session, especially for a company like SK Hynix, which is so volatile. But what we are going to see is a massive market event with, as you said, $26.5 billion worth of equity entering the market, and you know, an enormous fundraising effort for the AI trade.
Charles, explain to us the difference between when issued trading, which is today, and then regular way trading, which could start as soon as Monday. The ticker changes as well. There's a V at the end, and that'll be on Monday.
Yeah, so when issued trading is essentially a temporary restricted trading. You often see this with new issues, whereas when you have the full trading, which is going to begin on Monday, then that's going to be a more complete set of trading and slightly more. You know, you're going to be able to have fewer restrictions on buying and selling those shares.
Charles, you know, the beginning of ADR trading, is it very different from the beginning of, you know, a new IPO? Or, I mean, these are companies typically that shareholders know, right? So we know a lot about SK Hynix already. We've had many quarters to dig into. If you were interested in investing in this company, you know a lot about this history. Will there be the same kind of volatility around the open as there is typically with a regular IPO where you don't have quarters, you just have the S1?
Yeah, exactly. So you aren't going to necessarily get that initial pop that you would expect from an IPO. You know, coming up to SpaceX's offering, the question was all about, okay, well, what's it going to open at? And a huge amount of that was because SpaceX hadn't been tested by the market. You didn't have that live pricing in incredibly liquid trading. So, of course, you do have SK Hynix's entire fleet of earnings reports. You've had its trading history in South Korea. So all of that is going to be able to make it far easier to trade this stock. And it is going to mean that as an ADR, you know, it's going to be heavily linked to that past history. One thing to note is that an ADR is worth 1/10 of a full share. So the price is going to be slightly different. You know, it's going to be 10 times more expensive relative in the South Korea price.
Yes, exactly.
But largely, you are going to have that read across between the two different lines of the stock.
All right, Charles, and just for context, Alibaba raised 25 billion, Deutsche Telekom around 13 billion, so it's bigger than both of those. That is Charles Capel joining us there from London. And do tune in to our exclusive interview with SK Group Chairman Chae Tae-won. That's at 10:30 a.m. New York time. Joining us now is Seema Shah, Chief Global Strategist at Principal Asset Management. I want to get to these Fed task forces, Seema, but first I have to ask you about SK Hynix. Will it be an event? Will it be a market-moving event today? Would you be interested?
Good morning. I think it's very interesting. I don't necessarily think it's a market-moving event, but the main reason it is interesting is because I think the list of names that have been announced suggests that this is actually more of a credible task force. There were some concerns in the market that potentially there could be pickings of very dovish people that could really shift the interest rate function. But actually what we're seeing is that this is likely to be a really credible investigation with hopefully some important findings that is going to help improve the efficacy of monetary policy.
Yeah, so we have a lot of Harvard economists, right? Raj Chetty, but then we also have people like, Walmart's Doug McMillan, for example. This is on the data collection side of things, which would seem to make sense. Walmart collects a lot of data and knows how to do it really, really well, right? And then there's professors from Chicago, Washington, all sorts of personnel. Do you feel like we're going to see a change in the orthodoxy of monetary policy in the United States after all these task forces have come back with their findings?
So I suspect that we're not going to see any really groundbreaking changes. I think the one which is really the most important, certainly, and that could have really significant findings is the task force focused on AI and the impact on the economy, because we do know that it's going to have either very disinflationary or inflationary impact on the economy, depending, of course, what time period. And it really does affect the way that the Fed should be conducting monetary policy. And I think there's a lot of debate about that. So actually getting some really clear investigation into this will be very important. The other one, which will be important, of course, is the balance sheet policy. But I think we already know which way that is headed. The very interesting one is the data force one, as you said. Having Walmart involved suggests that there is going to be that focus on private data, as Kevin Walsh had alluded to. And we do know that there have been a lot of concerns about the accuracy of the data, the number of people who are responding. So I think these are good investigations, but I question whether or not it's actually going to have a very, very fundamental change in the orthodoxy, as you put it.
Yeah, I mean, it's interesting. One of these things is not like the other, and you pointed to the one that isn't, right? The AI task force. So we have Mark Andreessen, we do have Stanford's Charles Jones, and Asha Sharma, CEO of Xbox at Microsoft, right? That's the one where you might think there might be a little bit more of a clash, but also we know that Kevin Walsh may have a slightly different opinion of what AI is going to do for productivity in this economy than many of the other Fed governors and employees and FOMC committee members. Will there be a clash in terms of how inflationary AI will be, and in the immediate term versus the longer term at the Fed in the coming months, Seema?
I think it could be. I think that there is a wider understanding that, at least in the near term, AI is proving to be a little bit inflationary, considering the increased demand for memory chips and how that's feeding through to CPI and PCE. I think the question is whether or not this is something to look through, to respond to today, because it's going to pass within a year or two, or something which is going to become more sticky. Now, of course, there is a debate more generally about the productivity gains that could come through. And if you're going to see significant productivity gains over the next 5 to 10 years, then that should be, by economic theory, that should be disinflationary. So there, as you said, there's a wide range of views, but this is a new topic. Remember, AI is quite new, certainly for the field of economics. So this is really a very, very important and deserved discussion to be having. And I think the market is generally welcoming the idea that this is going to be a topic of real investigation by the Fed.
And Seema, we're almost out of time, but I do want to ask you, I know you feel like we are resilient growth-wise. Is there one concern after this week that you might share with us, given what we saw this week? I mean, the market really turned on a dime. As soon as President Trump said he felt like the ceasefire was over, we did see a major shift.
We did. So I think we've seen a shift in terms of market movement. I don't think that's going to have very, very significant impact in terms of economic resilience, because although we have seen consumer spending slow over the last couple of months, lose a bit of momentum, we have seen that the AI CapEx boom has stepped in as another driver of economic growth in the US. So we're not too worried about resilience, but we do recognize that, look, if this is going to be something which is more inflationary and therefore results in more second round impact, there is certainly a potential impact in terms of pricing for Fed hikes. So I think that's the area that we should be really focusing from a market perspective.
Seema, thank you so much. That is Seema Shah of Principal Asset Management. Now to other top stories trending on the terminal this morning. EasyJet gets a surprise offer from Apollo. The PE firm is offering £5.7 billion, or 715 pence a share, beating out Castleake's bid. Volkswagen plans to cut its model lineup in half. The cuts are meant to limit product options in order to reduce, quote, offering complexity, allowing resources to go towards the highest return segments. France defeated Morocco 2-0 to advance to its third straight World Cup semi-final. Star striker Kylian Mbappe scored his 8th goal of the tournament. Mbappe now has 20 World Cup goals, just one behind Argentina's Lionel Messi. France will face the winner of Spain versus Belgium next Tuesday. Coming up, talks between the US and Iran over a permanent peace deal continue. the latest on the Middle East conflict. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersecci in El Ula, Saudi Arabia, and this is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
A U.S. official says talks between Washington and Tehran are ongoing despite attacks this week that have threatened the ceasefire deal. Let's get the latest from Bloomberg Horizon's anchor Abir Abu Omar in Dubai. Abir, is anything emerging in terms of what morale is like, or whether these talks, took a little bit of a back step after the clashes and also President Trump's comments the other day?
Good morning, Vonnie. Well, I mean, the talks have already been suspended because of the mass funeral of the late Supreme Leader that ended yesterday. But we were expecting them to recommence once that funeral ended. Now, we don't have a lot of clarity on whether they actually were at an official capacity going to commence, but that was the wide expectation in the region. The mediation between Qatar and Pakistan still very much in place. Now, after President Trump's commentary earlier this week at the NATO summit, he said that as far as he's concerned, the ceasefire talks are over. But then very quickly, Vonnie, he did say that the negotiators, Steve Witkoff and Jared Kushner, can go back to having those discussions with Iran. But you saw the impact on the market on oil. It was almost instant. But then we saw a steadying in Brent crude prices and NY crude prices as well, suggesting that the market isn't necessarily taking these remarks as a promise of a return to a full-fledged war. And this is our latest reporting. Bloomberg reporting this morning, according to an American source, that the technical negotiations between the warring sides are expected to continue. But again, as I have just mentioned, we have no clarity on just when exactly that resumption is expected to happen and where. But when it comes to general markets, when it comes to the wide expectation, we don't see a return to a full-scale war similar to the one that we had back in March, with the entire region really dragged into it.
All right, Abir, thank you so much for the update. That is Bloomberg's Abir Abu Omar in Dubai. Coming up, we're going to be looking at SpaceX and corporate governance. This is Bloomberg.
Western countries, all of them are cutting funding to Africa. And some of these programs were supported by funding coming from Western countries, like for human resources, for testing, for transportation of samples. And suddenly, African countries have to think how to fund money and to cover this gap. But it takes some time. And I think the combination of all of these factors are fueling this mistrust that we see at community level. We value the support we got and we are still getting from the US. And we think that if we continue to work together, and there is no reason for the US not to work with Africa CDC. Africa CDC is the leader in terms of public health in Africa.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bloomberg Brief, I'm Vonnie Quinn in New York. When SpaceX went public last month, investors were invited to buy into one of the world's most valuable companies. But they weren't buying equal voting rights. Wall Street Week has the story of Elon Musk's extraordinary control over the company and the changing nature of corporate governance.
Maybe the Elon Musk brand is very strong in the US, but it's not so strong in Denmark. Actually, I would rather say that, many people driving a Tesla is maybe a little bit embarrassed about it. And certainly among our scheme members, there's a huge reputational risk in investing in an Elon Musk-led company. So I've been here for 9 years now, and I never experienced in my 9 years as CIO so many scheme members coming back to me with positive comments from a single investment decision as I experienced in the wake of the exclusion of SpaceX.
What do you look for in governance? Either to have or to avoid as you make investments?
We hold good governance very, very highly. We think it's extremely important in order to assure accountability and transparency and sound decision making. And I think, good governance to us, to our mind, really lies at the core of the trust that we need in public markets. One share, one vote. The distribution of power should be proportional to the money invested. We have the separation of power between CEO and chairman of the board. We don't like that to be the same person. We think that creates a risk of poor decision-making and excessive risk-taking. And finally, the third principle is independence. We want an independent board, not only in the board, but also in the critical committees around nomination and remuneration and audit.
For more Wall Street Week's Simon Hampton joins us now. Simon, this really started off with Google, right? And then sort of other tech companies embraced this kind of structure and are getting away with it for the most part. But how important is governance to the global investor?
Yeah, it's sort of like everyone's sort of trying to push the boat out a little bit further. Look, I think investors are always going to weigh up all the pros and cons of buying into a company. I think the debut of SpaceX suggests that they're buying the story right now. But you are seeing some concerns creep in. We heard there from a pension fund in Denmark that called it catastrophic governance and say they're blacklisting SpaceX and Elon Musk companies. We saw yesterday the news of two new ETFs that were filed that were basically everything but Elon ETFs, investing in the S&P 500 and the NASDAQ, apart from Elon Musk companies. And one of the concerns they raised was the governance structure as well. So as we see these sort of models where Elon Musk owns 40% of the company, has 80% of the voting rights come in, you are starting to see some concerns creep in as well.
Yeah, as I say, you did see sort of 2 layers of voting rights in some cases around Silicon Valley, but this is really pushing it to the limit. That said, could it be a template going forward for other CEOs and founders?
Well, that's one of the concerns for sure, is that people can see if Elon Musk can get away with this, why can't they? And I think that that's certainly going to be one of the concerns raised. So, but at the end of the day, investors are going to vote with their feet. And if they pull money out, it's going to be harder and harder for new companies to justify that sort of governance structure as well.
Exactly, and voting every day. You have to keep an eye on these CEOs and founders every single day. Simon Hampton, cannot wait to watch the rest of that story. And, of course, the rest of Wall Street Week. It's on every Friday at 6 p.m. New York time. Our thanks to Simon Hampton and the team. Next up, we'll be looking at energy and shipping markets with Nadia Martin-Wigan of Sveland Capital.
Some people have written that your bank, Revolut, is worth $75 billion. Have you ever thought of taking your organization public?
Well, the way I think about it, we kind of will be ready probably in 2 years' time. But then again, depends on how good the market is.
Since you don't have an IPO, how do people who work for you make some money? Do you make a market for people to sell their shares internally?
Yeah, so we do secondaries every 1 or 2 years when people can sell a certain portion of their stocks to external investors.
So you've done secondary sales for your employees, so employees can then get some liquidity. Do you expect before you go public you'll do any more of those, or are you just going to wait till you go public before you liquefy any more stock?
Yeah, I think so. We might do secondaries as well before we do IPO, because we do it every 1 or 2 years, so we might do secondary as well.
All right, well, if anybody wants to sell their shares to me, let me know. And have any investment bankers told you why they're the best to do the IPO for you?
Yeah, obviously every single one is the best.
Everyone is the best. You're not in a rush to do it. You don't need the money.
So we're a bank, and then for the bank it's super important to have trust, and then public companies are trusted more compared to private companies. So that's the reason.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. A blockbuster debut, SK Hynix raises $26.5 billion in the biggest foreign first-time share sale in the U.S. The U.S. says talks with Iran will resume despite 2 days of clashes this week. And Fed Chair Kevin Warsh names the leaders of 5 task forces that will examine the central bank's policy approach. So let's look at those markets then. As we await the SK Hynix ADR debut, we are seeing futures pointed a little lower, but markets have pretty much absorbed this latest Iran war shock. We had 2 consecutive sessions now where semis cushioned equities, and volume is just about to run into the summer doldrums. Trading really seems to be at a lull at this point. Let's move to yields, because we're seeing them come down, but only by a couple of basis points. We'll see the semi-annual testimony from the new Fed chair next week and what that brings, but for the moment, all is calm on the Fed front. We even have the names now for all of the task forces. And then oil-wise, we came down another little bit, still elevated from where we were this time last week, and it is the first time that we'll have seen gains week over week in 5 weeks. But Brent crude is still now just above $75 a barrel. VIX, by the way, trading with a 15 handle. Let's get to some individual market movers now with Chloe Melee in London.
Good morning, Bonnie. Meta is in the green this morning after a research firm, Semi-Analysis, came out with a report that was very positive on the company's AI compute business. And they also said that out of all the hyperscalers, Meta was the one that was best positioned to actually catch up with Anthropic and OpenAI. And so we are seeing that driving the shares about 2% this morning. Moving on to CCC Intelligent Solutions, an insurance software firm that is up more than 8% this morning after Reuters reported that this company is exploring a potential sale, including to potential private equity buyers. And so analysts have said that the depressed valuation of the company and mixed results over the last few years actually mean that this potential sale makes sense. So we'll be watching out for any developments there. And finally, WD-40, the maker of lubricants and cleaners, has boosted its revenue forecast, and that is really translating in a huge boost for the shares, up almost 15%. Analysts have warned that there might be the higher costs eating into margins, but it seems that this boosted revenue guidance is overshadowing any potential concern around the margin this morning for WD-40.
It's amazing. We all need a bottle of WD-40 everywhere in the world, right, Chloe? Thank you so much, Chloe Melee. SK Hynix begins trading on the Nasdaq today. It raised more than $26 billion in its ADR offering, the largest first-time share sale by a foreign company in the United States. Joining us now is Bloomberg's Charles Capel. Charles, what does the scale of this offering tell us about the strength and liquidity of U.S. markets?
Yeah, look, this just shows the gravitational pull of US equity capital markets. It is an unbelievably vibrant and strong market. Companies can come to the US and raise billions and billions of pounds relatively easily, whereas they may struggle elsewhere in the world. You know, for context, the largest offering here in Europe is just short of 4 billion euros in terms of a new listing so far this year. Hong Kong has also been very strong, but US equity capital markets are really sort of pulling in all of the capital, and they are where companies are going to raise these multi-billion dollar amounts, specifically to fund the AI build-out.
How has SK Hynix's trading in South Korea impacted the fundraising process? So we did see the entire number come down just a little bit thanks to the losses this week, right?
Yeah, exactly. I mean, that's one of the tricky things with trying to build a book or trying to raise funds for a company which is actually currently trading, because you have a moving target, a live commentary on the price. And when SK Hynix first announced this number, the total fundraising was around the $29 billion mark. Then SK Hynix, I mean, it's an incredibly very volatile stock, as with the AI trade, but particularly the AI trade in Asia. So we've seen some double-digit moves and definitely some percentage moves above 5% on the day, multiple of those, which has been starting to move the amount that they can raise by selling that set number of shares lower and lower. We were seeing around 25 billion earlier this week. Now it's gone up to 26.5 billion, but it has made it a more tricky process, as well as sort of providing this live commentary on how well the book building's going.
Exactly. Well, at least with 26 plus, it beat out the Alibaba 25 billion listing. Charles, thank you so much. We'll see how it goes later on. That's Charles Capel, our equity capital markets editor in London. And do tune into our exclusive interview with SK Group Chairman Che Tae-won. That's at 10:30 a.m. New York time. Oil steadying at the end of a pretty bumpy week. Brent currently trading just over $75 a barrel. Joining us now is Nadia Martin-Wigan, Director of Sveland Capital. Nadia, I bet at the beginning of this week you weren't expecting to see what we saw. How concerned were you after we got the President's comments on Wednesday morning at the NATO summit?
Well, at least he chose a point that we had been in a very low oil price environment heading into that summit. So I think the expectations of the market were that we're going to have this supply glut going into the summer. It's all over. So we're rising from a very low level on the oil price in terms of speculation. A lot of shorts are out in that market, and Saudi Arabia had just dropped the oil price massively. $15 discount for their official selling price for August for Europe, and $11 discount month on month to Asia. So big moves.
Now, how much did we get done in June? So the Strait kind of reopened, partially reopened, but barrels were really, tanks were almost empty, right? Reserves were pretty low around the world. Did we manage to get the ships out of the Strait and start refilling some of those SPRs and so on? Where do we get to? Because it doesn't look like we'll have really normal traffic through the Strait anytime soon again.
Absolutely. So according to Assets Felon Capital, we think we gained around 6 to 7 million barrels per day of oil month on month in June, which cleared out most of the backlog. That includes Iran, that includes Saudi Arabia, the major GCC countries in terms of what they managed to send out. However, the critical point for us is that we didn't see ships comfortably sailing back into the Strait, which then prevents the GCC countries from really ramping up production, and the Iranians as well, where we've had mixed reports on how those fields have been hit. And so it's yet to be seen if there is damage to their actual production facilities. So we're in no way in a normal market in our view.
And you get these odd headlines. So the US targeting Carg Island, for example, that was out there as a potential. There was also the idea that Ras Laffan won't be coming online as quickly as we might have thought, the LNG facility. So where do we stand now going into the end of July and August? Are things picking up again, or are we sort of stagnating once more?
I think right now things are a bit more paused. What we saw before this happened is a balanced crude market, but refined products were looking much tighter, meaning diesel, and this is helped by those strikes on Russian refineries by the Ukrainians. We hit in June a 17-year low for refinery runs in Russia of 4.4 million barrels per day. And what we've seen this week is diesel cracks have absolutely skyrocketed. Gasoline, that's what we need to continue the driving season and so forth. And US refiners have been running at max. Europeans have not quite been doing that. And the opportunity, in our view, for them, when we got some contango in the Brent curve and we had contango in the Dubai market, was for refiners to really buy that crude. They didn't do it. And then China has now announced that they're relaxing their export ban of refined products, which means to me that they're coming back into this market and they're gonna start buying crude. So they had cut their imports by 4 to 5 million barrels per day in the last couple months. So if they're coming back, that 6 to 7 million barrels per day backlog suddenly looks like a much tighter market if they are in fact going to hit those export numbers for refined products.
So are you saying that Western refiners may have missed their window?
Yeah, I think in Europe, they may have missed it a bit. In the US, we've been running flat out. So there wasn't more that the US could really do. But what we saw in the data last week is that US product exports hit an all-time high. And historically, China has been the OPEC of refined products, balancing that market. And the US has come back despite all the refinery closures we've had since COVID, because Europeans and others have been protecting themselves and not running fully.
You said China is coming back to the market. Where do we stand with demand destruction in China? Does that demand come back online at some point, or is it permanently gone or shifted to another resource?
Well, part of the demand destruction is really this energy transformation and things like that. And we see that not only in oil, but especially in the LNG market. Part of it is domestic production of oil, of gas, further deals with Russia, and so forth. But China's historically imported 17 million barrels per day in some months, 15, 17 million barrels per day, if you include their demand that includes what goes into storage and what is imported. That's the 15 to 17 million barrels per day. Suddenly, we had them at a much lower number, and that is that flip that the market is concerned about. In addition, in the last 2 years, we've had SPR building in China. We've had SPR drawing in the US. And China clearly wasn't interested in doing that in the last couple of months. I think that their announcement that they will export products mean they think oil prices got low enough and it's time to buy again.
Fascinating. So that rise in oil prices that we did see, I mean, we're back down today, does it reflect reality? I mean, we're at less than $75 a barrel on Brent now, around 70 on WTI. Is that reflective of the situation and what's out there?
In our view, not. We've really lost that geopolitical risk, but of course we're in the holiday season. So typically, people don't want to be don't want to be short ahead of the 4th of July weekend, and then they kind of fade that rally. We didn't have a rally going into that. Right now, it's really led a lot by algorithmic trading, and this is where moving averages matter a lot. So Brent is higher than the moving averages that we've been below in the last month. So that starts to create a buy signal for some of the algorithmic traders. So that very strong short positioning should lessen. But it's also the shape of the curve.
So prices should come down, is what you're saying?
No, prices should come up because now we're above those moving averages. So what has been a continuous sell signal for algorithms now looks like more of a buy signal to buy from.
I want to briefly ask you about shipping costs.
Yes.
I mean, have they come down a little bit? It seems like they should have, but then again, are shippers really still shipping through? I mean, is it safe yet?
So shipping costs became astronomical. Historically, you want the cost of shipping to be 2 to 3% of the value of the cargo. What we saw already in May and June, in the start of June, is that those prices were 20 to 25% of the value of the cargo. What does that mean? Well, oil prices and LNG prices need to be higher and shipping needs to be lower. We had the market declining on the Brent side, which meant that shipping costs really had to come down, and they did. But now we have this geopolitical premium coming back in very low volumes, so let's see what happens. But Brent was down 18% in June. Shipping costs were down for TD3, 25%. That's Ras Tanura, Saudi Arabia, to China for crude oil. Refined products were down 31% for shipping the index. So they had come down, but we didn't have that volumetric difference to make up for that lower price that you were getting for using your ship, which was hitting the tanker equities. Now we're kind of resetting and looking to see what happens, but we don't see those ships flowing into the Strait of Hormuz now.
We could talk to you for so much longer, but we have to leave it there. Unfortunately, Nadia, thank you so much for the update. Nadia Martin-Wigan, Director at Svelland Capital. Always fascinating to speak with you. Now to other top stories trending on the terminal this morning. Fed Chairman Kevin Warsh announced the leadership of 5 task forces to examine the bank's approach to key aspects of policymaking. Warsh tapped several former policymakers, including former BOE Governor Mervyn King and former Federal Reserve Bank of India Governor Raghuram Rajan. JP Morgan building AI agents that beat 60-40 portfolios. The bank has been testing AI's ability to allocate money. The results are based on historical simulations rather than live investing. Shein is moving ahead with prep work for a possible Hong Kong IPO after a years-long effort. The fast fashion giant could launch the IPO in the coming months, pending approval from the China Securities Regulatory Commission. Coming up, Apollo creates a bidding war for EasyJet after a surprise offer topping Castle Lake. This is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions: software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Welcome to Bloomberg This Weekend. I'm David Burke.
I'm Lisa Mateo.
And I'm Christina Raffiti. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. A U.S. official says talks between the U.S. and Iran over a permanent peace deal will continue. That's despite 2 days of tit-for-tat strikes this week that threatened the fragile ceasefire. Bloomberg government's Jonathan Tamari is in Washington with the latest. Jonathan, after we got that vote that really chastised President Trump for continuing with the Iran war, does he have a choice? He needs to find some kind of diplomatic solution here. Does he have the power to go back to war?
Well, he probably does, because Congress, even though they've passed these resolutions, they haven't passed in a way that would actually take force, that would have the force of law against him. And there's even significant debate, and the administration has questioned whether Congress really can stop him. There's also an argument that the war has stopped, that the initial hostilities have stopped, and that this would be a new set of hostilities, which would reset the clock of how long the president has to conduct war without Congress's approval. So I think if he wanted to go back to war, he would be able to do so without a legal problem in the United States. I think the bigger issue is he's got a major political problem. This war has never been popular with the public. We've got a midterm election coming up in a few months, and many Republicans don't want to see this going on. And the president himself has said he doesn't want to tip the economy into a recession or see really high gas prices. So that has kind of probably pushed him more towards the diplomatic route, but they're probably not making much progress there, it doesn't seem.
Yeah, so far anyway. Well, I mean, the funeral has been ongoing, so we'll see what happens if and when they resume properly. What's going on with the Election Assistance Commission? So President Trump fired 2 Democratic members of this commission, which does help states facilitate accurate elections, but a Republican member also resigned.
Yeah, and it's unclear. This is late breaking overnight, but we know the president has tried to put his stamp on elections and tried to restrict the ways that Americans vote and try to adjust how mail ballots are treated. He has long raised serious questions about the security of American elections without any evidence behind those accusations. But he has tried in many ways to affect how elections are run, including by getting a bill through Congress that doesn't appear to have enough support to pass. This is one thing that is within his own power to do without lawmakers. It should be noted that elections in the U.S. are run by the states. The states are primarily responsible. So this commission provides assistance, but it doesn't run the elections. So it's not clear exactly what steps that they might be able to take, but new commissioners put in place. But it is something to certainly keep an eye on, because the president obviously is very powerful and obviously does not trust the way elections are run and wants them run to his liking and wants the outcomes to his liking.
Jonathan, thank you so much. That is Bloomberg's Jonathan Tamari from Bloomberg Government in Washington, giving us the lowdown this Friday. On the earnings front, Delta is the first major airline to report this quarter after the war. Obviously, a full quarter of war in the books. Summer travel demand and higher fuel costs will be major themes. Let's bring in Bloomberg Space and Aviation Managing Editor Benedict Camo. So, Benny, will Delta have been able to get through the war, higher price spikes for fuel and so on, given its position with maybe wealthier business clientele?
Well, we're about to find out in less than an hour. That's when the Delta earnings will hit. And the theme for this particular airline, but also for the broader US space, has been that the premium side of the operation, so customers that are paying for premium economy or business class or first class, that has really held up. And that's really sort of the sweet spot for Delta. That's where they have a lot of their customer base. So that will probably insulate them from the swings that they've seen on the fuel price, from the swings that they've seen with ticket pricing. Another thing that will insulate them to some degree is that Delta has its own oil refinery. That's an investment they made several years ago, and that's obviously paid dividends now. They can essentially sort of hedge their own fuel price, so they can insulate themselves from the swings of the fuel price. So that should have helped them. They did, when they reported earnings last quarter, they did sort of suspend their full-year outlook. So all eyes will be on the outlook this time round. Might they reinstate the outlook? Might they come back with a fresh outlook? So that will be a big focus of the earnings. They are first out of the gate, so in some ways, and they are also the biggest in the industry, so they will sort of set the tone for all other airlines that follow.
Yeah, we'll get a lot of details out of that call this morning. Benny, EasyJet getting another bid. It reminds me of the old joke, you know, what first attracted you to millionaire Paul Daniels? This back when $1 million was a lot of money. I mean, EasyJet has a lot of assets. Is that why Apollo wants it?
Yeah, so Apollo surprisingly coming in this morning, swooping in really. We thought that EasyJet had an accord with Castlelake. That's another US investment fund. And Castlelake, over the course of last month, had made several bids, sort of inching up bit by bit. And then finally, it looked as if over the weekend they were able to sort of drag EasyJet to the altar. EasyJet said, okay, let's open the books for you. Let's have a look at this together. And they sort of tentatively agreed. And now Apollo is coming in with a higher bid still. And EasyJet now saying, okay, the Castlelake bid is null and void. We're going with Apollo. The question now is, can Castlelake punch back? Is this a knockout blow from Apollo? Can Castlelake come back with something even higher and sort of reopen the bidding war? Or will they say, okay, enough, you go and elope with Apollo, as it were, and we've had our go. So that's sort of going to be the next step that we have to watch. What's in it for Apollo? EasyJet is a popular brand over here in Europe. They have a modern fleet. They have lots of very attractive landing slots in places that people want to travel to, like Italy, like Switzerland, and so on. And that is really what makes this an attractive asset.
All right, well, we'll watch this space, as they say. Thank you so much, Benny. Bloomberg Space and Aviation Managing Editor Benedict Camel. Coming up, we're going to get you set up for your Friday trading session. This is Bloomberg.
most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Bloomberg Brief. I'm Vonnie Quinn in New York. Now a look at what's ahead today. Well, obviously, SK Hynix starts trading its ADRs today, at least. Catch Bloomberg Tech's exclusive interview with Chairman Choi Tae-won. That's at 10:30 a.m. New York time. And then we get earnings from Delta before the opening bell. That should be a fascinating read into the consumer and also impact of war and any inflationary concerns. The EU finance ministers wrap up their meeting in Brussels as well. And here's your macro picture for your Friday session. Even as trading just starts to get into the summer season, we're seeing much bigger lull in trading than we have over the past few weeks. Nasdaq 100 futures pointing to a decline. That might all change after the SK Hynix ADRs start trading. We're seeing the 2-year yield down about a basis point. We have all the personnel for all the task forces. There'll be a lot of chatter about that today. And Brent crude expressing calm this Friday too.
Being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
Oh! You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these. Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise ahead or Gattaca?
Maybe somewhere in the middle.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
The demand for stocks remains very healthy.
When there's a lot of enthusiasm, people tend to get a little bit ahead of themselves.
If that falters, I think we've got a real problem on our hands.
You have to be prepared that this could shift, and it could shift very, very quickly.
The summer's going to be volatile.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get Bramo to the weekend. Live from New York City this morning. Good morning, good morning. Let's get meat to the weekend.
Thank
For our
you.
audience worldwide, Bloomberg Surveillance starts right now. Coming into Friday within 1% of all-time highs. The tech rebound sending stocks towards a second straight week of gains, leaving the equity market wide open for SK Hynix to raise more than $26 billion. Just as fixed income investors are becoming more discerning, S&P downgrading Oracle to one notch above junk.
Just want to say thank you for correcting the record that it wasn't just me. I think a lot of people are looking forward to the weekend. One thing that's notable is, as you're pointing out, this is a market that can walk and chew gum at the same time. It just isn't very graceful. You can see right now the outperformance once again reasserting itself from big tech, even as people are with their eyes wide open. They understand some of the risks, perceiving them with respect to Oracle, understanding that if you are spending more than the cash flow is offsetting, all of a sudden it becomes a little bit more of a concern about that long-term AI investment. At the same time, so pouring money, the biggest foreign debut for a U.S. IPO by SK Hynix on record.
Just to take a step back, a little bit of a breather and think about framing the week. Bit of pushback to an Amazon debt offering, arms wide open to an SK Hynix equity offering. And on the debt side, the questions are different. When we spoke to Vishal Kandudra of Morgan Stanley earlier on this week, he said it pretty clearly, that the hopes and dreams will get paid in the equity market. We won't get the upside in the debt market. So show me the yield. And I think that's part of the pushback. Want to raise the capital over here, need to pay up.
The pendulum is swinging just a touch back to debt investors having a bit more leverage. You're seeing equity investors still really believing in the upside story. This has been happening slowly over a period of time. It isn't just happening, though, in the AI trade. And this is what I find interesting. You also see this in the government debt sale side of things as well. You see people in the bond market saying, we have lots of cash, we want to put it to work, but we want to get paid. This is a new dynamic. This is not a market cracking. This is not a market breaking down. This is a market being more discerning, and a lot of investors seeing the opportunity to get more money.
It's a market repricing. The competition for capital continues. More on SK Hynix in just a moment. I want to talk about Japan. We should all talk about Japan. The Japanese government just giving the pension fund a bit of a nudge here. The finance ministry, to be specific, to bring the money home. Yields down across the curve at the long end, down by more than 10 basis points. This is the $2 trillion beast, almost $2 trillion beast, potentially sparking the great repatriation trade. The takeaway this morning, it'll take time.
What a lot of people are looking for is just how broad the implications are. Look, this was the finance minister in response to a question saying that there should be a policy, or there will be policy, to support the repatriation of assets in Japan. It led to this rally in some of the Japanese assets. It also has implications for U.S. treasuries and for other assets around the world, because that's where these Japanese money is currently. So do you start to see actual policy prescriptions to ease the pathway to make that happen? Is this verbal intervention? This was clearly prepared, even though it was a response to a question.
We'll take a beat on that particular topic in just a moment. Fantastic guest coming up. Equity futures this morning, erasing this morning's losses and heading towards another week of gains. S&P 500 futures down by not even 0.1%. Coming up this hour, we'll catch up with George Goncalves of MUFG, with equities on track for a second week of gains. Jing-Ji Yu of Morningstar as SK Hynix launches the largest ever foreign debut in the US. And Kit Jukes of SocGen as Fed Chair Kevin Walsh names his new task force leaders. We begin this hour with stocks inching lower following a chip-led rally. George Goncalves of MUFG writing the inconsistencies in various market metrics will be ironed out, helping bring back convictions into the fall. George joins us now for more. George, good morning.
Good morning.
What do you have convictions about this Friday morning?
I have convictions that it's Groundhog Day every other week. We have a bond market that always goes to 4.5 in the 10-year, 5% on the 30-year. You get tech stocks kind of rebounding, and you get all-time highs, but we're kind of stuck in nowhere's land.
Yields are range bound, 4.2%, 4.1% on twos at the front end of the curve. We've seen that quite a few times, but there is an aggressive push from both corporate America and the tech trade worldwide to raise capital in this market.
Yes.
We started the show by talking about the distinction in the equity market and the debt market right now. What do you see?
Yeah, look, I think it's interesting. If you actually take from like an upside-down pyramid perspective, there has been dispersion within leveraged loans. There's been dispersion within high yield, but IG has been very homogeneous. It's been very, very tightly knit. Almost every spread kind of tracks the overall index. You know, if there's going to be more kind of discerning nature coming from the credit investor world, we should start seeing it in IG. IG is way too tight, and there should be some sort of concession given all the capital has to get raised.
So do you think there's any takeaway in some of the spread widening, at least in the new issues in the bond market, versus the robust demand for some of the equity offerings? Do you think the pendulum is shifting more to the bond investors? Do you think bond investors are getting a little bit more wary about a high yield environment more broadly? What's your take on that?
No, I think your opening remarks were spot on in the sense that yeah, now you have to kind of pay to play. And so I think that aspect is going to be with us. But it's been an amazing year so far, a lot of issuance. But you know, in the second half of the year, if there's a lot more capital raising that's needed, I think the yields and spreads are going to have to widen to facilitate.
When is spread widening the window closing? And this is the distinction that we're having trouble understanding, because at one point it was investors pushing back could potentially curtail some of the spending ambitions of big tech. At this point, it's going to cost them a little bit more. Is there a tipping point where suddenly it becomes a constraining factor?
I mean, given the sort of estimates for sort of revenue potential, if you pay an extra 10 basis points, that's really not going to move the needle. I think it really starts to matter when you have bigger moves. And it's going to be a function of both, you know, like bond market volatility as well as spread widening that's going to really, maybe not necessarily curtail credit availability, but might kind of close down markets. And that's where we get nervous around the fall.
We should know we're picking up on small signals here. Getting deeper into the summer, it's still quite snoozy, 260 on high yield spreads, which historically, as you know, Lisa, better than most, incredibly tight.
It's incredibly tight. When you take a look at bond market volatility, it is absolutely nowhere. So when people start saying, well, it could get more volatile, it's not getting volatile in any way, shape, or form, either in bond or overall stock index level types of metrics. So again, not necessarily screaming warning bells.
Step up Kevin Walsh. Does Kevin Walsh make things more volatile? The reluctance to communicate, to provide forward guidance?
Well, I do think that, you know, it's kind of refreshing that we're taking the opportunity to kind of slow things down a little bit. I mean, perhaps we've had over communication in some angles, right? And so I think it's good to see kind of a rethink about the communication strategy. I mean, the 5 task force are now fully in motion. I think it's an opportunity to kind of rethink, you know, what is the appropriate policy, like how to communicate with markets. And markets, you know, the bond market's a sophisticated group of individuals. We can discount things too. We don't have to be kind of handhold.
At the same time, to the degree that we are hearing anything, it is increasingly hawkish. Even New York Fed President John Williams yesterday came out, and he has been actually pretty dovish for the past couple of meetings, and he came out sounding really hawkish, saying that the inflationary problem is not necessarily just tied to oil prices, but AI is his bigger inflationary concern. Are you starting to change your perception of the reaction function at a Fed that has no doves left?
I'm not sure if it's no doves left. I mean, I think people are kind of falling in line. I mean, you heard it even last week at Sintra, and like just like the idea that we want to reduce forward guidance is now becoming a theme amongst all central bankers, both here and abroad. I'm not sure if it's dovish. It's just that we're used to having too much information, so that anything less than that is going to be viewed as hawkish. Maybe they're just kind of letting us figure things out on our own. Yeah, I'm not, you know, thinking that's a signal per se.
Two's at the moment close to 420. That is still a decent gap above where policy rates are right now. Max Kettner of HSBC is still quite bullish on equities and overweight risk more generally, and he points out that it will be difficult for this Fed to out-hawk market expectations. I think that's an important question. How hard will it be for this Fed to out-hawk what is already in the price?
Yeah, well, the thing is interesting. I mean, what does out-hawk mean? When you look at the WIRP page on Bloomberg, you have the market pricing in one hike and then followed by cuts. That to me looks like risk management. It doesn't look like a market that's really that hawkish. They're just scared of this unknown that there may be a risk of a hike. I don't buy it.
Do you have a base case if you don't buy it? What do you buy?
So we think that the Fed's on hold, and in fact that they're going to end up coming back to square one, which is that neutral still is somewhere close to 3%. And at the end of the year, this is going to be like a big exercise in like just kind of figuring out that we're coming back towards 3%.
I want to go back to where John began the show when he was talking about Japanese bond yields and the fact that you did see a rally into them, and this question around Japan being the big repatriation trade that hasn't happened for about 20 years. This does seem like it is potentially a bazooka later in the year, should there be true policy efforts to support Japanese investment firms bringing back their investment thesis to their home country. Is there any teeth in this?
I mean, look, the Japanese, both investment base, banking system is so integrated with the U.S. economy on so many different levels. It's very difficult to see like a wholesale kind of repatriation. But we all know that it's on the margin that prices are set, and so it really comes down to like how much how much capital could come back to Japan, or is it more a function of there's going to be less capital leaving? I think it's more about the capital will stay at home and look for the higher yields within the Japanese bond market and the Japanese banking, like regional banks, the pension systems. They can allocate more there. Yields are more.
Do you think markets will achieve that without it being mandated?
I think at the right price, there's people will be interested.
Close to that right price.
I think we're close to that right price. I mean, and that's why we have a pretty decent reaction overnight, just on one headline, and you see the Japanese bond market favorably moved over 10 basis points.
If less money is leaving Japan, that means less money is available to buy into some of the issuance in places like Europe that the Japanese have turned up to buy. Where do you think it's vulnerable if you do start to see that turn?
Yeah, that's a great point. I mean, I think that the U.S. bond market, left to its own devices, will be fine, and we'll be able to find capital. I'm more worried about the smaller markets, even emerging markets that benefited from carry-type trades. Like that's probably would be more at risk.
George, it's good to see you. It's always good to catch up. Yep. Thank you, buddy. George Concarbis there of MUFG. You're reluctant to make too much of a big deal about what's happening in Japan because I feel like we've talked about it so many times over the last 10 years.
Can you do verbal intervention that's successful without following through time and time again? And ultimately, the Japanese finance minister is doing an incredible exercise in verbal intervention. Will there be the follow-through where we get details about how they're exactly going to support this?
The moving dollar yen did not hold off the back of those headlines, that's for sure. Equity futures right now in the S&P just about unchanged. Let's get you an update on news worldwide with your Bloomberg Brief. Vonnie Quinn has more.
Good morning, John. The US and Iran are resuming peace talks even as they exchanged strikes earlier this week. A US official telling us here at Bloomberg the talks are at the technical level and saying the US is aiming for a permanent peace agreement by mid-August. SK Hynix raising more than $26 billion in its ADR offering, the largest ever U.S. first-time share sale by a foreign company. It sold nearly 178 million ADRs for $149 each. They'll begin trading on the NASDAQ later today. And do tune in to Bloomberg at 10:30 a.m. for Ed Ludlow's interview with the chairman of SK Hynix. Fed Chair Kevin Warsh announcing the leadership of 5 task forces to examine the central bank's approach to key aspects of monetary policy. The leaders include prominent academics, former central bankers, and corporate executives. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. We'll have more on that story a little bit later this hour. Up next on the programme, pressure rising for a deal.
To me, I think it's over.
We just hit him very hard. I'm not sure I want to make a deal with him. Let's just finish the job.
But reportedly, the talks are ongoing. Stephen Cook of the Council on Foreign Relations joins us next. Live from New York City this morning. Good morning.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffiti. We're tracking breaking news today from Wall Street to Washington. Let's
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. we go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Heading towards a weekly gain on the S&P this morning. Some muted losses, down by not even a tenth on the S&P 500. On the Nasdaq 100 this morning, down by a third. The money going back into tech. More recently, semis in the last 24 hours. Lisa Shallard of Morgan Stanley joining the program later on this morning. Lisa Shallard pretty punchy about getting out of semis and into hyperscalers. Let's switch up the board and get to the bond market. 2s, 10s and 30s. 2s and 10s, yields bleeding higher through much of the week. This morning down a basis point, still close to 420 on 2s, 450 on 10s, 5% on 30s. How many times have you heard me say that through the week? A range-bound bond market. In Japan, nothing range-bound about it. Big bid coming into the long end of the curve in Japan. A conversation in Japan about the pension fund investing at home. This could spark a major rally in Japanese assets. Yields are lower. Dollar-yen a little bit stronger off the back of these headlines, but still, dollar-yen down by just a third of 1%. So I stress only a little bit stronger.
Yeah, if you're waking up and you're wondering what were the comments that actually did spurk this move, it is this from the Japanese finance minister. One priority is to encourage households as well as pension funds, including the GPIF, to increase their investment in Japanese financial assets. We intend to pursue policies that support that objective. No more details, no more rhetoric. This was in response to a question in a routine press conference. People taking this as signal that they will follow through on something, and that is what's led to such a rally in the bond market.
Let's see if they do indeed follow through. Let's see if markets, just through price and yield alone, keep the money at home. Let's turn to commodities this morning. Brent at 76, WTI at 72. Did you see oil production in UAE?
It was a record.
Record high.
Absolutely amazing.
Supply coming back online.
And it shows how UAE has broken away, as they have said, listen, we're out of OPEC and we're going to do what we want. But it also highlights how much supply has really offset some of the lack of what's going through the Strait of Hormuz. It explains why it's been such a difficult trade to get right. Why it's like the ultimate widowmaker trade, try to bet on oil.
Yeah, we often say on this program, if you want to make a fool of someone on Wall Street, ask them to forecast crude. It's kind of the story the last few months, isn't it? Where are we then? Strikes continued through the week. Talks reportedly ongoing. Under surveillance this morning, pressure rising for a deal.
To me, I think it's over. I don't want to deal with them and with this scum. As far as I'm concerned, it's over.
We just hit him very hard. He did a little something today, but it was really retribution for last night.
I'm not sure I want to make a deal with him. We can play games, but I'm not sure I want to make a deal. Let's just finish the job.
So here's the latest this morning. Sources telling us here at Bloomberg, technical talks between the US and Iran are ongoing, following renewed hostilities this week, threatening to shatter fragile negotiations. Joining us now from Washington, Bloomberg's Tyler Kendall. Hey, Tyler.
Hey, John, good morning. Well, this White House official reiterated to us that the White House remains committed towards a diplomatic solution, which could ease fears that this conflict is headed back towards an all-out war amid what was such significant escalation earlier this week. That is in line, though, with our analysts at Bloomberg Economics, who say that this recent bout of fighting follows a, quote, familiar pattern where both sides are trying to gain leverage at the negotiating table. Because going into this week, we already knew that talks were set to slow in some regard, as Iran held several days of funeral rites for the former supreme leader who was buried yesterday. But what feels markedly different now at the end of the week is that the U.S. removed that key waiver, allowing Iran to sell its oil to market, as the Strait of Hormuz still remains the top point of contention and the top focal point. Overnight, we heard from CENTCOM disputing Iranian media reports that the country has control over the strait, confirming that the U.S. military has helped to transit through more than 800 commercial vessels and more than 380 million barrels of oil since May. But John, even as more supply comes online and we've seen this progress, it is being threatened. New this morning, we heard from the International Energy Agency, which said that these renewed hostilities risk derailing efforts to rebuild depleted global oil inventories when it comes to their projections for the end of this year.
Those inventories in some places have been plunging. Tyler, thank you. Tyler Kendall in the nation's capital. More from from Tyler later this morning. To build on this conversation, Stephen Cook of the Council on Foreign Relations writing, the president was insistent on a return to the status quo, and the Iranians were not willing to go along. There will be pressure on the White House to return to negotiations. Stephen joins us now for more. Stephen, welcome back to the program. The president's own words, let's just finish the job. What does finishing the job mean at this point?
Well, it's unclear what finish the job actually means and how they would accomplish that. Finishing the job would essentially mean forcing the collapse of the Iranian regime, which I think the president has come to the determination is not really feasible. So this seems like bombast, trying to shape the behavior of the Iranians at the negotiating table. I'll point out that American strikes have gone further than they have before, hitting some infrastructure as a warning to the Iranians that should they continue to fire on shipping along that U.S. naval declared safe zone in the Strait, they'll pay a heavier price. I think this is all about negotiations. I don't think the president is returning to full-on combat with the Iranians, who refused to capitulate during the most intense phases of Operation Epic Fury.
Stephen, how do you get negotiation between two parties who profoundly do not trust each other?
Yeah, this is a real problem, and this is essentially a negotiation about the Strait of Hormuz, and I think the Iranians have made it clear that in the language of the MOU talks about arrangements for transit through the Strait of Hormuz, and they see that as their administration of it. It's a geographic power that they've discovered as a result of this conflict, and they're not willing to give it up, which is why they're firing on ships that are being guided through the southern route of the Strait. The United States wants to return to something more akin to the status quo that existed on February 27th. There is huge differences between Iran and the United States on this issue. It's not quite clear to me what these technical committees are talking about, given this gulf between Iran and the United States on the Strait.
From Marcus' perspective, they're not exactly looking for some sort of wholesale, long-standing solution. They're just watching how many ships are transporting through the Strait of Hormuz. Is there enough of a U.S. presence and potentially even allies participating in that to protect a certain critical mass of tankers getting through the Strait of Hormuz without getting attacked by Iran, even if there is no agreement?
I think that the most realistic outcome here is kind of what you see is what you get. I think the U.S. Navy is going to be involved in providing guidance through this southern route, with the Iranians periodically firing on ships to make a point and try to establish their control over the strait. This is something that could go on for quite some time. As you pointed out, there's a huge differences between these two governments. This may be the status quo. Let's look back to the 1980s and the tanker war. We lived with this for quite some time. So we may yet again be involved in a prolonged operation to ensure the free flow of energy resources out of the region. And it will mean a more consistent American investment in the region than the president even signaled not long after he signed the MOU.
Steve, this goes against the theory that we had a number of months ago, and it came out of the Treasury, and it certainly wasn't original, but it was called Operation Economic Fury, that you'd put so much pressure on the Iranian economy that ultimately they'd have to change their approach to negotiations. Any sign of a change of approach?
No, I mean, the president did revoke the license of the Iranians to sell oil, which will have an impact on the Iranian economy. But what has been striking about this entire episode is that the Iranians are neither willing to capitulate on the battlefield nor the negotiating table under very significant economic pressure. This demonstrates what analysts have been saying for a long time. The regime remains intact and willing to apply a lot of pain on the Iranian people to ensure its survival. So Operation Economic Fury has not yielded any greater results than Operation Epic Fury.
Is there a vulnerability, Stephen, that they need to look at? They've looked at economic pressure. It's not worked. Military pressure, overwhelmingly, the American military is superior in a number of ways. That's not worked either. What would work?
Well, what would work would be the Iranian people rising up and bringing down this regime itself. That's what the United States and Israel tried to do to create an environment in which that would happen. But that underestimated the capacity of the regime and its ideological cadres to hang on. We don't know what will happen 6, 8, 10, 12 months from now. There was a significant time lag between the operations against Iran in the summer of 2025 and major protests that shook the regime in December and January. But we have very, very little insight right now as to what is happening inside Iranian society. We know times are tough for the Iranian people, but there's been no sign so far that they are coming out into the streets and demanding an end to the regime.
Stephen, earlier in the conflict, there was some discussion around the U.S. running out of munitions, and that was part of the pressure to relieve maybe some of the most serious bombing efforts. Do we have a latest update on that? Do we have a sense of where that is?
Yeah, I've seen some data on this, and that we have run down by almost 2/3 some of these munitions that we had built up over the years. And that is likely one of the reasons why the president has said, we're going to hit them hard, and then says they're begging for negotiations, a signal that he remains committed to a diplomatic solution to this problem. The munitions issue is a big one, and it is a very significant discussion here in Washington about the evolution of warfare and how these exquisite weapons that take lots of time and lots of money to build may not be appropriate in the age of drones and AI.
Steve, it's good to see you. Stephen Cook there of the Council on Foreign Relations. To Steve's point, the asymmetric nature of a lot of this, that you can basically hijack an international waterway with some cheap drones.
You have to completely rethink how you deploy your munitions and what timescale. Being able to do it rapidly doesn't mean that that is the best policy.
The new normal. Don't know how you all feel about that. This could be the status quo for quite a while.
I think you know exactly how they feel about it.
I'm sure they're not very happy about it.
Yeah, exactly.
Us, them, us,
yeah.
we, they.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years when I first became a congressman. It takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Welcome Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Earnings from Delta Airlines just seconds away. We'll get to that in just a moment. Equity futures on the S&P 500 unchanged. On the Nasdaq down by about 1/3 of 1%. On the Russell we're down by 1/10. The snoozy start to this Friday morning stateside. Let's get you some single names, some morning movers. Yahara has more. Hey, Yahara.
Hi, John. Ahead of SK Hynix's debut later this morning, we are seeing some pressure across the memory trade with names like Micron and Western Digital feeling the pressure, but it has been a rough stretch, a choppy stretch for these names as investors rotate out of their biggest winners. And yes, these are the biggest winners in the market this year. So that makes SK Hynix's $26.5 billion U.S. listing a real test for investor appetite. It's already, SK Hynix is already one of Asia's biggest success stories. So now U.S. investors will get a chance to weigh in. Meanwhile, we are seeing Meta shares gaining, outperforming the Mag 7 this morning, up more than 2% in the pre-market after a report from the research firm Semi-Analysis argued the company has the best chance at catching up to OpenAI and Anthropic. It points to Meta's massive AI infrastructure build out and even projecting the company will have more AI compute than both rivals by year end. And we end on this company, CCC Intelligent Solutions. Shares are jumping 7.25% in the pre-market after Reuters reported that the insurance solutions company is exploring a sale. It comes after a difficult stretch, of course, for software companies as investors fear AI disrupting their business. And it has hit this stock especially hard with shares down 30% year to date. John?
Yahara, thank you. Thank you very much. We promised you an update on Delta Airlines. The earnings just dropping. Here's the stock price reaction. The latest from Delta reaffirming its full year profit guidance.
Yeah, for $6.50 to $7.50. The estimate had been $5.95. Interesting to see the shares up on this, and I'll tell you why. Even though it's an outperformance pretty much across the board, those shares are up more than 28% so far this year. The expectation was the bar is so high that for them to out-deliver, to outperform, they had to really deliver something amazing. They did beat when it comes to when it comes to just general earnings. Passenger sales, passenger revenue, however, came in just a little bit light. Where did the outperformance come from? It came from the American Express partnership, increasing 16%, and it came from business travel and premium travelers who saw their bills go up significantly, and they were a lot more active. So is Delta a story for the rest of the airlines and for the rest of the economy? Or is Delta a story of a K-shaped economy where the upper part of the K is doing well enough to offset really big fuel bills that didn't seem to really impede the full year forecast?
The execution is pretty impressive. We came into the year, let's just take oil. Oil came into the year in the 50s. It averaged the second quarter in the low 90s, around 93 on WTI. And this morning, they acknowledged that cost of fuel is still up 50%. So you've seen a massive spike higher in fuel. What does it mean for the broader economy? At Bastian saying this morning, I would not anticipate any decline in airfares. That's what the airline business is telling you, because the airline business is going through something very significant off the back of this spike in fuel.
And pretty much every executive in the airline industry, and they are uniform in saying this, will go out there and say that airline tickets have lagged behind inflation for so many years, they're just playing catch up. Prices are not going to go down, and a big key issue has been capacity just hasn't really expanded. So how much are we going to see consumers continue to absorb these higher prices versus pushback? Right now, the top line growth at Delta looks like people are continuing to travel, and business travelers in particular. Interesting to see which areas, aerospace and defense, banking, and automotive, were the biggest business travelers. So maybe some big deals in those areas.
Delta this morning up by 3%. Compare and contrast the words of Ed Bastian with the words of the PepsiCo CEO just yesterday. The consumer is worse than we had anticipated, and it's driven mainly by gas prices.
Two different consumers, and that I think is what we're seeing. And how much do you continue to see that bifurcation throughout different consumer-facing companies? Interesting to see who's going to succeed, who's going to fail, and can we draw larger kind of conclusions, or is this going to be a company and part of the consumer story specific issue.
Bramo on tour Monday morning. Don't miss it. 8:45 Eastern Time. Lisa catching up with Ed Bastian, the Delta Airlines CEO, next week.
Yeah, I'm curious to see what he thinks for the forward outlook. They are maintaining their forward guidance, but do they start seeing some pushback from the lower income consumer? Does a lower income consumer fly Delta? That's another question. And how much they see the other aspects of their business increasingly financing what they do when it comes to the bread and butter of actually flying, right? Is it a credit card company or is it actually an airline industry?
Credit cards with wings, isn't that what you often say?
You know, if it's a beautiful credit card with lots of beautiful seats. And I'm also curious about what we were talking about yesterday, the sort of basic business and how much lower that's going to be, because I think a lot of people would actually be into flying flag.
I get seat anxiety. I need to know what seat I'm sat in and where I'm going to be on the plane.
You have seat anxiety.
Seat anxiety.
So
yeah.
how much are you willing? How much are you willing to pay for seat anxiety?
Well, I want to see how big the spread is between the
value.
basic price and whether work forces that on us or not.
Okay, this is good. Yeah. Then you could sort of weigh your seat anxiety.
I get one of those dogs to go on the plane with me.
You can peacock.
I get one of those dogs or a peacock or whatever the animal is, so I can get through that seat anxiety of finding out what my seat is on the plane.
Yeah, your comfort peacock. You can borrow mine.
Is that what you've got?
Big time.
I remember when Matt Miller took a Rottweiler on as his comfort pet. Yeah.
And I believe that another member of his family was in the back of the cabin.
I'll tell that story another time. Delta Airlines this morning up by about 3 to 4%. On our radar this morning, the top story, SK Hynix ADR said to begin trading on the Nasdaq today. The company raising over $26 billion, making it the largest ever listing by a foreign company in the US. Elsewhere, Fed Chair Kevin Warsh naming the leaders of the 5 new task forces created to advise the central bank. The leaders include 3 former central bankers, university professors, and corporate executives. And finally, Japan's finance minister making a bid to strengthen the country's currency, calling on the nation's pension funds to boost their investments in domestic assets as the yen sits near multi-decade lows. And that right there are some of our top stories this morning. Let's turn back to our other top story then. On Wall Street, investors are waiting the blockbuster US debut of SK Hynix. Jing Ji of Morningstar writing, I do not think the listing itself will largely impact the sector view as a whole fundamentally. We could possibly see some shift in fund flow in the near term. Jing joins us now for more. Jing, welcome to the program. I just want to build up on that last line. I think it's important. People talking lots about that trade, that maybe you short the local listing and get long the listing here in the US. How do you see flows emerging off the back of this listing?
Yeah, well, I think, the most important thing here, I think we can all agree upon is that, this listing there's massive appetite for the listing, right? I think what investors are looking out for, most importantly right now, is the fungibility of shares. Should shares be fungible, should there be any restrictions on fungibility in shares, we could very well see shares trade at a persistent premium over what they are, over what they're currently trading at now, in terms of Korean shares, and we could possibly see greater demand over there.
Do you see others following suit, given what we've seen and how this has played out and how welcome this listing has been, the amount of demand? Jing, do you see other names following?
Yeah, well, that's definitely a possibility. Right now, I don't think, there hasn't been any concrete announcement. But I think as a whole, memory players in Korea do trade at a discount towards their US peers. Part of the goal of this listing is to actually close that gap between the Korean memory makers as well as the US memory makers as well.
There's also been a number of leveraged ETFs and other funds that have launched in tandem with SK Hynix's IPO in the United States to gain access to this in more extreme fashion. Does that concern you from either a creditworthiness or just stock performance basis?
Yeah, well, I think those listings really play to how strong the AI trade has been over these past 6 months, and is also deriving from great investor interest. I think beyond just the leverage ETFs themselves, we also look at even stocks themselves, right? Margins on these stocks are at record highs, right? Retail participation on these stocks are also at record highs. So there is a lot of interest in these stocks, and and it has resulted in quite a bit of volatility. So we would put more caution towards the stocks as a whole from a risk to reward perspective.
What do you make of the fact that we have seen a bout of volatility that's been pretty extreme in terms of the Kospi and just some of these names specifically over in Asia, at the same time that SK Hynix is able to raise $26.5 billion in the United States with an oversubscribed offering? How do you explain this dissonance of both an understanding of incredible volatility, leverage, but also really substantial demand?
Yeah, well, I think when we think about the ADR listing, I think it's a mix of strong demand for AI names, as well as access, right? Greater access towards Korean tech stocks as a whole. The volatility over the past few months is really reminiscent of how high expectations are in terms of where memory prices can go, in terms of where profits can go for these companies, and perhaps how sustainable these profits are over the long term. And this back and forth between investors as a whole has really resulted in the tremendous movements in the stock. I think more importantly, when we see these profits and we see these profits going up for these stocks, throughout the first 6 months of the year, it really points towards a very positive near-term picture. But I think investors are still debating on the longer term views on whether memory is still a structural pricing story or a cyclical pricing story. And we still don't see a very clear answer on this. And I guess that's where a lot of the volatility lies right now.
Jing, best guess. What do you think it is? One or the other as you think about the long-term debate?
Yeah, so here at Morningstar, my base case view is that we should see strong prices well into 2027. There's no supply coming up in the near term, and demand remains robust. However, we are a little bit more concerned with the long term. I do expect cyclicality to return towards the end of the decade. As strong supply comes up in the second half of 2027 onwards, and to us, the AI monetization path here still remains relatively unclear, and we think that the probability of that positive view coalescing is still not very high right now.
Jing, it's good to see you. Thank you. Jing Ji Yu there
Thank
of
you.
Morningstar weighing in on SK Hynix following a record equity raise for a foreign company, first time equity raise here in America from SK Hynix.
And it came despite the volatility that we've seen. It came despite some of the warnings that we've heard that maybe some of the memory chip names have gotten overpriced, that perhaps people are pricing in over-optimism in terms of how long you can get these 85% profit margins. Nonetheless, they still saw substantial demand. You asked a great question. Does this open the door to others? Is this saying, green light, you don't even have to offer a discount? Because normally you have to offer a discount to where the shares are trading in their home indexes, their home exchanges. This actually was at a 3% premium. So again, it really sort of breaks some molds and gives a real green light to others.
I have a very simple question. Maybe it's easy to answer, but if these guys believe it's a good time to sell, why is it a good time to buy? And that's a question that I would have for a lot of companies issuing equity and debt right now. The supply has really picked up. It's a massive change from what we've seen over the last decade. I know I keep beating the same drum, but I think that's the ultimate question. They've made the decision that now is the moment to issue equity, to issue debt. I get the reason why. Demand is fantastic, but don't you have to question whether this is the peak of the cycle?
Especially if they don't have any need for that cash, because right now the amount of cash flow that the likes of SK Hynix are throwing off is absolutely substantial to supersede any kind of spending plan that they have.
Nasdaq futures this morning down by just 1/3 of 1%, unchanged on the S&P 500. Let's get you an update on news worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. Shares of Delta rising in the pre-market. The airline posting second quarter earnings that beat on the top and bottom lines. Delta also reaffirming its full-year outlook. And tune into Surveillance Monday at 8:45 a.m. Eastern for Lisa's interview with Delta CEO Ed Bastian. Taiwan suspends stock trading and shuts schools and offices in preparation for a typhoon. The storm is expected to dump heavy rain over a vast area and could lead to extensive flooding through Sunday. France is one step closer to a World Cup title, securing a semi-final spot with a 2-0 win over Morocco. The French now take on either Spain or Belgium, who will face off in the second quarterfinal tomorrow. And that is your Bloomberg Brief. John.
Vonnie, thank you. Did you watch this one yesterday?
I didn't watch it, to be fair.
Kylian Mbappe.
Oh, yeah.
Seriously, the window for that goal, for that shot, was like this big, literally, and executed it perfectly.
There are a couple of stars of this particular World Cup. Mbappe is one, Messi is the big one, and then, of course, Haaland, the Viking from Norway, absolutely rocking the social media airwaves.
They are lighting up this World Cup. Haaland versus Kane coming up tomorrow. Up next on the program, reforming the Federal Reserve.
I'm appointing a task force in each of 5 areas. That'll be taken up by the task force. We've got a task force for that. I've been on a task force or 2 in my life. It's one of the things we have a task force to do.
I don't mind the list, you know. I think it's a really good list of names. I think it's inspired.
I completely agree. I was really impressed by it.
Doug McMillan on data,
Yeah.
That's pretty cool.
Yeah.
Andreessen on productivity, that makes a lot of sense too.
And job changes, and you have, Merlin King. I mean, you've got a lot of people who have been in the industry a long time who have great perspective.
We'll talk to Kit Jukes of SocGen about that in just a moment. Live from New York City, you're watching Bloomberg TV.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. It doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
It's a quiet start stateside in equity markets. Equity futures going nowhere on the S&P 500. On the Nasdaq 100 this morning, down by about 1/3%. In the bond market, 2s and 10s yields bleeding higher on the week, up by single digits, up by a couple of basis points. Down this morning, we're down 1 to 416.82. On 2s, on 10s, still around 450. Heading into next week, next Tuesday is just massive. We'll spend some time on that later in the program. But next Tuesday, we get 5 banks reporting earnings, get CPI in the morning, and a few hours later, the Fed chair speaks. That's quite a day coming up a week away.
Yeah, a key question for people is just how much you do see this inflationary pressure stemming from AI and from other non-oil related metrics. Really edified by what we heard from New York Fed President John Williams yesterday, where he really leaned on the AI component. We'll get that with CPI, and potentially we'll hear that in some of the CapEx plans from some of the biggest banks.
Let's talk about the outlook for the Federal Reserve under surveillance this morning, reforming the Fed.
I'm appointing a task force in each of 5 areas. You'll hear quite a bit more about these task forces. That'll be taken up by the task force. We've got a task force for that. The good news for you is we have a task force for that. We have a task force on that too. I've been on a task force or two in my life. It's one of the things we have a task force to do.
So the good news is we've got some details on those task forces. The Federal Reserve Chair Kevin Warsh announcing the leadership for his 5 task forces created to review key aspects of the central bank's policymaking, the list including venture capitalist Mark Andreessen and the former Walmart CEO, Doug McMillon. Joining us now to discuss is Kit Juice of SocGen. Kit, various central banks have been through this. More recently, I believe the Bank of England did a number of years ago. What do you expect to be the outcome of these particular task forces?
I'm actually genuinely excited to see the outcome, just because we've come through, you know, since the early 2000s, so many problems for central banks, through from, you know, the bubble bursting at the beginning of the century, then 2008, then the Dubai crisis and the European sovereign crisis, and then on to COVID. And here we are with people asking questions about what the Fed's doing and some of the things that they've been trying to do, and they need to get credibility back internally and globally. Central banks do. They need to get on top of it. And if we're going to go and look and say a bunch of task force on how they communicate, how they run policy, what the limits are to policy, more concretely around what is the plan to exit quantitative easing or vast balance sheets, if they can get their arms around some of that to get some of their credibility back in the right place, then we can move back to a world where we're confident that central banks are going to be independent, or that the most important one can get back to being properly independent, and the whole world's a better place if we can get there.
There's an argument that we should address, get credibility back. Why do you believe they lost it in the first place, Kit?
I think partly they lost it because through the 1990s, being central bank governor was quite easy in the sense that we had all these tailwinds behind controlling inflation, so the growth inflation combination wasn't bad for lots of people. So they wandered around being superheroes, and since then it's got harder. So, you know, they've strayed outside their remit into a, you know, looking after other things than controlling inflation, and in the US case, keeping growth on trend or a sensible level, and have kind of got away from what they should be doing, lost control of their balance sheet, done things that were perhaps, you know, they said would be temporary and haven't been, didn't sort out QE before we got the next round with COVID, and just so left themselves open to criticism from all sorts of corners. And now, frankly, the US has too much inflation, and everybody can see it, and they need to get their arms around what they want to do about it.
It was striking to me how many people are on these task forces that are not from the United States. They're from global central banks, and generally just outside of the central banking universe. Doug McMillon, John was mentioning, the former CEO and president of Walmart. What do you make of that? That the central banker from Brazil, the former central banker from India, Mervyn King, the former central banker from Bank of England. How much are we looking at sort of a tone that's going to be set for central banks around the world?
I hope so. I mean, you know, it's in a sense, it's only surprising when the US does it and includes people from everywhere, because the US has so many people at home who are good at things. But I think it's a very good thing, and let's not make the mistake of thinking the US is the only central bank that needs to sort out where it stands in the, you know, kind of in the next phase of the global economy, and get in the right place for some of the challenges we're going to get, you know, from AI, from investments in AI first, and then from AI afterwards. And some of those things we get from a world with more protectionism now, very clearly. I think the more global it's seen, and the more it becomes something that's sort of kind of a new blueprint for where central banks might go, the better it would be. But we'll kind of have to see where it gets to for that.
Earlier this year, there was some speculation that some investors were finding the dollar less desirable because of concerns around central bank independence, that on the margin, this was shifting people away from the United States. Do you think that some of the shifts that we're seeing from the Federal Reserve could reverse that? Do you expect that to sort of have any market ramifications over the short term?
I haven't seen much evidence that any of it was happening from the data so far, in the sense that foreign appetite for US assets has been very strong, largely because they've had better yields and better growth, depending on whether they're bonds or equities. But yes, lots of people talked about it. I think this is the kind of measure that can, if done right, and we'll have to see how it works out, completely put that to bed and restore confidence in the dollar's position in the world.
Kit, do you think, and this is the ultimate question, that this central bank can hike interest rates before these task forces wrap up their work?
Yes, they can, because if they have to, they will, in the sense that I think for now the plan is to do nothing with policy, stay on hold. But if they start looking like they're losing control of inflation over the course of the next year or so, I think the pressure will just grow and grow. I think that's what we learned from the minutes of the last FOMC meeting.
What does losing control look like, Kit?
It means looking as if we're going to go higher inflation or stay here on inflation and not ease back with oil prices lower.
Kit Jukes of SocGen. Kit, thank you, sir. Appreciate it. Above target for 5 years, the pressure on this institution. I think a lot of this is inspired. I like that on communications, they've gone to the former central bank president of Brazil. I like that because I think that DM central banks are facing EM dilemmas continuously, particularly over the last several years. We've both said we like that Mark Andreessen, and it's looking at productivity and jobs because tech will have so much influence over that in the years to come. And also, is there anyone out there that knows more about pricing in America and inflation than Doug McMillon, the former president and CEO of Walmart?
And the data, because ultimately they've got such an incredible footprint to really see real-time consumer activity. How much is this Federal Reserve in a new iteration post-task forces going to be using private market data in an increasing fashion to give them some sort of real indicator of exactly how the consumer is doing? A lot of people looking to this, I think what Kit Jukes was talking about there is really important, which is it kind of sets a tone for the rest of the world when you have global central bankers sitting on the seats in these task forces. This isn't just a Federal Reserve that's reassessing its function. It is clearly setting a tone for the world, and that, I think, is really interesting. And you saw that over in Sintra when suddenly everyone was getting on the train that forward guidance was useless. So is this a shift in just market cycle, or is this a shift in central banking policy that can get it stated around the world?
Earlier on this morning, I said if you want to make a fool of someone, ask them for a crude forecast, right?
Yeah.
If you want to make a fool of a central banker, ask for a forecast. And that's kind of where they are right now, scarred and burnt by making some forecasts that turned out to be terribly wrong.
Yeah, the dot controversy and whether the dots will get thrown out and what exactly will be their tool of signaling. I think the key is just reaction function, and that, I think, is what a lot of people are struggling with right now.
Coming up next, we'll catch up with Lisa Shallett of Morgan Stanley, Ed Mills of Raymond James, Stephen Trent of SDT Capital Advisors, and Ed Al-Husseini of Columbia Threadneedle. The second hour of Bloomberg Surveillance is just around the corner.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo. And I'm Christina Raffiti. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
Ultimately, the economy is doing fine enough right now.
The Fed can shift pretty quickly as events shift.
They have to get credibility back, and I think focusing on inflation is a way to do that.
We're going to need to see a few hot inflation prints before they do anything.
I think we will have a period of some pretty strange inflation data over the summer.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now. The scores look like this. Equity futures on the S&P 500 just about positive this morning. We're down by 0.25% on the Nasdaq. The headline from South Korea's SK Hynix raising more than $26 billion, a record first-time equity issue from foreign company here in the United States of America. Elsewhere, the earnings are starting. Delta Airlines reaffirming full-year profit guidance. The stock is up in the pre-market by 0.8%. This guidance first offered at the very, very start of the year. The fact that guidance has stuck, even with everything that's happened with costs, is pretty impressive.
The fact that they had the biggest fuel cost in their history and they could still overcome that, supersede those extra expenses with an increase in revenues and maintain their full year guidance is setting people into the shares. Even after a more than 28% gain so far this year, Delta has been the leader when it comes to the major airlines in terms of performance. Key question will be how much is Delta setting the tone for the rest of the airline sector, for the rest of consumer-facing retailers in the United States, and how much is this a story of the K-shaped economy? And it sounds so cliche that I'm almost cringing at myself, but still, people who have money at the upper income levels can spend and are getting more money, and people at the lower income are getting stressed.
I've said it before, it's the Delta Airlines economy, right? Half the country thinks it's Group 1, and the other half is really struggling and can't even afford the back of the cabin, particularly at Delta Airlines.
So who is the person who can afford business, the lie flat bed, but is the basic business, and is it going to be stripped out when it comes to all of the extra bells and whistles? Look, that's, I think, going to be an interesting question. How is the American consumer getting parsed out all of these levels? But still, there is a corporation that is spending a lot of money, and that is in the aerospace industry, that is in the automotive industry, that is in the finance industry. That also helped support Delta. And again, setting the tone for why the economy has continued to do well, even as people really don't feel good on average.
It's a message for the Federal Reserve from Ed Bastian this morning. Delta Airlines CEO, I would not anticipate any decline in airfares.
A lot of people have been talking about how these prices are going to stick. The airline industry in particular has talked about how airline prices have not caught up with the inflation overall. They've lagged behind, so they're not going to come back down. That said, it's not just oil prices. Inputs, cost inputs are rising all over. We heard this from John Williams, tied to AI, tied to new investment, tied to new technology more broadly. And clearly, you're seeing that in the price.
Stock is up by almost 30% year to date. It's up by almost 1 percentage point so far this morning. Coming up on Monday, 8:45 Eastern Time. Don't miss it. Bramo catching up with the Delta Airlines CEO, Ed Bastian, Monday morning at 8:45. Looking forward to that. Coming up this hour, we'll catch up with Lisa Shallard of Morgan Stanley, warning chips may be overbought ahead of SK Hynix's US debut. Stephen Trent of STT Capital Advisors breaking down the latest earnings from Delta. Plus, we'll catch up with Ed Al-Hosseini of Columbia Threadneedle, with Fed Chair Kevin Walsh announcing his task force leaders. We begin this hour with stocks flat as Wall Street braces for SK Hynix's record-setting US listing. Lisa Shallard of Morgan Stanley writing, "We advise revisiting the Mag 7 for potential opportunities, especially in light of our view that semiconductors are meaningfully overbought. By comparison, we believe hyperscalers look downright cheap." Lisa joins us now for more. Lisa, let's start with one before we get to the other. Chips, meaningfully overbought. What gives you that idea right now, Lisa?
Oh my goodness. I mean, all anyone needs to do is look at some of these charts that have gone completely hyperbolic. Whether you're talking about, the Philly Sox over the last 8 to 10 weeks, we're literally at certain points, we're up literally 100% on the year. We've obviously had some churn and some pullback recently. But whether you're looking at the participation in the Philly Sox, you're looking at semiconductor ETFs, you're looking at levered ETFs, it's all part of this same trade. And so much of it is related not just to swollen order books in across the industry, but quite frankly, folks extrapolating the sustainability of pricing and the pricing power, obviously, that companies like Micron have been able to embed in their earnings and their huge earnings surprises.
Lisa, so many people are waiting before they get out to see a reduction in CapEx. They're waiting to go to the hyperscalers once they see a reduction in CapEx. You noted that early this week. Why not wait until then?
Because I think that we're in the early innings of the beginning of that deceleration in the CapEx process now. Like everything, what we tell people is you can't market time these things to the day. You have to kind of sense changes in the second derivative, and we're sensing it. I mean, just look at some of the news flow that you're seeing from companies like Meta. It kind of signals to you that there are conversations about the rate and speed and return on investment on some of this CapEx, and how can they pull forward their monetization strategies.
Lisa, yesterday we talked a lot about Meta now creating their own chip, Meta trying to be much more like a hyperscaler. Do you think that some of the reduction in CapEx that you're feeling out not only is coming from the likes of Meta saying, maybe we'll sell some of our compute capacity, that's a better proposition than using it internally, but also because of pushback that you're seeing in financing markets, particularly in fixed income?
I'm not sure that the way these guys are behaving has to do with access to capital, just quite bluntly. I mean, I think that there's ample capital still available broadly to this trade and to most of the companies in it. I think this is much more about engineering and economics. Whenever you have a scenario where supply chains get bottlenecked and folks are extracting excess rents, as some of the memory chip guys are, the engineers get to work. And that's what we're seeing. And we're seeing the AI data center tech stack, if you will, being re-engineered to include lower cost proprietary chips that many of the hyperscalers are now designing themselves and having manufactured white label. They are using a combination of open source as well as frontier lab models, all in the effort to compete on price and essentially to consume less energy per token.
Do you see us entering a phase where AI is less inflationary as a result, where there is more discretion when it comes to how much hyperscalers in particular are willing to pay for chips, for other particular inputs, that actually could reduce how much it's really adding to the U.S. inflationary backdrop?
Absolutely. I mean, I think the front end of this story is NVIDIA, to be honest. I mean, you roll back the clock a year, Almost every hyperscaler felt that they had no choice but to, buy NVIDIA GPUs exclusively and continue to queue up for the latest and greatest addition. I think now, those GPUs are actually net losing total market share of data center AI designs, and some of these proprietary ASICs are taking share. And so I think what we've seen with NVIDIA, and the stock has kind of stalled out over the past 6 to 9 months as a result, we're going to start to see with some of the other semis.
So, Lisa, we're talking about 20% of the index, that's semis on the S&P 500 right now.
Crazy.
For some people, 100% of the sentiment, the enthusiasm for this market. Where does it leave the index outlook, Lisa, if you believe that that big chunk of this market is overbought?
Yeah, so what we have to remember is that the market is also concentrated on the other end, right? It's concentrated in some of the hyperscalers that have sold off. And so what's happened is that, as we've had this churn, right, we've had this huge move and the change in market capitalization of the semiconductor industry from about 3% of the index to 18%, as you point out, and the hyperscalers have actually lost share of the index, and we've quote unquote deconcentrated, and that's kept the overall index in a zip code. I think if this intra-tech trade continues to churn, right, we can absorb, a 10-20% decline in semiconductors as we already have in the last couple of weeks, and not have a lot of damage to the headline index. That's one of the good things, if you will, of having the hyperscalers be as big as they are as a group.
Lisa, it's good to see you. Enjoyed the note earlier this week. Thanks for joining us this morning. Thank you. Lisa Shannett there.
Absolutely. Have a great
Morgan
weekend.
Stanley. You as well. The message pretty clear here. Don't wait for a reduction in CapEx to get out. That's the message I took away from Lisa's work this week.
Yeah, and that some of what we've heard from Meta in terms of selling compute as well as developing their own chips is sending a really loud signal. Also, the idea that you're seeing headcount reductions at places like Microsoft, they say it's not necessarily tied directly to AI investments. Nonetheless, clearly shifts going on to rationalize some of the spending, which is a clear departure from where we were, say, a year ago.
My spidey sense was up too with regards to Meta. My takeaway from our interview that we had here at Bloomberg in the last 24 hours was just a lack of conviction, and I found that unusual for someone like Zuckerberg, who usually is pretty sort of full force thinking about the future and with tons of conviction and confidence, and I didn't sense that at all about where that spend was going and what it would be used for.
Which maybe is a reason why they're selling some of it. Also, after a couple of flops. Remember, they changed the name to Meta because the metaverse is going to become the next best thing. And needless to say, it hasn't. And now question, how do they really justify some of their expenses? Is it going to be becoming very much like some of their competitors with respect to hyperscaler-esque types of characteristics?
A bit of confusion around that name at the moment, that's for sure. Equity futures right now, the S&P 500 just about unchanged, turning positive just moments ago. Let's get you an update on news worldwide with your Bloomberg Brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. Volkswagen is cutting its model lineup by as much as half as part of a savings push. The New York Times reporting the German automaker is dealing with falling sales and increased competition from Chinese automakers. Shares of EasyJet rising in London trading. The budget carrier receiving a fresh takeover offer of $7.7 billion from private equity firm Apollo Global Management. That beats out a rival proposal from Castle Lake. Goldman Sachs tightening its personal trading rules, restricting employees from betting on a range of prediction market contracts. According to a document seen by Bloomberg, the policy prohibits trading on companies, election outcomes, or the performance of any financial market. And that is your Bloomberg Brief. John.
Vonnie, thank you. The good news for the degenerates, as they call them, the betting, the gambling bros, over at Goldman, if you're over there, is you can still bet on sports and entertainment, apparently, based on this memo that we've seen here at Bloomberg. But repeated violations of the policy might lead to a firing or closing of a member's account. In cases of improper trades, the bank can also require staff to forfeit profit over $200 or donate it to charity.
I want to understand the backstory to this because I am assuming that something transpired to come up with these very specific prescriptions. And honestly, I'm not that surprised. I mean, it is a huge liability, especially at times where people are saying that prediction markets are increasingly rife with insider trading and people who have other knowledge. I mean, why would you expose yourself to that liability?
Some of the bets that I've seen, away from prediction markets, but some of the bets, just the sports gambling of the last week, like people who had bet $100,000 on Haaland not scoring at a game.
Yeah.
Can you imagine the experience of that game? I sit at home, I enjoy the football. Having that much money online, hoping that a certain thing doesn't happen that some people might not even think about?
Some people are created differently. Some people, like people sitting at this desk, might have anxiety that would create such a terrible viewing experience that it would not be worth any money in the world.
I've got a buddy who had several bets on about a score or assist, and there were 4 or 5 different players involved in this in the last week or so. And they were just watching the French game, waiting for Elise to either score or assist to complete this bet and get the payout.
You know, I don't know. I can't relate.
It's not how
No, and I wonder how it's going to change the sport, and also raising questions about some of the referees and some of the calls.
Yes.
And that also leads to other potential issues, but I digress.
Yes, I won't go there. Equity futures right now, the S&P just about unchanged. Up next on the program, the cost of war hitting home.
I don't care about the midterms. People understand it. They know that, very simple, Iran cannot have a nuclear weapon. I'm doing that for the world. I'm not doing it just for us.
Up next, Ed Mills of Raymond James.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Consequence for U.S. markets. We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
So let's go cross-asset. Equities this morning just about unchanged on the S&P, down on the Nasdaq by 2/10. That's the equity market picture. Here's the bond market story. 2s, 10s and 30s heading into next week with CPI and Fed Chair Kevin Walsh's testimony on deck. 2-year yields near the upper end of the recent range, close to 420, 416.82, yields down a single basis point. Check out the move in crude. WTI and Brent facing down a couple of things this morning. We're up by 0.4%. Some record supply coming out of the UAE. That's notable. And this headline is too from the New York Times. Qatar in talks with the US and Iran to de-escalate. Really matching our reporting here at Bloomberg to some extent, reinforcing it, that the talks are ongoing between between the two sides.
Yeah, and this has been a real question about what kind of ability there is for two sides to continue negotiations when there is no trust. We did have reporting saying that there were technical talks ongoing. Again, the goal here, just reducing the frictions to allow tankers to go through and potentially create some more calm in the region.
Under surveillance this morning, the cost of war hitting home.
They're going to outweight me, you know. We'll outweight him. I don't care about the midterms. People understand it. They know that, very simple, Iran cannot have a nuclear weapon. I'm doing that for the world. I'm not doing it just for us.
So here's the latest this morning. The war in Iran weighing on Americans ahead of the midterms. 58% of voters saying the war is not worth the cost. That coming from an FT poll. Bloomberg's Tyler Kendall joins us from Washington for more. Hey, Tyler.
Hey, John. Well, this represents a significant roadblock for Republicans as we head into November, and the diplomatic efforts to resolve the conflict in Iran feel like they are effectively stalled. Now, we've heard from President Trump try to find ways to retake the narrative when it comes to some of the economic fallout related to the war, including in the last week renewing threats to investigate big oil companies, and just yesterday announcing that a series of privately owned gas stations would be dropping their prices. But as the war continues to drag on, it's only compounding the domestic risks here at home, as this FT poll goes on to find that just 36% of voters approve of the job that President Trump is currently doing, down 2 percentage points from the previous month. Now, for context here, Democrats only need a net gain of 3 seats to retake the House and 4 seats to retake the Senate, though that may be a bigger uphill battle, because while Republicans are battling these issues, playing defense basically on the economic component that's been compounded by the war, Democrats haven't necessarily seized the moment. John, we have a new story out on the Bloomberg terminal that examines how party infighting, like what we're seeing play out in real time when it comes to Maine, is just slowing down Democrats' efforts to retake the chamber.
Tyler Kendall with the latest. Here's the latest from Ed Mills of Raymond James, writing the midterm elections loom large, limiting what can be reasonably achieved in the coming months. Ed joins us now for more. Ed, welcome. Let's just build on that particular quote. Is there evidence right now that the midterms have shaped the president's approach to this issue?
I think so. I think that there has been a lot of discussions with clients at Raymond James that before the midterm, he has to find an off-ramp, that part of the reason why we are in a ceasefire and why he continues to insist that the ceasefire is ongoing, even when there's kinetic activity, is a look towards the midterms. A desire to reopen the strait, a desire to cut these deals, to get as much gas and oil flowing to lower the price at the pump. He is the one that made it such an issue to say, I brought down the price at the pump. For it to have doubled for a lot of Americans since the beginning, he has to change that if Republicans have a fighting chance come November, John.
Do you get the sense that where prices are currently is good enough, that essentially this is the status quo that is acceptable to this administration to maintain going into the midterms?
I think that they need it to come down, and I think it's going to be about the rate of change, about the absolute dollar cost. It is a very strange thing that this is probably the one thing that most Americans look at and just kind of see it roll up as they're filling up their tank. There's no other metric out there that gets this much attention by the average consumer. I think if the election were held today, Democrats would win a majority in the House, and it is buoyed by some of this conversation we're having. I do think Republicans maintain control in the Senate. It would have to get worse from here for Republicans for the real shot for Democrats to have that majority in the Senate.
Do you get the sense that there's any focus in Washington about what's going on with Russia not exporting refined products, affecting diesel prices pretty much across the world, more particularly in Europe, but also on the margins here in the United States? I mean, that's one of the biggest inputs, direct inputs into product prices in the United States. How much do you see any kind of effort dealing with another conflict that's been ongoing for quite a while to ameliorate some of those prices?
Yeah, Lisa, I look to kind of a lot of the conversations that are going on here in D.C., and that comes up, but it's not a top issue. What I'd be looking at is that Trump is supposed to host Xi in September. There is some pressure that China could put on Russia. There are other levers that Trump is trying to pull, but that might be his best one. There's not a lot more he can do there without escalating that as well. So, yeah, it's on the conversation agenda, but it's not kind of a top issue. There is a recognition that it's a problem, but what to do about it, not very many good choices.
And I just wanted your take on the recent New York Times reporting. It came out just moments ago, suggesting that Qatar has been in talks with Washington and Tehran to de-escalate the crisis. The headline of this piece reads, mediators are trying to pull the US and Iran back from the brink. How close are we to the brink? Do you think, given what you just said about the influence of the midterms, is this a president really willing to renew this war, restart things again?
Yeah, so Jonathan, what we've told a lot of our clients at Raymond James is that expect to muddle along through this midterm election, that we're going to go through this cycle where we're going to have some kinetic activity, we're going to have a phone call, we're going to have a resumption of talks. It's usually one of our allies in the region that is trying to put these together. And then we get into the ceasefire, then we have talks, those break down, and we repeat that cycle. To me, the big question is, after we get through this midterms, one of the things I'm hearing more and more from clients is a concern that that's actually when things ramp up, that Donald Trump is going to say, I tried for 6 months, they wouldn't negotiate, we have to go hard. After the midterms, he is never going to be on the ballot again. So does he have the kind of limits come off and things escalate? And that, for me, is the big market debate, and whether or not that is going to be the issue we have to deal with in November in the immediate aftermath of the election.
How would you come down on that current debate? What would inform your particular forecast on that issue?
My view is that when Donald Trump has put together military kind of force, he uses it. I don't think that there is a opportunity to kind of have the bid-ask spread condense here between the United States and Iran. I think it's going to take some more time. And I do think that, unfortunately, he probably has to escalate for there to get a final agreement. My hope is that it's not long, but I would put myself in the camp as more likely than not after the midterms. This is where it truly does flare up, John.
As we do head into the midterms, I do just want to get your take quickly on what you make of President Trump firing Democrats on the Election Commission and the resignation of a Republican member. How significant is this?
Well, I think it's, Lisa, one of the things that we looked at is the recent Supreme Court decision on the FTC, the Slaughter decision, gives him enormous powers to fire folks at will. One of the big questions we get at Raymond James is how long, if a Democrat were to win in 2028, how long would it take for the pendulum to swing back for kind of a much more aggressive regulatory agenda? And the answer is it has gotten significantly prolonged because of that Supreme Court decision. So this election firing is the latest example of his ability to fire folks at will. And I know it's a while away, but if we go into the 2028 election and a Democrat wins the presidency, but Republicans have the Senate, there's going to be so many boards and commissions and functions in the United States government where the Democratic president is going to have a choice. They're either going to let the Trump individual continue to run that or have no commission at all. That's going to be the FTC, the FCC, the SEC. You go down all that alphabet list. So the big question here to me is how long does that Trump deregulatory agenda continue? And because of the Supreme Court, it's a lot longer than most investors really appreciate.
Ed, it's good to see you. Always is. Thank you, buddy. Ed Mills there, Raymond James. Thank you very much. 2028, the general. That's going to be the focus in a few months' time, very quickly. Primaries and the general just around the corner.
It used to be that who was president mattered less because the muddle in Washington was that much louder. Increasingly, the presidency has quite a bit of power, so that it's going to be an incredibly important election.
Coming up next on the program, Stephen Trent of STD Capital Advisors breaking down the latest earnings from Delta, plus Yahira has your morning movers. Meta higher following a positive report on its compute business.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Stocks unchanged on the S&P, going nowhere this morning. We're down about 0.25% on the Nasdaq 100 as we count you down to the opening bell, a few hours away from the cash open. Let's get to your single names, your morning movers. Yahara has more. Hey, Yahara. Yahara is not available right now. We'll try and call her again soon.
Yeah, call waiting.
Okay.
Do.
Am I put on hold?
Yeah, she was put on, yeah.
Okay.
Do you want me to sing the music?
Try and figure that out.
The music?
The elevator music?
Yeah.
Have you got some?
No, please, actually. Nobody
I'm
needs to
sorry
hear
for
that
that
this
delay.
morning. No, it's fine.
Okay,
No
we'll
problem.
come back to Yahara another time. Still waiting. I don't know if she's there or not. Anyway, all right. On our radar this morning, Dow rising in the pre-market after exceeding earnings expectations for the second quarter and reaffirming its outlook for the full year. Lisa's going to catch up with the Dow CEO, Ed Bastian, this coming Monday at 8:45 Eastern Time. Shares elsewhere of EasyJet getting a boost in London trading after receiving a $7.7 billion takeover bid from Apollo, the proposal surpassing rival Castle Lake, opening the door to a potential bidding war. And finally, SK Hynix raising more than $26 billion ahead of its trading debut on the Nasdaq, making it the largest first-time share sale by a foreign company in the US and the third biggest listing in history. Just absolutely amazing.
Yeah, and it comes, Lisa Shallett really setting the tone, saying that the pendulum is swinging away from semiconductors back to the hyperscalers. It seems like a lot of people are getting a bit queasy by how high valuations have gotten and how much people have just plunged into these names with leverage when it comes to retail trading. I just wonder at what point you start to see this crack in a more fundamental way. If there is an effort to lower costs, which we're seeing increasingly, how much does that start to filter into expectations for semiconductors versus the offset multi-year contracts at very high levels because of memory constraints that continue to be ongoing?
So we've had the biggest foreign debut in the US, we've had the biggest IPO we've ever seen, and we had an $85 billion equity capital raise from Alphabet, all of that in the last 2 months. And we might still get Anthropic and OpenAI in the next 12. It's kind of wild, isn't it? More still to come.
You raised a point earlier that I think is worth sitting on, that what does it tell you if every company wants to raise money right now, even if they don't need it? Some of them really do need it, but what if they don't, which is sort of SK Hynix's issue? And it gives you a sense that they're sort of seeing, I don't know about a top in the market, but definitely conditions are favorable for them. That is the polite way of saying it. Does it mean that it's going to turn south? Does it mean that we're going to trade sideways for a prolonged period of time? Unclear. What it has meant is incredible volatility in single names. And that, I think, is really notable because even though the overall index implied volatility has remained fairly low, single name volatility has surged to the highest on record relative to the index and gives you a sense of how difficult it is for anyone to be able to game out specific stocks. And I still keep thinking that's a good tell of how the story is shifting, but it's shifting under the hood.
To some extent, it is a judgment on current valuations. Let's just put it that way. There's so many people want to issue equity right now and issue debt. I know what they want to use it for. I've got all of that. But ultimately, if they want to sell now, got to ask yourself if it's a good time to buy.
Yeah, is it a peak enthusiasm? At the same time, cycles are born of these, and cycles can continue a lot longer than the shorts can remain bearish, as I'm reminded again and again and again. And ultimately,
you got bullish now.
I just
on the fence. Bullish in technology was the last time you phrased things for us.
I think that I don't make market calls. I will say that to be very skeptical of some of the advancements, if you've played around with any of these tools, is to be naive. This is going to be a world that's shifting, but I am not sure exactly how it's going to play out. I don't make calls.
I get it. I don't have an opinion on anything.
Oh, okay. All right. So you're trying to say that, like, I'm making a call. I'm just not making a call.
I don't have an opinion.
That is the biggest load of exciting information I've ever heard in my life,
Let's turn back to Delta. I don't have an opinion on airlines either.
And anything.
The first U.S. airliner reporting results following a full quarter of capacity reductions and price spikes due to the war in Iran. I can have a view on food and football, can I? I think so.
Vacation.
Ed Bastian, the CEO, saying this: we delivered $1.4 billion in pre-tax profit while absorbing the highest quarterly fuel expense in our history, reflecting broad demand strength, growing brand preference, and momentum. Stephen Trent of STT Capital Advisors joins us now for more. Stephen, good morning. Good to see you.
Good to see you. Thank you for having me.
First reaction, sir, to the numbers we got from Delta earlier on this morning. What's your takeaway?
Yeah, look, I think the numbers were solid from a fundamental perspective. They did $1.56 per share. That was a penny above our forecast. It was 6 cents above the street. Unit revenue was very strong. And I think that's the story people are talking about. Are these carriers maintaining demand with everything going on? Are they able to raise unit revenue enough to offset what's happening with jet fuel kerosene? I think the answer is yes. The action in the pre-market suggests something a little different, and perhaps elements of the street were looking for a guidance increase, which didn't happen.
Don't you think it's impressive they were able to maintain guidance, given they, in their own words, experienced the highest quarterly fuel expense in their history?
Absolutely. I think from a fundamental perspective, the numbers look very good. The guidance looks solid. $6.50 to $7.50 a share is above this street at $5.97, and we're actually a little bit below consensus. So that in itself was a feat. If we go back 2 months ago, 3 months ago, I think the street was looking for big guidance cuts. What's going to happen with fuel? They'll raise fares too much that it's going to start hurting demand. We start getting into these subtleties of the K-shaped economy. You still have premium and co-branded card remuneration outstripping main cabin. And I think that's the driver, and that's going to continue to be the driver.
Yeah, how much can that continue? I was looking actually that passenger revenue came in light and everything else beat. And the reason why you can have the bread and butter of the business, which is passenger tickets, not beat and still have a massive profit beat is because of American Express. It's because of some of these other partnerships that have lines of revenue. Is that getting to be kind of the driver of profits going forward? I mean, I know it's not the major driver, but how much do you see that as sort of the make it or break it of which airlines are successful going forward?
Yeah, absolutely. I think that is a key point. The 16% growth in American Express co-branded remuneration over the quarter is a big deal. I believe around the order of $2.4 billion in the quarter. So premium passengers are still the anchor. You have the top 10% of U.S. consumers basically driving all the demand. And not all of that demand is coming in premium cabin versus main cabin. Exactly, you just said, a lot of it is now coming from co-branded and loyalty. And I think if you're a network airline versus a discount airline, that's exactly how these carriers have been able to de-risk their earnings streams since COVID. If you look at what they've done in cash flow from ops, there's been a massive increase in their cash flow from ops.
What does that mean for the discount airlines, for the likes of Frontier, for the likes of JetBlue?
Yeah, so, we think it's a tough one for them. You look at what's happened versus 2021, for example, Frontier's cash flow from ops is down 85% if you look at its latest 12 months cash flow from ops versus 2021. And that's in nominal terms. Southwest is up a mere 3%. So if you inflation adjust, that's also down. You look at United, on the other hand, up 360%. American Airlines up 590%. Frontier and others trying to add premium. Are they going to add enough premium? Are they going to add enough co-branded card like United Airlines, I don't think so.
Well, and can they get the corporate clients? I mean, that's the other issue, because corporate really drove a lot of the earnings that we saw from Delta. Can you get that kind of relationship if you don't have the footprint and, frankly, you don't have the same type of longstanding reputation?
Yeah, I think that's exactly it. I think it's really hard. You know, if you don't have the premium lounges at the airport, you don't have global capillarity, both directly and through global alliance partners, and a long history of premium cabin. You know, if you've traditionally been a domestic airline that had sold discount seats pre-pandemic, it is very hard for you to become that different animal. So I think the path is going to be challenging for the discount airlines versus the network carriers.
That raises a big question. You're not in the stuffy seat over at a bank anymore. You've got flexibility to tell us what you think about the world. Apollo versus Castle Lake for EasyJet. It's not a name you've covered historically, but what kind of business are these guys getting themselves into? What's your message to them?
Yeah, that's actually a little bit of a tough one. I mean, you know, airlines, generally speaking, are, you know, they're dangerous, no? I mean, on the surface, they're simple businesses. So everybody thinks they understand how the businesses work. But getting down in the weeds and the subtleties and the way these things trade and the undercurrents that I was just mentioning about premium and co-branded can get really choppy. So I've seen over the years, you know, private equity get burned. Maybe you have some instances where you've had some really powerful activist shareholders come in and do a reasonable job in terms of share price reaction. You can say that, for example, with, you know, Southwest, even though Southwest is still not getting the job done in terms of their cash flow from ops. So, you know, this EasyJet thing, I saw the headline. You know, I would advise them to proceed with caution. You know, this is a tough space, and that's a tough segment of the market as well. Maybe if we were talking one of the network carriers, I'd be a little more comfortable.
What's one of the headlines? What's one of those quotes? The best way to make $1 million, start with $1 billion, buy an airline. Right? I forget whose line that is, but ultimately, that's how tough that business is.
I like that you have no opinions.
I have no opinion on this.
It was very clear. I love the way that you asked these questions. You're like, what are they getting? What would your message be? And Stephen's like biting his tongue. Like, what are you thinking?
He told us what he told us what he thinks.
Exactly.
It's a really difficult business.
Yeah, I mean, we see that time and time again, and especially if you're trying to break in against some of the behemoths in the industry.
You ask people what their favorite airline is, they give you the same answer all the time. It's Delta Airlines. I like the stock.
Delta and United.
Right?
Those are the two.
You've got a different view, though, and I wanted to finish there. Your top picks in this space, it's not number one, it's not Delta. It's something else. Why?
Yeah, we're like a modest overrated in Delta. Kudos to them. Great airline, but it's harder for them to surprise the street versus others. I think the pre-market activity is showing exactly that. The one we like the most is Copa Airlines in Panama. And if you look at Delta doing a low double-digit margin on 2025, for example, EBIT margin, Copa's EBIT margin is in the low 20s. It's levered 0.6 times. It's got a 4.5% cash dividend yield. And in a lousy year, it's going to do $200 million in free cash flow. So for an airline that has, you know, a little more than 100 planes in its whole fleet, we think it's got a moat around its main hub in down there in Tucumán Airport in Panama. So this is a carrier that within the aviation group comes as close to we see as buying in and going to sleep well at night, which is impossible in aviation, but I'm saying it gets close.
I have no doubt that that's now under Lisa's coverage. And that she's already looking for flights to Panama.
St. Andrews State Park, Sea Dragon, Pirate Cruise.
There we go.
I'm looking relaxed on the stunning beaches.
Appreciate
Dolphins.
it. Stephen Trevor, Stephen Capital Advisors. Just depressing. All these great places Bramo gets to go.
I'm going to Atlanta on Monday, please.
Okay. What's wrong with Atlanta?
Absolutely
Fantastic
nothing.
barbecue.
It's fantastic.
What's wrong with you?
Barbecue.
Yeah, good food.
Oh, really?
Yeah.
Have you spent a lot of time
I'll give you
there?
some places. I've been a couple of times. I'll give you some places to go. Yeah, sure.
Please, that would be great. No, actually, no, look, I'm not going to do a channel check, although if you're going to invite me to Panama, I do think it's interesting. South America definitely getting a lot more clout, especially as people try to go there more. And you see that in the business routes, too, because sometimes these routes actually track
where people are thinking about trade and business partnerships increasingly in South America.
The Brit telling the American where to go.
I love this. This is great. This is fun.
All right. Let's get you an update on stories elsewhere this morning. With your Bloomberg brief, Bonnie Quinn has more. Hey, Bonnie.
Hey, John, thank you. Anthropic appointing former Fed Chair Ben Bernanke to its long-term benefit trust, a governance body designed to safeguard the startup's public interest mission. The trust will advise management on decisions around AI risks and impacts. S&P Global downgrading Oracle's rating to BBB-, one level above junk, citing the company's growing spending on AI. The agency says Oracle's rapidly expanding infrastructure business is increasing its overall credit risk. Netflix is looking for ways to increase subscriber engagement. The Wall Street Journal reporting the company is considering adding live channels that would continuously stream certain programs. Netflix is also exploring bundling other subscription-based services. And that is your Bloomberg Brief. John.
Hey, Bonnie, thank you. Thanks for the update. I'm next on the program. Regime change at the Fed.
I'm appointing a task force in each of 5 areas. That'll be taken up by the task force. We've got a task force for that. I've been on a task force or 2 in my life. It's one of the things we have a task force to do.
Ed Al-Husseini of Columbia Threadneedle joins us next.
Western countries, all of them are cutting funding to Africa. And some of these programs were supported by funding coming from Western countries, like for human resources, for testing, for transportation of samples. And suddenly, African countries have to think how to fund money and to cover this gap. But it takes some time. And I think the combination of all of these factors are fueling this mistrust that we see at community level. We value the support we got and we are still getting from the US. And we think that if we continue to work together, and there is no reason for the US not to work with Africa CDC. Africa CDC is the leader in terms of public health in Africa.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you the latest business news wherever and whenever it happens. I'm Scarlett Fu, reporting from America's biggest military shipyard. This is Bloomberg.
Stocks negative by not even 0.1% on the S&P. We're down 1/3 on the Nasdaq 100. SK Hynix making the headlines, coming out with an equity offering, raising 26.5 billion.
Yep, biggest ever.
Record for a foreign company tapping the US equity market. Let's turn to the bond market, a more discerning fixed income investor that we can talk about. The 2-year, 417.65, 10s at 455, 454. We've had a lot of debt issued this week on both the sovereign and on the credit side. And on the credit side, don't forget Amazon came to market this week and got a bit of pushback from credit investors.
Yeah, people forced them to both pay up and potentially they weren't as interested. There was only 2 times oversubscribed versus, say, 5 times oversubscribed earlier this year. How much is this an Amazon issue? How much is this a broader pushback? Not necessarily saying that the market is closed in any capacity. Still plenty of money willing to put to work, just for a higher cost. And that, I think, is important both for the corporate issuers as well as the United States.
We'll buy your debt, show me the yield. That's the story right now. Heading into next Tuesday, CPI and Fed Chair Kevin Warsh on deck in just a few days' time. Under surveillance this morning, regime change at the Fed.
I'm appointing a task force in each of 5 areas. You'll hear quite a bit more about these task forces. That'll be taken up by the task force. We've got a task force for that. The good news for you is we have a task force for that. We have a task force on that too. I've been on a task force or 2 in my life. It's one of the things we have a task force to do.
So here's the latest this morning. Fed Chair Kevin Warsh following through on his word, creating 5 task forces set to look into how the central bank can improve in very specific areas. Among those appointed, 3 former policymakers, as well as the former Walmart CEO, Doug McMillon. Ed Al-Husseini of Columbia Threadneedle writing, markets are attempting to balance 2 caricatures of Warsh's thinking. His silence has left a vacuum that will be filled by other speakers who have largely inched closer to tightening policy. Ed joins us now for more. Ed, good morning. Good to see you.
Good morning.
Let's start about the task forces and the individuals on it. What are you expecting to come out of all of this?
I think the task force I'm paying closest attention to is the balance sheet. I think that's clearly an area where the Fed is ripe for reform. It's an area where Warsh has focused a lot of his attention in the course of the past several decades at this point. And I think it's the area that's going to have the most salient impact on markets.
So Karen Dinan, Raghu Rajan, Jeremy Stein, what do we need to know about these 3 people?
I think relative to some of the other appointments, these are much closer to the academic side. Stein was involved in formulating the quantitative easing program under Bernanke. And so deep expertise, academic expertise, and of course market expertise. He's been a market participant for several decades as well. So a very deep pool of expertise coming into that area. And I think people who've had, again, quite strong opinions about how the balance sheet should be reformed.
At the same time, I think some of the other task forces have gained a lot of interest simply because some of the non-traditional central banking type figures have been put on them. I'm thinking of the data task force with Doug McMillon, the former president of Walmart, or, for example, what we see with productivity and jobs, the idea that a Microsoft executive and Mark Andreessen are among those on leading the task force. What do you make of that? Sort of a different type of voice playing a big part in this.
Yeah, look, I think it looks like they've cast a really wide net. As a market participant, I think what, again, I'm most focused on is where is this going to translate into an impact on bonds? And clearly, the balance sheet is closest to that. Communication is probably a second. The rest of it is extraordinarily loose and a very wide mandate. So we'll have to see what comes out of that.
Do you think that because these task forces are ongoing, that Fed Chair Warsh has bought himself time to really make any kind of major move? Or do you think that this is a Federal Reserve that's going to be swayed by those that are speaking most, the other central bankers that are increasingly concerned about inflation?
Yeah, I think the focus in the near term is squarely on monetary policy and what do we do with respect to inflation. I think it's a matter of having a conversation about the next several meetings, whether they are live.
Are they?
I think they are. I think the minutes made it quite clear that the majority of the committee has moved in that direction. And then the question becomes, look, if we embark on a tightening process, how do we calibrate it? How far do we have to go? This stuff works, obviously, with a lag. Once you abstract from that, you're left with the balance sheet, and the balance sheet, again, is going to be central. How much room to maneuver do you have? I think it's going to be quite limited. And then the rest of these committees, I think, might have an impact in the more medium term.
Ed, what do you believe has prompted that shift? For quite some time, this Fed believed they were sufficiently restrictive. So much so, they believe they could address labour market weakness by reducing rates by 150 basis points over the past few years. So what prompted this change?
Look, I think they got it right. They lowered policy. Labour markets have stabilized, and then they got unlucky with respect to the quantum of inflation that's still left in the system, about 100 basis points of inflation. It turns out that inflation is largely interest rate insensitive. It's largely insensitive to the decline in the wage story. And now we've had some new shocks in the form of tariffs, in the form of energy, and a little bit of AI demand. So they've run out of luck this year.
So what do you achieve with a 25 basis point hike?
Nothing.
A second or a third? What does it do?
I think this is where guidance is important, because it's a force multiplier to the extent that you can move markets. And look, let's take a step back. Markets have priced in much tighter monetary policy. The inflation-adjusted two-year rate is up about 175 basis points from the lows this year. You know, that's a significant change in the Fed's posture that's currently priced in. Is that enough? Probably not. As a rough rule of thumb, you can think about them having to unwind the cuts from last year, so it's about 75 basis points. We have somewhere between 1.5 and 2 in the price at the moment.
What caused the meetings, whether it's later this month or whether it's in September, to truly be an actionable meeting when it comes to the CPI and other data that we're getting? Do you have sort of a threshold that could potentially make the difference?
I think this is where it's really interesting. So in the last several years, because the starting point of monetary policy was quite tight, there was consensus in the committee, we're starting from a pretty tight place, the incremental data carried a lot of weight. You could calibrate how much easing you want to do based on incremental data. Most of that data was on the labor market side. This year, in some ways, the incremental data is taking a little bit of a step back. It's the overall state of play. In other words, you hear this reference, inflation's been above target for 5 years. Well, the next several months of data is not going to change that fact. If the animating feature here is we want to assist inflation in coming back to 2% over the next couple of years, the next couple of months of data becomes irrelevant.
Ed, it's good to see you. Thank you, buddy. Appreciate it. Ed Hosseini there of Columbia Threadneedle on this Fed meeting, and those meetings are live, according to Ed, in the coming months.
Yeah, adding some more confusion, though, to the reaction function. Again, this goes back to people not knowing exactly what the threshold will be or what will make the difference. You asked the question, what caused the shift for the likes of John Williams to come out earlier this year saying that he still sees disinflation, to suddenly, a couple months later, saying that inflation is likely sticky and coming more from AI than even energy prices. Again, a massive shift, leading a lot of investors to say, where is exactly the trigger point to potentially take action?
You're expecting clarity on that from Chair Walsh next week in his testimony?
Full clarity. I expect full treatise with lots of descriptions that are not at all related to task forces or the weather.
Scenario analysis and real depth.
No, we're not going to get anything.
Okay.
Maybe we'll get something.
We'll be taking it live right here on Bloomberg TV. I believe we probably will. So tune in for that. Tuesday morning. There you go. There you go. Coming up next, Liz Ann Saunders of Charles Schwab, Jay Goldberg of Seaport, Nancy Lazare of Piper Sandler, Jonathan Krinsky of BTIG. We appreciate the honesty, Bramo. The honesty.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersecci in El Ula, Saudi Arabia, and this is Bloomberg.
The demand for stocks remains very healthy.
When there's a lot of enthusiasm, people tend to get a little bit ahead of themselves.
If that falters, I think we've got a real problem on our hands.
You have to be prepared that this could shift, and it could shift very, very quickly.
The summer is going to be volatile.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. You're almost there, Bramo. 1 hour to go.
I love how you just blame me all the time.
I'm almost there. 60 minutes to go.
you.
Weekend's just around the corner. Equity futures on the S&P, negative here by 1/10. We're down by 0.4 on the Nasdaq, still heading towards a weekly gain on the S&P 500, the second consecutive weekly gain. Into the airlines we go. The earnings begin. Delta Airlines a little bit earlier on this morning, reaffirming guidance following a really big run-up in the stock. Lisa mentioned it a few times this morning, up by close to 30%. Year to date, down to this morning, down by 0.75%.
Is this a sign of what's to come? And we get earnings next week, kicking off with the big banks, JP Morgan leading off. And a real question is, how high is the bar for them to outperform? And of course, that is amid a question about whether we're seeing an earnings bubble, an earnings expectation bubble. Delta did deliver, despite the fact that oil prices were substantially higher, and they faced the highest fuel bill ever in their history. They still were able to overcome that and still maintain their projections, seeing increasing revenues coming from premium, coming from their American Express partnership, coming from some of their corporate travel. Does this sort of indicate how much investors need to see something absolutely astronomically phenomenal for them to buy up stocks that already are rich?
We've just worked through a really positive earnings shock, and the bar is reset higher. It's much, much higher. Going into earnings season this time around. Talked lots about the consumer. This drop from Bank of America moments ago. Heading into the summer, consumer spending momentum was very strong. Total credit and debit card spending, based on their data, rising 6.3% year over year in June. That's pretty punchy stuff.
And we're seeing confirmation of that, the likes of Delta. At the same time, then you have Pepsi. They came out yesterday and said that they are seeing pressure in the lower income consumer. How much can Wall Street continue to lean on the higher end of the income spectrum to support the consumer in a time when there is this increase in K? Right now, quite a bit, and that seems to be the tone coming from Wall Street.
The increase in spending growth, almost entirely a discretionary story, driven by online promotions and the FIFA World Cup.
Well, yeah. How much are we going to be
It's a
getting
bit of a
that
bounce
and
there.
increasing? Yeah, although, we were asking, were people going to show up? Were people going to spend the money on the tickets? And it turns out
They did.
they did.
I think it's great news. Fantastic.
Yeah, are you going?
No, because I can't afford it very much.
Well, that's what we
talking
say.
about how much is it to go to the final here in New York?
You think I've checked?
I checked a few months ago.
Yeah, what was it?
I think get in is probably cheapest ticket's probably 10K.
All right, well, write in your
I'll have a look
responses,
in a
and I'm going to look in a second, and then we'll reveal it at the end of the segment. We'll reveal how much it costs to attend the final.
Everyone's going to stay tuned for that and not look at it themselves, right? On Ticketmaster. Stay tuned. Brahma's got it for you in just a second.
Just wait, hold on.
Equity futures on the
dial.
S&P, negative by 1/10% on the S&P 500. Coming up this hour, we'll catch up with Lizanne Saunders of Charles Schwab, with stocks eyeing a second straight week of gains. Nancy Lazar of Piper Sandler on why the Fed faces an uphill battle on inflation, and Jonathan Krinsky of BTIG saying chip makers could fall another 25%. We begin this hour with stocks pulling back as markets await the US training debut for SK Hynix. Lizanne Saunders of Charles Schwab writes the following: stay in gear with AI theme by avoiding crowded direct plays and leaning into less crowded derivative plays. Lizanne joins us now for more. Lizanne, welcome. I just want to take you from the top, and I want to pick up on something I heard you say earlier this week, that unlike what we saw more than 25 years ago in the dot-com bubble, that this time the bubble might be in the earnings and not the price. Lizanne, can you flesh that out for us? How different are things now versus then?
Yeah, and thanks for having me. I think maybe not the earnings where we stand right now, but the earnings expectation is, I think, where there could be a bubble. And I think we got a little bit of a flavor of that with the recent Samsung report that pretty nicely beat the sell side estimate. That's the consensus that analysts publish. But there's also a buy side estimate out there, and that's not something published. It represents maybe the whisper number or the hyped up number and the higher bar. And we saw what happened to the stock. That is one of the things I'm paying close attention to during earnings season, is whether that sell side versus buy side estimate has a very wide spread, and what's the sensitivity in terms of the market reaction. I think it probably continues to fuel these rapid fire rotations that just have become the name of the game in this kind of market.
Do you expect that to be a recurring theme across earnings season or just in select industry groups?
I think probably select industry groups. I think in those higher beta segments like tech and comm services, anything AI related, I think you have that wider spread between the sell side and the buy side. But we're seeing just a huge increase in dispersion. I think Kevin shared a chart with you guys this morning that shows a record spread between a relatively subdued VIX and that dispersion. You're seeing it in terms of the retail trading cohort. The turnover has never been higher. They're a little less active in individual stocks and more on the thematic side of things, as well as ETFs. But the dynamics of how the market is trading, who the players are, and the way they're attacking this has also shifted quite a bit. And it's just a different backdrop than what might be defined as a normal sort of earnings season backdrop.
Is it healthy? I think that's what a lot of people are wondering. Or does it signal, Lizanne, that potentially you could see some sort of crack if there is this incredible churn under the surface in specific name volatility?
The churn is not necessarily detrimental because it can lend support when you get some of the leadership names pulling back. When we saw the big, bout, in many cases ongoing bout of underperformance by a cohort like the Mag 7, you saw a lift in other segments of the market, in industrials, in healthcare at times, and enough underlying strength amid this rotation, not to mention the intra-sector, intra-industry rotation. So I think the base case is probably a continuation of this type of a backdrop where you don't see an aggregate whoosh down on the part of the indexes, but a lot of churn under the surface. An example is the NASDAQ's up 13% year to date. The average member maximum drawdown within the NASDAQ year to date is negative 40%. So that's a sort of the poster child for that type of activity.
Perhaps the bigger question for a lot of people is whether this signals an exhaustion in some of the tech names and potentially that rotation that we saw try to assert itself before the reignition of the conflict over in the Middle East. How much do you see that as the path of travel in the last 6 months of this year? The idea that people will go into other names, expecting them to benefit from AI efficiencies and other types of growth, and maybe fade what we're seeing in some of the tech names.
Yeah, I first of all, I do think it's a tricky trading environment, and at least our message that we impart to our $13 trillion worth of individual investors is to not necessarily think that the only way to perform well in a market like this is to try to get ahead of these really short-term rotations. There's so much short attention span money in the market, and maybe it's a little more boring to talk about or to think about, but I think the diversification story is more powerful than it's ever been, particularly within asset classes and even within sectors. But then consider portfolio or volatility-based rebalancing. A lot of rebalancing gets done based on the calendar. It might be quarterly, it might be annually. Move away from that calendar-based rebalancing and take advantage of these rapid-fire rotations by, adding low and trimming high a bit more frequently and stay in gear that way, as opposed to trying to get ahead of some of these short-term trade.
Lizanne, I wanted to pick up on something that you've noted. We often talk about these short-term tactical rotations, these shifts in the market, and we point to small caps. Small caps will have its moment. To your point, small caps has been having its moment for quite some time now. What's been driving those gains?
So, there's been different forces driving small caps. And you're right, John, it's been the trailing 2-year period that Russell 2000 is pretty handily outperforming the S&P 500. So this is not some new story. A couple of years ago, I think the impetus for the initiation of that outperformance was a move by the Fed toward easier monetary policy. Of course, we've had fits and starts with that. Almost 2 years ago, the Fed embarked on an easing campaign after 3 cuts that included a 50. They had to pull back because the economy accelerated again. Same thing happened last year when the Fed embarked, but then you had the much more sticky inflation problem driving that. And I think now the story is one about opportunity, in that let me look beyond just the mega cap AI plays and look for opportunity. You're finding in other areas like healthcare and like biotech and smaller names. But what I would say about the small cap space is last year was a year where the non-profitable components of the Russell 2000 had double the performance of the profitable components. It was up 20% versus up 10%. That is starting to shift this year, and you're seeing this convergence where you now have a little better performance on the part of the profitable. So that's the way I'd look at the small caps. I would sort of lean into the profitable side, the higher quality, the high interest coverage and strong cash flows, and fade the non-profitable, lower quality segment.
Lizanne, this was great. Really thoughtful stuff, as always. Lizanne Saunders there of Charles Schwab on the equity market. The enduring outperformance we've seen in small caps over the last 1-2 years, relative to, say, the S&P 500. And the cost of everything right now, Bramo, you want to go there?
Of course.
Go on. Let's get to the price. What's the get-in? Nosebleeds at MetLife.
True.
World Cup final.
True nosebleeds. I mean, actually,
Like
your nose is going to be bleeding
row.
because you are actually standing up on the press, like on the top. $7,576. That is how much to sit on the roof, to essentially sit and kind of try to see if there's anyone playing. If you want to get really close to the field, you can spend $70,000. And then if you want to spend $70,000, yes, just to sit in a seat that's relatively close.
And this is not MSG. Let's sort of frame that out. We're talking about 5x the capacity. What is it, 82,000?
I didn't check the capacity, but yes, it's a massive stadium, football stadium that you normally would see completely packed to the gills, and the amount of money they're bringing in case that's not enough, you could buy food. I mean, things like $75 caviar topped tater tots.
Oh, right. That's once I've paid 70K, Bram, I expect the food to be free.
You expect your caviar topped tater tots to be delivered to your seat.
That stuff needs to be free.
Or how about a Twinkie cheeseburger for $22?
That sounds gross. That really does.
That's welcome to America,
yeah,
Tom.
that's I love America, but that does not do it for me.
Not a Twinkie cheeseburger.
If we get a blockbuster final like Argentina versus France,
then you'll eat a Twinkie cheeseburger.
No, I was going to say that 7.5 won't be the get-in price.
That's true. This is for now.
Yeah.
Just wait. So if you want to get in, it's a hot deal.
Right. Once the real fans who are price insensitive and just ready to go to the final.
Yeah.
once their team gets there.
I don't know how many people are truly price insensitive at this kind of level. But nonetheless, it is bolstering consumer spending, which brings us back to our story, which is resilience.
I'm impressed by
in the US
how many
economy.
people can afford to go and travel the States for a whole summer and go follow their country.
I've seen them. I think it's
amazing.
wonderful.
They
I think
remortgage
it's
the house.
And I mean, frankly, they've bought out the beer and certain kinds of bars, and
good for them.
Been able to take road trips.
Spend 4 years
ready.
paying for it and then do it all over again.
Yeah, that's understand the living of life, right? So it's like work to live rather than live to work.
Something like that.
Yeah, exactly.
Okay, I respect that. Futures this morning down by 1/10% on the S&P with an update on stories worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. New comments coming out of the Middle East. Iran vowing to retaliate in response to attacks on its infrastructure. In a statement, the Supreme National Security Council saying Israel, quote, which is behind these wicked acts, will not be safe from the response, unquote. Boeing opening a new 737 MAX assembly line at its Everett, Washington facility today. Sources telling us here at Bloomberg the line will produce mostly wide-body models. Boeing is looking to pay down debt and boost output. And Micron is increasing its spending on new plants in the U.S. to $250 billion to help meet unprecedented demand for its memory chips, fueled by the AI boom. The plan adds $50 billion to a prior commitment on expanding domestic chip making, including projects in New York, Idaho, and Virginia. That's your Bloomberg Brief. John.
Vonnie, thank you. Thanks for the update. Up next, the Morning Calls Plus, Jay Goldberg of Seaport on the concentration risk facing chip stocks. That conversation just around the corner. Live from New York City this morning. Good morning.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
All anyone needs to do is look at some of these charts that have gone completely hyperbolic. Quite frankly, folks extrapolating the sustainability of pricing. We can absorb, a 10, 20% decline in semiconductors and not have a lot of damage to the headline index.
That was Lisa Shallard of Morgan Stanley. Her message pretty clear. Get out of the semis, the chip makers, get into the hyperscalers. Her message throughout this week. Equity futures right now in the S&P, unchanged on the S&P. On the NASDAQ, down by a third. Pretty punchy stuff from Lisa Shallard. Her message quite clear. Do that. Don't wait for a reduction of CapEx to make a move.
Her spidey senses are up. She got something from Meta, and she said that it is telling a very strong signal that there is going to be some sort of reduction in CapEx, and you're starting to see the whisper of it. And if you wait until you get the confirmation, it's going to be too late. I wonder how much, to sort of reiterate what she said also about what that means for inflation, whether we've seen the peak in AI inflation or the rate of increase in prices, and whether you're going to start to see more moderation there. Really interesting for a broader story.
The deceleration in spend that she's beginning to sense. Lisa Shallett there of Morgan Stanley. That's some of the price action, some of the calls. Let's get to your more calls. First up, Citizens cutting its price target on Meta to 800, saying it's on track towards competing with leading AI labs. That stock is up by 3%. Your second call from Susquehanna, initiating coverage on IBM with a neutral rating and 303 price target, seeing, quote, so many reasons to like the stock. And finally, Stifel raising its price target on AMD to 635 from 450, saying the slide in chip makers is more of a valuation reset than a fundamental slowdown. AMD is down this morning by 0.5%. That 3 morning calls. Let's get to SK Hynix. The ADRs begin trading on the Nasdaq today. The company raising more than $26 billion, the largest first-time share sale by a foreign company in U.S. history. Bloomberg's Ed Ludlow joins us now for more before he heads off to the Nasdaq. Ed, good to see you. What do you make of the issue?
Yeah, look, there's clearly demand, heading towards $200 billion of demand for a $26.5 billion deal. When we talk about it being oversubscribed, that's how I'd frame it in the dollar terms. And, clearly they need the capital, right? They are committed both in Korea and probably here in the United States to building out memory capacity. They have a 57% market share in high bandwidth memory. But right now, you just take the memory market in aggregate, HBM is like single digits, but because of the pricing in dollar terms, it's so much bigger than that. So they're going to have to work out their capital strategy. But really, it's about getting in front of the American investor that SK really believes understands the AI story better, because this is where so much of the AI story is playing out.
And it's hard to make that argument when you've seen the run-up in South Korea over the last year, no?
Yeah, I mean, the Korean market has been volatile, and even in the short term, in the last week, that volatility doesn't seem to have dissuaded the appetite of US investors. What's interesting about SK in particular, right, is if you think about fund managers around the world ex-Korea, it's very difficult for them to access that market. It was a very conscious decision for SK to price the ADR at a premium to the Korean shares, but they felt confident that they could do that, tap the demand without leaving money on the table. So, yeah, I think that the idea is that if you think about SK's footprint, what is it they got going on in California? They have their sales channels there, and they have their R&D there. Their biggest customers are there, NVIDIA being king among them. So it is about being in front of the American investor, but also the companies that are driving the infrastructure build-out where that high bandwidth memory is going.
The records keep dropping. Ed, thank you, buddy. And looking forward to the conversation later this morning, 10:30 Eastern Time, from the Nasdaq, the SK Hynix chairman catching up with Bloomberg's Ed Ludlow. Look out for that and more coverage on Bloomberg Tech a little bit later this morning at 11 a.m. Eastern Time. Let's build on this. Jay Goldberg of Seaport writing the following: the entire AI trade is driven by spending from 7 companies. So long as they keep spending, semis will see earnings growth. But any hiccup and the stock market gets spooked. Jay joins us now for more. Jay, welcome. Do you sense any deceleration in spending on the horizon?
I don't. Now, in all fairness, I'm not a hyperscaler analyst, so I don't have the contacts at Meta and Google and Amazon that some others do. But certainly what I'm seeing from the supply chain and from people in my community locally in the Bay Area, there's no slowdown in sight.
So do you think that, Jay, what we've seen in terms of the valuation reset or the sell-off in semiconductors is creating an attractive entry point? Or do you think that ultimately there's something else driving some of this activity?
I think your previous guest, Lizanne, had it right. It's a very confusing time. It's a really difficult trading environment right now. If you look at some of the spending plans that are out there, and these are committed contracts that data centers that people are going to build, there's a huge, huge ramp starting next year, late 27, early 28. Numbers get really, really big. The problem is a lot of that is already reflected in the share price, and timing is always a little uncertain. And I think we have a situation where sentiment got a little ahead of fundamentals, and that was sort of the correction we saw, this month or last month. I mean, the way I sort of think about it, there are stocks in my sector which could double or triple from here. The numbers are that big. The problem is they could all trade down 50, 60% before we get there. So it's a difficult trading environment.
Jay, it seems like a difficult moment, especially considering that a lot of people are increasingly skeptical, and yet the market can continue rallying for longer than they can remain skeptical. As someone who does have a sell rating on NVIDIA and Qualcomm, and as someone who has been more bearish in some of the trades, how difficult has it been to remain bearish given sort of the freight train that seems to be recycling back in every time anybody sees any kind of dip?
It's tricky. I'm not universally bearish, right? I am picking my targets here. I have buys on AMD and Intel. I think both of them have pretty strong prospects next year. Intel is fundamentally re-rating. It's a company we'd left for dead 2 years ago, and has a new CEO and a new lease on life. And as you know, if you look at NVIDIA, it's the worst performing stock in the SOX index this year to date. So I've been saying all along, NVIDIA is going to underperform because we have a really good sense of where that company is selling, what their prospects look like. That's the most scrutinized company on the planet right now. I think what we've seen this year is people have been looking towards other sort of less appreciated corners of the industry that are benefiting from this just as much.
Well, South Korea being part of that story as well, Jay, just to jump in, they've now got a listing here, ADRs. How do you think about that in terms of competition for capital in the sector with other names listed here?
I think it's a big and growing issue in the industry. 30% of that AI capex this year is going to go to memory. It's going to be 40-50% next year. You know, we're talking about $1 trillion of capex, and a very large portion of that is going to memory. It's a phenomenal time to be a memory company.
Right now, would you say it's the peak?
No. I don't think we get into supply-demand equilibrium for memory until 27 or 28. You know, calling memory stocks is very, very difficult. They're very, very cyclical. I think there's still a lot of room for the fundamentals, for the earnings to go up. How that gets reflected in the share price is difficult.
That's the key phrase, Jace. You said it. You just said it. They're still very, very cyclical. Some people don't believe that. They believe the story's changed. Why do you believe that's still the case?
Every bubble somebody says this time is different. Look, there's obviously huge demand for memory, but at the same time, the memory makers are expanding very heavily, right? Micron is building 5 plants, 5 fabs right now. Hynix is raising a lot of money at this IPO. They're gonna plow that back into building more capacity. Samsung announced a massive investment plan a few weeks ago. So this is how these cycles work. There is lots of demand. They spend a lot on capex to catch up. I think the only thing that's different here is they have a lot of customers paying for it up front, paying cash up front. That levels it out a little bit, but there's a lot of capacity that's going to be coming online in 28, 29. We'll see what memory looks like then.
Jay, it's good to see you. Thank you, sir. Jay Goldberg there, Seaport. Not bearish on everything, just super bearish on NVIDIA. More recently, looking at 2028, when can you start worrying about a few years' time?
Yeah, I mean, ultimately, maybe not so optimistic on NVIDIA, and we actually have seen an underperformance there. So to that, kudos to him for going against the grain and being the one sell rating, but also saying things like, this isn't my first bubble, and seeing a lot of analogs, at least earlier, when he's been on to the 2000s and what happened with Cisco. Here's the issue. There's clearly skepticism about how far the buildup can be, but it's been very difficult to time it, and you can feel that in all of our conversations with everyone who comes
Multiples are not excessive, which is why Lisanne Saunders is asking the following question. Is there a bubble in earnings expectations?
Right. And
that's what we're trying to tackle.
And maybe we'll start to get some hint of that next week when we get earnings. Coming
up next on the program, Nancy Lazare of Piper Sandler and why the Fed is a ways away from reaching its inflation target. Plus, Yohira this time has your morning movers. Delta are raising earlier gains. Their stock is down 0.9%.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
The open about 60 minutes away. Equity futures this morning just about unchanged on the S&P. Softer on the Nasdaq. We're down by a third. No drama there. Let's get you some single names, some morning movers. Let's cross over to Yahara for more. Hey, Yahara.
Hi, John. Delta is giving back its earlier gain. Shares are now down 0.7%. The airline reaffirmed its full-year outlook with strong demand for premium seats, helping to offset the highest quarterly fuel bill in its history. But now investors are now asking whether that can continue with fuel costs up 50%, according to CEO Ed Bastian. Turning to Circle, internet shares are absolutely soaring, up 13% in the pre-market on news this morning that the OCC, that it won an OCC charter to launch a national trust bank. It's a significant regulatory milestone that brings more of the company's business under federal oversight instead of on a state-by-state basis. And investors see it as another step toward bringing stablecoins further into the traditional financial system, which is ultimately where the industry wants to go. And we end on Meta. Shares are up 3.4%, leading the Mag 7 and building on yesterday's gains on a new research report from this company, Semi-Analysis, arguing that Meta has the best chance at catching up to OpenAI and Anthropic. It points to Meta's massive AI infrastructure spending, projecting the company will have more AI computing power than its rivals by the end of the year. John?
Yara, thank you. Thanks for this morning. Better news out of Canada. That data just dropped in moments ago. 18,000 jobs added in June, a little more than 18K. The estimate was 10K. Unemployment dropping back to 6.5% from 6.6. The estimate was 6.6, so back down to 6.5%. Better news there. The reason I bring this up is that economy has really struggled all year when their neighbor, southern neighbor, the US, has been absolutely flying.
Well, and it hasn't been totally without relation, right? I mean, a lot of people will say that a big part of the reason why the Canadian economy isn't doing so well is because of certain trade tensions that have curtailed some of these sales. Also, though, noting earlier this morning that inflation came in slightly below expectations. You're seeing some of these things kind of going the way of central banks around the world. Is this a sign of reset? A lot of people are saying that Canada had entered a technical recession.
Yep.
Was that going to be a brief type of issue that really wasn't going to be a prolonged downturn? This suggests maybe that's the case. That's your Canadian assessment for the morning.
That's the latest. That's the 60 seconds, right? Is that it? Got some more? No, you're done. Okay, you sound like you're really done. 28 minutes,
really
Bramo.
done. Oh my
28
God.
minutes.
You are
right.
so projecting.
Let's get the Bramo weekend clock
You
going,
are
all right?
literally projecting.
I've been ready to look ahead to next week.
Yeah.
All week. Okay, so let's do that now. A blockbuster week ahead for the US economy. Inflation data just around the corner. All the big banks start to report on Wall Street. Fed speaking testimony from Fed Chair Kevin Walsh coming up on Capitol Hill as well. Look out for all of that. Joining us now to discuss Enda Curran from Washington, D.C. Enda, let's talk about that testimony. What's the most we can hope for from Kevin Walsh in front of the House Financial Services Committee?
I think, does he give any clarity on his reaction function, John? John, that's what a lot of, I think, Fed watchers are looking out for. Yes, they kind of understand his argument and forward guidance. That's been articulated. People have their views on that. Some agreed, many disagree. But the bigger issue, the kind of void when it comes to understanding the Fed under new chairman Kevin Warsh, is what exactly is making him tick? How is he reading the economy? How would he respond under different scenarios over the months ahead? You know, to use the jargon, the reaction function. So I think people would like to hear him articulate some of that. They get where he's coming from. He wants less communication. He's trimming back on he's making changes where he can. But in terms of the core, you know, what will be driving the Warsh Fed? That's probably one of the biggest talking points I think that people are looking for next week.
And what about these task forces? You've seen the names on it. Impressive list of names, I've got to be honest, to cover several stories at the Federal Reserve. What was your reaction to the list?
I think really significant and serious names, John, no doubt about it. You look through it, former policymakers like the Bank of England Governor, former Bank of England Governor Mervyn King, former Reserve Bank of India Raghuram Rajan. Then you have Karen Dinan from Harvard and the Peterson Institute, a well-known fiscal expert and economist. And of course, then you have the likes of Mark Andreessen from the tech world. I mean, it's crossing business and academia. It would be wrong to underestimate it. It is a signal of intent from Chairman Warsh. The question then becomes, where will this go over the months ahead? I mean, they've been set a pretty short time frame for all of this. Chairman Warsh said they're going to report back by the end of the year, and then those reports will go to the FOMC. So, you know, it's a big statement. These are big names, but it's not yet clear where the process ends and what the deliverables will be out of it. That's, I think, what people will be looking for in the months ahead as this process goes on, John.
And thank you, buddy. As always, looking forward to your coverage from you and the team down in Washington, D.C. next week. Ahead of that testimony from Kevin Warsh, the Fed chair, we always get excited about these testimonies, and the same thing happens every single time. You get ridiculous questions in the House, things like, are you going to be a sock puppet? Remember that one out of the Senate Banking Committee last time, those kind of questions? Is that what we're going to get this time next week?
How are you going to remedy affordable housing? What kind of policy projections
all things that are out of his control.
That are completely out of his control. How are you going to deal with AI power plants and what that's doing to pricing? I mean, things that he's not going to really have an answer for. That said, he's probably not going to have an answer for anything relevant either. So if someone asks a very good question, there probably is a task force for that. So, you know, to the extent that I'm excited, it is...
it's probably a good thing for him that he gets those kind of questions, right?
Exactly. It's actually fantastic. But my enthusiasm is dramatically curbed.
Nancy Lazare of Piper Sandler, looking ahead to next week's inflation data, expecting headline CPI to come in line with Wall Street estimates, but calling for a lighter read on core. Nancy joins us now for more. Nancy, welcome to the program. If we get that, does that close the door on a rate hike this summer?
No, it really doesn't. The pieces of the CPI this month are going to matter more than what we've seen historically. By that, I mean, we do know technology has a bigger weight in the core PCE deflator. So how much of that, you know, AI-related inflation does indeed show up in the CPI, then we have to pull it out and come up with estimates for what that's going to do to the core PCE deflator. In addition, you know, you're getting bifurcation within the, I hate that word, but you are getting bifurcation within the inflation data. As you mentioned, headline is going to be down, probably both CPI and PPI, but the core components, again, you could see things that are incrementally sticky. The World Cup, you could also say the World Cup has added to inflationary pressures. Let's see if airfares go down. Let's see what happens to hotel rates. Let's see what happens to ticket prices. And so we saw this a couple of years ago, where the internet entertainment space also could be an area of sticky inflation. And then last but not least, yesterday we also heard that the health insurance industry is going to raise rates double-digit, 15 to 20% in 2027. So I keep getting hit over the head, basically, by companies having more pricing power than we thought. And so, you know, inflation, bottom line, is sticky. 1 month doesn't make a trend, and you have to really pull it apart and see where, you know, there just continue to be surprises on the upside.
So bottom line, I hear hikes as you're speaking, Nancy. Do you see hikes in the future?
Well, my colleague Kurt Lewis, that's his focus right now, and he's reviewing. Reviewing that. To be sure, the interest rate structure is stimulative to the economy. I am a monetarist. Confessions of a monetarist. Money supply growth is reaccelerated. You're up almost to 6%. Bank loan growth is 7%. Why are you having that? Well, it's not because the Fed is tight. It's because the Fed is indeed been supportive of growth, and that's supporting, obviously, right now more so the high-end consumer than the low-end consumer. But if you can see some release on the energy side, then maybe even the low-end consumer can kick in. And then the next thing I have to worry about is maybe wage inflation, given the sluggishness in labor force growth and what we think is going to be stronger employment going forward. So net a healthy economic backdrop, and the Fed has really helped to support it through keeping the interest rate structure so low for so long.
So how excited are you, Nancy, to hear from Fed Chair Kevin Warsh on Tuesday all about the reaction function of exactly how the Fed's going to be handling incoming data?
So I'm not going to try to anticipate what he's going to say. I'm excited about the new Fed chair. The financial markets, if you look at gold, if you look at the dollar, are sending a lot of confidence in the path that he is taking. Status quo is not always good. Change is good, and I think the financial markets are embracing that, and they're impressed that he truly is taking control of the monetary policy outlook for the next many years.
At this point, we heard yesterday from the New York Fed president talking about, John Williams talking about how he sees AI spend as potentially a bigger input to inflation going forward than even the energy side of the story. Do you think that that's an increasing concern? Do you think that that's valid and actually the potential driver here going forward?
So, yeah, absolutely. Right now, you've seen 20-30% price increases from certain tech companies that will show up first in the CPI, and then, as I mentioned, have even a bigger impact on the core PCE deflator. Tech is almost 4 times bigger in the core PCE deflator than it is in the CPI. And so I think it is valid, but I would actually connect the dots. First we had the tariffs that kept inflation sticky. Then we had oil. And we saw some pass through of that into other components within the CPI. Now we have tech and maybe something going on in healthcare. So to me, it's not just one, it's the path of companies having more pricing power than I certainly initially expected as we moved into 2026. And so bottom line is it's not just AI, it's a trend that we're seeing that inflation is indeed stickier. And as I mentioned, I'll say it again, I think next thing we're going to potentially have to worry about is wage inflation. There's not a lot of labor supply. I do think employment's going to get increasingly healthy, not as robust as we've seen in previous cycles, but unemployment claims tell us that AI is not destroying the labor market. Claims are down 8.5% on a year-over-year basis. And so are we going to next be talking about wage inflation?
Do you think monetary policy has contributed to these themes, Nancy?
Yeah, I do. I mean, I look at nominal GDP growth. Nominal GDP growth is what's actually calculated. We're paid in nominal dollars. Companies report nominal revenue growth, and it's nominal growth minus inflation that equals real. And nominal growth is 5.5, probably closer to 6%. Fed funds of roughly 360. That's a pretty healthy gap between the underlying trend in economic activity and the cost of capital. And so the Fed has certainly helped to engineer, positively so, a pickup in economic activity. Started with a high end. We hope now moving broader into the middle to lower income consumers. But absolutely, monetary policy has contributed to growth and now maybe incrementally to inflation.
So, Nancy, where do you think neutral is?
I prefer using this concept of nominal relative to Fed funds, and the bottom line is it's probably higher than what some of the Fed watchers think it's been. But at the end of the day, you have a 250, 300 basis point gap between nominal growth and Fed funds, and that is stimulative.
Nancy, it's good to see you. Thank you. Nancy Lazada of Piper Sandler wouldn't tell us she thinks this Fed's going to hike, but everything that Nancy said in the last 5-6 minutes just screamed rate hikes, didn't it?
Yeah, the Fed actually does have some influence over inflation, and you're seeing inflationary pressures from many different places. And she talked about wage inflation in particular. And yesterday, the Atlanta Fed put out their wage tracker, their wage growth tracker, and you did see a slight inflection higher. So job switchers, 4.1% from 3.7% in the prior month. So you are seeing a little bit of that around the edges, albeit 1 month does not make a trend.
Unemployment's at 4.2%. Inflation is the highest in 3 years. It's been above target for 5. No wonder there's additional pressure on this institution to be thinking about hiking and not cutting interest rates at this point.
You asked a good question, though, which is how much control do they actually have? And for every person we ask, we get a different answer. Some people saying that it's absolutely out of their control because the spending is rate agnostic when it comes to artificial intelligence. Other people, like Nancy, talking about the monetary supply and talking about how ultimately borrowing conditions are relatively loose as a result of where the Fed's at.
CPI on Tuesday and a much anticipated testimony from Kevin Walsh in front of the House Financial Services Committee coming up on Tuesday as well. Excited.
Yeah, I know. You could see, we're all going to learn.
Full coverage live right here on Bloomberg TV, and the after show with Bramo coming up a little bit later that afternoon. I've made that up. I made that bit up. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Vonnie Quinn has more. Hey, Vonnie.
Good morning, John. President Donald Trump firing 2 Democratic members of the U.S. Election Assistance Commission and a Republican resigning. It's the latest move by the president to put his stamp on how elections are run. Last month, the Supreme Court expanded his right to dismiss government officials. S&P Global downgrading Oracle's rating to BBB-, just 1 level above junk, citing the company's growing spending on AI. The agency says Oracle's rapidly expanding infrastructure business is increasing its overall credit risk. JP Morgan has built an AI agent that beat a traditional 60-40 portfolio in Mac tests. The results are based on historical simulations rather than live investing, and the bank warns that treating them as proof that AI can consistently outperform markets is not a good idea. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thanks for this morning. Up next, we're setting you up for the day and a week ahead. And what a week ahead we've got coming up. Plus, we'll catch up with Jonathan Krinsky of BTIG saying the correction in chip makers could be far from over. That's next. You're watching Bloomberg TV.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years when I first became a congressman. It takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
That that is one of the things I'm paying close attention to during earnings season, is whether that sell side versus buy side estimate has a very wide spread, and what's the sensitivity in terms of the market reaction. I think it probably continues to fuel these rapid fire rotations that just have become the name of the game in this kind of market.
That was Lizanne Saunders of Charles Schwab weighing in on this equity market, framing things quite nicely this week. A provocative question compared to where we were more than 25 years ago in the dot-com bubble. The bubble then was in the price. She's asking now whether the bubble is in the earnings outlook. It's a worthy question, worthy of debate. Equity futures right now in the S&P 500 just about unchanged on the S&P. On the NASDAQ, we're down by 0.4% following a massive equity offering coming from SK Hynix in the last 24 hours.
Yeah, the biggest ever debut of a foreign company to the U.S. equity markets ever, $26.5 billion, upsized from the expected $24.5 billion, and coming at a premium to where the shares closed in Korea. Does this open the door to others? Does this highlight just how good conditions are for financing? You can take that whatever way you want, given the fact that companies are able to tap a wide open market, even with some of the skepticism that we're talking about.
Those ADRs begin trading a little bit later on today. That's the day ahead. This is the week ahead. The week ahead is basically Tuesday morning and a bit of Wednesday. That's basically it. On Tuesday, JP Morgan, Bank of America, Wells Fargo, Goldman, Citi, all reporting earnings on the same morning, 8:30 Eastern time. After all that's wrapped up, CPI data, and then, catch your breath, then Kevin Walsh testifies in front of the House Financial Services Committee later on that day.
Yeah, most important will be the earnings, because we'll get a sense of whether there is an earnings bubble or a bubble in earnings expectations just by the response in markets, as well as what the forward look is from some of these companies. That said, increasing questions around the reaction function of the Federal Reserve, so the 1-2 punch of both inflation and Kevin Walsh telling us all in this confession to the House Financial Committee will be really important.
I haven't forgotten that sprinkle of data on Wednesday, PPI on Wednesday morning, and got lots of friends over at Morgan Stanley. Always enjoy speaking to you, Ted. Morgan Stanley numbers drop Wednesday morning too.
Yeah, to sort of put a cap on what we get from the big banks. And ultimately, big question, will the IPO window and frankly the debt issuance window be as wide open in the back half of 2026 as it has in the front half?
But stocks so far this year up 25%. Morgan Stanley,
really
Goldman have done really well, given the backdrop for capital markets. Let's turn back to our top story on Wall Street. Investors awaiting the debut of SK Hynix on the NASDAQ today following a volatile stretch for chip makers. Jonathan Krinsky of BTIG writing, as U.S. markets get ready to trade a new mega-cap semi, we remain cautious given the plethora of warning signs in recent weeks. Jonathan joins us now for more. Jonathan, good to catch up with you. The warning signs, what have you seen in recent weeks?
Yeah, so I think the only thing more impressive than the performance of semiconductors of late has been that volatility, and we've seen
from the June 22 high. You told us maybe a month or so ago that we would see an equal and opposite correction in that particular index. So with that in mind, is that still the case, Jonathan? And how much downside do you think there is?
Yeah, I think that's still the case. You know, I think we held the 50-day, thought we might get a little bounce there, but I think there's still, 20 to 25% downside for the index broadly. If you look at something like the precious metals, which went parabolic in a similar fashion at the end of January, it's only 5 months removed from that, and the silver's down 50% and is in a pretty strong medium-term downtrend, right? So I think people have short memories, and I think the downside is still pretty meaningful at this point.
Do you think that this is a downside that pulls other areas of the index down with it? Or do you think that ultimately it is just a big rolling ball of cash that goes from the semis to the hyperscalers and potentially to equal weight, and that we'll just see more of the same with a further downdraft in the stocks?
Yeah, so at this point, it has been rotational in nature, and I think that's the good news for investors. There's plenty of areas that are, breaking out of multi-year trading ranges. We've highlighted equal-weight healthcare just broke out of a 5-year base. Insurance has broken out of an 18-month base. The REITs look poised to break out from 5 years of sideways action. So at this point, it is rotational nature. I think the one risk we're watching is the correlation. The dispersion is so low or dispersion is so high, the correlation is so low, it's basically at all-time lows. That could become a risk as we get into the end of July or even August. And that's what we saw in 2024. Correlations were extremely low. And then once you kind of got through the rotation in the middle part of July, there wasn't anything left to rotate into, and that was what led to a bigger market correction. So I think that is a potential concern later this month or into the third quarter, but it's, at this point, we're still looking for that rotation.
How much pushback do you get on calls that are somewhat against the grain?
Yeah, the semis trade has been a very hot topic, right? I mean, I think there's people on both sides of the coin. I think the bulls will argue it is different this time. Our pushback is, again, the memory is so short. If you go back to May of this year, the hyperscalers and the Mag 7 were at all-time highs, and the thesis was very much that they were insulated to macro concerns. And then all of a sudden, 2 months later, we're talking about their capex going through the roof, and they're in a big drawdown. Just go back to software in October of last year. It was at all-time highs for the software sector, and by February of this year, it was trading down 30-40%. And so we just want people to keep an open mind. It could be different this time, but the gains have been significant. And again, when you get this host of sell signals, I think it at least warrants some caution and maybe hold off on some of that buying at this point.
Jonathan, it's good to see you. Jonathan Krinsky there of BTIG. It's been Jonathan Krinsky. Lisa Shadid of Morgan Stanley has warned about the same thing. Jay Goldberg of Seaport earlier on this morning, bearish on some of these semis.
Yeah, and partly because people have just gotten so excited about it that maybe valuations have started to get a bit stretched, even as the valuations have come down. When you take a look at the hyperscalers, it is a relative trade as much as it is specific to semiconductors.
You made it, Bramo. Well done.
I love
You've
this.
done it. You've done it. We've made it to the weekend.
You have been projecting
I said we made it to the weekend.
That is your first acknowledgement.
Just excited about a weekend of football, all right?
Yeah?
Just very excited about a weekend
go right to the
of football.
stadium.
Yeah.
Shell out $10,000.
I am not. All right. Next week's a massive week. Here's the lineup on Monday. Jeff Yu of BNY, Sonal Desai of Franklin Templeton, Erica Najarian of UBS, Steve Pagliuca of Bain Capital. Get some rest. Have a wonderful weekend from New York City. This was Bloomberg Surveillance.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Now, some people have written that your bank, Revolut, is worth $75 billion. Have you ever thought of taking your organization public?
Well, the way I think about it, we kind of will be ready probably in 2 years' time. But then again, depends on how good the market is.
Since you don't have an IPO, how do people who work for you make some money? Do you make a market for people to sell their shares internally?
Yeah, so we do secondaries every 1 or 2 years when people can sell a certain portion of their stocks to external investors.
So you've done secondary sales for your employees, so employees can then get some liquidity. Do you expect before you go public you'll do any more of those, or are you just going to wait till you go public before you liquefy any more stock?
Yeah, I think so. We might do secondaries as well before we do IPO, because we do it every 1 or 2 years, so we might do secondary as well.
All right, well, if anybody wants to sell their shares to me, let me know. And have any investment bankers told you why they're the best to do the IPO for you?
Yeah, obviously every single one is the best.
Everyone is the best. You're not in a rush to do it. You don't need the money.
So we're a bank, and then for the bank, it's super important to have trust. And then public companies are trusted more compared to private companies. So that's the reason.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is
you played for 15, 20 years, and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Happy Friday and happy SK Hynix Day. 30 minutes until the start of your cash trade. I'm Danny Berger.
And I'm Bonnie Quinn. Bloomberg Open Interest starts right now.
SK Hynix makes Wall Street history with the biggest ever U.S. debut by a foreign company.
Meanwhile, Delta delivers an earnings beat, but shares fluctuate on a cloudy outlook.
And here come the bank earnings. Wall Street's biggest firms are set to report another blockbuster quarter.
Well, we're keeping an eye on the AI trade today, that's for sure, Danny. And while semis may have saved us the last couple of days, it's a little bit mixed today. We'll see what kind of a test we have for investors' appetite for chip makers with the SK Hynix offering a little bit later on. And a report from SemiAnalysis found that Meta's AI compute capabilities make it the only hyperscaler able to take on OpenAI and Anthropic, and you can see the market reaction.
Yeah, tough day for the chip stocks considering all the supply we have to absorb from SK Hynix. Bonnie, you mentioned this. On the earnings front, we also have Delta. Shares are unchanged at the moment. Initially, they moved higher because they had a full-year profit guidance that beat expectations. Demand withstood some of those high fuel costs. But then we started to see gains paired back with the CEO, Ed Bastian, discussing the challenging macro environment. Analysts also noting that Delta is among the least impacted carriers from the Iran war. Even so, profit has started to be challenged. Challenge from them, challenge from Pepsi. Difficult to sustain any gains, Bonnie.
Well, Danny, all eyes, as we've been saying, on SK Hynix this morning as it raises more than $26 billion in the largest ever U.S. first-time share sale by a foreign company. Bloomberg Tech's Ed Ludlow joins us now, and he's from the NASDAQ. Ed, explain to us, how is this going to go down? When do we see ADRs start trading?
Yeah, later this morning. It's probably interesting to frame it in the context of demand, right, Vonnie? You know, you could say, okay, it was 7x oversubscribed, but the better way to put it is there's $200 billion of demand for a $26 billion deal, and that is completely in line with SK's rationale for doing this. You know, yes, they need to raise the capital. This is dollar-denominated capital to fund expansion of capacity. They have a 57% market share in high-bandwidth memory that goes into data centers for both training and running of AI workloads. But they need to also get the kind of name out there. This was as much about getting in front of the American investor that SK believes understands that AI story, and maybe from a valuations perspective, just bridging the gap a little bit. Remember, 57% market share in HBM, but Micron and Samsung trade at that premium that SK is trying to address.
I'm really interested in the mechanics of this, Ed, because typically with these ADRs, you'd be able to move back and forth. You could convert your U.S. ADR into a South Korean one into an American one, but it is just one way at the moment. You can only move your on one way. So is that arbitrage, is that premium going to forever exist with the American ADRs if you can't necessarily convert the South Korean ones into the American ones?
Yeah, even in the immediate term, it was a conscious decision to price the ADR at it's very modest, but a premium to the closing price last night of the Korean common shares. $149 was about a 3% premium. You know, in terms of sort of equivalence and parallel case studies, TSMC's ADRs do continue to trade at a premium. But in this case with SK, basically one ADR is valued at a tenth approximately of one Korean common share. So that fungibility issue is interesting. But again, remember, like $26 billion seems like a lot to raise in terms of proceeds, but in terms of a percentage of this company, it's like very small. So there are longer term questions about the ongoing and returning behavior of SK as it relates to the US capital markets.
Ed, thanks for joining us. And can I say we are so pumped for your interview. That's Bloomberg Tech's Ed Ludlow. Ed's going to be sitting down with the SK Group chairman, Chae Tae-won. That's going to be at 10:30 a.m. New York time. Probably the interview of the day. You don't want to miss it. Elsewhere in earnings news, Delta shares, they are fluctuating after reporting earnings this morning. The company's CEO, Ed Bastian, expects ticket prices to remain high as it attempts to recover higher costs. Joining us now is Sid Phillip, Bloomberg Global Aviation Chief Correspondent. Sid, is this just the fault of high energy costs, the reason that we're seeing shares under pressure this morning?
Yeah, so every investor is looking to see how demand's going to play out and what higher fares will really do to demand. So far, demand's been holding up. I mean, Delta has been sort of talking about how demand has held up despite higher fares, and they expect that to continue. And so analysts are concerned that the longer these higher fares go on, what will be the purchasing power of the American consumer, and will they continue to buy at those higher prices? Because Bastian did talk about how fares aren't coming down anytime soon because they have to recover those higher costs.
Speaking of, the K-shaped economy and the premium consumer versus the non-premium, EasyJet got another bid, this time from Apollo. And I'm curious, what does Apollo want with EasyJet beyond the obvious assets?
So the assets obviously remain attractive. I mean, EasyJet's got a fleet of about 300 aircraft, and they've got orders for almost 300 on their books. And those orders are for A320 aircraft. Those aircraft are very high demand. Beyond that, EasyJet's growing its holiday business. They've been sort of adding more capacity. They've been sort of expanding their business types. And so for them, this is an opportunity to get in at a low price, given the fact that the airline has been, especially since the war began, the airline had been trading much below its previous prices. So it's a very good opportunity for a bidder to come in and sort of, when the market takes off again and when that holiday business actually starts delivering, this is an opportunity for any investor to sort of cash in on that. And so we've seen Apollo come and best Castle Lake, and it remains to be seen whether or not there will be some sort of bidding war, whether Castle Lake will up their offer. We still wait to see that.
Yeah, climbing all the while. Sid, thank you so much. That is Bloomberg's Sid Phillip. By the way, we're going to hear from Delta CEO Ed Bastian on Monday. That's live on Bloomberg Surveillance, so do tune in. Turning to Wall Street now, and 5 of the 6 largest U.S. banks set to report earnings on Tuesday, offering investors a crucial read on lending, trading, and the broader economy. Let's get more with Bloomberg Chief Wall Street Correspondent Sri Natarajan. Sri, you're going to have to parse out your time pretty well on the morning of all of those earnings. Where will you be training your eyes first? What's the most important metric we should be looking for?
I think the most interesting number will be the trading figures. That's where you will expect. The banks are already very giddy about it. You've seen some of the chatter come out of inside Goldman Sachs. Halfway into the quarter, people have been super excited, especially on their stock trading desks. So we will be paying close attention to those numbers. But just going back to the idea that we talked about, this is SK Hynix Day. Think about anyone with a view of Midtown Manhattan last night and you saw the JP Morgan building lit up in the Korean flag. Like, they raised $26.5 billion, and yet they barely make the podium finish in terms of equity raises in the last month. We've had Google that came in and raised $40 billion. You had SpaceX with $86 billion. Google again with another $40-odd billion over the next few months. It just shows you what enormous appetite there is, and also that capital markets are wide open. Trading desks are humming. When you talk about the deal-making desks, year over year, M&A growth has been phenomenal. Goldman Sachs has been touting the fact that it has hit $1 trillion in deal volume at the fastest pace ever. This is going to be a phenomenal quarter, but it also augurs well for what's ahead. Expect Ted Pick to get on the call and talk about the flywheel effect in an animated fashion, because this will feed into and amplify all parts of the business.
Right, and I mean, we had Stefan Feldgois on this very show after Goldman hit that metric, and he was incredibly bullish for the second half of this year. So deals are firing on all cylinders. A record first quarter and a huge first half. The trading desk looks good. What about everything else? What about the Bank of Americas of the world? What are they going to say about their consumer lending businesses, Sri?
And again, so let's look at the other part of the business. Yes, we've talked about the Wall Street operations. What about the consumer operations? Commercial and industrial loan growth, that appetite exists. Even consumer loan growth exists right now. When you think about the rates, yes, we've been going back and forth on where rates are headed and where we might end up at the end of the year. But where rates are right now feels like almost the Goldilocks level for banks. It is 2 years ago when I think about it, Mike Mayo talked about the roughly 3% level as what is bank heaven in terms of rates. If it goes much higher, it can become bank hell. But right now, it seems near perfect. The one note of caution, and one thing I will be paying close attention to, is what they say about the health of the consumer, because you heard commentary from Pepsi yesterday saying higher gas prices means fewer snacks are getting sold. Bank executives have consistently over the last several quarters talked about the strength and the resilience of the consumer. And it is also entirely possible that they once again tell us the same thing because they're not exposed to the lowest consumer segment anymore, like some of the fast-moving consumer good companies.
By the way, I loved your team's reporting on Mike Mayo skipping gym day to do the 5 bank earnings on Tuesday.
I will tell you, it might seem frivolous, but it is a very big deal for Mike Mayo to skip gym day.
Anyone who follows Mike Mayo and his powerlifting knows that is certainly a big deal.
2 years ago, his deadlift record was 410 pounds, and he assures me it's much higher now.
I wonder what's more, him or Chris Waller. I wonder if they compete out.
We should have them on Bloomberg TV compete.
Deadlifting, yeah, I like that. It's an open invite to both of you, by the way, if you're listening. Sri, thank you so much for joining Sri Natarajan of our Wall Street team. A check on markets this morning as we gear up for the SK Hynix listing. We are within 1% of all-time highs, but we are seeing chip makers challenge this morning. Look, we're going to have to absorb a lot of supply, the biggest cross-listing ever from a foreign company coming in. So you're seeing Micron, SK Hynix, the likes of which starting to fall as we start to think about, okay, are we all competing for the same capital? So we're down just under 0.5% for the NASDAQ as the S&P holds ground again within 1% of all-time highs. Yields a little change this morning as Brent crude also a little change with talks maybe restarting in the Middle East. We are trading at $76 a barrel. Some of the other individual movers on our radar this morning, Triple C Intelligence Solutions climbing on a report that the insurance software company is exploring a sale.
Lubricant spray maker WD-40 boosted its net sales forecast for the full year, up 16.5% now.
And stablecoin issuer Circle was approved for a U.S. bank charter that will allow it to custody assets with under OCC oversight, shares up 12.6%.
And coming up, we're going to get back to Delta earnings. We'll be speaking with Jefferies senior analyst Sheila Kayoglu. This is Bloomberg Open Interest.
Welcome to Bloomberg This Weekend. I'm David Verrett.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation is a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Now, to high interest, to look at what's making headlines around the world. Talks between the US and Iran over a permanent peace deal continuing despite 2 days of clashes this week. An American official telling Bloomberg the US is still committed to finding a diplomatic solution with Iran, describing ongoing discussions as technical talks. The two countries are aiming to reach an agreement by mid-August, roughly. A Ryanair flight was forced to make an emergency landing in Greece this morning after a window on the Boeing 737 dislodged soon after takeoff. Several media outlets reporting that one person was almost sucked out of the plane. The window reportedly shattered after a piece of the engine broke off and hit it. Delta delivering stronger than expected earnings and reaffirming its full-year profit guidance. The airline saying stronger demand for premium, corporate and international helped offset the highest quarterly fuel expense in its history. CEO Ed Bastian cautioning that ticket prices, well, they're not going down anytime soon. They're likely to remain elevated as the company looks to cover higher costs.
Let's get more on Delta earnings, and we're joined by Sheila Kayalu, Jefferies Senior Equity Research Analyst. She has a buy rating on the stock with an $105 price target. Sheila, great to see you.
Thank you for having me.
Can I just get your first reaction to what we heard from Delta this morning?
Yeah, I think Delta earnings were pretty good, as expected, but the stock has outperformed its peers by about 20%, so I'm not surprised to see it trade down a little bit pre-market. The revenues were up 14% year over year in Q2. They had robust results, mostly on pricing. Capacity is flat, so you're seeing low teens revenue growth on pricing, and the exit rate should be much better than that. So Q3 is sustained and likely into Q4 as we see capacity rationalized in the U.S. So good things from Delta this morning.
Good work. Yeah. Is this partially because of Delta's hedging strategy, and will all airlines be different because of their hedging strategies?
No. So the costs were actually up for Delta about 7%. We're expecting other airlines to report costs ex-fuel in the low single-digit range. So Delta's costs were a little bit elevated. That's due to their pilot premiums that they're paying, kind of because the capacity cuts are happening, delayed flights a little bit. So you actually saw costs a little bit elevated. That was embedded into our numbers, so it wasn't necessarily a miss. It was kind of a somewhat known item into the mix. But their hedging strategy is helpful, not as helpful as one would expect as we head into Q3.
Does that just mean in general that we have seen profits peak if they continue to face these higher expenses both for their staff and for fuel?
No, not at all. In Q2, costs, fuel costs were up about 100%, but EBIT was only down 50%. So margins held in there at 8.8%. So margins were actually down versus last year at 13%. So there's lots of runway to go. Delta, we think, could get to mid-teens market, and they have a lot of ancillary revenues that get them there. For instance, their MRO business, it's only about $1.2 billion in sales today for the 2026. We forecast it could get up to $5 billion of revenues at mid-teens margins. They hit 13% margins this quarter. So they have a lot of other line items like their MRO, like their credit card that drive some of their additional earnings power.
So what should Delta be aiming for next? So looking forward, right? It obviously has a little bit of a lock on the premium consumer and business travel and so on. How does it grow?
Continue buy up in fares. One of the things we're disappointed about is the continued segmentation of the fare structure, where business class is seeing further segmentation, where it's basic business, business main, and premium. So you could accidentally get locked out of a lounge if you don't pick that main business.
It's so ridiculous, Sheila, but surely they're doing this and like following United and the others that maybe have the strategy, because it's what the consumer wants. Like, I personally, as a consumer, want to know that if I'm buying business, I'm getting the whole suite of things. And I guess what their bet is that people are just going to pay up for that or willing to pay a little bit less to not get that.
Yeah, I mean, if the fare cost is $200 difference and the cost to them to operate the lounge is $100, that's a great margin driver. So I think that's one of the drivers of Delta from here is continued margin expansion. And as capacity comes in, expanding that, whether it's Atlantic or Pacific.
Well, I was going to say, is that the next frontier for competition between the premium airlines, right? Because seems to me like everybody's charging roughly the same, but the way that they can outdo each other is perhaps on just the little luxuries, you know, in the business seat. And I mean, they can't expand those too much more. So it has to be the lounge.
Newer fleets, where I think, you know, there is sort of an upgrade cycle coming across the U.S. carriers and the European carriers and Asian carriers. We're heading to the Farnborough Air Show next week, and I think there's going to be a lot of competition for wide-body aircraft. You're seeing Singapore Airlines, Qantas, Philippine Airlines, and I think you could see the U.S. network carriers too. United already has a lot of aircraft on order, but everything you fly to the Atlantic or Pacific is an outdated 767, or you might get lucky and get on a Virgin A350, which is, you know, has its setbacks as well. So I think, you know, newer fleets are a big driver because that lowers maintenance expense, fuel savings, but obviously
I like
is an
the
output.
club lighting and the Virgin jets, yeah.
These are also airlines that have discovered that they were able and continue to be able to raise prices, especially when the cost of fuel went up. And it's something that they're all maintaining. And I wonder if at any point, because we do see in consumer surveys this really big pushback to what they feel as inflationary pressures. Does there come a point where the consumer is less willing to spend? Or do we need to segment this and say, as long as it's a premium consumer, Delta can keep their prices elevated?
I think you're seeing the main cabin also improve this quarter, which was so important for Delta. Main cabin also took the fare increases. In the U.S., the consumer is taking on fare increases. Not so much in Canada, but I think the U.S. consumer is hungry for travel, and that's being sustained. And airline prices have been deflationary, so this is just level setting them to where they should be.
By the way, did they get a World Cup bump at all? Like, do you think we'll see that in the numbers or not really?
We didn't see that in the Delta numbers, although I will say domestic travel was the highest growing area. Atlantic was fairly strong, up 8%, but point of sale out of Europe remains weak as Europeans are reluctant to travel to the U.S.
Sheila, you cover, you know, several major airlines. What are you looking for in terms of the rest of earnings season for the airlines? Where will the weak spots be?
What United says about American and what American could do in terms of controlling its costs.
But you mean United talking about what, M&A again, you think?
Yeah, I think that's hampered the stock a little bit. So I think going forward from here, they'll continue to talk about their premium strategy and look forward as they think about, you know, increasing their pricing power and expanding their network as well.
The deal conversation maybe fizzled out here. I mean, it's happening in Europe with private equity and EasyJet. Now, do you expect, though, the conversation to pick back up again in the United States looking for more mergers?
No, I think that's what's so interesting. I think the U.S. market versus the European airline market is so different. The European airline market is actually enthusiastic about the low-cost carriers, where they tend to do really well. Ryanair, Wizz did for a very long time. EasyJet obviously has a very young fleet. And in the U.S., it's all about the premium legacy network carriers. So it's an interesting bifurcation in the different markets that we're seeing.
All right, Sheila, thank you so much
Thanks
for
having me.
So great to have you. Enjoy the rest of your Friday and your weekend. That's Sheila Kayabu of Jefferies. And then just another reminder, we will be hearing from the Delta CEO, Ed Bastian, this upcoming Monday, speaking with Lisa Abramowitz on Bloomberg surveillance. Breaking news coming out of Washington. President Trump just posting on Truth Social, quote, "I will not sign the housing bill, which has been fully approved by Congress and sent to the White House in protest over the fact the United States is not capable of passing the Save America Act." If you remember, this is a housing bill that had been passed in a bipartisan manner, trying to prevent institutional ownership of housing, a single-family housing. It did have a lot of caveats that perhaps the industry was more happy about. This was considered a slam dunk, but President Trump initially saying he wouldn't have a signing ceremony, but then saying that he won't sign the housing bill.
All right, still ahead, Danny, strategist Emily Rowland on the market moves she's calling a dip buyer's dream. This is Bloomberg Open Interest.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Minutes to go until the start of your cash equity trade. S&P futures just hanging in there. We are trading just within 1% of all-time highs after a rally yesterday that did see chip makers gain. Today, that flips. Every day we wake up and we say, what did South Korea do? What are chip makers doing? It's literally the toss of a coin. It feels like every other day. But we are having to absorb $26.5 billion worth of SK Hynix getting listed into the American market. So that's making it very challenging for some of the American listed chip makers. Micron and some of the other ones as well starting to fall. SanDisk, that was the one I was looking for in my brain, are starting to fall in today's American session because of what we have to absorb.
Your memory chip wasn't working.
Ooh, I like it, Bonnie. Good pun, good pun. My memory chip needs an upgrade. 10-year yields, those are a little changed. And Brent crude, Bonnie, it's only up, but only up 0.25%. This is an oil market that, despite all the back and forth we've seen over the war in Iran and talks now apparently restarting, not that much of a reaction.
Well, the market was able to absorb it pretty quickly, right? And this was another case of President Trump saying something and then maybe walking it back slightly, and the market trying to decide what does this actually mean. Bear in mind those discussions have to start up again after the funeral, so they're really only resuming.
It's a very good point, and we're going to talk about all that and more. 4 minutes until the opening bell. Manulife, John Hancock's Emily Rowland joins us right after this commercial break.
Anytime you have an industry that grows like that, there will be pockets where things are more difficult. So if they're smaller companies, it's harder to deal with tariffs, it's harder to deal with labor and with rising interest rates. So there, you may see some poor performance. That doesn't necessarily mean that lenders will lose money, but it may be more difficult. And then pockets of software, everybody's been worried about how will that play out. I think there was a lot of capital that was put in from very smart private equity and very smart institutional investors into software really in the 21-22 vintage that was pretty highly priced. And that, as that works its way through the system now 4 or 5 years in, you may see pockets there. But I also think that the need for income, people want income in their portfolio, and they can get that in many ways. You can get that from the treasury market. You can get that from a bank. You can get that from high yield right now is pretty good. High yield has very little exposure to software. And then you can get it from private credit where you maybe get more return and a little less liquidity. And so that, I don't see that going away. In fact, I see investors wanting more of that and wanting it from real estate, wanting it from real assets.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
Just seconds to play for until we start trading. On this Friday, the last day of your trading week, you're watching Bloomberg Open Interest. I'm Danny Berger. The S&P, again, just hovers around 1% of all-time highs. The NASDAQ, though, that is declining about 1/3% in the future session heading into the open as we open markets. It is a lot of supply we have to absorb, so that seems to kind of be taking some of the steam off the boil. And Dow Jones, that's up about 1/3%. Here's the people everyone wants to talk to, and Ed Ludlow will be talking to them at 10:30 a.m., so in about an hour's time. But it is SK Hynix ringing the opening bell, the biggest foreign listing ever to come to these American markets as they look to get maybe some of the same valuation as Micron and some of their other peers. Man, rough to be down at the New York Stock Exchange, competing for attention with what's happening down at the NASDAQ. We have a data center company ringing the opening bell, so at least it's still like AI related. But again, it's all about SK Hynix today. Looking at what some of the big AI-related stocks are doing, NVIDIA, that's up about 1/3%, as I mentioned. Ahead of SK Hynix's debut, we are seeing some of the other chip makers start to decline as we make space. You'll make space in their portfolios. For SK Hynix, Micron down almost 3%. Meta, it has been declining, down 26% from its all-time highs. Helping them today was a report from SemiAnalysis finding that their compute capacities make it the only hyperscaler able to take on OpenAI and Anthropic. And in recent weeks, we have heard news that Meta looking to sell more compute, becoming a cloud company. Those shares up 5%, Bonnie.
All right, Danny, on the earnings front, Delta Airlines reaffirming its full-year profit guidance as travel demand withstands higher fuel costs. Shares paired gains as CEO Ed Bastian discussed the challenging macro environment. Analysts noted that Delta is among the least impacted carriers from the Iran war.
Let's get back to the NASDAQ, where SK Hynix poised to become the 3rd largest listing in history after raising more than $26 billion. Bloomberg Tech's Ed Ludlow gearing up for an interview with the chairman. Ed, it's countdown time to both your interview and the listing of this stock after we saw them ringing the opening bell. What do we know so far about how this thing is likely to price and be received?
Yeah, the demand is clearly there. It's a memory chip moment in financial markets around the world. So you see the leadership of SK Group, the parent, including the chairman, Chae Tae-won, who we'll speak to in just over an hour's time, along with other leaders, including Vice Chairman Chae Jae-won and the SK Hynix CEO, Kwak Mo-jung. The company sold 177.9 million ADRs for $149 each, with each ADR equivalent to 1/10 of a sole traded common share, but they priced at a slight premium, which is interesting. They didn't want to leave money on the table, raising $26.5 billion. We keep saying it's a record for a first-time U.S. share sale by a foreign company. They need the proceeds, right, to boost memory capacity, particularly high bandwidth memory, a market in which they have 57%. But the mantra here is we want to be where the AI is. They wanted to get out in front of U.S. investors as they ring the bell here at the NASDAQ. These ADRs set to begin with
with when issued trading this Friday on the NASDAQ Global Select Market under the ticker SKHYV, but that will change to SKHY when they begin regular way trading on July 13th. There are lots of questions about the trajectory for the memory market, the tightness, how long it lasts, but on the capital market side, already questions about what happens next there too.
Ed, we're really looking forward to all of your coverage. Bloomberg Tech's Ed Ludlow. And again, tune in to Ed's interview with the SK Group Chairman, Che Tae-wan. That will be at 10:30 a.m. New York time, the conversation of the morning. Joining us now as we beat the drum to that SK Hynix listing, Manulife John Hancock, Co-Chief Investment Strategist, Emily Rowland. Emily, great to see you this morning. What does it say about this market that we can have something of a bear market in Korea, led by a sell-off in these chip makers? We can have the Philadelphia Semiconductor Index not see a move of less than 1% decline in either direction for more than 2 weeks. And amid that volatility, SK Hynix can come to market and raise $26 billion.
Yeah, Danny, nothing can stop this market in terms of the AI and semiconductor memory trade right now. It is just remarkable. I feel like we're going to see our grandchildren sort of studying this in business school someday. It's just amazing. And what's so incredible about it is just the power of the earnings. We're huge believers that over time, stock prices follow profits, and we're just seeing incredible numbers within semiconductors, over 100% earnings growth last quarter. Analysts on the street looking for the same this quarter. So as long as the fundamental case here can remain intact, it's hard to see the broader trend of market strength here, halt. And the other element that's going on right now is that it's just a dip buyer's dream market. Every time news comes across the tape, to your point, attempting to cause some kind of selling pressure in markets, it's almost like a beach ball that's underwater, and it just pops right back up, and you get this transition from buying the dip to seeing stocks rip it once again. So as long as that behavior continues, I think, again, the broader trend here is intact.
Emily, it's been a dip buyer's market, right? It's been a dip buyer's dream, but there is a certain level of confidence that's necessary here. I mean, what if one of these times the dip buyers just don't reemerge? We've seen huge downswings several times over the last couple of months.
Yeah, Bonnie, I mean, that's why it's so important to think about owning other things. The biggest challenge that we found right now is that concentration risk is more epic than ever. So if you look at something, for example, like the MSCI Emerging Markets Index, 27% of that index now is concentrated in semiconductors and semiconductor equipment. 44% of the EM index is now in technology. The entire global stock market is now a giant technology index. So the biggest challenge we have is, and we're seeing sentiment shift to those markets. So as asset allocators, how can we think about owning other things if there is some type of sell-off or downside volatility in this very popular corner of the market? So for us, it's looking down in market cap, thinking about things like mid-cap stocks, looking to areas like industrials and healthcare, and then also thinking about fixed income. We have income, and that's really critical. It's tough to talk about right now because there's so much excitement in these other sort of pockets of the market, but we still think leaning into a 4.5–5% yield in high-quality bonds makes a lot of sense as we approach the back half of the year.
Well, what the bulls would say about this equity market, and Emily, I'm sure you would agree, is just that earnings and earnings expectations look so strong. I was, though, listening to Liz Ann Saunders earlier on Surveillance talk about this idea that where there is a bubble, it's not earnings, but earnings expectations. We are expecting an earnings growth of 22% for profits versus a year earlier. That is something we haven't seen in the post-pandemic period. Emily, that's an incredibly high bar to pass. Have we gone too far in what we're expecting from earnings? Are we going to get more Samsungs of the world in that they report and they beat, but it's just not good enough?
Yeah, it's such a great question, Danny. And it's really the reason that we're looking for sectors that have a lower earnings bar into next quarter. Financials are one example. 7% is what's being penciled in right now. We think financials can beat that. Industrials is one of our favorite corners of the market. The earnings estimate there is for about 9.5% earnings growth next quarter. There's a lot of tailwinds there. You've got the one big beautiful bill that's helping industrials. You've got this onshoring CapEx boom that's helping industrials, really the picks and shovels around the AI build out. So that's a favorite area. So we want to look for areas where maybe the expectation is not quite as elevated as it is in other segments of markets like technology.
You say healthcare is cheap as well, Emily, but where would you go there when you see people coming off of insurance rolls, for example, and, you know, lots more problems in the sector?
Yeah, I mean, active management, to your point, is gonna be critical there in terms of identifying those great fundamental stories. But when we think about healthcare, it's really high quality, great return on equity there. We see it as being less impacted by AI in terms of people's healthcare needs. And it does all right in periods where we're seeing negative wage growth, which is where we are today. So sort of stickier businesses, if you will. Healthcare has also not been the best performing sector out there. So it's another area where we think the bar, again, is more manageable.
Emily, we're going to have to end it there. Thank you so much for joining us. Enjoy your weekend. Manulife, John Hancock, Emily Rowland. Let's get a check on your equity markets almost 10 minutes into your trading day, and we are higher. We're not yet at a record. We need to get to 76.09, just above there, to hit another all-time high. It's this trade that keeps flipping. It is, I'll say this again, I said it all week, the check writers versus the check takers. Today, it's the check writers that are moving higher. It is Meta, Microsoft, NVIDIA, Amazon, so all these companies that need to spend a lot on memory. To the downside, it is the chip makers. It is Micron, Intel, Lam Research, Broadcom. Eli Lilly is up there too, that's declining. So we are getting ready to absorb all the supply from SK Hynix, so some pressure coming into that. So maybe a little bit of technicality in today's trade, less than fundamentals. Eli Lilly being down is dragging healthcare with it. Infotech, again, it's the semis. That means that we're moving lower, and communication services is at the top with some of those hyperscalers like Meta having a very good day, and energy moves higher as the price of oil also goes up to the upside. Coming up on our show, why S&P cut Oracle's credit rating to just one notch above junk. That's coming up. This is Bloomberg Open Interest.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
All right, a check on markets here on open interest. We are eking out 1 point of a gain on the S&P 500. I think, we're at low volume, 2-month lows when it comes to volume. So we're really heading into the summer lull after a massive, massive June in terms of volume. Today, everybody is just going to be waiting on the SK Hynix offering. For the moment, the Nasdaq 100 down about 1/3 of 1%. But we did see 2 days of gains after that shock from President Trump on Tuesday morning at the NATO conference. The Philly Semiconductor Index, well, it deserves a break. It's up 5% over the last 2 sessions, down 1.5% so far today. We'll see if SK Hynix changes that. Brent crude staying where it is. It's sort of hanging out and watching to see what exactly happens over the weekend and into next week, particularly with the Strait of Hormuz. Time now for our top calls. Some of the analyst action in focus this morning. And first up, Citi upgrading Toll Brothers to buy, saying that the home builder is on the right side of a K-shaped housing market. Those shares up 2.25%. Next up, Stifel raising its price target on AMD. And it's talking about a recent sector weakness as a valuation reset rather than a fundamental slowdown. And finally, Susquehanna initiating coverage of IBM with a neutral rating, seeing, quote, so many reasons to like IBM, but noting concerns around the consulting division and automation disruption. Danny.
Bonnie, staying with tech, and S&P Global Ratings has just downgraded Oracle just to 1 notch above junk. They've cited the heavy spending needed to build out its AI infrastructure. Joining us now is Bloomberg Senior Markets Editor James Crombie, who also hosts the excellent podcast Credit Edge. James, great to see you. And look, this is a management which has consistently highlighted their aim, their goal, and their ability to stay investment grade. Just how teetering on the edge are they to losing that promise?
For credit markets, it's the slow-moving train wreck. We flagged it 6 months ago as the big risk coming into this year, that they would be cut to junk. They are burning through cash. They're borrowing more than ever. They are, if you take out the banks, they're the biggest borrower in the US credit market. So they just have a ton of debt, and they need to start earning a lot more.
Why just Oracle, though? I mean, S&P said demand is strong now, competition intense, all the tech companies pouring money into AI. They have a greater capacity to raise capital, but why? I mean, everybody seems to love AI debt right now.
Yeah, I just think the ton of debt that Oracle has already got, and then going into this, they need to raise, between them, the hyperscalers need to raise trillions more. We're already seeing pushback from investors, which is kind of worrying when you're so early into this phase of, multi-year massive borrowing spree. So, I think there's going to be trouble all around. Spreads are going to go wider.
Can you outline some of the pushback we've seen? Because we've certainly seen it in the case of SpaceX, for example, that has started to see their debt start to fall back. You've seen Amazon not as robust as a demand as we've seen. How much of that is just teetering around the edges? It's not that big of a deal. Or are you really starting to see investors pushing back against some of these new issues we're getting around AI and AI spending?
Well, if you saw Matt Brill last week on Bloomberg TV hoisting a red card, wearing the Team USA top, I think, it's pretty widespread that investors, that's a big portfolio that Matt's running. So I think, investors around the world are saying, look, this is a lot of debt and there's a lot more coming, and each one comes cheaper and each one comes bigger. And, we've got to make capacity to buy that.
But are we about to see a host of downgrades then? Is that what you're saying, James? Maybe not to just one level above junk, but some kinds of downgrades.
I think the others have a much bigger equity cushion, and so they have more capacity to do more borrowing without affecting their ratings, and they're also higher rated, so they have a much more of a better buffer. Oracle has always been the weaker one in that group.
Can I just ask, because one of the very bullish theses for this market, and a credit executive told me this, who will remain nameless, basically said credit spreads will never widen because there's just so much money that needs to be put to work. And that's kind of one of those things I feel like people say and then they regret it 5 years later. But where is the kind of this supply-demand balance sitting right now?
I mean, there's a ton of demand for yield, so people are kind of looking beyond spreads, which are very tight. And we know that net supply has been very low over the last 5 years, so basically, investors are getting more inflow. They don't have anywhere to put it, so spreads are getting tighter. But in this year, we're going to see a lot more rebalancing of that equation. So there will be a lot more net supply, close to $1 trillion of net new supply of investment-grade debt, which we've never seen before, from the hyperscalers, from M&A, from all other fundraising that's going on. So that's going to push things back, and I think that there will be widening spreads. And I think that whole, there is demand. Yes, there is demand, but at some point, spreads have to go wider.
James, you know, contrarianly, could this downgrade actually be an opportunity for some investors? Bloomberg Intelligence pointing out that Oracle's spread gap versus high-grade peers, including SpaceX, you know, is leaving room for excess carry now, and that might be, you know, attractive to some people.
Yeah, there's always an opportunity, but, you know, when it goes down to junk, that's $120 billion of debt. That's 10% of the junk index. It's a complete flooding of that whole market. A lot of those investors have capacity limits on what they can take by single name, so there's going to be a lot of problems absorbing that in the junk market. Yes, there's always an opportunity when things go wider, but I think there's a bigger problem of that hitting the junk market and just flooding it.
And that happens when, James?
Well, I'm not going to predict it, but it's a slow-moving story. These things take time. You know, it will happen eventually.
It will, and we have a request out to the S&P analyst, so maybe he'll tell us eventually. And our thanks very much to Bloomberg's James Crombie. Coming up, the SK Hynix listing has unleashed a wave of new leveraged ETFs. We'll talk about that next. This is Bloomberg Open Interest.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
SK Hynix's U.S. debut paving the way for a fresh wave of leveraged ETFs tied to the South Korean memory giant. Let's discuss with Bloomberg Intelligence ETF analyst James Seyfert. Why invest in the company or its ADRs when you can invest in something synthetic related to it, James? How many are being traded literally today and how many next week?
Yeah, so it looks like there's going to be about 8 that are going to launch that are going to track SK Hynix, which is a lot. But again, we had just the SpaceX IPO, and there's already 11 levered long or short SpaceX exposed ETFs. So SpaceX actually has the most single stock ETFs tracking it. So yeah, we're looking at 8 that are going to come live likely on Monday.
Wow. There had been a big conversation, James, and you've been writing about this, about the impact of these leveraged ETFs, specifically in Korea, this concern that a lot of the sell-off was due because of deleveraging coming from them, and you have issues around dealers trying to get the correct exposure, and banks may be pushing back. As we get more of these listed, does that just increase the risk that you see wobbles, that you see quite technical issues in the stock trading because of these leveraged ETFs?
Yeah, I mean, there is definitive evidence that there are instances of the tail wagging the stock dog. SK Hynix is an example of what happened in Korea. But even here in the U.S., you can look at some names where these single stock levered ETFs, they're getting so big. One thing the listeners and viewers got to understand is they reset every single day. So there's kind of like maneuvers that happen at the close every day. There's a lot of the Greeks with gamma and different things that have to happen with options for these dealers to get these things set. And there are moves that are happening because of the size of these things where, If you look at Bitmine Emergent Technologies, one of those Ethereum DAT companies, that, for example, in late April and early May, the notional exposure to the levered ETFs that track it, the volume was more than the underlying stock. And when you look at a lot of these, you get to points where, like, if you're looking at the notional exposure of trading, when you incorporate the leverage, we're getting north of 50, 70% of some of these stocks on a weekly basis. So these things are definitely starting to impact their underlying rather than track them.
James, we're getting a first indication here of where SK Hynix will start trading. The ADRs, that is, indicated to rise 21% and to open at $180. Would you anticipate that that's, you know, fair game in terms of a premium to its shares in South Korea?
Yeah, I mean, I wouldn't pretend to know exactly what premium or discount or whether it should trade in par with it, but I would say that these ETF issuers, they would love to have their levered single stock ETFs trading today, but the SEC is just not going to allow that. So we're not going to see these levered versions of SK Hynix here in the U.S. likely until Monday.
Has the SEC been pushing back at all, James, against some of these leverage ETFs, especially considering some of the risks that you just outlined?
Yeah, I mean, so there are rules around what you can and cannot do, and all of these ETFs fit within the rules. My concern is more so the names we were just talking about, Bitmine Immersions. If you look at Strategy, actually, the Bitcoin DAT company, Rigetti Computing, Quantum Computing, Oklo, Nuclear, those type of like really heavy favored retail names, you know, the stuff you see on Reddit message boards, those are the ones where we're getting like these single stock ETFs are getting too big for the underlying. The single stock ETFs in Micron and even SK Hynix, for the most part, yeah, they're getting big, but they're not getting to the level where they're trading more than the underlying or significantly impacting because the underlying have more than $1 trillion in market cap. So there is nothing from the SEC that they're like kind of trying to stop this just yet, because as long as you keep within 2x and there are VAR rules, value at risk, not the FIFA reffing side of things, but there are VAR rules that kind of limit this. But right now, everything is within the rules. But I wouldn't be surprised if something comes out where the SEC kind of needs to put like some sort of lid on some of these with how big and impactful they're getting.
Is the appetite for the quote-unquote regular ones as big as in, you know, places like Korea on the retail side of things, James? And I don't, obviously, you know, the total market is much, much bigger here in the United States. But just per capita-wise or what have you, you know, is there a way to see if retail is way over-invested in these things when they're not in the stocks?
Yeah, so I would say there's no indications that retail is like super overinvested. Actually, a lot of the information where you look at this, I talk about how much trading is happening. What you want to see is you want to see a lot of trading in these things. The worst thing I would say for these is that there's a lot of assets that come here and there isn't a lot of trading, because that means people aren't using them the way that they're intended to be used. They are trading vehicles. You see a lot of money pouring in as these things do well, and a lot of money coming out as these things do well, a lot of money pouring in as they go down. Basically, people are taking profits, trying to call bottoms. So for the most part, there's some like a level of like intelligence in people that are the people that are using these things. So it's been kind of healthy, but obviously it's if you look at Korea, they are like outsized in their ownership. But here in the U.S., we have about $200 billion in these levered ETFs. If you account for notional exposure, the leverage that's embedded in them, it's over $500 billion, so it's huge. But for the most part, the biggest ones are in the biggest names.
All right, James, thank you so much for joining us. James Seyfarth from Bloomberg Intelligence. ETF wow, every Monday, 12 p.m. New York time, as SK Hynix indicated to rise 21% to open at $180.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
President Trump says this morning in posts on social media he will not sign the bipartisan housing affordability bill in protest over his voter ID law not being taken up in Congress. That bill was a rare piece of legislation. Both Republicans and Democrats strongly supported the housing bill. By not signing it, it becomes law. The president removing 3 remaining members of a bipartisan federal commission that tests and certifies voting machines. That move alarming Democrats, says ABC national correspondent Stephen Portnoy.
Stood up to help states update their voting systems after the 2000 Florida recount. The Election Assistance Commission certifies equipment and offers guidance to state officials. It's meant to be bipartisan. An aide says the president has the right to remove officials who, quote, may not be totally aligned with the important task of securing America's elections and ensuring every legal vote is counted. Top Senate Democrat Chuck Schumer calls the firings a brazen attempt to seize control of elections months before the midterms.
No new attacks on Iran overnight as technical talks on Iran's nuclear program continue on the ground. Flash flooding in the Midwest has led to life-threatening conditions, especially in the state of Missouri. ABC Chief Meteorologist Ginger Z has more.
In Iron and Reynolds County, Missouri, they've got people needing rescue at campgrounds. They've had 6 to 10 inches of rainfall in just a couple of hours. So what's happening here, we have training thunderstorms, meaning they're rolling over the exact same area over and over again. So if you've already had 6 to 10, and now you're going to try to add 3 to 5 inches, that's a big problem. Cape Girardeau, Paducah, also in those flash flood warnings.
Extreme heat across much of the country over the weekend, including in Billings, Montana, where it's expected to be over 100 degrees. Oil prices have been yo-yoing over actions in the Middle East. Checking the markets this hour, they just opened. The Dow is up 50 points, S&P up 14. You're listening to ABC News. Former Olympian David Hearn pleading not guilty to damaging the reflecting pool in Washington.
Hearn told me that he simply touched a part of the blue coating that was already partially detached, telling me, quote, I did not remove, I did not damage, I did not rip, tear, break, destroy, or harm any part of the reflecting pool. His lawyer says every American is at risk and should be alarmed by his prosecution, and now 3 more have pleaded not guilty who have been charged with damaging the pool as well.
ABC's Selena Wang. The family of Mississippi teenager Nolan Wells is calling for answers. He and his friends went out on the 4th of July to an undeveloped island off the coast of Mississippi. The friends came back. He did not, and his body was found 2 days later.
ABC News confirming one of Wells' friends on the trip made a missing persons report to the Coast Guard around 11 p.m. that night. Wells' mother filing her own report with the Sheriff Department just after midnight. Authorities have said they believe Wells drowned, but the sheriff stressed their work is still ongoing to determine exactly what happened.
ABC's Alex Perez. Lawyers for the man charged with killing Charlie Kirk continue questioning the reliability of evidence in the case. They're hoping to raise doubts about the prosecution's case against Tyler Robinson before Robinson stands trial. Fire at a Chinese shoe factory in Xinjiang province has killed 28 people, making it one of the deadliest ever. The Chinese state media reporting the factory's owner has been arrested. Sherry Preston, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Friday morning, summer Friday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're streaming live on YouTube and we're streaming live on Bloomberg.com as well. Scarlett Fu and Paul Sweeney here with you with the Bloomberg Intelligence Broker. Coming up, we're going to check in with Anthony Hughes, Bloomberg U.S. Equity Capital Markets report to get the latest on this SK Hynix U.S. listing of ADRs. It priced and indicating higher here in the pre-market. Louis Navellier, Chairman and Chief Executive Officer of Navellier Associates, get his thoughts on these markets. And to the bottom of the hour, around 10:35-ish, SK Group Chairman Che Tai Wang will speak with BTech anchor Ed Ludlow. That's going to be down there at the NASDAQ exchange, so we'll bring that to you as well. So we've got a lot coming up over the next couple of hours. Let's kick it all off with John Tucker and the Bloomberg Business Flash. John.
All right, happy Friday. This Bloomberg Business Flash brought to you by IBKR. Trade, election, climate, and economic outcomes with IBKR prediction markets. Right alongside your stocks and options. Earn interest in your position. Receive $1 per contract if you're right. Learn more at ibkr.com/predictions. Right now, the major averages, I would call it higher little change. Healthcare, information technology, the worst performing major industry groups in the S&P 500. The semiconductor index, the SOX, right now, that is lower, down 0.7%. Then you have the hyperscalers, the Mag 7 index, that is up 1% right now. Delta Airlines reaffirming its full-year profit guidance, but the shares right now, they are lower. Take a deeper dive into that in just a moment. Meantime, George Congalvis at MUFG Securities says the same story seems to be repeating for markets.
It's Groundhog Day every other week. We have a bond market that always goes to 4.5 in the 10-year, 5% on the 30-year. You get tech stocks kind of rebounding, and you get all-time highs, but we're kind of stuck in nowhere's land.
Right now, the S&P 500, 10 points higher, 75.53 on the index. The Dow up 60 points. That's up 0.1%, 52,549. And the NASDAQ Composite Index just turning lower, now down 19 points at 26,189. Because I was confused, I'll try to explain. But so the SK Hynix ADRs set to begin when issued trading, I guess any moment, on the NASDAQ Global Select Market under the ticker symbol SKHYV. That's going to change to SKHY when they start regular weight trading. That'll be July 13th. Got it? Good.
Yeah. So July 13th, the ticker changes?
Yes.
Yes. Okay.
That's not confusing, but okay.
All right, there we go.
Yeah, I used to know about this when issued thing, but it's a market, and we'll make a market in this ticker. But I pull up the Bloomberg quote for that ticker, the when issued, and I don't see a bid or ask. Yeah, so I'm going to not quote any indications until I see it on the Bloomberg.
It just says IPO positioning window started.
Yes. Yep.
All right, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett Paul.
All right, John Tucker, thank you so much. Appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube as well. As John is reporting red and green on the screen here. Let's take a look at some of the stocks on the move here today. We can do that with Avalon Purnell. She's equities reporter for Bloomberg News. Avalon, what are you looking at?
Have to start off with Meta, that's ticker Meta, currently jumping about 6% after just a lot of positivity across the markets. Part of that is coming from a positive note at Semi-Analysis, which said that Meta is the only hyperscaler on track to be world-class at data, talent, and compute. They say that these three things are integral to building a new frontier model that has the best chance at catching up with both Anthropic and OpenAI. Separately, KeyBank has also upped their price target, saying that the stock is their preferred mega cap into the second half of the year, given more evidence that their AI strategy seems to be working. And obviously, they also had earlier this week a lot of good news about their aggressive pricing for their AI tools, and all of this is making them the top gainer on the S&P 500 this morning.
All right, good stuff. So we'll keep an eye on that one in terms of big tech. Earnings season is actually underway.
It is. Delta starting us off. That's ticker DAL, currently dipping about 3.3% right now, despite posting a really solid second quarter results that topped Wall Street's expectations. Analysts still see a little bit of volatility ahead, understandably so, because third quarter jet fuel guidance was slightly higher than expected. Still, many analysts view this report and also that reaffirmed full year guidance very positively, with many expecting the stock to potentially move higher later on today. Morgan Stanley also writing that the revenue growth is very encouraging and that the company did deliver what the market wanted to see and is setting a high bar for some of their peers that we will be seeing
This is the kind of guidance that frustrates investors. You beat on your quarterly numbers. Okay, take up your full year numbers by the amount you beat. No, you keep your full year guidance the same, which implies that actually growth in the second half of the year is going to be less than we thought. Boom, sell the stock.
Yep.
You know, come on, guys. All right, one more.
Yes, Aritzia, Canadian stock, that's ticker ATZ, currently gaining about 4.9%, though earlier jumping as much as 10%. And that's after the Canadian clothing retailer that's also popular here in the US reported better than expected adjusted earnings per share for the first quarter. The company also boosted its full year guidance to account for that boost. And Desjardins analysts saying that the company did deliver another outstanding quarter, really based on that strong product demand and also increasing brand awareness from social media.
They have a great clothes for work.
They do.
Fantastic.
Really?
Yes, yes. Like if you are a young woman just about to get going on your career, work there for summer first, get the employee discount, and then build out your wardrobe from that. And my hack is you go to Canada when the dollar's strong and you buy your clothes there.
Okay, wow.
So I tried that last summer. It worked well.
Is Rent the Runway still a thing?
It is still a thing, but every time I look at it, there's stuff that's not available in my size. So I
there's a
give
lot
up.
where a lot of the young women here were doing it. And
Yes.
they're saying it was the greatest thing ever.
Yeah, but then when you can't get what you want, it's not worth it.
Exactly.
Right?
And it's tough to actually surf through their website to find things that you actually want as well.
Right. After a while, you're just thinking, whatever's in my size, just send it to me, please. And that's probably not what you were thinking when you first signed up for the service. All right. Thank you so much, Avalon Purnell. She is our equities reporter here at Bloomberg. And of course, for more conversations like this, be sure to subscribe to our Stock Movers Reports, where we offer 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Let's go back to the big listing of the day, which is SK Hynix, the Korean high bandwidth memory chip maker, although once upon a time was just a memory chip maker. Anthony Hughes, who is our U.S. equity capital markets reporter, is here with us. And this is a huge listing, the biggest by a foreign company in the U.S. so far, right?
Yes, well, it just pipped out Alibaba, which, if you remember, was back in 2014, and it was just a little bit less than this. So, I think by pricing this offering at a premium to the effective price in Korea, they managed to get a little bit more proceeds and sort of meet that record.
This is an ADR or ADS, American Depository Shares Receipt, whatever you want to call it. It's trading on the when issued market. then it'll go regular way in a week or so?
Yeah, that's just a matter of the paperwork, that's required. There were a lot of complications with this offering around the fact that, the Korean government was sensitive to the fact with how many ADRs the company issued. There's a cap on the ADRs they issue, and there's a lot of paperwork that really just means that they want to get this thing listed as quickly as possible, and then you work out all the paperwork later in terms of actually delivering the shares. But all the investors have been allocated their shares, and they're free to trade them now. But just the settlement happens a little bit differently. And then on Monday the stock trades under that different ticker, which will be the ticker long term, of course.
Okay, so they want to get moving on this quickly, and time is of the essence, in part because we've seen these memory chip makers go on this amazing tear, but then since let's call it late June, they've had a little bit of a wobble here. Is Samsung, is SK Hynix going with this listing out from a position of desperation or to capitalize on this while they can? I mean, just kind of characterize for us the urgency here and how it relates to the recent price action.
Yeah, well, I think it's important to emphasise that there is a use of proceeds for this offering. They are intending to, they're building a big plant in Korea, and they're also buying these big lithography machines to make these more advanced chips, which sit side by side with the GPUs in these data centers, and they're getting huge demand. A lot of the demand's coming out of the US. I think from what I looked at, 2/3 of their revenues are coming out of the US. So, this is a great moment in time. And I think if you look at the roadshow, they emphasised the structural changes in the industry. And that was the big selling point, I guess, that, even though a lot of these hardware companies, these chip makers have been very cyclical and brutally, it's been a brutally cyclical industry in the past. They're obviously making the argument that it's different. Some people will maybe challenge that. But I think, maybe even if there is some moderation in the business in the next few years, it may not be a massive downturn because of so much demand that's driven by this AI revolution. But the stock is up 600% in the last year, even notwithstanding the fact that it's down a quarter in 2 weeks, but it's up 600% in a year. So obviously by issuing all of this stock, that may have caused investors to free up some money and help to contribute to this downturn a little bit. But in the context of what's happened to this stock and the memory industry in the past year, it's been extraordinary how there's just been a step change in the valuations and $1 trillion valuation for this company joining the $1 trillion club.
Yep. Are they going to? When are they going to? Is this like a typical IPO? We won't get this thing open for trading until late this morning, maybe early afternoon. Is that?
Yeah. Sometimes you'd think that ADR is a little bit different and not quite. Technically, we wouldn't call it an IPO. Some people might not call it an IPO. Right. They might say it's more of a secondary technically, but it is a new listing in the US, and the way the process works here is similar to an IPO, and that's why it hasn't come on straight away. But, obviously, as we've talked about with other IPOs before, you want to make sure that the opening price is really reflective of the true market for the stock, and that takes some time to get in all the buy and sell orders, and that's just the way the process works.
So let's talk about demand. We heard that it was oversubscribed, like 7 times oversubscribed?
Yeah.
Is that right? And institutional investors who had wanted to be in from the very start, I don't know if these are cornerstone investors or key investors, but they did not get as much of an allocation as they had wanted.
Yeah, well, with any IPO, you want to obviously rustle up as much demand as possible, but then you want to scale people back so they want more. So that's exactly what happened here. Apparently there was a huge amount of interest in this offering. The 7 times was the number we quoted, and that was the case. And a lot of people were reporting this morning they got very slim allocations. You tend to concentrate the allocations with a small group of investors who are the long-term investors who you like, the company likes. And we've seen with those cornerstones, you've got at least 1 or 2 of the investors there are people who are really gung-ho on the AI trade, and I guess they're the sort of people you want to, the true believers, you want to have them in the offering. But yeah, a lot of people would want to participate in this offering, but there's a technical shortage of the stock here because the amount of ADRs that are being issued here it's only 2.5% of SK Hynix as a whole. It's 28 billion sounds like a big number, but we're talking about a $1 trillion company, so do your math.
Good point. Yep.
There's a scarcity. And that's part of the structuring of the offering, that's where the banks come in and they create this scarcity factor, which contributes to the early trading. We saw that with the other SpaceX and other IPOs, and the question is always whether that can be sustained longer term.
All right, Anthony, thank you so much. Anthony Hughes will be keeping track of when this ADR begins listing. He's our U.S. equity capital markets reporter here at Bloomberg. And just a reminder that B-Tech anchor Ed Ludlow will be speaking with SK Group Chairman Che Tae-wan in about 30 minutes time, 15 to 30 minutes time. We will keep you posted when that begins.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. This on a day when, volumes are kind of The major averages are kind of So let's get back to SK Hynix. Again, the ADRs indicated open about 17% above the offering price. The company raised $26.5 billion, largest ever U.S. listing by a foreign company. And again, the ticker symbol is going to be SKH, or it is SKHYV, as in Victor. Major stock averages, again, little change.
And John, you mentioned the volumes are kind of Can I put some numbers on the
Yeah.
Okay, about 30% less than typical day at this point in time.
And you do that by going to WEI and looking at the volume this time of day, down 24% for the Dow Jones Industrial Average, 32% lower volume for the S&P 500. The NASDAQ volume 32% below
So I think you're
what it
pretty
normally
spot
is.
on with your
Well, it's like bad, I guess.
We're
It
trying
wasn't
to
is
quantify
kind of
eh?
iffy.
Yes, exactly.
So,
we can do that on the Bloomberg Journal.
That's the kind of day it is.
S&P 500 is up 7, and Dow Jones Industrial Average up 87 points, and the NASDAQ Composite Index right now 53 points lower. Did I say Meta, the best performing stock right now in the S&P 500? Not entirely sure why, though. 6% higher. The Philadelphia Semiconductor Stock Exchange index there, that is down 1.2%. At the same time, the Mag 7, the Bloomberg Mag 7 index, that is up just about 0.8%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash, Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker studio. We're streaming live on YouTube as well. Next week, we kick off earnings, kids. Buckle up. And that's got to be some good earnings because we had great earnings in the first quarter from the S&P 500, and the stocks moved on that. And I think folks are looking for, kind of similar type good, strong performance in the second quarter. Let's check in with a professional here. Louis Navalier, Chairman and Chief Investment Officer of Navalier and Associates from one of my favorite towns, Reno, Nevada. Always had some good times there. Louis, talk to us about your expectations for earnings here starting next week.
Well, they should be stronger than the first quarter, which was the best in 6 years. And I think the big thing is going to be the order backlogs for the data centers, the hyperscalers, still increasing, because that was the big news last quarter. I'm already seeing positive analyst estimates. We're seeing, relative strength in, NVIDIA and things like that already. And so that's a good sign. Obviously, what's going on in memory stocks is good. I know Micron's down today, but it's screaming by. It's 6 times forecast earnings. So I think I want to see the order backlog. But, yeah, it's going to be another incredible earnings announcement season. The expectations are high, but we're not going up as much as earnings, so PE ratios are getting compressed.
Okay, so a lot of that is driven by the AI excitement and companies like hyperscalers, as well as those that are the suppliers to the hyperscalers. If you back out of the whole tech and tech adjacent space, what do earnings look like there?
Well, energy has the best earnings this quarter. So I have refiners. I have a lot of midstream. And believe it or not, I have a bunch of Canadian ones. The Canadian ones are less volatile than the American ones because Canada doesn't have the ESG push up there. I know ESG is not a big thing anymore, but we do have a lot of states that still don't want to invest in fossil fuels. So it just seems to screw up some of our integrated energy companies in America. So, but I have tons of oil tanker companies because they're running around trying to replenish inventories everywhere, and the routes are longer now. So, energy is going to be phenomenal. And after that, it's materials, aerospace, something like Carpenter Technology. It's a metals company.
So, Louis, we had a guest on earlier this morning on Bloomberg Surveillance. Tom Keen's a big fan of this guest. He painted a really bearish call on AI. He just feels like it's dramatically overvalued by financial markets today. How do you think about that?
Well, I keep hearing that too. Yeah. I keep hearing that people are, they bought ChatGPT and they're not going to renew. They're using up their tokens. And obviously, Claude is the best one right now. Okay. So I'm sure their sales are fine. I'm sure that their Anthropic's IPO will be phenomenal. That'll get everybody excited. OpenAI's IPO is going to be more problematic because I don't think they're monetizing things properly. But, the orders are real. And, I'm here in Reno where it's dominated by Apple and Google, but we're now working on our third valley. It'll be all data centers. We have these mountain valleys out here, and then all of a sudden they're all filled with data centers. The Earth's crust is very thin here, so you can get high geothermal real quick. So the data centers do like green energy, if at all possible. And of course, we've got natural gas, which is what they want to. If they have their Bloom Energy fuel cells or their GE Vernova turbines.
I keep trying to steer us out away from AI, but it's impossible to, because they are the driver, they're the engine of the stock market rally. So Louis, let me just get a sense from you. There's all these single stock leveraged ETFs, SK Hynix, of course, listing today, and already there's going to be on Monday a rollout of leveraged ETFs on that stock. Do you engage with any of these products in any way? Do you see other people engaging with them, and how do you think about the risks that people take on when they do so?
No, I don't, and I want to be very honest with you. I rang the bell on the stock exchange, had my own ETF, got 80 million pretty quick. I shut it down because my average spread was 3.54, and I was unleveraged large cap stocks. So when you get to ETFs that are leveraged, you can drive a truck through the spread. And the spreads tend to be tight in the morning, tight at the close, but in the middle of the day, you can drive a truck through them. What's really interesting, Paul Hickey at Bespoke has thoroughly documented how much money you can lose in ETFs if you start trading them. In fact, I'll tell you right now, if you bought SPY or GLD at the opening and sold them to close every day since they've been around, 40 plus years, you don't earn money. The worst is QQQ. If you bought at the opening and you sell at the close, you're actually down 53% in the last 40 plus years. But if you bought at the close, sold at the opening, you're up like 3,600%. So all these specialists make a lot of money in the last 15 minutes after the close, okay? And this is becoming a problem with the crypto ETFs. Paul Aikens, the new chairman of the SEC, is trying to get all this stuff going. You can look at the iShares Ethereum ETF. Yep. And it's 40% off the price of the crypto. I don't recommend crypto, but it just shows that there's a problem, with spreads.
Right.
And one last thing I'll leave you with, okay? There was an ETF firm out there that used to brag about the pod ETFs. Yep. Well, those are all thinly traded Canadian ones, and at one time they had 20% spreads. I think it's down to like 12% now. So if you don't mind getting fleeced on spreads, yeah, go load up on ETFs, but I think you're going to be poor.
All right, Louis, thank you very much. We'll leave it at that. Louis Navalier, Chairman and Chief Investment Officer at Navalier and Associates out there in Reno, Nevada. Great Bloomberg Opinion column out here today. Meta ushers in the era of the K-shaped company. A new class divide is emerging in big tech between those at the top of the artificial intelligence hierarchy and everyone else, with the former receiving high salaries and resources, and the latter being viewed as disposable. Beth Coet joins us here. She is a Bloomberg Opinion columnist, author of this piece. Beth, what's going on out there with some of these big tech companies? It seems like if you're in AI, they love you.
Yeah, I mean, it's really interesting because I think tech has long thought of itself as this egalitarian utopia, and that's a much more complicated story, and we're seeing that play out again here, where I really think there is an AI hierarchy. There's the AI elite, and then there's everybody else. And even if you're doing things with AI, even if you're using AI tools, unless you are at the very top of this hierarchy, you are at risk.
Unless you're the kind of person who is recruited to work at, say, a Meta and in charge of developing the AI capabilities, everyone else just feels like they're, hired hands and disposable increasingly. What is happening at Meta that is really exacerbating this divide?
So we really are seeing this here. So there's, executives have thrown massive pay packets, like 9-figure salaries at developers, researchers, engineers who are really at the top of this field. Everybody else has faced the prospect of mass layoffs. I mean, we're talking, 10% of the company, multiple times over, right? We've seen multiple rounds of mass layoffs here. Workers have been surveyed in order to basically train their AI replacements. They've been drafted onto teams that are described as sort of soulless gulags. So it's this company that once was really one of the most coveted employers in Silicon Valley for a lot of people has now become, it's people are sort of hoping to get laid off. They want out.
What are the companies saying, if anything, these days? How are are they responding?
Well, what's really interesting here is Meta has walked some of this back. They've acknowledged recently that the way some of their various initiatives were rolled out was atrocious. They've said the environment is brutal. And I don't think this is because all of a sudden they've discovered empathy. I think this is because it wasn't working, right? Like they are not winning the AI race. And I mean, that's not a big surprise that if you treat employees this way, they're not going to perform for you. So I think they've kind of realized that a little bit. They know what the problem is.
They know what the problem is. How are they solving it? Because there is a talent war. You just talked about these 9-figure salaries for folks who are at the top of the AI game. But at some point, you also need everyone else to kind of continue to keep the ship moving in the right direction.
Yeah, so it's interesting. They've said things like, we're not going to have any more mass layoffs this year, better micro kitchens, sort of smaller teams. They were having in some cases where one manager would have 50 reports. So it was more attentive leadership. They stopped their surveillance program because there actually was a data leak attached to that.
That's why they stopped it.
That's why they stopped it. And so we're kind of seeing that they're saying, okay, we're going to try to move back to how things were a little bit. But I don't think it's that simple. It's once you break the trust of employees, it's really not that easy to gain it back.
So are the established Silicon Valley companies like the Metas of the world, the Googles, are they seeing AI startups in the Valley take poaching talent away? Is that at risk as well?
Yeah, well, what's interesting here is that the way Meta actually got some of its top AI talent was by acquiring, by investing in and then bringing on some of the, well, yeah, it was a big investment. They invested and then brought in some of the talent. So these are the employees that they are really focused on. And then there's sort of the bottom of the pyramid. And, I think just like we see in the K-shaped economy, these employees, they're fearful, they resent what's happening. And, that is also happening here in corporate America.
Well said. Let me just interrupt for a moment because we do have a headline here. President Trump says the U.S. has agreed to continue talks with Iran. He posted this on Truth Social. He said, we have alerted Iran ceasefire is over. Iran has asked us to continue talks, and so the U.S. has agreed to continue Iran talks. In terms of the market impact, looking at crude oil, WTI, getting a little of a blip higher, but it was momentary, and now back to meh territory where it's up marginally, pretty much unchanged at about $72 a barrel. So we'll continue to monitor the market impact there. But let's get back to Beth Coet, who is joining us to talk about the K-shaped economy that has kind of morphed into the K-shaped company that she identifies as Meta. You know what? I think we have to leave it there.
No problem. Thank you for having me.
Thank you so much, Beth.
Absolutely.
Really appreciate it. Check out Beth's columns on the Bloomberg Terminal. Let's go over now to our colleague, Ed Ludlow, who is speaking with the chairman of SK Group, Chae Tae-won.
Well, we've been waiting for that for a long, long time. And since I acquired that Hynix about 15 years ago, so this is one of our milestones. We have to go to access to the U.S. capital market. So now dream comes true. So people asking why now, but well, this is kind of earliest moment we can have.
The earliest moment possible. Yeah. $26.5 billion is a lot of money. But in the context of SK's commitment domestically in Korea and internationally, not so big. Can we expect multiple returns to ADRs, the sale of multiple rounds of ADRs?
Well, yes, I expect we can deliver those things too. So we try to expand our ADR size and also better. That actually requires a better return. So once we have the better return, then there is more demand. So first thing is that we have to keep the stock price stable, and hopefully in the long run, then we can have that upside potentials. And I see that this moment. So this is the AI era. So this AI era is actually spiked at a lot of demand for the memory. So this is kind of time for us.
Is this something near term? Did you, with the leadership group and your CFO, say, we will need to do this with regularity? or you haven't discussed that yet?
Well, to tell you the truth, yeah, we've been discussing that one, but I cannot just saying that in a detail yet. So
I appreciate that, Chairman Che. The US listing gives SK a new source of equity capital. But what about the broader US capital markets? Do we see SK Group, SK Hynix as well, become an issuer of global bonds, global debt?
Well, that's a possible, but I guess right now, we have enough cash for that, the SK Hynix. Some other company could actually issuing that another the bond and access that the capital market.
Chairman Che, bear with me. I'm going to get this out for our audience around the world. This is why we're all here, right? This, you can't even see it. Tiny, HBM4E, high bandwidth memory, 12 layers in this case.
Right.
The whole world knows about this. How severe and how tight is the supply right now of HBM? And more importantly, how long is that going to last? Do you have a sort of a year where you see the supply situation changing?
Well, if you really understand all the requirement and the condition for that HBM memory type, and you have to understand that the AI side first. So people knows that the large language model.
Yes.
Yes. But that large language model is very important things. But I guess in the future, the more we're using that AI, and the AI actually requires more.
The inference phase.
Yes, but I see that memory. The main is a KB caching. So it generated a lot of KB caching. Due to that, keeping that the performance of the LLM, then you should have that the large lump sum volume of the KB caching, and you have to actually. This is kind of a memory in people that is the same thing. We store that the memory in our brain, and AI need that those kind of KB caching. That memory has to store somewhere. So if you had at the better size of the memory, then better performance. It's as simple as that, and that memory cycle is is turning to it's a different cycle. I shouldn't say that the cycle is a different momentum. So and back then, the old days, the memory chip demand is actually depends on the number of people, number of the hardware set.
That was a consumer electronics story, in part.
Yes.
Boom and bust.
Yeah. Mostly, you had that your own smartphone, but you don't need that tens of different type of the smartphone. You're only using that to just one, like a PC.
Right.
So the demand is actually limited by the number of the people. But in AI era, it's different. You may use that your own AI agent in probably in a few years from now. Then you might have that tens or the hundreds different of your own agent. So that every agent needed a lot of memories because that they created a lot of KB caching. So you have to actually store somewhere. That actually needs that huge amount of the memory. Well, that's the AI the era. So I guess that memory business is turning to that, it's a different stage.
You still called it a cycle, though. That's the demand side. A reason to do the ADRs is to raise capital, in part to boost capacity. Your industry peers, Micron, had said very recently they have line of sight to supply improving 2028, the other side of 2027, in part because of the capacity that is coming online. What does SK Hynix see?
Well, we didn't talk to our customers. So we just announced that, 3 months ago, so we're going to double up our capacity.
Yes.
Within 5 years. So that means that we've been doing the business more than 25 years. And then with next 5 years, we're going to double up our whole capacity. people see that that's unrealistic and probably the oversupply and people worry about. But my customer said that that's not enough. We needed more. So double up is not. It's not enough actually. What they want us that we're quadrupling, or the 5 times, 6 times. So the more is the better, because that demand will be exponentially grow in the future.
Based on that customer demand, what do they see then? If they are the crystal ball, the lens to the future, they believe that their level of demand will stay where it is 2029, 2030. How long does supply tightness respond to that?
Well, nobody expected, I don't know, what's going to happen in next years. But I'm saying that, I have some confidence that the demand will be grow. And our supply capacity never going to catch up. So I don't know how long, but if I think it's going to be until that our society, human society, has set some settlement with the AGI. Then, I guess that that's a kind of normalize at all the cycles. But anyhow, that until then, we need that a lot of memories.
You're with us live on Bloomberg Television and Bloomberg Radio worldwide, and we're in conversation with SK Group Chairman Chae Tae-wan, and we're talking about a record for SK Hynix in terms of US ADRs. Take me back to 2012. SK acquires Hynix. At the time, people questioned that decision. What did they not see? What did they miss that you saw about the potential of that memory market?
That's a kind of a bold decision, and I think that I made a really risky bet in a sense of the financially, because the companies really suffer from that deep debt, and also has to fighting with its own survival. Because 15 years ago, that company is under control by the banks. It's a Chapter 11, and yes, but in Korean sense, what we doing that the banks is a workout program. So, but they doing that more than 10 years in the workout programs. That actually means that nobody really wants that this portfolio, because it's too risky. Reason why is memory business is cyclical, and that actually suffer from that uncontrollable cyclical business cycle, and it requires that every year multi-billion-dollar capex, no matter how.
Yeah.
So even though you don't make the money, but the business require that the machines and expand and adapting new technologies and buying the new equipment, and they have to spend a huge size of the capex. That's why, and nobody really wants that those kind of danger business.
But you did.
But yes, I see it a little bit different, because that if you see that different angle. This memory manufacturing is most sophisticated the manufacturing business. So if you really do it, then you can do anything.
Like if you crack the technology, the process.
Yes, and also the whole process of that manufacturing as it actually once you make the little chips, but chip inside that 380 billion transistor in it.
Yes.
So that's the business. So how are we going to create those kind of things? And it's a small, small size in the silicon things, and we actually put it in the huge size of the transistors. That's a state of art of the technology. So once you're doing that, and I can manage anything, and I can actually challenge anything. Also, in digital world, create a lot of memory in the future.
Right.
So that's
you saw that.
Yes, I just bet on that, and people need that the memory. Yeah,
You talked about managing the process and the idea that, you know, at that time in 2012, debt was a very big consideration in the market. It was boom and bust, cyclical. How much has this, you've been asked about this a lot, but the idea of the long-term agreement with customers changed that history?
Right. But there is a supply shortage, and every customer wants to have to secure that their own supply and to cover up their own demand. So they're asking us that we need some kind of the long-term contracts. It's not suggested by us, and they actually require
it's
that.
It's them that's making the proposal, not SK.
Not SK.
So they are more willing.
Well, we also love to do it because it's not cyclical business anymore. If we had some long-term agreement, even though it's a downturn, and we still maintain that our volumes and the certain level of the price. So that actually gives us a different momentum. And that actually created another opportunity for we can change it to our business model even.
What about SK's commitments? Where are you going to prioritize your investment, you know, domestically versus here in America? Not just with the proceeds from this US share sale, but generally with your balance sheet.
Generally, outside of the Hynix, and the most important matter is AI data center business. So we announced that almost at the $1 trillion investment in the next 10 years and to set up with AI data centers. My target is about 15 gigawatt in Korea. But I guess at the 5 gigawatt in outside of the Korea. So I'm looking for that whatever area, including US side. And if there is a good chance. And the problem is that the main thing is the power. So power and the price of the electricity is that's a very important matter with these AI data centers. But once we build that AI data centers, and then it can actually synergy between the memory chip and this infrastructure matter. That's what I'm doing in the future.
We're live on Bloomberg Television and on Bloomberg Radio, and this is Bloomberg Tech in conversation with SK Group Chairman Chae Tae-won.
Thank you.
You talked about the data center, the issues of the data center. This is an SK Group approach.
Yes.
So you're talking about SK Group looking more broadly at the AI stack, not just memory.
Yes.
Where else will you focus your attentions?
Well, a company like SK Telecom, and they are doing their study on putting their resources on their own LLM. Also the applications and physical AI side.
Yes, robotics.
Yes, and the healthcare side. Well, there's a bunch of opportunities, and we've been actually trying to pursuing all those business opportunities in the future.
An issue here in America and in Korea is talent. There is a deficit of skilled workers in the chip industry in America, and a company like Micron knows that there is a lot of talented people in Korea. How are you going to manage that? And again, your investment plans for here in the USA?
Well, to secure that, bring that more talent is ADR is one thing, one
option.
Yeah, options, and ADR gives us that there was some kind of financial play options, like even the stock option. Then we could actually using that the ADR directly.
Again,
yeah. Right. So it actually attracted a lot of people's, a lot of talent to our group.
I see the ADRs is also about public perception of SK.
Right. That's another things, and the perception is matter. So, we have to spend a huge money on the recruiting a lot of good talent, and I don't really care about the talent. It could be that the U.S., Japan,
they could be anywhere.
Yeah, it's everywhere. So I try to recruiting that much more the talent, and that's the kind of important things. And I'm asking that our CEOs to, your job is to secure that talent in the future. So let's just set the doing, and we're gonna create a lot of jobs. And well, we announced that several $1 trillion investment plan for in the future. So we need a lot of talent, right?
Chairman Che, what is the biggest technological advantage that SK has built?
Or on the memory side?
On the memory side.
Okay.
Process? Design?
I guess that, well, you cannot just say just one thing, but...
What's the most important thing?
Well, one team. So Hynix, well, I really focused on we could bring that to just one company, one team. So this is a simple business model and memory manufacturing. So well, we can actually emphasize that we are just one team. And so I think that the one team made it with a really one big historical achievement now. So that's what I'm saying, and that's the most important matter. Yeah, you can say that there was some design capacities and process technology. This is right, but that's
all working with TSMC on the base die, which the others do not do.
Also, well, we don't actually compete with any customers. That's another.
You do not compete with any customers.
No.
And you feel that's important?
Yes, that's important. And that actually gives us a lot of room to actually partnership in the future. So that's how we can actually maintain all those partnerships.
Bigger picture. Can you catch up with Samsung?
Oh, that's, I don't want to answer those kind of questions. So I don't, well, my main goal is that I have to make our stakeholder happy.
Yes.
Well, in order to that, there's a certain part is a competition, but I'm not really wanting to have that's my main goal.
That's difficult though, Chairman, because the shareholders love the profit. The customers want more capacity, more supply. Those seem to be competing ideals.
That's what we call that the stakeholders. So it's not only the shareholders. So shareholder wants that there are great returns here, right? Yep. And customer wants that there were cheap product and enough supply. So, but well, I cannot just satisfy every time every stakeholder. But well, we had at a certain balance. So between that stakeholder and what I'm really see that well. I also have to make that my members members of the company, well, they have to be happy. So happy company make the happy result. So that's a simple.
I need to say, Chairman Che, the ADRs, one stakeholder, the US investor, the ADRs indicated to open $177 per ADR. Of course, the ADRs were priced at $149. The memory market is also evolving. So while supply is tight, there's a very broad look at other technologies. I'm very interested about SK's, Hynix's approach to NAND and flash memory and the role you see that technology playing going forward.
Right. So it's a different type of the memory storage. So DRAM has their own functions, but that's instant things. And like what people, you just remember the certain numbers, and well, if you just prepared your exam, then you had the real good memory on those certain numbers and certain target. But you also needed a lot of other memories, and when you was young, then you had some memories. But well, that memory needs that not just that in a brain. You probably store that somewhere. But like, well, AI needed a lot of storage. So DRAM has the instant response and the instant the response, the type of memories, and you should store there. But if you had more big size and we call that the cold data. So if it's a cold data, then well, you could actually store in the
And where is the innovation? Sorry to interrupt you, Chairman Che. Where is the innovation on that other side?
Oh, there's a lot of technologies, and the problem is that well, in an NAND, it actually response is needed a lot of the time. That means latency. So in order to shorting that the latency, well, we need that a lot of special technology on that. And probably, what we call that the KB caching, the key value caching, and the cache has to store in somewhere. So that's a kind of the pyramid, the hierarchy of the whole memory storage systems. And we need that all those evolution of the memory things.
And SK will invest into that technology.
Of course, that's the main business, and we're gonna make it, and we could actually deliver some other business model even, not just at the memory producers. So we could actually memory servicers, like the memory as a service. In the future, that is another area. So we could actually focus on. So.
Talk a little bit more about memory as a service.
Oh,
the basics of how that would work.
Well, right now it's a kind of imaginary things, and
it's an idea.
Yeah, yes, just an idea. So, but I think that our whole AI trend, the direction goes there, because that the memory is a kind of real bottleneck, and we have to solve it. And some of the specialists actually bring that certain type of solution to each customers and each application. So. It's not just that one solution could actually cover all those problems. It's not going to happen, but it's an influencing market, and that influencing market has their own characteristic. That characteristic, and we have to develop a certain adjustment for the stack of the memories and how to do it, and we need some special software together. But anyhow, we could actually serve as a kind of services rather than just that here is memory and you just use it. But we just fix that all kinds of different memory, the memory systems. So once we made it, and we could actually deliver as a kind of service rather than just produce it just a commodity.
It's an interesting look at the future. We are live on Bloomberg Television and Radio speaking to SK Group Chairman Che. In October, when you spoke to Bloomberg's Sherry Yan, you said, everyone asks me about AI bubble, AI bubble, AI bubble. And you said at the time, it's about the cost of AI. The cost of AI is too high.
Yeah.
Has that changed since October? And what is the trajectory of the cost of AI?
Yeah, well, cost of AI as you could actually say that token for dollar.
Token per dollar, or dollar per token basis. Yeah.
Anyhow, we have to lower down that the token cost.
But do you see it coming down?
Yes, actually, within 3 years, actually, token cost is about 1/5 or 1/10. So that's evolutions, and there is a lot of players just contributed those kind of the token cost is way down. So even my memory company make some solution for how we can actually lower down that the token cost. That's our challenge, and our direction goes there. So that's a kind of ecosystem for the AI, and right now its cost is too high, but somehow that our technology down the road, probably 5 years, 10 years, and we actually digested all those problems, and it could actually be everybody's AI, and everybody could actually using their own agent in the future. So that's the direction I see.
But no AI bubble.
AI bubble, and when you see that the AI bubble, and that's real world and the stock market. Stock market always, I see that there's some overshooting, and it's too hot, too cold. So there might be that there is a lot of bubble for that the stock price itself, but that doesn't actually reflect the whole real world. But the trend-wise if it's a long run, then 2 years, 3 years. Down the road, then you could actually reflect that all the real world. That's what I see. And, you can say that the AI bubble, but I see that the stock market. But this AI technology is real, so you use it, use it. And actually, the problem is this AI thing is that right now is a little immature, the imperfect.
yet.
It's the early stage.
Because it's the early stage. It's a kind of, I said that it's only 4 years old, baby. But when you become the college boy and something else, then it has that much more mature. So it could actually help us at a lot of productivity, and we just rely on all those things. And this is a kind of race. And right now we see that there's some AI trial.
Chairman Che, it's a historic day.
Thank you.
Literally making history with the ADRs, but the focus on America, SK's relationship with America. What is your relationship like with the Trump administration, and how are you working with them to bring more of SK Hynix to this country?
Well, not only just SK Hynix, and we've been the SK already investing in more than $35 billion in U.S. side, and not many people notice those things, but we do have bio business, we do have the battery business, and Hynix just announced that a new fab in the Indiana side, and also SK Telecom made a lot of investment in the AI startups. So we already invested in the 35, but I see that my plan is that a much bigger number. So
bigger than 35 million.
much bigger than 35. So I'm planning to, and this is one milestone, and we access at the U.S. capital market, and we have a lot of options, and also we had that responsibility to keeping that share price, and well. That's one good thing is that we made it the right investment, and so we keep that at our own value.
China, it's an important market.
China
driver of AI.
Yeah, China AI is well. We have to actually notice that the China approach is way different than the U.S. side.
How so?
They have a lot of disadvantage on the AI side, but anyhow, that they put it in a lot of other resources. The number one is that the human force. So
human capital.
Yeah, human capital, and the number of people, number of engineers. So annually, well, they had that STEM, the student from the major in the STEM, and it's more than the million student has come out and every year. So they're looking for the jobs, and mostly they apply to the tech area. When you say tech area, is well, probably 50% is AI side. So they are AI as well as they're using that the different strategy. So I don't see that any kind of the visible result yet, but there is some signs, and they making that the cheaper way, and they try to create that cheaper token. The token cost comparability is yes, that's a kind of important matter, and the U.S. focused on top niche market and the quality of tokens, but China is focused on other ways. So I don't know the result, but well, I see that what if they're using that the different strategy.
SK Group Chairman Che Tae-won, thank you. Congratulations.
Well, thank you. Thank you.
Send it back to you, David.
Ed, thank you. Bloomberg Technologies anchor Ed Ludlow speaking with SK Group Chairman Che Tae-won. SK Hynix, the ADRs were priced last night. They're going to trade today. They haven't opened up for trading. They're priced at $149 per share. We'll see if that opens up for trading before we leave here at noon. So right now, let's go get a reset. We can do that with John Tucker in a Bloomberg Business Flash.
All right, guys, the major averages, they are mixed right now. Very low volume day. We did have this headline earlier, and there hasn't been a lot of reaction to it, but President Trump posted, quote, "We have alerted Iran ceasefire is over." Right now, the S&P 500 down just 11 points. That's down 0.2%, 75.32 on the index. The Dow is up 47 points, and it looks like the action now is up 47 points, and it looks like the action now is in the tech-heavy Nasdaq, at least relatively. Nasdaq 100 is down 148 points. That represents a decline of just about 0.5%. Meta, we'll get into that. Take a deeper dive in just a moment. That's outperforming the Mag 7 stocks, and you also have Delta Airlines reaffirming the full-year profit guidance, also saying strong demand for premium, helping offset the highest quarterly fuel expense in its history. Those shares, Delta Airlines, are down right now 2%. In the meantime, Lisa Shallett at Morgan Stanley says spending on artificial intelligence is going to start to slow.
I mean, just look at some of the news flow that you're seeing from companies like Meta. It kind of signals to you that there are conversations about the rate and speed and return on investment on some of this CapEx.
And still waiting for the first trade on the ADRs of SK Hynix, the ticker symbol SKHYV. That's when issued trading today. It's going to change to SKHY when they start regular rate trading July 13th. These kind of headlines always jump out.
Tell me.
Ryanair flight forced to make an emergency landing in Greece after a window dislodged soon after takeoff. And there were several media reports that said one of the passengers was partially sucked out
Oh my God.
of the aircraft. But, I mean, no
Keep those
major
seatbelts fastened, folks.
That's not what that person had in mind on their vacation to Greece.
No. So, yes, fasten your seatbelt, kids. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash, Scarlett and Paul.
Or don't fly and just go down to the Jersey Shore like Paul.
Exactly. New Jersey Transit.
But he takes another form of transportation that's kind of dangerous.
He's
not wearing a helmet in this pic. He just posted a picture of himself on his Vespa scooter.
I think he's just posing.
I do wear them.
Yeah, that's just for the sake of the picture and the photo feed. All right, let's take a look at some stocks on the move today. Paul Sweeney, Scarlett Fu, and John Tucker. And we're joined right now in studio by Christine Aquino. Christine, what are you looking at?
All right, Scarlett, let's start with Meta today. Some good news for that company, ticker META. Those shares are up 5.9%. A couple of good or positive research pieces out on the firm. SemiAnalysis posting a positive report on its compute business and saying that Meta is the only hyperscaler/neolab that is on track to be world-class at various things and therefore has the best chance at catching up with Anthropic and OpenAI. So high praise from SemiAnalysis. We also got an upgrade from KeyBank for their price target on Meta. They're now seeing it trading at $790 from $760 previously, compared with $668 on the shares at the moment. A little bit of bad news, though, from the European Union. The executive branch of the EU issued preliminary findings that Meta's Facebook and Instagram use features contributing factors to the compulsive use of the platform. So they're going hard on that stuff, particularly when it comes to kids, when kids are involved. I mean, we've heard a lot about governments trying to ban social media usage for kids in particular. So something for Meta to keep an eye out for. But shares are doing well today.
All right, what else you got for us?
Let's take a look at Robinhood as well. So a little bit on the back foot, ticker HOOD, shares are down 3.3%. We did get news that Rothera, which is a prediction market backed by Robinhood and Susquehanna, has driven more than $3 billion of wagers since its launch. So it's very, very hot. Average daily volume surging 86% to 118 million in July compared with June. I'm sure the World Cup has something to do with that. But
I'm sure.
Yeah. But, you know, that sounds like good news, but not particularly today. We're getting a little bit of a pullback on the stock. We did get price target being raised for Robinhood at KBW. They're now seeing that stock trading at $100 from $65 previously, and currently it's trading at $111.
And we can't forget the fact that even though earnings season really begins in earnest next week, we did get some results today.
Absolutely, Scarlett. Let's talk about Delta, which is the first of the big carriers to report. Ticker DAL, not doing too hot either today, just down 2.2%. So bearing some of those opening losses there. I mean, you know, it was a good set of results. They reaffirmed their full year profit guidance, strong demand for the premium and corporate segments. They also looking at $1.56 share in the second quarter, which is above analyst estimates. One thing I think that people are looking at at is, the impact on consumer demand, because they're not going to be decreasing their fares anytime soon. According to CEO Ed Bastian, they need to continue to make certain that they cover their costs. One of the biggest costs is fuel, as we know, and so don't anticipate any lower airfares anytime soon. At least they're not getting any passengers partially sucked out of their planes. Like
that is a good thing, I guess.
Yeah.
Yes.
Yeah. So that's one thing.
I just booked Paris for the fall, and I split it between using cash and points, miles.
You're flying United, though, right? That's
Yes.
Okay.
And by the way,
that's
I
what
am a
you're
million-mile flyer. Did I
Of
tell
course
that?
you are.
Every time.
Every time. All right, Christine, thank you so much. We appreciate that. Christina Aquino from Bloomberg News. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere else you listen. I tell you, one of the many, many, many industries that were hurt by the pandemic was the theater business, going out to movies. A lot of folks said that's going to be the final nail in the coffin of the theatrical window. It's been tough, but they're inching their way back there. Kevin Neer follows this industry. He's a senior equity research analyst for Bloomberg Intelligence. In studio.
It's a Friday in the summer.
The BI management team ensconced at their various locations. We appreciate Kevin coming in here. Talk to us about the theatrical business here. Where are we in kind of historical levels pre-pandemic to now? What's going on there?
Yeah, Paul, you set it up nicely. I mean, as you said, it's been a really tough road back from the pandemic. We've had just years of stunted supply. Theaters have been struggling really in survival mode for a long time. This year, we're seeing a total inflection in demand. And really, that's coming from the supply side. We're seeing more movies, and really, just as importantly, these movies are staying in theaters for longer. That's retraining the consumer that you don't have to go and see these movies at home. Go to the theater, go out on a midweek, see the movie, and we're seeing that's really, really driving the box office to a post-pandemic record haul.
Okay, so you set it up for me to ask the obvious next question. Which movies are convincing people to pay up and go to the movie theater?
Yeah, I mean, Scarlett, is a great question because I think it's the totality, right? It's a diverse slate. We're not seeing nearly as much emphasis on a single blockbuster carrying an entire month or the entire summer like we saw with Top Gun Maverick just a few years ago. This year, there's just more content, right? So there's horror, there's something for different audiences, family audiences. We're seeing more IP back in theaters, so there's something for everyone, really.
How about the demos here? You said training an audience to go back into the theaters. What are we seeing? Are younger people going to the theaters differently, as much, less than older folks? How's it working?
You picked up on my next point. Younger audiences have been some of the strongest to come back to the theaters. Really, honestly, surprisingly, we think of these younger people, Gen Z, more as the digital age. You know, they're addicted to their phones. That hasn't been the case, and a big reason is because of the pandemic. You know, they lost out on a lot of the communal experience, whether it was prom, whether it was all these things that a lot of us have taken for granted. Now that we're back, they really value in-person experiences. And it's not just theaters, right? It's concerts, it's sporting events. We're seeing these tailwinds in a lot of different verticals.
And going to the movie theater is a lot cheaper than going to a concert. So there's that to keep in mind as well. What are the theaters doing to make sure that once customers go in there, they have a good experience? Because, you know, a lot of times you go in there and the floor's sticky, there's popcorn on the seats. Like, it's not a great experience.
Yeah, it's true. And you know, a lot of those underperforming theaters have gone away, right? So we're thinking about more high quality. We want to improve the consumer experience because when people are in there, once foot traffic rises with a high quality slate, naturally concession spending goes up, food and beverage. That's where profit comes for the movie theaters. So movie theaters are investing more in premium options. Think, you know, popcorn and soda are still the biggest profit drivers, but think like, you know, chicken fingers, pizzas, even alcohol. A lot of theaters are getting alcohol licenses now. And that's been a really big success story as well.
One of the key issues that you mentioned earlier is the theatrical window. Are the studios making a conscious decision to keep movies in theaters longer?
They are. And this is a direct reaction to the demand, right? So the demand has risen. Now studios are investing more in the content. We've heard of promises. We've heard of vocal commitments. The proof is actually showing up in the data. And we've seen a materially higher dollar recovery in midweek gross box office. There could be some things going on there. Maybe some people are putting less emphasis on those expensive opening weekends and just going to the discounted tickets on you know, Tuesdays or Wednesdays. But really, you know, the flip side of that is just there's not as much emphasis to see it on that opening weekend where there can be capacity constraints, especially during the summer. So I don't need to see it on a Friday. I'll go see it on a Wednesday.
Last movie that you went to the theater for?
Pass. S. I can't remember.
Devil Wears Prada.
What's that?
Devil Wears Prada.
Devil Wears Prada. Thank you.
I saw
Sequel,
Toy Story 5.
Okay.
Oh, fantastic.
What did you see?
Most recently, I saw Obsession, which was just terrific.
Oh, yeah, so that's the horror
spectacular.
movie that you're
Yes,
talking about,
yes, yes,
right?
yes.
Something for everyone. John Tucker?
The last one, my son dragged me to see Dune.
That wasn't recent.
Well, that's the last time I went. There's way too much sand in that movie, too.
Nixon was president. So what's the slate coming out of Hollywood over the next couple of years?
Yeah, absolutely. So we have much, much better visibility, not only into the second half, but also into 2027, right? And that's just something that's been a big change from the prior years. That's giving us a lot of confidence in why we see kind of a structural reduction in downside risk. Where the visibility goes away is 2028, right? And this is where we're just not sure what's going to happen, especially if the studios consolidate, which it very much seems like the winds are pointing in that direction. We have Paramount set to take over Warner Bros. Discovery. Comcast's NBC Universal is now kind of a question mark. Two extremely important, healthy studios for this ecosystem. So there is historical precedent. When Disney bought 20th Century Fox, we saw that their combined output really, really dwindled over the last 7 years. That's the same concern with these other studios combining. I think a naturally defensive move is if the studios, or excuse me, if the cinemas combined, we get better negotiating terms with rental costs. But we'll just have to see what happens.
Kevin, thanks so much. Appreciate it. Kevin Neer, Senior Equity Research Analyst, Bloomberg Intelligence, breaking it down here.
I don't like 3D movies. I decided that. I don't like wearing the glasses.
Yeah,
and
that's
everything.
kind of fallen away.
You know,
right?
not into that at all.
Yeah, the IMAX stuff.
Yeah,
is still
IMAX
good.
I'm good
and
on.
for a lot of that, I'll pay a premium for the IMAX. I did it for the
And the theaters know that.
The Top Gun #2. Anyway, more coming
Maverick.
up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. We're being brought to you by Golden Crest Metals. Inflation, tariffs, volatility have some investors turning to gold for stability. To get a free gold and silver information guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Let's start with the volumes. Trading on the S&P 500, 28% below the average for this time of day. As we look at the major averages, right now they're mixed. S&P 500 up just 9 points. That's a rise of 0.1%, 75.53 on the index. The Dow Jones Industrial Average up 103 points, and that's a rise of 0.2%. As far as the NASDAQ, that is down right now, 18 points. 26,188. And the Bloomberg Mag 7 Index up just 1%. And then the Philadelphia Stock Exchange Semiconductor Index, the SOX, that is down 0.4%. Among the movers today, Meta Platforms, best performing individual stock in the S&P 500. That is up right now 6.7%. Materials, the best performing of the 11 major industry groups in the S&P 500. The worst performer right now, that belongs to healthcare. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
All right, today's Focus on Munis is brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM insured municipal bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. Tom Kozlik joins us here, head of public policy and municipal strategy at Hilltop Securities. They're based down there in Dallas. You guys have been around for a long time, 80 years?
We have,
Wow.
yeah.
And you guys focus on wealth management, fixed income, and municipal finance.
That's right. That's right.
Awesome, good stuff. Talk to us about what you're seeing in the municipal market. I mean, like just from a new issuance perspective, 24 record year of new issuance, 25 record year of new issuance. How about 26 so far?
So issuance this year, we're already running a little bit over last year, which was a record year. I think that there's a chance that we could see another record year this year. I mean, it's been really, really solid. I have a feeling that we're going to come in somewhere between probably 550, 575.
Okay.
So, that's still very strong issuance, which is going to help because demand has been, very strong, and I expect the demand to remain robust as well.
At the start of 2026, you called this a discipline year for municipals. What do you mean by that, and has it borne out that way?
That's really important because as much as there have been a lot of things that have happened in the first half of this year that have been good for municipals, I'm an analyst, and so I'm trying to figure out under the surface what's happening with the weakness in higher ed, weakness in K through 12 schools. The overall discipline I'm talking about is the fact that for the last couple of years, from a credit perspective, have been very good for state and local governments. The discipline's going to come, starting this year, going to go into next year. Folks are really going to have to hunker down. They're going to have to really balance their ongoing revenues with their ongoing spending. And so I've seen that to a degree, but I'm also tracking to make sure and talking to investors about making sure that credit selection is a very important part of how it is that they're choosing what to invest in.
So how's the credit quality out there in the municipal bond market? I'm not hearing anything like we got another Puerto Rico problem. We got maybe another problem like we had in Illinois or something. It seems pretty solid out there.
So I'd say overall it is very solid. Even though credit peaked probably a year or two ago, it's still very strong, especially compared to where we were going to COVID. That being said, we do have a negative outlook on the higher ed sector. We do have a negative outlook on K through 12 schools. That means that we are expecting downgrades to outpace upgrades, and they have been. Downgrades have been outpacing upgrades, and so that doesn't necessarily mean that folks need to stay away from those sectors. They just need to be very, very careful with their credit selection. Some of the sectors that I really like housing, especially single-family housing. I really like airports. I'm not seeing a lot of weaknesses in those areas, but credit selection is still important there as well.
Okay, across a lot of the nation, we're seeing property tax and local revenue fights in Florida, Texas, California. Is this a muni credit issue? Does this become one?
So on the one hand, I think that that's going to end if this happens in these different states, it's going to be part of this post-golden age realignment that I've been talking about in the discipline. Folks are going to have to, local governments especially, are going to have to potentially really hunker down to manage their spending. That being said, state and even local governments, their credit quality is very strong. One of the indicators that I use for that is state and local government employment is at a record level, right? There's some operational cushion there if cuts need to be made, in addition to the fact that, ratings overall, especially in the state and local government sectors, are still very strong.
So what's the fun deal that you're looking at these days? Like a stadium deal or something that's just real interesting?
So one of the things that I'm finding very interesting is talking to leaders in higher education about how AI is impacting higher education and folks, their students' views about higher education. That's actually the big thing that I think is really interesting right now.
And has anything surprised you? Yeah, because I mean, this is a huge threat for them.
Yeah. So I think that there's a lot of opportunity for higher education. I think that on the one hand, and I just moderated a conversation between the president of Montclair State University and the chancellor of Maine's higher education system on this topic, and I was very encouraged to hear about the leadership that they're showing in order to kind of write the course. That being said, the skepticism that I'm seeing is from the students, which I have been surprised about.
Well, this generation of students has, heard for the last couple of years that AI is going to take away whatever job that they might be able to get going forward. So they're very cynical.
But I also think that AI, higher education is going to be in a position to really help students embrace AI. And really, I think that what's going to end up happening is that the human skills coming out of it, even now, but especially coming out of this, are going to be even more important. And I think that higher education is in a place where they're going to be able to help deliver that message. But the polling and even the conversations, I had a conversation with a student graduate student 2 days ago. She doesn't have a subscription to an AI model, and she hardly uses it.
I hope she's reading at least, because that's another problem.
Well, she's definitely, but there is an animosity towards AI in general. It's really interesting to watch.
Yeah,
Are your kids embracing AI, or are they kind of skeptical?
Yeah, they are. But I mean, it's just another tool for them. It's not that big a deal for them. Is kind of what the feedback. It's just another tool. We had search, they have AI. I don't know.
Yeah, but this tool is like threatening their future livelihoods.
Potentially, yeah. They're all employed, knock on wood, including my Penn State grad. I wrote a lot of tuition checks to Penn State and paid off. Tom, thanks so much for joining us here. Tom
Thank you very much.
Head of Public Policy and Municipal Strategy at Hilltop Securities. He's based down there in Dallas, joining us here in New York, because why not? This is the world's financial headquarters, of course. I know a lot of money's moving down to Florida and Texas, but let's be honest. All right, let's get to the business of sports here. Randall Williams joins us here. How much higher? What's going to cost me to buy an NBA team in Vegas?
Ooh, I think at minimum $7.5, $8 billion.
That would be a new record, right?
Well, the Celtics sold for $6 billion, and so I think expansion going for $8, it would be an NBA record. The real question to me, I think, is going to see which is going to cost more, the Seattle Seahawks or the NBA expansion team in Las Vegas.
Seattle Seahawks, love the stadium. Do I get the stadium if I buy the team?
You get access to the stadium.
So
the stadium needs a lot of upgrades.
But is the stadium owned by the city, do we know? Or
I believe it's a joint partnership between...
That's a great stadium. It looks great on television.
It looks amazing.
It looks great.
But with the renovations that it needs, whoever buys it is evidently going to have to either build another one or put, I would say, at minimum $500 million into it to make sure that it's okay.
Okay, you came to the studio with a prop in hand. What
Nice
do you have
World
with
Cup
you?
ball. This is a good World Cup ball. I actually really like it. It has a lot of details. It has the Canadian maple leaf here. It has
one of the hosts?
stars of I believe the USA flag, and then I'm not sure what the Mexican
Contribution
pattern
is, yeah.
but it's on there. And I actually have the full size one as well, but this is like a stress ball at this point.
So how many matches have you been to?
I've lost count. I think it's
Okay.
probably 5 or 6.
And what's your future?
Well, I was going to try to go to the match in Kansas City. That would have been Argentina and the team that they're probably going to beat, I'll say. Okay. But the flight situation was weird. My next match will probably be the final.
So I have a question for you. I mean,
Okay.
the U.S. men's national team has been booted out. It didn't
Yeah.
make it past the round of 16. And there's a lot of, hand wringing and reflection on what went wrong. And a lot of people are pointing to the youth sports industry, the boom in the youth sports industry as one reason. Just walk us through the argument that people are making.
Well, youth sports are becoming increasingly more expensive, and soccer being one of the most expensive ones. You think about all of the leagues growing up. You have Pop Warner in football, which is a travel football league. You have AAU in basketball. And then, of course, you have different systems in soccer. And so, of course, with soccer having to travel more than some of these other sports to participate in youth competitions, both domestically and internationally, for a regular family who, might make $150,000, to travel to Europe, to travel to even California, for example, from New York, those flights could cost thousands of dollars, and it isn't feasible. So then if you're a parent evaluating the situation, do I continue to add investment into my child's life? But I don't know if they're going to go pro, which might not be worth my time. I might want them to study the books instead of, spending all that time on the field. And so what that results in is kids deciding to either play other sports or not play at all, and go do something else. And so the argument that has always been presented is if the best athletes in the U.S. decided to play soccer, we would run it. Well, they're not, because it is expensive. And
But every sport is expensive.
I think in some regard, but not to the level of U.S. soccer, because sometimes these teams, these youth teams, are not paying for the travel the same way that if you play for EYBL, which is Elite Youth Basketball League, Nike sponsors a bunch of teams. There is a chance that Nike might pay for some of your travel. They might pay for some of your hotels and accommodations, because that builds the relationship early on. It could result in a sneaker partnership of some sort. And it's not quite the same in soccer. It's really parent-driven.
So there's no facility for like the New York Red Bulls to have youth teams and stuff.
It depends on where you go. There is sometimes these different organizations and sport clubs have the youth clubs, but of course there's high school, there's college, and the system is just dramatically different from what it is overseas in Europe and in different parts of the world.
Where there's a laser focus.
Exactly. I mean, you think about Lionel Messi, Lamine Yamal, that have been signed what seems to be when they were toddlers, but in all reality, can you think of, it's insane to think about someone signing at 13 years old, forming a relationship, and then just training up to that. That doesn't exist here.
Yeah, I mean, think about the resources they must allocate towards scouting. Like a club in Spain finds a kid in Argentina, and then signs and brings the whole family over. I mean, it's just
So the
crazy.
economics of youth soccer lend itself to people dropping out, and we're not getting the best talent. And so by the time you make it to 18, 19, 20, people are playing other sports or they've moved on.
And you think about Christian Pulisic. Christian Pulisic went and played in Croatia. And so he was developed in that system and got a lot of, he competed against very good players over there.
Right.
He was unique in that experience because I believe his grandfather was Croatian, and so that allowed him to be a part of that. There's just not a lot of U.S. players who have that experience. So, of course, the best players play overseas. If you're playing against U.S. players, that doesn't mean they're not good, but they're not the players in Spain and Europe.
There you go. Randall Williams, thanks so much. We learn something every time. U.S. sports business reporter for Bloomberg News, joining us here.
Senior reporter.
Senior
Yes,
reporter.
senior
Oh,
reporter.
boy.
Give him his
That's
props.
Very cool. This is Bloomberg.
This is breaking news from Bloomberg.
All right, breaking news. We have SK Hynix ADRs opening for trade. They opened 14% above the offer price. They opened at $170. The offering was at $149. The company raised $26.5 billion in selling American depository receipts on the NASDAQ. Let's bring in Anthony Hughes. He is our senior equity capital markets reporter here at Bloomberg News. And Anthony, you've been monitoring this. This was a very oversubscribed offering. There was a lot of demand for it, and this opening indicates the demand has not stopped.
Yes, for the size of this offering, this gain that you can see here, sort of around 15% is what you'd expect for perhaps a deal like this, where it's pretty large. You wouldn't expect maybe to go up, like 50, 100% or something like that. But, really what this confirms is that SK Hynix has been able to achieve a premium to its the price at which the stock trades in Korea, and that was part of the part of this exercise here. This was a offering which was designed to fund the capital expenditure of the company, but it was also trying to do that in a way which was most efficient for the company and enabling the company to get a cost of capital that was more the lowest they could, and basically as good as Micron's getting in the US. So, obviously it's an efficient way for the company to raise money in the US. This is the way they did it.
What has the company said about their need for additional capital going forward? Did they put out a message that we may come back for equity, we may access the U.S. debt markets? Did they say anything about that?
Yeah, I think if you see the interview with the chairman, he did say there was a possibility they could sell more ADRs, and obviously they're going to raise debt in the future as well. So I think the company is going to have significant capital expenditure needs, and this is the sort of interesting thing about the market at the moment, where there's a lot of interesting companies that do have heavy capital expansion needs, and I think in the past we'd probably think they were not the best companies to invest in, but things are different these days. But obviously they're generating a huge amount of huge return on the assets they have at the moment. But I think the really interesting thing from that interview, I thought, with the chairman was that he has to balance off really maximizing profit for the shareholders, but he's also got to supply his customers with the product, and obviously he has to expand the production of the memory chips, and doing this is something that could subtract a little bit away from shareholder returns over time, but that's a balancing act that management has to achieve, and that's really interesting challenge for the company looking forward here.
So the market where SK Hynix has its primary listing, Seoul, is the world's best performing stock market, right?
Yes.
I mean, it's done incredibly well, and this is even after it basically had this moment of whiplash the last couple of weeks. It's been very, very volatile. Just this week alone, I'm looking at it. The KOSPI, the benchmark index, there closed down 5%. Last night, it rose 3%. So it's kind of all over the place. Is there a sense that this was kind of I don't want to say the top, but it was kind of a dicey time for SK Hynix to go public in the US, given that there's so much volatility in its home market? Yeah, well, I think when the stock's up 600 or 700% in the last year, finding the right price here, it was always going to be a little bit challenging. And I think although the offering did price at a premium to the translated value of the stock in Korea, it did come back 25%, 30% ahead of this offering in the past few weeks. And that was something that I think the investors in the offering, the US investors that came in for the ADRs, were pleased about. I mean, obviously, it'd be much better to have bought the stock a year ago before it had gone up 600%. But, the investment opportunity was laid out to them here, and, the stock did come back ahead of the offering, and then it priced at a premium, and now it's trading, up again. So, the company's trying to get a multiple that's closer to Micron, which has been an outstanding stock in the US. And but whenever you see stock prices go up in a straight line like they have, or at least go up very, very sharply over a short period of time, there's always a chance for retracement. Right. But to your point, the Korean market has been hugely volatile. It's been very strong. Yes, one of the strongest market in the world, but it's very volatile. So I think the interesting thing for investors is whether this stock is going to be volatile now that it's trading in the US. Yes. And so is some of that volatility in Korea going to get imported into the US? Very well said. Okay, you keep bringing up Micron, and that's because that's the US's biggest memory chip maker. But SK Hynix has a rival at home, and that's Samsung Electronics. Does Samsung Electronics trade in any way in the U.S.? And if not, would it consider listing in the U.S. because SK Hynix has?
Yeah, well, I think people are expecting other companies to look at ADR programs. I mean, Kioxia of Japan.
Kyocera, right?
Yeah, I've got the name right there. I think ADR programs are not necessarily simple things for companies to roll out, and I think a lot of Asian companies have probably shied away them in recent years. Certainly Chinese companies have not really been encouraged to, in either direction, to do ADR programs. So, this might be a little bit of a one-off and really reflective of these amazing conditions in the memory chip market. This has been a pretty orderly outcome so far.
Real quick, do we expect the stock to trade at a premium in the U.S. versus Korea from a valuation perspective?
Yeah, so I guess to Scarlett's point there, even though Samsung is a rival, the direct comp here was Micron, and Micron does trade at a premium to SK Hynix based on forward earnings. I mean, obviously you can value companies in different ways, but and part of the exercise here was to close that gap, at least as far as the stock trades in the US, and obviously when the company goes to look to raise further capital, it'll raise it in the cheapest way possible. And if the stock is trading at a premium in the US versus Korea, there's obviously going to be an incentive for them to raise the money in the US. And obviously the other thing about the US is there's a lot of money in the US as well. So
play that arbitrage.
Yeah,
that's right.
But that was very much expected that there would be a premium here, and that's part of the exercise that they've been able to do that. But obviously there is a Korean discount that people talk about. That reflects the fact that there's a lot of governance concerns about the way Korea does business a little bit differently to America. I think they're less, the Korean companies are less focused on capital returns and dividends, and also Americans are a bit more share price focused from all accounts.
All right, Anthony, thank you so much. Our U.S. equity capital markets reporter on SK Hynix, now open for trading. It opened 14% above its offering price of $149. Of course, we will keep you posted on the trade. In the meantime, John Tucker has a check of the markets in our Bloomberg Business Flash.
All right, let's just power through the numbers here. The major averages, they are mixed right now. S&P 500 up just 3 points. Low volume day, 75.47 on the index. The Dow Jones Industrial Average up 92 points. That's up 0.2%. We're at 52,583 on the index. And the NASDAQ Composite Index, 37 points lower. That is down just about 0.2%. Best performing stock in the S&P 500, that belongs to Meta Platforms. Those shares right now, 6% higher. And if you do graph plot the index for SK Hynix, it looks like my EKG. Boom, 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 boom. It was up to 176, now right around 171. So we check the markets for you all day long, right here on Bloomberg Radio. At least it's beating. I'm John Tucker. That's your Bloomberg Business.
You're talking about your ticker, right?
Yes.
Me, yeah.
All right, thank you so much, John Tucker. As we've been talking about, we are waiting for this first trade in SK Hynix, memory chip maker with its high bandwidth memory chips that has really taken off because of the demand from companies that are building out AI infrastructure. We got the first trade, and it is trading now at about $170. This is up 14% from the offering price of $149. SK Hynix selling American depository receipts on the NASDAQ, tapping into the hunger, the demand for anything linked to AI. Although, Paul, it got kind of dicey, right? Because we've seen the Korean stock market become very volatile over the last month or so.
Yeah, exactly. So, but I think they just said, let's move forward here. This is a good enough story, strong enough story. We've got some good anchor investors. We know there's some demand from some really big investors here. Not for nothing, I'm looking at the stock trading at 169 handle here. Remember that stock opened at 170. A lot of stock, maybe 25 million shares, traded right at the 170 point. So a lot of people are going to be sensitive to that. That's also a key level to keep an eye on for SpaceX, kind of where it first opened. A lot of stock trades. That's the basis for a lot of shareholders here, and you're going to want to stay ahead of that initial trade level, at least for the first few days. But that's a massive deal. Stock trading up. I think everybody's pretty happy today. The issuer, the underwriters, the
key investors who maybe did not get as much as they wanted. We should also mention that our Ed Ludlow spoke with the chairman of SK Hynix, and he made clear that perhaps they might sell more ADRs in the future. They're also looking into different ways to capitalize on this demand, including offering memory as a service, renting out the AI chips as opposed to selling them.
I know. There's lots of ways to skin that cat there. So we'll keep an eye on this one. No one's trading higher. We got the S&P up 7 points. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. The big story this morning, SK Hynix, American Depository Receipts, they surged 14% above their offering price after the South Korean memory chipmaker raised $26.5 billion in the largest ever U.S. listing by a foreign company. The ADRs opened at $170 each on Friday in New York versus an offering price of $149. Last trade, $172, up 15%. So that's some good news for everybody involved in SK Hynix here in the U.S. All right, let's switch gears to the aerospace business, the airlines business. We do that with George Ferguson, and he's a senior aerospace analyst at Bloomberg Intelligence. And George, the only thing between me and the beach is this discussion with you. So I want to get through this. George, talk to us about Delta. Earnings came out. I thought they were pretty good here. It seems like demand's holding up for these airlines.
Yeah, I mean, I think that, Delta, United, and to a lesser extent, American are going to probably be the best part of the story this quarter. And I think Delta showed some resilience in the revenue lines, right? And I think, you have to remember, this is a pretty diversified from a revenue standpoint company. They have maintenance business that brought in some great double-digit gains. They had cargo, they had loyalty that all sort of brought in gains, as well as premium. And basic lagged a little bit, although they indicated that they've been cutting down a number of basic seats. But I think generally the story was pretty good on the revenue front. They grew less than United and American, so I think that means they could support some of those higher fares. They were like at 1% seat count growth. We're going to see United, I think, come in closer to 6. We're going to see American around 3-ish. So I think this might be the best part, again, of the revenue story for U.S. airlines as we get into this earnings season. And one of the challenges, I think, too, in growing a little slower on the capacity front is that some of their costs ballooned a little bit. But look, again, I think they made some good ground. They haven't totally compensated for higher fuel prices, but they made some good ground. I think it was a pretty decent earnings numbers.
Hey, George, talk to us about just maybe the trend in the industry to maybe taking out some economy seats, putting in more business or first class seats. How is a cabin changing within the industry these days?
Yeah, I think you're just, on the big full service guys, you're seeing a lot of, I don't know what we might call it, upgrading, improving, right? And remember, like that premium seat, that can stretch anything from premium economy to more business seats. And I think they're finding, again, they're focusing on the well-heeled consumer. Your retiree, and your 401k accounts, I guess it's not a 401k anymore, your investment accounts are rocking and rolling. You don't want to fly overseas. You don't want to fly to the West Coast in something that's as cramped as some of that basic economy in the back of the airplane. So those carriers are sort of pushing that upgraded seat, trying to get more money from it. And again, I think, Delta has shown some success on that front, and I would expect you're going to see the same out of United and American, but to a lesser extent. But
so what happens?
Guys.
What happens to the lower end consumer? Where does that consumer go? Do I have to fly? I mean, aren't some of these airlines going out of business? These discount airlines?
So we saw Spirit. We saw Spirit leave the business. I think that helped. Look, I think still at the bottom end of the scale, right? That basic economy traveler, one, they're under a little more pressure economically. I think inflation's hurting them a little harder, right? When you raise the price of gas, it hits them in the pocketbook a little further too, right? It costs them more to commute to work of their total income. And so I think that means demand is probably a little bit softer in that basic economy world than it is in the premium world. And so I think, that kind of took away some of the gains we might have seen as Spirit left. And again, I think, you've got to bear in mind that Delta, United, and American are going for that basic economy traveler, right? There's still a basic economy section in the back of those airplanes that, provided they can sell that seat at a price that's higher than their incremental cost to deliver it, they're going to do it to that basic economy traveler, fill out those load factors, and create efficiencies, which improves profitability. And so that's the challenge in this business is United, Delta, right? Especially United, they're growing again 6% seats. There's probably going to be about that much in basic economy growth. They do that for long enough, and they kind of make up pretty quickly for Spirit Airlines leaving the business. So there's still a lot of competition, I think, in that basic economy. We'll see as the earnings season goes on.
All right, folks. George, in addition to covering the airlines, also covers the aerospace companies. Think Boeing. And all I know is every summer, right around this time, he gets to go to these lavish trips to Europe. One year it's London, the next year it's Paris. They alternate. And there are these air shows. I have no idea what happens at these air shows, but George tells us he must go, so we send him. George, where are you going this summer? I see the week of July 20th might be penciled in.
It is. So July 20th, Farnborough Air Show in the burbs around London. Of course. And so, we go there to sort of keep a pulse on demand for airplanes. Usually there's a fair amount of orders placed at the show for airplanes, but by airlines around the world. This year maybe a little bit muted, sort of the on again, off again of the sort of Iran fight. has fuel prices sort of bouncing all over the place. So we'll see how much airlines want to get in the back of very large queues for
All right,
airplane
but don't work
orders
too
right now.
hard over there. I heard the rosé flows. George Ferguson, Senior Aerospace and Defense Analyst for Bloomberg Intelligence. We appreciate that. For those listeners in the U.S., reminder, you can listen to us on satellite radio on Sirius XM Channel 122. It is presented by Golden Crest Metals. This is Bloomberg. Good morning.
From ABC News, I'm Chuck Sievertson. Bad storms, major rain, and flooding are leading to evacuations and rescues in the Midwest and East Coast. ABC News Chief Meteorologist Ginger Z.
Many of these go through the weekend, and so all the way up to Pittsburgh, much of West Virginia, into southern Ohio and eastern Kentucky, well, the entire state of Kentucky under flood watch. We're not only going to have the flash flooding potential, but also some damaging winds.
Forecasters say 12 inches of rain fell in Iron County, Missouri in only 7 hours. European wildfire emergencies continue. One roared through southern Spain overnight, killing at least 12 people, 8 people injured, 23 others missing. The Iran situation still not resolved. There's still what U.S. officials are calling technical talks. ABC News Chief Global Affairs correspondent Martha Raddatz.
There were no new U.S. attacks overnight, despite 2 nights of bombing, and the fact that the president has declared the ceasefire over. This comes on the final day of a 6-day funeral service for the Ayatollah, killed in the opening rounds of this war well over 4 months ago. Massive crowds mourned the slain leader.
Mexican officials say their government will file criminal complaints over the deaths of its citizens in ICE custody or as part of any immigration enforcement operations. New details on this week's fatal shooting of a Mexican national killed by federal agents in Houston claiming self-defense. ABC's Jay O'Brien in Washington.
The shooting sending shockwaves through Houston.
People have the final word.
Salgado Araujo, an undocumented immigrant living in the U.S. for 35 years, was close to obtaining legal immigration status, his son said.
Undocumented migrants are humans.
They're demanding an independent investigation.
Department of Homeland Security admits he was not the intended target. CDC trying to trace the source of the stomach bug now reported in 18 states. You're listening to ABC News. For the first time, surgeons at UC San Diego have operated through humanoid robots, removing gallbladders and 2 procedures on pigs, a key step before any human trials. With more about the robot called Surgy, ABC's Sophie Flay.
Surgy is not like the robotic systems already in operating rooms, machines that require a lot of space. Surgy fits anywhere a person can, and that's the point. Researchers say robots like Surgy could one day help ease staffing shortages in hospitals, starting as an assistant, handing tools and cleaning up.
Google is rolling out a new How This Ad Was Made panel, making it easier to spot AI ads. It will show whether an ad was created or altered with artificial intelligence. We are remembering aviation pioneer Wally Funk, the youngest of the Mercury 13, a group of women who aced grueling training decades ago but never made it into space. Funk's dream later becoming a reality. ABC's Hannah Battah.
I never had any bad feelings. I knew I was going.
In 2021,
we're going to fly you up into space.
Amazon founder Jeff Bezos surprising the then 82-year-old with a seat on the maiden crewed flight of his Blue Origin rocket. At 82, she became the oldest woman ever to reach space.
I love it.
It was great. Funk's advice for every dreamer coming up behind her.
The only thing a woman needs to compete in a man's world is ability.
Chuck Sievertson, ABC News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
The president agrees to more talks with Iran, but says the ceasefire really is over. Welcome to the Friday edition. As President Trump delivers that message today on social media with reports that the U.S. is still committed to finding a diplomatic solution. We'll get the latest ahead from Bloomberg's Tyler Kendall here in Washington. SK Hynix is rising in its first day of trading in the U.S. The listing less than an hour old, and we'll dive into the memory maker's new listing here with Bloomberg's Ed Ludlow is going to join us from the NASDAQ market site a short time from now. And as Maine tries to set rules for a shotgun Democratic primary convention, we'll get analysis from our political panel. Rick Davis and Jeannie Shanzano are with us. It's Friday, and we've got Charlie Pellet at the helm. Let's turn to the markets first. World headquarters in New York. Hey, Charlie, happy Friday.
Thank you very much indeed, Joe Matthew. Lots to keep an eye on today. Oil, but obviously the big story. SK Hynix, we are up. We are trading up 17.8%. We'll keep you updated throughout the day. And, of course, our Ed Ludlow will have a whole lot more on SK Hynix coming up in just a moment. To the equity market, though, a rally that has driven stocks to within striking distance of a record is wavering ahead of earnings season next week. Bank earnings front and center. What a Tuesday it is shaping up to be. 5 out of the 6 biggest banks in the country will be reporting on Tuesday morning. S&P right now up 13, 75.56, where we stand up by about 0.2%. We've got the Dow up 87, now up by about 0.2%. NASDAQ Composite Index up 18. For NASDAQ, that is a gain of just about 0.1%. The stocks are retreating somewhat today. The Philadelphia Stock Exchange Semiconductor Index, it is down by about 0.1%. 10-year 4.55% with a 2-year 4.19%. Gold 41.10 the ounce, down 0.3%. Crude has been wavering, down 1%, 71.37 a barrel on WTI. The big story, though, Wall Street squarely focused on the first day of trading for South Korean memory chip maker SK Hynix's ADRs. Sri Natarajan is chief Wall Street correspondent for Bloomberg News, and he says there are big implications for banks.
This is SK Hynix Day. Think about anyone with a view of Midtown Manhattan last night and you saw the JP Morgan building lit up in the Korean flag. Like, they raised $26.5 billion, and yet they barely make the podium finish in terms of equity raises in the last month. We've had Google that came in and raised $40 billion. You had SpaceX with $86 billion. Google again with another $40-odd billion over the next few months.
Bloomberg Sri Natarajan. The ADRs trading under the ticker SKHYV. Right now, they are up by 17.2%. Monday, by the way, that ticker changes to SKHY. Again, recapping here, S&P up 13, up 0.2%. SK Hynix, the ADRs up 17.2%. Lots going on. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, you said it. Yeah, it's a big day in the markets. SK is live, as you just heard from Charlie Pellet, our good friend in New York. We'll be back in about 15 minutes with more on the Friday trade here as we really zero in on not just this stock, but the memory space and the AI trade as a whole. We're going to get to what's happening at the White House and what may not be happening with Iran in just a moment. But we want to seize on the moment here, having just gotten this great setup from Charlie Pellet, because Ed Ludlow is actually at the NASDAQ market site today. They flew him across the country for this because it's a pretty big deal. SK, of course, in a very small group of companies that make memory chips. And we've talked so much on the program about the shortages prompted by the massive development of data centers, the AI race. This is what it's all about. And if you've been hearing us talk about Micron technology, which has been to the moon, parabola, it's coming down to earth more recently. In fact, it's quite a ways off its all-time high, above $1,200. In fact, Micron at the moment is down $17, almost 2% here, $974. Maybe investors are harvesting Micron gains to get into the SK trade. We're also seeing, by the way, SanDisk, also in the family, rise 1%, and Samsung up almost 1.5%. Let's get to this important listing with Ed, because He's in the belly of the beast. Of course, the co-host of Bloomberg Tech with us live from the NASDAQ. Ed, it's so far so good for SK. Can we assume that there's so much built-in demand for these products that there will be built-in demand for the stock?
It's almost as linear as that. I mean, there is demand for SK, right? You guys absolutely nailed it in the intro, that it's a very small group of companies that do memory, in part because of the historic economics being brutal. But actually, Joe Matthew, are we live on YouTube right now as well as radio?
You said it. Absolutely.
Okay, all right, so I'm going to hold this up for the YouTube audience. This is a HBM4E, right? It's about the size of my fingernail. It is 12 layers of DRAM, and SK Hynix has 57% of that market, okay? So memory more broadly, HBM is a few single percentage points in terms of where that DRAM goes, but on a dollar basis, many, many more percentage points of the market because it's so expensive right now. And you've kind of tied all the themes together. The investor attitude towards this was like, look, we want to get some American exposure to SK.
Yeah. Isn't that something? I could hardly see it. You held it right up to the camera, which gives us a sense of
get in trouble.
The micro technology that we're talking about. Are they harvesting Micron to buy SK, or is that just
I think that's
the tail
interesting.
Of the day in the market here?
You know, one of the rationales for SK doing ADRs was they have 57% market share for high bandwidth memory, HBM specifically. But they feel a bit like maybe they trade at a discount. There's a premium that gets assigned to Micron and Samsung in terms of valuation. So from the SK side, that's certainly true. In the memory game, you know, rising tides, etc. You know, all of those memory names benefit. So in terms of the harvesting, it's possible, but they're all in the same position right now with a very tight supply market.
Then again, NVIDIA is moving higher, and that's usually what they seem to sell first to buy anything. Ed, give us a sense of where we go from here. We were told this listing was, I believe, 7 times oversubscribed. Not all of the investors got the shares they were promised. Does that ensure a steady climb for the first couple of days here? Or what should we expect?
Well, I heard the soundbite you guys played in the news belt from Shri on what's happening in equity markets right now. The way of looking at it is not 7 times oversubscribed. It was that there was almost $200 billion of demand for a $26.5 billion deal. Look at it that way. So clearly there's appetite. The main headline from the interview, the red headline on the Bloomberg terminal, was that SK has a much, 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 much bigger U.S. investment plan than they've disclosed so far. So they've said they'd invest $35 billion here. And when I asked him about the chairman of SK Group, Che, about his relationship with the Trump administration, he was like, all you need to know is I have a much, much, much bigger number. I'm not going to disclose it yet, but it's coming.
Yeah, he'll be popping up in the Oval before you know it. You did speak with the chairman, who you just mentioned, Che Taiwan, about the growing demand that this company anticipates. Ed, let's let everyone listen to what he said.
Sure.
I have some confidence that the demand will be grow, and our supply capacity never going to catch up. It's going to be until that our society, human society, has that some settlement with the AGI. Then, well, I guess that that's a kind of normalize at all the cycles. But anyhow, that until then, well, we need that a lot of memories.
Just a minute left, Ed Ludlow. Sure. Are we in a space now where memory is no longer seen by the street as a cyclical business?
He didn't really explicitly say that because supply is still so tight. What he was saying was, I was trying to get him to give a date. His peers are saying that the memory supply will improve. The tightness will ease 2028. I was trying to get him to say 2030, 2032. But his point is, when we hit AGI, that's when it will happen. So mark it on your calendars, guys. Artificial general intelligence is now the new yardstick for supply metrics improving.
Incredible. There's a big party down there today. They must have been pretty excited, right? This is a big one.
Massive delegation from South Korea, really important for the NASDAQ. Again, intense U.S. American investor interest in this one.
Well, I'm really delighted you could join us from the NASDAQ market site. Our good friend Ed Ludlow, the singular host of Bloomberg Tech. That sometimes it just comes out the wrong way. I'll tell you what, Alibaba, remember, that was the biggest of all time in 2014. That was a $25 billion listing. This one is $26.5 billion. Just one of the stories we're following here in the news shop. at Balance of Power. We've got our eyes on Iran and the president as well. My goodness, he's been saying a lot here. And just on Truth Social a short time ago, the Islamic Republic of Iran has asked us to continue talks. We have agreed to do so, he says, suggesting we're not done with diplomacy. But the U.S. has stated to them in no uncertain terms, the ceasefire is over, exclamation point. Tyler Kendall is on this for us as our Washington correspondent. Tyler, is that any different than what he said at NATO? Or is it's kind of the same? He was open to talks there and the ceasefire was over.
Yeah, essentially, although I guess this does perhaps tamp down some of those fears that we could be headed towards some more significant military escalation. He's putting it in writing that he will be open to the talks continuing. Our own reporting had confirmed overnight that they're continuing on at least the technical level. We should say the context here going into this week. We knew that they were expected to slow down to some extent, considering Iran held days of funeral rites for the former supreme leader who was buried yesterday. But this type of escalation that we saw really marked the worst flare-up in fighting since the Memorandum of Understanding was signed. But what feels very different sitting here today on Friday is that this week saw the end of that waiver when it comes to allowing Iran to sell its crude to market. Our analysts at Bloomberg Economics say this is just following a, quote, familiar pattern. Both sides are trying to get more leverage when they go to the negotiating table. But when it comes to the oil, when it comes to the Strait of Hormuz, that still remains the largest sticking point, which is what the ceasefire was supposed to be all about.
So it sounds like more of the same. We're going into the weekend without a real change here, and we'll see if there's more fire involved. There will be no signing of the bill. This was the first story I was going to ask Tyler about until that most recent post. The bipartisan housing bill sitting on the president's desk, and I don't think this was in Schoolhouse Rock, was it? That if the president doesn't sign it for 10 days, it becomes law on its own. Apparently that's going to happen. He says he will not sign it, quote, in protest over the fact the U.S. Senate is not capable of passing the Save America Act, which he says is polling at 97% with the Republican Party. The president, Tyler, is punishing his own party?
I'm going to let a political strategist weigh in on the calculus here, considering that this was a bipartisan bill that Republicans want to campaign on as we get closer to November. That is certainly going to raise questions in the president's view. According to his post, if we take him at his words, he feels that the Save America Act will be perhaps more beneficial to his efforts towards November, I think is fair to say what we can take from this. But if we tie these two stories together, we know that there has been mounting dismay with how the president has been handling the economy as those impacts get compounded by the war. We had a new poll out from the Financial Times released overnight that shows 58% of voters say that they do not believe that the costs from the Iran war are worth it. So it comes at very interesting timing here that we have the president essentially saying that the housing bill is, quote, fine, but that he's not going to actually put pen to paper, and we're going to see that signature on it.
Even though he called it a big yawn, I think, the last time you guys asked him about it over there. Tyler, thank you so much. Tyler Kendall with us here in our Washington bureau. Is that true? Elon Musk postponed the interview over on Brand X? I mean, that's great, and I don't blame him going up against the elephant here on Balance of Power. But I still got Tom Keene to deal with. Did you hear they sick Tom Keene on me on the TV network every Friday at noon? Don't worry, we'll be back with a lot more news here. And we'll have our panel later on Balance of Power.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. SK Hynix up and running. ADR is trading up 16.4% right now, out of the gate at 149. Last check on SK Hynix, 173.49. Again, that is an advance right now of just about 16.4%. The ADR is surging above their offering price after the company raised $26.5 billion in the largest ever U.S. listing by a foreign company. That is why we care. SK Hynix intends to use the proceeds to build additional capacity and buy extreme ultraviolet lithography machines, this according to its filings. And our Eric Weiner will have a whole lot more, not just on SK Hynix, but also implications for the broader market. Right now, we are trading higher. We have got the Dow, the S&P, NASDAQ all advancing. In fact, the S&P within striking distance of a record 75.58 where we stand. S&P right now up by about 0.2%, higher by 15. The Dow this Friday up by 73, up by 0.1%. S&P, by the way, on track for its second weekly back-to-back gain. NASDAQ up 42, gain there of 0.2%. On an update for much of the market, the Russell 2000 index is lagging, down 0.7%. The SOX, full of those big tech names. It is the Philadelphia Stock Exchange's semiconductor index up by 0.1%. The VIX just above 15, and a 10-year at 4.55%. Gold down $14 the ounce, 41.09, drop there of 0.3%. Crude has been fluctuating as investors keep an eye on the latest Middle East developments. 71.20 right now on WTI, down 1.2%. Barrel of Brent 75.70, drop there of 0.8%. Oil majors little changed and lower. ExxonMobil down under 0.1%. Chevron down 0.2%. ConocoPhillips now down by 0.2%. Again, SK Hynix, first day of trading for the ADRs, up now by roughly 16.5%. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
All right, Charlie, many thanks as we look across the skyline of Washington, remembering it was just a week ago today, at this hour, the Thunderbirds were arriving in Washington. I was up on the roof here on New York Avenue, looking at those gorgeous 6 F-16s crisscross the sky above the National Mall. Pretty exciting stuff. And on the mall itself, this is the last day of the fair. You know, this thing's still been going on. Steve went down there just yesterday, sampled the food, stuck his head in the different states, some of which are empty and some of them are manned. They have a stage going with, strangely, like policy discussions and roundtables going on up there. And then there's the long line for the Ferris wheel. The other thing that's been a huge attraction is the arch. They actually built the Trump arch, like out of plywood, the one that they want to do, over in Arlington. So people could get a sense of what this might look like. The golden angels are flying above it. Well, I bring it up because the actual arch got approved yesterday. The National Capital Planning Commission, this is not final approval, but a big one on the road to construction here. The Triumphal Arch project advanced by the commission after nearly 3 hours of public opposition was heard in a hearing. It's a 250-foot tall arch. This thing's enormous. It's bigger than the Arc de Triomphe, and I guess that's why they call it the Arc de Trump. He actually took the beast around the Rotary over there by Arlington a couple weekends ago to take a look at it. Here's the thing. We got a law in the District of Columbia that restricts most construction to a maximum height of 130 feet. We don't like things being taller than the Capitol or, say, the Washington Monument. This thing's 250 feet. They're now arguing the Height Act, as it's called. Hey, there you go, Sam. If you're with us on YouTube, we got the plans up. An artist's rendering, realizing that this arch will literally block the view of D.C. from Arlington National Cemetery. It's enormous, and you'll be able to climb to the top of this thing, apparently, to catch a real good view. Maybe that'd be cool if they build it for the next air show. We'll go up there. But they're arguing the Height Act should not apply to the arch or other federal projects. So there's another approval still coming, and this thing might actually start in its construction. If you drive by the White House, it looks like Wally World over there. It's nothing but cranes. They're doing the helipad, which has concrete, the White House seal. They've got the ballroom, which is now emerging from the earth. They're going to have to resod the whole lawn over there. They're redoing Lafayette Square behind it, and we're waiting for the arch. Don't worry, next week we'll have another one for you. The nation's capital is changing before our eyes. And so is Wall Street on a daily basis. I feel ridiculous frequently talking about the rotation. Every time that word leaves my mouth, we start rotating in the opposite direction because it's been a manic whiplash market lately. That's just the way it is. Hardware's up, software's down, and then the next day it's the opposite. And then we're in a value market and everybody wants to buy drug stocks until the Mag 7 comes back to life. Imagine being Eric Weiner and having to cover this for a living. Now, I want to tell you, I never have enough time with Eric. And on this day that SK Hynix is off the launch pad, and we're trying to figure out what we're stepping into with earnings reporting season starting next week, we wanted to pull Bloomberg News senior editor for Equities Americas aside for a talk. Eric, happy Friday. It's great to see you. Let's start with SK. It's doing pretty well so far. I'll remind everybody that these shares were sold at $149. Here we are in the public market up 17% at $175 almost. Eric, did we just answer the question about whether there is demand continuing for not just memory, but AI stocks?
Well, it's a difficult day because you have a lot of people sitting it out. You have very small volume. It's one of those summer Fridays, yeah. And so the people who are in the market for SK are buyers. The stock opened at 170. Went as high as 177, is now around 173. So yeah, I mean, you have this boom going on in memory, and now SK adds another publicly traded name. In terms of actual demand, that remains to be seen. Well, in terms of the trading, you're really going to want to see that confirmed next week because trading is so light today, but next week will be normal, and you'll start getting some of the other issues like geopolitics and whatever else in the way of it, and you'll see if it can keep climbing. But in terms of the actual industry, it is in the hot spot. And this is really where you want to be. They want to compete with Micron, and they want their valuation higher. This is a way to do it. You need to tap into the biggest, investor pool in the world, and we actually kind of have it. So that's really what they're after, is getting after the AI investors who are here, who really believe in this technology and are willing to, put their money on the line.
So as you paint the picture of this low volume Friday in the summer, and I'm picturing the retail bros trading on their phones on the beach in the Hamptons, Eric, I'm sure you wish you were with them. Is that who's buying today? Is this being seen as a trade because Micron has been to the moon recently, or is it institutional support that's going to make this work?
Well, there's real institutional support for SK Hynix, I can say that. And it is considered a good company. It's considered a good stock. Today, yes, you do have a lot of guys phoning it in from the beach. But you also, as you alluded to, are heading into earnings season. And next week is going to be the start where, we'll get JP, we'll get Goldman, the banks usually kick this off. But it's kind of dicey out there. Stocks are priced for perfection. There's still inflation that could eat into margins. Geopolitics, we don't know what's going on with Iran. So there are a lot of things that even perfect earnings reports could end up with the stock going down because it disappoints on one thing. And that's really the variable right now, is we're going to start seeing some numbers. We're going to start seeing some confirmation about inflation and whatnot. And it's how the market responds to that. And particularly when it comes to, we're a couple of weeks away from the big tech guys. When they start reporting and they start reporting their capital expenditures, that's when we'll see how nervous the market actually is. Because right now, it's kind of bullish out there.
I'm glad you mentioned capital expenditures because that's been the whole story, right? Not only do you have the Googles, the Metas of the world and others spending their cash hoard, but they're raising money, not just in the stock market, but in the private credit markets. They're floating bonds. Eric, and this has people a little bit worried about them just getting over their skis. If they stop spending, though, isn't that a scarier proposition? What happens to NVIDIA and Micron and SK in that world?
You're right. It's damned if you do, damned if you don't. I mean, so look at Meta. I mean, Meta has had a heck of a couple of days here. They're up, I think it was like 12% in the last 2 days. Yeah. Best performance in over a year. And it's because they're talking about adding computing capacity, and they're talking about, well, chips. So, everybody loves chips. Mm-hmm. But the computing capacity thing is actually really important because that's the payoff. That's where you're saying, well, we've invested all of this, and now we're starting to see it. The Mag 7 in general has caught a bid this week. NVIDIA has caught a bid this week. In some ways, you're getting, well, you hate the word rotation, Joe, but you're getting kind of a bit of a rotation away from chips and back to some of the, the big hyperscalers. But we'll see if that stays, because this could really be kind of a temporary sort of get back to safety. If you're looking at chips and you're concerned about chips, NVIDIA is one of the safer names. They've underperformed the chip market this whole year, but their demand isn't going anywhere. So if you're concerned about where that spending is going to go and what that means for Micron, NVIDIA kind of doesn't have that problem. They're baked in, their growth is solid and the numbers are steady. So that's kind of where you go. They've bizarrely become kind of a value safe stock. And, that's where we're seeing the Mag 7 now.
I love this part of the story. And by the way, you're right about NVIDIA. Look at this. It's up 3.5%. That's a big move for NVIDIA these days. $7. It's at $210. A lot of people, of course, were getting real bored with it. It's so big. It's used to harvest gains to buy other stuff. But we had a story on the terminal this week. Eric, you probably edited it, that it's cheaper than more than half of the S&P 500. Stocks like Micron are falling into value funds because it's got a forward-looking PE like in the single digits. SK, I think, is the same. Are we redefining what value is on Wall Street?
Well, no. So the reason for some of this stuff with chip stocks is unique to chip stocks. They are what you would call cyclical. So they go through these booms and busts. Micron lost money a few years ago.
This is like a new normal now.
Yeah. So, I mean, they're kind of supposed to be priced low, but NVIDIA being priced where it is means, you're not taking into account their growth. And NVIDIA's growth has been kind of steady. So they're not seeing, the ups and downs that the other chip stocks are seeing. They're kind of, sort of plugging along and continuing to grow. The idea, though, is that, like, NVIDIA being a steady growth story is kind of funny when you think about how far they've come from when they were, the growth.
The new kid on the block, the risk stock. Eric, I love talking to you. Thank you, and I hope you have a great weekend. Wouldn't you love to get like $10,000 in play money and just let Eric run wild with it? See where he actually invests? He can't do that. There's a very strict policy here at Bloomberg. Forget that I suggested. We'll assemble our political panel next, only on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are higher. S&P at just about the best level of the day. The big story, though, SK Hynix up, running, trading, advancing now by about 16.5%. The ADR is surging above their offering price after the company raised $26.5 billion in the largest ever U.S. listing by a foreign company. Out the gate at $149, trading now at just about $173.60. Again, an advance for SK Hynix, up by 16.5%. S&P 500 index higher by 17 as investors parse the latest geopolitical developments. Keep it locked in to Bloomberg Balance of Power. We got you covered on that. The S&P higher by 0.2%. Dow Industrials up 90. That is a gain of 0.2%. While NASDAQ higher by 59, gain there of 0.2%. The NASDAQ 100 index up by about 0.3%, with the SOX, the Philadelphia Stock Exchange's semiconductor index, up now by 0.2%. 10-year 4.55%, with a 2-year that's yielding 4.19%. Gold down $10 the ounce, down 0.3%. 41.12 on the precious metal. Crude down 1.2%, 71.24 for a barrel of WTI. It is going to be a busy week ahead, not just for earnings, but also economic data, specifically 2 readings on inflation, with reports on consumer prices Tuesday, producer prices Wednesday. Nancy Lazar is chief global economist at Piper Sandler, and she was a guest this morning on Bloomberg Surveillance.
The pieces of the CPI this month are going to matter more than what we've seen historically. By that, I mean, we do know technology has a bigger weight in the core PCE deflator. So how much of that, AI-related inflation does indeed show up in the CPI? Then we have to pull it out and come up with estimates for what that's going to do to the core PCE deflator.
Piper Sandler's Nancy Lazar interviewed this morning on Surveillance. So recapping, first day out for SK Hynix, with the ADRs up now by roughly 16.5%. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
All right, Charlie, thank you. You know, they say the day we have the most heart attacks in this country, when the emergency rooms get the most heart attacks, is the day that we turn the clocks, when we spring forward. You turn the clock ahead an hour, you lose an hour of sleep. My God, you imagine these people waking up on Monday morning, the heart attack. Not to mention that we're bumping into each other, we're groggy, it takes a couple of weeks to get used to it. Everyone's got something to say about daylight savings time. And the House of Representatives is about to address this again. Now, we can't even figure out how to write a budget in this country. We actually can't figure out at the moment how to even open the House floor over the objections of any number of lawmakers. But your House of Representatives will vote next week on a bill to make daylight savings time permanent. It's actually singular. I always add an S, daylight saving time. After the House Energy and Commerce Committee, this is an update. We talked about this back in May, voted 48-1. What other measure would get a vote like that? In favor of what they call the Sunshine Protection Act. And states will be allowed to opt out. The Senate voted unanimously in March of 22 to make daylight saving time permanent, putting the clocks forward 1 hour during the summer half of the year. You wouldn't have to worry about that anymore. What we call daylight saving time now has been in place for almost all of the country since the 1960s. There was a time, though, when we decided to give this a whirl. The U.S. used year-round daylight saving time during World War II, and it came around again in the 70s, 1974, in an effort to reduce energy use. In both of those instances, it was extremely unpopular because the kids they're lining up for the bus in the dark in the morning. And this is the point that Tom Cotton makes. The Arkansas Republican said it would result in absurdly late winter sunrises and force the kids to go to school in the dark, which might mean getting hit by a car. Now, the president, by the way, endorsed this, so I'll be curious to see if Republicans cross him on it. I'll also be curious to see if they even open the floor to have this conversation. This always gets people going. Ask Ed Markey. He's got like a whole career of talking about daylight saving time. This will not be, of course, the pressing issue for Democrats in Maine who are still trying to figure out how to get a nominee to run for Senate. This has been a doozy of a week, thanks to Graham Plattner, and we've carried you through this one day at a time. We started the week with the bombshell allegation of sexual assault, And by yesterday, he was out of the race. Now, I'll be very clear. He has not filed the paperwork to leave the race, and Axios is reporting that he will not do so until Monday. That's the deadline day. And by the way, that office is closed on the weekend. It is Maine, after all. And so if he drops it tomorrow or Sunday, they got to wait till Monday anyhow. So the party now has to put together this convention. And we talked about this a little bit yesterday with Rick and Jeannie. We're learning more about how it's going to work. And so we wanted to talk it out with our great political panel. Bloomberg Politics contributors, Jeannie Shanzano, our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center, alongside Rick Davis, Republican strategist, partner at Stone Court Capital. Great to see you both, and happy Friday here. A 600-person convention, Jeannie. This all needs to happen by the end of the month. It would take place the last weekend of the month, as we understand it. And by the way, they need to figure out, exactly how to get all of those delegates. Here's what we know in some good reporting from Punchbowl. According to candidate qualifications requirements that came out late last night, they will need, by July 21, 500 signatures, at least 50 signatures from no fewer than 8 counties, plus any additional signatures totaling up to 1,000 to qualify for the nominating convention. By the way, Maine is really big. You got to drive around a lot. If you've ever been up to Holton, Maine, you know what I'm talking about. They want to do it in Bangor, it looks like, Jeannie. And if no candidate clears the mandatory threshold on the first ballot, the lowest vote getter eliminated, a new round of voting proceeds. It could be some sort of version of ranked choice. How are you going to pull all this together, Jeannie, by the end of the month?
I spent many a summer in Bar Harbor, Maine at Acadia National Park, so I know it well. And it's
great.
It's just gorgeous. I think one thing we have to say about the Maine Democratic Party and the executive director, they have, I think, handled a really tough situation so far very well. I mean, they're under enormous stress. I do hope part of what occurs here is that they are able to have some kind of public arena, a debate, I don't know, some kind of option for people of Maine to hear from all of these candidates. Now, most of the candidates we've heard about so far who are in this thing or want to be in it are people who are known. They have been vetted. They ran for governor, but, they served in public office before. But I do hope they have something like that. 2 weeks is short, but I think they are on the right path. Graham Plattner, not just sending in, Joe, he can do this via email. He doesn't have to drop this off in person. This is the lack of action of a narcissist, just like the video. Send the papers in, Mr. Plattner, for gosh sakes.
Okay, yeah, it's pretty simple to do the email. We know he can work the phone. He made the video the other night. Rick, I can only imagine holding up with these candidates in what's, I guess, a nascent campaign surrounding all of them. They want to know if ranked choice voting will be used, what date the actual convention is, how delegates will be divided by county, and what requirements are to get on the ballot. If you're a candidate, who are you calling right now for help?
Well, it's the same group that Jeannie was just talking about, the Democratic State Party of Maine. And they've kind of invited a lot more confusion than they really needed to do. I mean, this idea that you got to go out and get signatures to be a qualified candidate at the convention, very, very odd. Because in the world of signature gathering, it's not you assemble your volunteers and go to shopping centers and pick off people. You hire a firm to go out and do it. They go bang on doors. And as you point out, it's awful hard to do in a place like Maine. And at this end of the day, it's just another burden. It's going to cost every one of these candidates money. And then it's going to have to be checked. So the state party is going to have to go through and check them all. The easiest thing in the world to do is throw a convention. You got all these, already pre-existing county committees. You just throw them in a room and say, let's start voting. You could easily just say, hey, you need 2 county committees to put your name into nomination. And that'll slim it down quite quickly. So I don't know. I think there's such a hangover from Kamala Harris about how we pick our candidates in the Democratic Party that they're making this thing look like a circus. Keep it simple, stupid would be my approach to trying to get a nominee, because it's not the nomination process, it's who you come out with. And they need a process that they come out with their strongest candidate.
Democrats like talking about process, Jeannie, because they want it to be quote unquote credible. And yeah, they're thinking about Kamala Harris. They want people to think they had some skin in the game and that this wasn't some sort of backroom deal. Does hiring a firm to get signatures accomplish that?
First of all, did I just hear Rick Davis say "we Democrats"? I very much like that and appreciate it. Listen, I see his point about the signatures, but let's face it, you can get like 500 signatures for a high school, election, a college election. So I don't think that is that big of a stretch. And we do have cars and things like that in Maine where we can go around. I mean, this is not, we are not out in the middle of nowhere. And the party is really trying to allow Mainers to have a voice in this. So, the signatures, I'm neither here nor there on that. But I do think it's really important because Rick is right on the hangover from Kamala Harris. Democrats have not done a good job in replacing candidates. Why we're always replacing them is another problem. It sort of reminds me, Joe, remember that old Will Rogers who used to say, I'm not a member of an organized political party, I'm a Democrat. That's sort of how you feel today if you're a Democrat. But, I think they will get it done. They are under enormous pressure, but they do have a really, really strong crop of candidates. And that's what makes what the DSCC and Chuck Schumer did earlier in this cycle so unthinkable and unforgivable.
Making me think of Bert and I. I don't know if you remember the duo there with the down east culture of Maine. You used to be able to buy the Bert and I records at LL Bean back when it was the only LL Bean up in Freeport. Rick, you get your delegates together, you pick your candidate. Now you actually have to draw the difference and identify your candidate and your campaign as something different than Graham Plattner. Producer James just pulled out the nominating form here if you want to actually sign up for the race. The Democratic U.S. Senate nomination form calls for a written statement not to exceed 300 words about the candidate's vision of how their campaign will continue to build on the grassroots movement to ensure no Mainer is left behind by their next U.S. Senator. Not to exceed 300 words, Rick. How long would it take you to write that?
About a nanosecond. I just stick it in my chat bot and say, give me 300 words.
I knew you were going to say
candidate for the Senate.
Does it need to refer to oyster fishing?
It's worthless.
I mean,
it's not a platform.
No, I don't get this. But the whole point is to talk about how you're not Graham Plattner, but you're going to pursue the same goals here, I guess, right?
Well, you can't leave his votes behind. So you got to have a message for them. And the assumption is these are all Democrats that Plattner attracted, so they want to stick around. They're not Democratic socialists who have another party to go to, and so yeah, I mean, again, as fast as they can get past this process thing, check the box on not being irresponsible with the party label. Get on with the campaign. You've got a platform. Use the platform. At the end of the day, the number one thing they got to do is try to close the money gap. And so for the next 60 days, you're going to be you're spending 80% of your time making phone calls to try and raise money.
Not only do they have this funny question here, are you plugging that into ChatGPT, James? We're going to get this. We'll have a mission statement before the end of the hour. They actually put lines on the form, Jeannie. There's like a dozen lines, so you can scribble your answer, not more than 300 words in there. Serious question, Jeannie. And you've graded some papers in your time. What would you look for in a 300-word elevator pitch from somebody who wants to be the nominee?
You can't look for much if it's just 300 words. I think what they are trying to do is to underscore the fact that while they have moved away from Plattner, they have not moved away from the vision that he represented. And they want to underscore that to voters in Maine. I think that tagline that you just read, Joe, about no Mainer left behind, I mean, that one just sticks with me. I got to say, whoever wrote that is very good. But all of these people, there's a list of about 8 to 10 so far who have their names in there and who are thinking of doing this. These are seasoned folks for the most part. I think this 300 lines doesn't mean anything. The real question is, or 300 words, not 300 lines, sorry. The real question is, can they keep these progressives who are for Plattner engaged? And I think they'll be able to.
Right. We're going to find out together. We're going to have to take this show up to Maine. It's inevitable. We're going live from Barnacle Billy's in Agunquit. Jeannie and Rick, I'll meet you both there. Lobster rolls on me. All right, we've got a lot more to cover, and our panel will be back in our second hour here on Balance of Power. You made it to the threshold of the weekend. Thanks for meeting us in the Friday edition, only here on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew.
President Trump soothes some fears ahead of the weekend. Welcome to the Friday edition, as the president once again announces the ceasefire with Iran is over, in his words, but also that the U.S. has agreed to continue talks. We're going to get the latest from the White House when we speak with Bloomberg's Washington correspondent Tyler Kendall, and we'll hear insights at this sensitive moment from James Jeffrey, the former ambassador to Iraq and Turkey, former special envoy to the global coalition to defeat ISIS will be with us moments from now. Sky Hynix is rising in its first day of trading here in the U.S. We're going to get a live update from Bloomberg's Ed Ludlow, who is in New York, and we'll have analysis from our political panel. Jeannie Shanzano and Rick Davis are with us for the hour, and we start, as always, with the markets. Charlie Pellet from his view at World Headquarters in New York. Hey, Charlie.
Well, hello there, Joe Matthew. Best level of the day right now on the S&P 500 index, but you touched on the big stock story of the day. SK Hynix up right now. ADR is trading for the first time in the U.S., up 16.7% out the gate at 149. Current level on SK Hynix, 173.82. Again, the ADR is surging above their offering price. Company raising $26.5 billion in the largest ever listing by a foreign company. But again, SK Hynix right now up by roughly 16.7%. Stocks higher, as I mentioned, the S&P at the best level of the day right now, looking at a gain of 22 points. We're on track for back-to-back weekly gains, 75.65, where we stand on the S&P, up by about 0.3%. The Dow up 130, now up 0.2%. Nasdaq Composite Index up 61. That is a gain of 0.2%. Nasdaq 100 Index up 0.3. Interestingly, though, the Russell 2000 Index of small cap shares getting left behind today, down by 0.5%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, little changed, up under 0.1%. We've got the 10-year currently yielding 4.56%, with the 2-year right now 4.20%. Gold is down $19 the ounce, 41.04, drop there of 0.5%. Crude has been fluctuating, but decidedly lower right now, down 1.4%, 71.08 a barrel on WTI. Barrel of Brent lower now by just about 0.9%. The oil majors trading mixed now. We've got ExxonMobil up 0.3%, Chevron up 0.2%, ConocoPhillips, we'll call that flat on the day. So again, first day of trading for the SK Hynix ADRs right now, looking at a gain of just about 16.7%. Our Ed Ludlow is in the studio. He'll have a whole lot more on SK Hynix coming up for us in just a moment. I'm Charlie Pellet. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, we do appreciate it. And Charlie, we'll be back in about 20 minutes' time with more on the Friday trade. Thank you for being with us on the Friday edition of Balance of Power here on Bloomberg TV and radio. Kaylee Lyons has the day off. We begin with the situation with Iran and a lot of confusion about exactly what is happening right now, with the president issuing a mixed message in a single post on Truth Social, writing, "The Islamic Republic of Iran has asked us to continue talks. We have agreed to do so." That part taken in isolation has given the market a bit of a boost today. And as Charlie was just saying, it's not only stocks up, interest rates are largely flat, and oil prices are lower. WTI and Brent down about 1% each here, as the president goes on to write, but the United States has stated to them in no uncertain terms, the ceasefire is over. Talks continuing, ceasefire over. Similar language to what we heard from the president at the NATO summit this week in Ankara. Listen.
To me, I think it's over. I don't want to deal with them anymore. They're scum. As far as I'm concerned, it's over.
We just hit them very hard. They did a little something today, but it was really retribution for last night.
I'm not sure I want to make a deal with them. We can play games, but I'm not sure I want to make a deal. I just finished the job.
We turn to a voice of experience at this time, with a lot of questions as we head into another weekend about what might happen in the next 24 to 48 hours, although the market seems to be pretty calm at the moment, with the bet that this president is not looking to re-enter all-out war. Ambassador James Jeffrey joins us now live, distinguished fellow at the Washington Institute for Near East Policy. He was former U.S. ambassador to Iraq and Turkey, former ambassador to Albania, and former deputy national security advisor. He was special envoy for the global coalition to counter the Islamic State, ISIS, and is with us now on Balance of Power. Ambassador, it's great to see you and welcome back. How do we describe this moment before we explore how to get out of it? This rolling back and forth of kinetic activity, preference for talks. How long can we sustain this split screen?
Welcome to my world of many decades of diplomacy in conflict situations. This is not abnormal. It also isn't good. Very quickly, the president in Iran back in June agreed to end the latest range of fighting from February on with a ceasefire, and the Iranians would get to ship their oil out and sell it for market prices on the world market. And in return, the United States would have all other ships out of the straits, and we would negotiate a new nuclear deal. It wasn't a bad arrangement for Iran. Instead, the Iranians decided that they would start fooling with it, lawyering, as we say, the text of a somewhat ambiguous agreement, but many agreements are ambiguous, to say they'll really control the straits from day one. That led to them firing at ships, breaking the ceasefire, and American retaliation. Right now, the MOU may technically be in effect and not in effect. The point is we are talking with the Iranians, and the United States is not launching any new attacks, waiting to see what Iran does. For the moment, if Iran doesn't fire any new missiles at targets across the straits or at our ships, the United States probably will not retaliate. But if Iran keeps the straits closed one way or the other, we will reinstitute the blockade, and we will take further economic and potentially military measures to return Iran to the memorandum of agreement we signed in June. I think that's the way we're going.
Okay. Ambassador, speak to the significance, realizing that we haven't hit anything today, of in the last 24 hours, the U.S. choosing to hit two bridges in eastern provinces along the railway line to the city of Mashhad. Iran's foreign ministry called this a flagrant violation of Articles 1 and 5 of the MOU. What were we trying to accomplish by taking down those bridges?
First of all, to get the Iranian hypocritical foreign minister to rant and rave about what we're doing is violation of this and that, when these are the guys who violated the MOU in the first place. We launched 170 strikes over 2 days. That's back up to close to what we were doing a few months ago. And importantly, as you noted, we hit these railway connections that Iran is using to get its oil out to China by land. If we put a new blockade on, cutting their sea exit, and we also blow up the railways, cutting their land exit, and also limit their ability to move their forces around Iran, they're facing a very dire situation. I was in Iraq in 2004 when all the rail lines were cut. It wasn't happy.
Wow. Well, that's fascinating, Ambassador. Should that be the ongoing strategy if we're in fact going to cripple Iran? As much focus as we have on the Strait, eliminating any other avenue for Iran to get oil to China?
Sure, it's not just the oil. As I said, the bridges, the railways, and eventually I would suspect he'll also go after the electrical systems, or at least the high tension lines, because if you get a new ceasefire, they can easily be replaced. That, again, cripples the Iranian economy. It cripples the Iranian ability to wage war, including to close the straits, and it will provoke one or another very dramatic reaction sooner or later among the population. Iran knows this, so this will be encouraging them to come back to the table, which is why, again, the foreign minister is bitching so loudly about all the bad things we're doing, because they realize they're having an impact.
Wow, that's pretty fascinating. When you talk about the fact that we are at least talking, these are not formal talks at a table. We're hearing about back channels and indirect talks. As a career diplomat, Ambassador, how does that work before the phone call gets back to the White House with news?
It works badly. The best is face-to-face. We had one round with the Iranians with Vice President J.D. Vance, but since then, including the details for this June memorandum of understanding, were done through intermediaries. There are all kinds of problems with them. It's just that it's better than not talking. And right now, we can't meet face-to-face. We'll go through the Qataris, we'll go through the Pakistanis, the Turks, and others, and they'll do a good enough job, I believe.
What you make of the swap? I know we only have a minute left, Ambassador. The swap on Air Force One this week. There's been some reporting, more specifically from the New York Times, to suggest that the new gifted Air Force One from Qatar was not outfitted with aerial defense systems that would prevent a heat-seeking missile potentially from downing the jet. He took the old Air Force One home after being threatened by Iran. Should that plane, the new Air Force One, be used at all?
No. I was in the old Air Force One with President Bush when a certain rogue East Asian state, I won't name which, took some threatening actions launching fighters. And under those circumstances, it's a life or death situation involving the president. We cannot take any risk with an American president being shot down or destroyed in a combat or in a terrorist operation. That thing should be sent to some graveyard.
Wow. I had a feeling you might have a good answer for that. James Jeffrey, it's great to see you, sir. Thank you for joining us, Mr. Ambassador, and have a great weekend. Former ambassador to Iraq and Turkey, former special envoy, the global coalition to defeat ISIS. I'm Joe Matthew in Washington. As we balance a couple of lead stories here today on Bloomberg, we turn from geopolitics to Wall Street and the enormous demand for memory. That has culminated in a new listing in New York today. And Bloomberg's Ed Ludlow joins us from World Headquarters with his eyes on SK Hynix. So far, a successful debut of ADRs trading on the NASDAQ, up over 16% from the sale price. And Ed is with us right now live, having just returned from the NASDAQ market site. So far, so good, Ed?
So far, so good. You know the ticker for now, SKHYV. The V goes on the 14th when the full trading starts. But the other way of looking at it is sky high. SKHY, sky high, and that kind of represents the state of the memory market right now. DRAM prices are sky high, NAND flash memory sky high, and SK Hynix dominates high bandwidth memory, HBM market 57%. And you know, in any given financial transaction, Joe, that there are numbers, right? But I think for the Balance of Power listeners and for the American audience, you know, SK really believed that America understands what's going on in AI from the memory perspective. Yeah. And so from their point of view, it was not just about the money. It was about getting in front of Americans and trying to get them thinking about SK.
Well, and we're told this was 7 times oversubscribed. So I guess the roadshow, to whatever extent there was one, worked. We talk a lot about Micron. They're in the same business. Ed, help our audience understand what makes them similar and what makes them different. It has been to the moon for Micron shares. They're actually down about $6, 0.5% right now, and have come down meaningfully from their highs. Do they make the same stuff?
Yes, they make the same stuff, but there's an interesting distinction. So a big story this week was Micron boosting its investment in America to $250 billion, $250 billion from $200 billion. But to boost capacity of memory chips. They operate in the same market. SK Hynix has 57% market share in high bandwidth memory. Those are the memory chips that correspond to a GPU in an AI data center, and Micron and Samsung make up the remainder of that market. But what you need to know about Micron is that right now, its American output of memory broadly is a few single-digit % of its total output. All of what it's doing is in Asia. So that's really interesting because, like, the main news headline out of my interview with the SK chairman was they're going to come big to America. They're going to invest big. And we can get to that, I guess, in a second. Yeah. But I would just sort of set the playing field. Like, Micron is really in the news cycle right now. It's a big American company, but their footprint's really outside of America, and that's the bit they're trying to address.
Let's hear from the SK chairman who you spoke with right before trading began earlier. Here on Bloomberg, listen.
I have some confidence that the demand will be grow, and our supply capacity never going to catch up. It's going to be until that our society, human society, has that there was some settlement with the AGI. Then, well, I guess that that's a kind of normalize at all the cycles. But anyhow, that until then, well, we need that a lot of memories.
Begging the question, when will it catch up, Ed, or will it? This is a company, as you've reported today, that has big investment plans for the U.S.
Yeah, I think what's so interesting is everyone has a slightly different view of how long there's going to be a shortage of memory chips. And in this context, we're specifically talking about DRAM. A high bandwidth memory chip is layers of DRAM. Micro layers, 12 in the case of the one I held up to you earlier in the earlier edition of Balance of Power. And, you know, the high bandwidth memory market is about just under, I don't know, 40%, let's say, of everything that's being done in DRAM right now. But from a dollar perspective, because pricing is so high, it accounts for it. What the chairman was saying there is very academic. You know, bear with me, Joe. It's hard to pass this stuff. He is saying he thinks that the shortage will end when the humankind reaches artificial general intelligence, which is the holy grail of AI for those that aren't aware. Wow. You can't put that on your calendar.
How's that going to be?
Exactly. I'm not getting my flip calendar and going, okay, I wanted him to say 2030 or 2032, and it didn't go like that. I think that because, you know, let's be honest, English is not Chairman Che's first language. He has a PhD in economics from Chicago, by the way, University of Chicago. Lived a long time in Chicago and in New York City. But if you listen very carefully, he said the supply is never going to catch up with the demand. It's about bridging the gap, and that's why we're pulling this all together. Why are they raising money through US ADRs? Why is he talking up his commitment to invest in America? They are massively committed to ramping up their capacity in Korea, here in the United States, and to continually tap capital markets to do it.
So this is no longer a cyclical industry. The big run-ups, the boom and bust cycles we've seen in the past will not occur again?
So in 2012, when SK bought Hynix, a lot of people thought that was crazy. The memory industry was underpinned by a lot of debt, and it was boom and bust because basically memory chips went into consumer electronics. You know, it followed the cycle of the global economy. If people, you know, stopped buying consumer electronics and they built up a glut of memory chips, you just stopped buying the memory chips, you stopped buying consumer electronics. Now it's more linear. You know, it's just linear being there's a longer field of view for how long the demand vastly outpaces the supply of memory. But it's being driven by something completely different, which is, again, I'm sorry to go back to basics, a high bandwidth memory chip that goes into a data center is just layers of DRAM. So there's a competition between the data center market and the consumer electronics market for where that DRAM's getting funneled. And that's a new dynamic. That didn't exist in 2012.
Incredible. Can I ask you, just because we don't get to spend that much time together on the air, Ed Ludlow, we've got earnings reporting season starting next week. What are you excited about? What are you worried about as we get up to the tech earnings cycle?
Yeah, earnings expectations are incredibly high for the Mag 7, the biggest technology companies in America and therefore the world. Capital expenditures from the big cloud computing companies, that's Amazon, Microsoft, Google, will be a big focus. But probably at this stage, a greater emphasis on evidence, proof that out the other side, companies big and small have worked out something useful to do with AI and are generating their own revenues. I think there's going to be a lot more focus on that going forward. You know, yes, all these chip companies are going to grow massively, top and bottom line. The cloud computing companies will say the demand's there, but everyone's looking for that extra third bucket, which is like, well, hold on, what about all these companies that you say are your customers? How are they doing?
Yeah, wow. Well, it's going to be fascinating, and we'd love your help to get through it. Of course, you can find Ed to that end as the host of Bloomberg Tech every day here on Bloomberg, and I appreciate it, Ed. We'll be watching, of course, SK Hynix. It's up about 16% at the moment. We'll have the latest with our political panel next. President Trump says he will not sign the bill. This is Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. SK Hynix ADRs now up by 16%. The American Depository Research have surged above their offering price after the company raised $26.5 billion in the largest ever American listing by an overseas company. Went out the gate at 149, 172.77 on SK Hynix. Keep it locked into Bloomberg. We'll keep you updated throughout the day on how SK Hynix fares. Stocks are higher. In fact, we are just about the best level of the day now on the S&P, up 22, higher by about 0.3%. We've got the S&P at 75.65. Dow Industrials up 140 on the Dow, a gain of 0.3%. Nasdaq is up 0.2%. The Nasdaq 100 index up 0.3, and the SOX, the Philadelphia Stock Exchange Semiconductor Index, it is up by 0.3%. The 10-year currently yielding 4.56%, with the 2-year 4.20%. Gold down $17 the ounce to $41.06, a drop there of 0.4%. We are looking at a retreat for West Texas Intermediate crude down 1.1%, 71.25 a barrel. Brent holding above 75, down today by 0.7%. Earnings news: Delta Airlines did reaffirm its full-year profit guidance. The shares, however, trading lower after earnings. Right now, we do have Delta down by 2%. United will be among the names reporting next week. It is down by 1.6%. And then we hear from American, rounding out the legacy carriers. It reports the week after. American right now down by 1.1%. So again, recapping, a 16% gain in SK Hynix ADRs. S&P 500 index higher by 0.3%. That, Joe Matthew, is a Bloomberg Business Flash.
Okay, Charlie Pellet will return in about 20 minutes' time with more on the Friday trade. We thank you, Charlie, as we inch our way towards 4 p.m. And, of course, this program followed by Bloomberg Business Week Daily. We'll keep tabs on the SK trade straight through the afternoon. Thanks for joining us here on the Friday edition of Balance of Power. Kaylee's off today, and the president has made it very clear he's not signing the bill. We've not actually heard from him on this, but on Truth Social, this is the bipartisan housing bill that's been knocking around the White House for the better part of a week, even more than that. He's got 10 days to sign it, and the president has decided that he doesn't want to. As we go back to last month, remembering there was a signing ceremony that was to take place on Capitol Hill. In Statuary Hall, the chairs were set, the table with the presidential seal, the Sharpies were there, cameras, lights were lit. When he announced on Truth Social that he was not going to the signing ceremony because he was not able to get enough support for the Save America Act within his own conference. And today the president continues to seemingly punish his own party, going back to Truth Social to write, quote, "I will not sign the housing bill," which has been fully approved by Congress and sent to the White House in protest, he says, there it is on your screen, over the fact that the U.S. Senate is not capable of passing the Save America Act, which he says is polling at 97% with the Republican Party and very high with the non-politician Democrats, as he refers to the other party. The president's been pretty clear about this, and listen, this was an achievement that both Republicans and Democrats were hoping to carry with them on the midterm trail. Many will continue to do so, just without the love and support of President Trump, who doesn't seem to think that this bill does much anyway. This is what he said about it at the end of last month, June 29th.
Here's what I would like to say. Much more than a bill, that big deal. It's a yawn. Some people say it's wonderful. To me, compared to the Save America Act, just about everything is a big yawn.
A yawn, he said, a big yawn. Tyler Kendall, our Washington correspondent, is at the White House right now, where there will not be a signing ceremony, but the law tells us the way this works, Tyler, is it will be on the books after midnight if the president chooses not to veto the bill, and he's not going to do that, right?
Right, Joe, it's expected to become a law Saturday at midnight. There's a few different important pieces of context that we can provide here. One in regard to what you've just heard from President Trump. Industry experts do tell us here at Bloomberg News that the bill is actually expected to have a limited immediate impact because it takes so much time to build up housing supply, and it also doesn't include any new federal funding. So there's no appropriations backing this bill that could make, a tangible difference immediately. But it does have 46
7 different provisions. This is considered to be the most bipartisan and widest-ranging housing bill in really decades for the U.S. Congress, and it includes things like encouraging localities to streamline some of their rules, making other rules around factory-built housing, and then also, importantly, includes that provision related to institutional investors with more than 350 homes from purchasing additional single-family properties. That ban was really critical to getting this White House's support. So there are provisions in here that we know both sides of the aisle would like to tout moving forward. You mentioned it passed on a bipartisan basis. Just to put some context there, we're talking very bipartisan. In the Senate, it was 85-5, and in the House, it was 538-32. The thing is, President Trump, as you heard, says that this is essentially a protest vote when it comes to the Save America Act, that voter ID requirement law. But Joe, the thing is, Senate Republicans have repeatedly told this White House the math just isn't there to pass it as it stands. The math also isn't there to change the procedure. You'll often hear President Trump talking about the filibuster, trying to get around that 60-vote threshold. But at this point, there doesn't really seem to be a tangible path, at least before November, for the Senate to get this done.
Yeah, he's calling for 2 things, Tyler, in this very same post. As he said, if the Democrats, or as he writes, Democrats are not working with Republicans, do not allow a positive vote on Save America, then terminate the filibuster, he writes, in all caps, and pass this and every other bill that true Republicans have ever dreamt of. So he wants the Save America Act to be passed. John Thune has made clear they don't have the votes to do that. So as a result, he says, kill the filibuster. John Thune's not prepared to do that either?
Right. Joe, as you well know, this is something that Senate leadership, including the Senate Majority Leader John Thune, has repeatedly said is not something that is going to be on the table, because it's going to need some broader support to get through the finish line. And many Republicans have pointed out the fact that if they do this now, then that could hurt their hand if they lose control of the chamber, whether that's this November or down the line. It sets that precedent for other governing parties. The Senate is a very procedural-driven body, and they like to have those rules that have really been in place. And that, I think, factors really largely into what has been this pushback to the president when it comes to this bill. Now, we've previously spoken about in weeks prior, maybe some provisions of it could be wrapped up into another reconciliation package. But at this point in time, we haven't really seen movement around that, because that opens the door to budgetary concerns from even some conservatives on the House side, and the process just gets really complicated. So it'll be interesting to watch what else could potentially be stalled or not have the president's sign of approval if the Save America Act doesn't actually advance in a more meaningful way without that path clearly laid out at this point.
All right, Tyler. Thanks for being out there for us. Tyler Kendall on the North Lawn on this Friday as we assemble our political panel for their take on this. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano join now. Rick is our Republican strategist and partner at Stone Court Capital. Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. How do we chalk this up, Rick, if anything other than the president simply punishing his own party over a personal preference here? And I have to admit, I'm almost surprised in retrospect that he canceled that signing ceremony. Doesn't the president love taking credit for stuff? That's what everyone wanted here.
Well, you would think this president loves taking credit for stuff. He usually takes credit for just about everything. Sun comes up in the morning and goes down in the evening, and that's probably all because of him. The reality is that he tried to leverage this very popular bipartisan bill that addresses the affordability concerns of millions of Americans to get a very unpopular bill, the Save America Act you were just talking to Tyler about, to pass through. And I think he's just grumpy by the fact that he's been demanding this bill, Save America, to get passed for quite some time, and he couldn't even get this incredibly popular bill that he held hostage to do the trick for him. So at the end of the day, I think he's just grumpy about this. It is a positive thing. No president would not want to sign a bipartisan bill where 80% of the House and Senate supported it, and it comes at a time when voters really want something done in Washington around the issues of affordability, especially housing. So, just chalk this one up as Donald Trump's having a bad day, didn't get what he wanted. Yeah. This is his temper tantrum.
Well, and I guess as maybe he was intending, he gave a lot of other people a bad day, Jeannie. It's not just ours, it's D's who wanted to have that signing ceremony and let everybody know what they got done. Look no further than Elizabeth Warren, who helped to draft big components of this housing bill. What do Democrats do with this on the campaign trail? Is this still promotable, or are we moving on to the next thing?
It's promotable, and I think what they're going to do on the campaign trail is speak the truth about the president. It's not just that he's having a bad day. It's not just that he's grumpy. He is not signing this bill, the first housing bill in 30 years, because it is not a priority. Issues of affordability and housing are simply not an priority for this president. That's why his approval rating is at about 60% disapproval when it comes to the economy. And the other part of this is, why is the president so bent on this Save America Act, which experts from both sides say will disenfranchise millions of voters going to the polls in a few months? It's part of a long-term quest on the part of the president to take on the election administration in this country and to ensure that what happens in November, he controls the rules. He's, started with mid-decade redistricting. He's attacked absentee ballots. He fired the election commissioners yesterday. He's bullying states into the voter rolls. This is about him controlling what happens in November because he knows he cannot win in a fair and square election. That's what's happening, not just because he's having a bad day or grumpy.
Well, I'll tell you, Rick, some of the analysis that we've heard from Bloomberg Intelligence, for instance, and our colleague Nathan Dean here in Washington, is they took a lot of the teeth out of this bill. They took buy-to-rent out of this bill, a lot of the components that might have actually kept institutional buyers out of the market, and some of the other things that Democrats and Republicans were looking for. Does the president, while not popular to make this point, have one when he says it's a big yawn?
Yeah, I think if he'd fill in the blanks and said the kinds of things you just repeated, I think he'd have a shot on goal saying you haven't done enough. But basically what he's saying is, I'm okay to sign this bill. You just got to send me what I want in addition to it. Yeah. And that's a different argument. And he just can't get out of his own political way to do that. I would say if the Democrats spend all their time talking about Donald Trump on this bill, it's going to be a total waste of a perfectly good bill for them. I mean, you're right. It's more optics than it is teeth. But both Republicans and Democrats will make as much political value out of it as they can. But there's absolutely no value to spending a lot of time talking about how Donald Trump didn't sign the bill. Americans don't really care how a bill comes into effect.
No.
This is going to be a win regardless of what happens at the White House.
I don't remember this on the Schoolhouse Rock, Jeannie, the whole 10-day rule, but, we're learning as we go here. Great panel, and here's good news. Rick and Jeannie will be back for the late edition of Balance of Power that starts at 5 p.m. Eastern. I'll see you both back here at that time. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis. Great panel. Thank you both. We'll turn back to the markets next. Charlie gives us an update. We'll spend some time with Nora Melinda as well as SK Hynix makes its U.S. debut, now up 15% day one of trading. This is
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are higher, and first day out for ADRs of SK Hynix. They are surging up now by 15%. Out the door at 149, 171.39, where we stand on SK Hynix. Indeed, surging above the offering price after the company raised $26.5 billion in the largest ever American listing by an overseas company. We'll have a whole lot more on SK Hynix from our Nora Melinda coming up in just a moment. In the meantime, just getting a headline right now on the Bloomberg involving SK Hynix. Its CEO says the memory chip shortage may persist beyond 2030. Again, shares, the ADRs of SK Hynix up now by 15%. We are on track for back-to-back weekly gains ahead of bank earnings next week for the U.S. stock market. The S&P right now higher by 26 to 75.69. That is a gain of just about 0.3%. Traders driving stocks higher in the countdown to the earnings season. The S&P 500 index now at 75.69, again up by 0.3%. Tuesday, by the way, going to be a wild day for those bank stocks. 5 of the 6 biggest banks will be reporting. We'll hear from J.P. Morgan Chase, Citigroup, Wells Fargo, Bank of America, and Goldman Sachs. Wednesday, we hear from Morgan Stanley. Right now, we do have the 10-year currently yielding 4.56%, the 2-year 4.20%. Gold down $19 the ounce to $41.04, down by about 0.5%. And West Texas Intermediate crude 71.34 a barrel, down now by just about 1%. Recapping, stocks higher, S&P up 0.3%. That, Joe Matthew, is a Bloomberg Business Flash.
All right, now we're talking here. Cooking with gas. Charlie Pellet will be back in 20 minutes, top of the hour, with more on the Friday trade that suddenly gets a lot more interesting. The S&P 500, NASDAQ 100, both now at session highs, and memory stocks just took another leg up. And when I say that, I mean Micron also has turned positive, which had been lower until a short time ago. This is all because of the CEO at the aforementioned SK Hynix in its first day of trading went further than the chair did, Chair Shea, in conversation with Bloomberg's Ed Ludlow. As we were just discussing a short time ago, trying to get our arms around how long the memory shortage might last. How long until this is a cyclical story again? Chairman Shea didn't venture to guess or offer a date, but the CEO of SK just telling Bloomberg News the memory chip shortage may persist beyond 2030. A red headline on the terminal, beyond 2030. And of course, SK is doing quite nicely at the moment. It's up about 15%. Micron, again, turning positive, up 0.5%, approaching $1,000. We're at $997 right now. SanDisk higher by almost 5%. Samsung is up 1.5%. And even NVIDIA catches a bid today. It was higher before this headline, and it's finding a new altitude, up about $7 or 4% to $210 for NVIDIA. Let's bring in Nora Melinda. I want to hold on to this moment for some time if we can, because this is a slightly different market than we had when we even started the show. Bloomberg Markets correspondent with us live from New York. It's incredible, Nora, how one headline can change an entire session.
Absolutely. It's interesting as we're seeing major indexes hitting session highs. But just broadly, this isn't just another IPO. This is also just a sign that investors are pouring money into the companies building AI infrastructure, not just the companies that are making the AI software. And so as you see the double-digit gains that we're seeing on SK Hynix, and we're seeing the broad-based rally across chip makers, tech, and the market more holistically, it really just shows you that the market is really looking toward the tech industry to essentially chart the next steps forward. We know that SK Hynix is already investing about $35 billion in the United States, but we heard from the chairman that he says, quote, much bigger plan. He has a much bigger plan to invest more money in the United States. And of course, we know this kind of sits squarely with Washington's goal. We know President Trump has been wanting a lot of these foreign manufacturers to pour more money and do more manufacturing in the United States. So if you take a look at just Micron earlier in the week, saying that they were going to up their investment to $250 billion from $200 billion. This, of course, is just adding to the optimism that we are seeing with SK Hynix today as we think about what it could look like the future here in the United States as it relates to artificial intelligence and chip infrastructure more broadly.
Chip trade gets a nice boost here. You know who's lower? of course, those who need to buy these chips. Nora, Dell right now is suddenly lower, down about 1%. Apple is lower by almost 1%. And frankly, most of the Mag 7 lower now. These are the companies spending the money on this hard-to-find memory.
Absolutely. So you are seeing a bit of divergence in the market, as you mentioned. The companies that are having to spend tons of money on these chips, we know we're dealing with this shortage. And of course, this headline is just crossing the wire, really boosting the market when we think about memory chip makers in particular. But when you think about the companies that actually have to buy the chips, it's no surprise that you would start seeing people in the market, investors, selling off on Wall Street, as they're a bit apprehensive as to whether or not these companies are actually able to support the amount of money needed to get these chips brought into their companies to continue work efficiently.
Great. Nora, thank you. Appreciate the insights on a busy Friday. Live from New York, Nora Melinda here, reporting live on Bloomberg. Pretty interesting moment. We'll update the markets for you again at the top of the hour, as I mentioned, 2 p.m. Eastern, when we hear once again from Charlie Pellet. The other big story beyond SK that we've been following this hour and throughout the day is what is happening with Iran, with the President of the United States issuing a mixed message in a single post again today, very similar to what he said out loud at the NATO summit, now in writing, as he talks about the Islamic Republic of Iran, asking, he says, the U.S. to continue talks. We have agreed to do so. There's the good news, at least in the eyes of the market. But he says the U.S. has stated to them in no uncertain terms that the ceasefire is over. Both of these, he indicated, he said ceasefire over and said he was open to allowing talks at least to continue while in Ankara. And since then, of course, we've seen 2 straight days of strikes. Things are pretty quiet right now. The president holding his fire for apparently the next leg in this whole fight. And we've been looking forward to talking with Trita Parsi, Executive Vice President at the Quincy Institute for Responsible Statecraft, an important voice in this conversation beyond some of the experts that we talk to, because for Trita, it's personal in a lot of ways. He was born in Iran, but moved with his family here at the young age of 4, moved to Sweden in order to escape political repression in Iran. His dad was an outspoken academic who was jailed by the Shah and then by the Ayatollah. So consider his point of view ahead of this conversation. Trita, it's great to see you. Welcome back to Bloomberg.
Thank you so much for having me.
I'm wondering your thoughts on the way the president is offering this sort of split-screen message, which manifests itself on a day-to-day basis. Sometimes we are talking, sometimes we are shooting. What do we call this?
Well, it's starting to become a Swiss cheese of a ceasefire, and at some point it's going to fall apart if it continues this way. I frankly think that both sides have overreacted. I think it was obviously wrong of the Iranians to shoot at the ships. They're very worried that the U.S. was trying to set up a southern corridor that would be outside of Iran's control. So if the U.S. were to restart the war, which of course the Iranians are very suspicious that he might, the Iranians would no longer have the strait as a weapon and as a leverage. And given the fact that it was crucial for them, it's understandable that they're going to be protective of it. But shooting at the ships was an overreaction. And then, you know, the manner in which the United States responded here was also, in my view, unnecessary. Some response was warranted, but this went beyond that. And it's not that there is an impossibility to get back to talks. There already seems to be some significant efforts. It's that this memorandum period was supposed to be used to actually help build some confidence between the two sides so they could strike a final deal. But so far, it seems that this effort has been a confidence-depleting effort rather than a confidence-building period. And that's very problematic because ultimately that makes it more difficult to get a lasting deal at the end of this.
President called the regime scum this week, among other interesting names. Clearly, there's no trust on our side of things, and that's probably deserved. Do you believe or expect that Iran will trust Jared Kushner and Steve Witkoff enough to make a deal?
No, I don't think either side is going to trust the other. And as you mentioned, the U.S. has now attacked Iran twice in the midst of negotiations, including killing their supreme leader. So trust is beyond what we can expect, but one can trust the incentive and interest of the other side to be a guide of how they will act. And if there's a deal that actually is good for both sides and it's better than the alternative, then you can trust that they will follow their own self-interest in a rational way and stick to it. That's the sweet spot that the two countries have to find.
Remember, help is on its way? President Trump posted that on Truth Social to the people of Iran long before the shooting started. That was before thousands were killed by the regime. And Trita, I wonder if you can tell us anything about the people we never hear about, those who actually live in Iran. We saw the video of people chanting "Death to America" at the Ayatollah's funeral last weekend. But what is their feeling about the regime and this stalemate that we seem to be in?
I think, frankly, this war has galvanized the supporters of the regime within Iran significantly. In some ways, this war has actually saved the Islamic Republic because it was undoubtedly facing a significant legitimacy crisis back in December and January. But just as Saddam Hussein's invasion of Iran back in 1980 actually helped save the Islamic Republic, because back then they had not fully consolidated their power, but an external enemy enabled them to do so. I think the U.S. attack, completely contrary to what Trump thought, ended up doing pretty much the same. Do they have the majority support of the population? I do not believe so. I think their support levels prior to this war was probably no more than 15 to 20%. And after the war, it may have gone up. But more importantly, those 15 to 20% or 25% are now much more intense in their level of support for the regime. Because in their view,
do you believe?
Sorry, go ahead.
Go ahead. Finish your answer.
Yeah, because from their view, it performed. It protected the country against two countries that have nuclear weapons. And nationalism sentiments always tend to take over in moments like this. Whether they last or not is a different story.
I understand. Do you believe that a popular uprising is the only way to topple this regime with or without the help of the U.S.?
Well, I think external help is actually extremely unhelpful. I don't think help ever was on its way, regardless of what Trump was saying. This is something that only the Iranians can handle at the end of the day. Now, there was a lot of belief in that before. The belief in it completely dwindled in the last couple of years, and there was a sentiment, at least amongst the majority, that nothing could happen unless there was help from the outside. Well, now we saw that. We saw the war. We saw what that did, and it certainly didn't help. It was counterproductive. So I do think that this system is going to change, but it's going to have to be because of change agents from inside, Iranians themselves doing it. It may take a very long time. It may not move in a straight direction. In fact, I think it's been moving backwards for at least the last 10 or so years. But I don't see any other pathway.
Well, so do Iranians, the people of Iran, believe that the U.S. abandoned them? Is this some sort of Middle Eastern Bay of Pigs?
Well, for those who actually believed that the U.S. would come to their aid, yes, I think there is a sense of betrayal that they have. I don't think that was the majority. I think a majority had a variety of opinions ranging from never believing the U.S., never believing that the U.S. actually would act in the interest of the Iranian people, but it would act in its own interest. So having a more cynical view of countries, which I personally think is healthy because it's more accurate, to be frank. It's not just the U.S., it's all states. But also those who, because of looking at what happened in Libya, in Syria, in Iraq, in Afghanistan, believe that even if the intentions of the U.S. were good, the capacity to actually follow through and make sure that it's a success was simply not there. We're very skeptical of this in the first place because the track record of the U.S. in the region, particularly in terms of democratizing countries, is abysmal. So I think the majority fell in that camp, and a very small minority, out of desperation because of the repression of the government, were hoping that a war potentially could bring down the regime, and it did the opposite.
Really something. Trita, I've only got about a minute left. If the ceasefire is over, like the president says, we'll take him at his word. Are we starting from scratch?
If the ceasefire is truly over and the MOU is over, because the ceasefire can be over and the MOU is still standing, not only are we starting from scratch, we're starting from a worse situation. Because the war, so if you take a look at oil inventories right now, or the strategic reserve, is much lower than it was in February. So the war would restart at a much worse position economically. The runway the U.S. would have would be much shorter, and we're also closer to the midterms. So it would be a much worse situation. And on top of that, any trust or confidence in going for a ceasefire would be far less than it was before. And it was very difficult in the first time.
I want to keep talking with you, Trita. Thank you for coming on the program today. Trita Parsi is Executive VP at the Quincy Institute for Responsible Statecraft, and we appreciate your insights. I'm Joe Matthew in Washington. A lot more to talk about. We'll pull it together after the bell on the late edition of Balance of Power. Check how SK Hynix closed and give you a sense of what to look for going into the weekend here. We're only hours away from the housing bill becoming law, as long as no one touches anything. Live from Washington, I'm Joe Matthew. This is Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Welcome, welcome. Yay, it is Friday. It is Friday, July 10th, 2026. Carol Masser, along with Isabel Lee. She is in for Tim, who is kind of getting near the end of his vacation, but he'll be back on Monday. But we are great to have you. Great to have you here.
I'm excited. I love the show, as you know. I really love joining you and Tim each time I can get. And it's shaping up to be such a busy day, closing out also a very busy week.
Yeah, a lot, especially in the tech world. And that's where we're going to kind of kick things off. Our own Ed Ludlow settling in here in the studio. He caught up with the chairman of SK Hynix, of course, that one making its U.S. debut, trading here right now up about 15%. So we're going to get into it. The significance of that listing and just SK Hynix, its role, especially in the grab and demand when it comes to memory chips. We're going to get to that. Overall market, a little change, but we'll get an update for you in just a moment, kind of a slow crawl to the weekend. This is a story that I've been a little obsessed when I was reading in, still in my jammies, having my coffee this morning. President Trump firing 2 Democratic members of the U.S. Election Assistance Commission. So I want to get into what we need to know about that.
And the rationale behind it and what it means moving forward, definitely.
Yeah, well, exactly. All right, so we're going to get into that. We've got a view from the C-suite and also really on AI with Chris Stansberry. He's president and CFO over at Lumen Technologies. They just completed a deal this week related to AI workloads. So we'll get into that. And then we're also going to talk a little bit of soccer. We've got a great guest and some significant news when it comes to women's soccer right here in New York. So we're going to get to that in just a moment. First up, though, let's get an update on the trading day. Let's turn things over to Charlie Bell.
All right, I thank you very much. And here's what's going on. The stock everybody wants to know about, that is SK Hynix, right now trading at 171.45, out the gate at 149. Bottom line here, looking at a jump of roughly 15%. The ADR is surging above their offering price after the company raised $26.5 billion in the largest ever American listing by a foreign company. Meanwhile, some headlines out of SK. Its CEO says the memory chip shortages that are roiling the computer, car, and device markets will probably persist beyond 2030. The key takeaway, though, first day out, we do have SK Hynix shares up by 15.1%. The Dow, the S&P, NASDAQ all advancing very close to session highs right now on the S&P. You run the GIP screen on the Bloomberg. You can see right now we got the S&P at 75.67, up by roughly 0.3%. The Dow also advancing up 138 right now, up 0.3%. NASDAQ higher by 65 for NASDAQ, a gain right now of 0.3%. Key takeaway at this hour, we are on track for a second week of gains, back-to-back gains on the S&P 500 index. The SOX, the Philadelphia Stock Exchange Semiconductor Index, up right now by 0.4%. The VIX holding just above 15, and your 10-year 4.56%. Gold down $22 the ounce to 41.01, drop there of 0.5%. West Texas Intermediate crude down 1.1%, 71.27 for a barrel of WTI. Again, recapping here, the Dow, the S&P, NASDAQ, they're all advancing. S&P 500 index up now by 0.3%, and SK Hynix up by 15%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It certainly is. All right, Charlie, we'll be back to you certainly throughout the hour with an update on the trading session. Hey, we have, safe to say, been counting down to this all week. We're talking about the U.S. listing of a giant maker of memory chips. We're talking about SK Hynix. Happened today. It raised $26.5 billion in its American Depository Receipt offering. The South Korean chip maker powering through really what's been a volatile market, certainly in its home market, to deliver the largest ever U.S. first-time share sale by a foreign company. I feel like I should bring in Ed Ludlow first before we go to some sound from your incredible interview. Everybody in the newsroom was watching. He is, of course, the host of Bloomberg Tech on Bloomberg Television. Ed, this was a big deal.
It was a big deal, not just because of the record that you outlined. Okay, the biggest first-time U.S. Share sale by a foreign company. The last, by the way, was Alibaba. So, like, that gives you a sense of the tech company they're in. But, like, with what's happening right now in the landscape for semiconductors and memory chips, you know, SK... It's an eye-watering number, 26.5 billion, but SK Hynix is so capital committed in Korea domestically and around the world. We can get to the US part of that actually, in the scheme of things, 26.5 billion is small. It was as much about getting in front of Americans. You know, that was a part of the conversation. Like, they want the American talent, the American investor. There's a sense that, you know, the US knows about AI as good as anyone does. And so SK was super conscious of that. It's a multifaceted ADR listing.
And you had an interview at the floor, and it was very exciting, and it seemed like they have such big plans for the U.S. To your point, this is really about planting a flag. But then we also had a recent headline that says they might expect a chip shortage to last into the next decade.
So
how do you square that?
So literally what happened was I spent about 40 minutes with SK Group Chair Che Tae-wan. SK Group is the parent company of SK Hynix, as well as others like SK Telecom. SK Hynix has its own CEO, and Bloomberg News spoke to him just after I came out of the NASDAQ. First time he's done an interview, I believe, particularly in English.
Yeah.
And
amazing.
Maybe if I was a bit reflective on my interview with his boss, Chairman Che just didn't get his calendar out and mark the date that he sees this memory shortage easing. But the SK CEO, he definitely did. And so what he said was this goes way beyond 2030. Compare and contrast, I think Micron said 2028 is when you start to see supply catch up with demand.
That's a bit of a ways out, to say the least. So in terms of that demand, it's going to be here for a while. Let's get a little bit, though, for everybody. Let's share some of your interview with the SK Hynix chairman, Che Tae-wan, catching up with Ed earlier this morning. Check it out, everybody.
The SK already investing at more than $35 billion in U.S. side. My plan is at a much bigger number. So
bigger than 35
yeah,
billion.
well, much bigger than 35. I have some confidence that the demand will be grow, and our supply capacity never going to catch up. It's going to be until that our society, human society, has set some settlement with the AGI. Then, well, I guess that that's a kind of normalize at all the cycles. But anyhow, that until then, well, we need that a lot of memories.
And that, of course, was SK Hynix chairman Che Tae-wan catching up with Ed Ludlow. An in-depth conversation. Highly recommend everybody kind of check it out on the Bloomberg or at Bloomberg.com to listen to all of it. Ed, I think I've asked you this before. I can't tell whether something like this is a sign of a top or it's also a sign of artificial intelligence. What's happening here is a global thing, and the significance of this listing here. Like, I'm trying to put it together.
I mean, it was a more than 30-minute conversation, but hat tip to the editor. That was a pretty good supercut because we covered so many things. And on the I think what you're asking about in the first, about.
I think that might have been our producer Talia who did that.
Super good. On the issue of a bubble, right? I think and threading together all of that. I think the main point is that he is saying, based on our customers, the buyers of memory chips, we see the world working out as follows for the next several years. Something right in the middle there, so important that was picked out. Supply may never catch up with demand. So there will be this imbalance forever, which is kind of difficult to get your head around when you remember that memory markets typically have been cyclical, boom and bust. That largely related to consumer electronics, not data centers. Yeah.
What has to happen for that demand to maybe be in perpetuity, dare I say?
Yeah.
What's on the user's end has to happen for that?
Well, okay, so the state of the world right now is that lots of data centers are being built. There's still a mix between those data centers that are being used for training AI models and those that are being used to run the models in the phase known as inference. But at some point, inference becomes a lot more of the market, and the memory requirements are different. I don't know if I'll get in trouble or not, but we're talking about this tiny little thing for those watching on television and YouTube. This is a high bandwidth memory chip. It is 12 layers, about the size of my fingernail. It's about 12, this is literally 12 layers of DRAM.
Right.
DRAM goes in lots of places, not just data centers. So right now, what's exacerbating this market is that there are competing forces. It's not just AI.
Right.
It's that consumer electronics need DRAM. DRAM pricing, by the way, it's kind of commoditized still. It still goes way, way, way up. The irony is right now, the PC market, the smartphone market are a little bit depressed because of the high price of memory. And the high price of memory is all because the demand from data center is so great. And so, it's a multifaceted equation.
I love that you brought that. I've never seen one in real life, so thank you. Maybe, can I have it? I'm kidding.
No. I mean, this is a sample, but this thing, thousands and thousands of dollars. Sure. So I'll put it under the mattress for a rainy day.
Yeah,
good.
Exactly.
That's a good investment. You sat down with Che Tae-wan. He's the chairman of SK Hynix. What was your sense when you were talking to him? We know that they're rivals like Samsung and Micron.
Yeah.
And they're getting better and better in high bandwidth memory. Can SK Hynix keep
again, this is a high bandwidth memory chip. This is HBM4E, the 4E generation, but it is 12 layers of DRAM. And specifically in this market, HBM, SK Hynix has 57% market share. So Samsung is the much bigger beast in memory overall. It includes DRAM, NAND, flash. So SK's, that was a technology breakthrough for them, a technology decision. I asked him, can you catch up with Samsung?
Yes.
The guy paused. And he was like, and he looked me in the eye and said, and literally said, I am not going to answer that question. And, you know, to him, he's not accountable to Samsung. He's accountable to, I think he said, his stakeholders, his investors and his customers. Yeah.
To be continued.
Sure.
I don't even want you to go back home, but I know you have a lovely family that you need to, and an adorable little boy that you need to go home to, as well as a wife. So, Ed, you gave us lots of time, great interviews, good coverage, incredible coverage. And like I said, everybody should check out his interview with the SK chairman. Be well, safe travels home. Ed Ludlow, of course, the host of Bloomberg Tech on Bloomberg Television. You can catch it at 11 a.m. Wall Street time on Bloomberg Television. All right. Big day, certainly, watching tech, and we'll continue to do that as we count down to the close. Got to get to, though, something that is definitely on our radar, and that has to do with President Trump firing 2 Democratic members of the U.S. Election Assistance Commission, an agency charged with helping state facilitate accurate elections. And the Republican member resigned, a White House official said. That would happen late last night, or last night, I should say. Hey, reporting this out is Bloomberg News White House and Washington correspondent Jeff Mason. He's there on the White House North Lawn. Jeff, dying to get to you. Feels like a big deal. Is it a big deal? Walk us exactly through what the president did last night. And can he do this? And do other presidents do this?
First, yes, it's a big deal. And yes, he can do it. And he can do it in large part because the Supreme Court just paved the way for him to do that with its decision at the end of June in the Slaughter case, which allowed him to fire a member of an agency, even independent agencies, because he is the head of the executive branch. And that Supreme Court decision upended decades of precedent and handed more power to this president and to his successors. And the White House official who I spoke to last night confirming this specifically mentioned the Slaughter decision when saying that the president had the right to do this and had decided to do so in part because he didn't feel, in relation to the Democrats, it sounds like, that they were committed in the way that he wanted them to be to rooting out election fraud. Really important asterisk to put next to that right now, of course, is that the president has been claiming falsely since 2020 that that election was fraudulent, and he likes to paint the entire electoral system in the United States as fraudulent when that evidence is simply not there. But this is another example of him using now that new authority that he has to tackle elections in a way that other presidents have not.
What is the responsibility of this commission for those folks, who might be listening, watching, who don't really know? Tell us what the responsibilities are, the actions that they do when it comes to elections.
So my understanding is that they help states. Elections are run by states. So this is an organization that supports states in that and in accuracy and in just basically supporting them in the electoral process. And there are multiple organizations and a few other agencies that help with that. I have to confess, this one wasn't super high on my radar, which also makes it still interesting because it was apparently on the president's radar. And could this be a foreshadowing of more firings, of more action against agencies that are involved in elections? TBD.
In your reporting, did your sources indicate whether this decision was made by President Donald Trump himself, or was it driven by White House staff or legal advisors, or does it even matter?
Everything is driven by the president. So, this is, he makes decisions on firings. Obviously, there are staff around him who can advise him and who he can seek counsel from. But the president drives the train from the White House. And I've covered multiple White Houses, and I think it's fair to say that this one in particular, President Trump is involved in all of the decisions. And this is not something that could have been done by a junior staffer or by even a more senior staffer. This is something that came directly from him.
Yeah.
I'm confident in that.
Jeff, safe to say the midterms are definitely on his mind. Will he drive the train in naming new members to this commission? If he doesn't, I don't know, what does that mean for the midterms? As you said, very much, done by the states, but I'm just curious how we should think about that. Is there no oversight, an important oversight group missing?
Well, again, good question, and I don't know the answer to that as to whether or not he's planning to nominate new members for the commission. As you rightly said, it's not just the Democrats who left, but also a Republican who left. So it's empty now, and if they want it to be filled, then he would need to fill it again. But this comes at a time, as you well know, that the president is also pushing really hard for this Save America Act, which would also clamp down on mail-in voting and require proof of citizenship for voting. So it's just one piece of a larger set of actions that the president is working on to impact elections. And his critics would say, largely to try to give himself and his fellow Republicans an advantage, both in those midterms and in the 2028 presidential election and elections after that as well.
And again, we should, as you did, rightfully so, Jeff, point out that there was no fraud, and there was a lot of investigations and work into that to show that there was no fraud in the 2020 elections. Having said that, I got to ask you about the Middle East. Peace talks going on. What do we know? I'm not quite sure what to think about. What is the right narrative when it comes to what's going on between the U.S. and Iran? War? Peace talks? I don't know.
I'd rather you ask me about the Middle East than DRAM. I was listening to your previous conversation.
Hey, that's next.
I'm glad I'm not in on that one. The Middle East is always a huge topic here, and has certainly become an even bigger one again in the last few days after the fighting started again between the United States and Iran. The president gave mixed messages during his press conference in Turkey when he said, during a couple different press conferences, I should say, and in one of them he said he didn't want to deal with Iran, but then a White House official told me last night that technical level talks are continuing between the United States and Iran, even as we were just saying that there were strikes from both sides this week. So it's a little hard to parse here. The president clearly, trying to thread that needle between wanting a peace deal and wanting to end this conflict, particularly because of the political and economic ramifications that it has created for him and his party, but at the same time showing offense at how he felt Iran was treating the U.S. And not respecting the terms of that memo of understanding that led to the ceasefire in the first place.
Figuring out the Mideast for me is DRAMs to you, Jeff. I'm just going to say.
You got it.
I can't figure it
out. Totally.
Be well, my friend. Good to check in with you. That is Jeff Mason, Bloomberg News White House and Washington correspondent there on the White House North Lawn. When we come back, we're going to get a view from the C-suite, kind of timely with corporate earnings kicking off next week. Lumen Technologies CFO is going to be with us.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks holding close to session highs. The Dow, the S&P, NASDAQ very much in the green. SK Hynix, the ADRs in focus right now, looking at a gain of 13.5%. The ADR is surging above their offering price after the company raised $26.5 billion in the largest ever American listing by a foreign company. Again, SK Hynix up now by 13.5%. The Dow, the S&P, NASDAQ higher, as I mentioned right now. Stocks higher in the countdown to earnings season. S&P 500 index up 24 right now, 75.68 where we stand. That is a gain of just about 0.3%. Dow Industrials up 163 on the Dow, gain of 0.3%. NASDAQ Composite up 63. That is a gain of 0.2%. On an update for much of the market, small caps are declining. The Russell 2000 index of small cap shares down now by 0.4%. The SOX, the Philadelphia Stock Exchange's semiconductor index, a little change now, up by about 0.1%. We've got the 10-year currently yielding 4.56% with a 2-year 4.21%. Gold is down $21 the ounce to $41.03. The precious metal now lower by 0.5%. West Texas Intermediate crude down 1.1%, 71.24 a barrel on WTI. Earnings news, Delta Airlines lower after earnings. The carrier did reaffirm its full-year guidance, saying there is strong demand for premium, corporate, and international travel. Delta shares down now by 2%. United reports next week down 1.8%. And American the week after that, it is down now by just about 1.9%. Briefly, EasyJet says it has received an offer from private equity firm Apollo Global Management that will beat a rival proposal from Castlelake, now in the UK, Apollo offering 715 pence for EasyJet. Again, recapping here, S&P 500 index up 25, gain there of 0.3%. SK Hynix up 13.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Isabel Lee in for Tim Stenbeck this week. On a day when memory maker SK Hynix debuts in the U.S. and we're nonstop talking about the AI build, the AI spend. It is the major narrative again this year. Our next guest is a great get, playing into the broader narrative of AI and next steps for it. We are talking about Lumen Technologies. Just this week completed its acquisition of Alkira. I hope I'm saying it correctly. It's an on-demand networking platform that helps enterprises connect clouds, partners, and AI workloads. So we're excited to talk to the CFO and president, Chris Stansberry, over at Lumen Technologies. He joins us from Denver. He's featured in this week's CFO Briefing newsletter, which will be out from Bloomberg this weekend. Also with us here in studio, she puts us all together. Nina Tretman, Bloomberg News senior editor. She's editor, too, of the CFO Briefing newsletter. You can subscribe to it at bloomberg.com/CFO-briefing. Chris, Nina, of course, Nina, great to have you back. Delighted. Chris is with us. Chris, I want to kick it off with you, if we may, and get this going. You did just close this acquisition of Alkira, and forgive me if I am mispronouncing. Tell us what's the rationale for this transaction. What does it give you?
Yeah, and you got the pronunciation right. It's really revolutionary in the networking space. If you think about historical enterprise networking, it was point-to-point connectivity. It was very commoditized and, frankly, very clunky and hard to consume. And when you think about an AI-driven world, it's not just about connectivity from your company to the cloud. That's what we would call north-south traffic. It's really now rapidly becoming the need to move traffic and workloads between clouds, or what we would refer to as east-west traffic. That's where the problem exists for enterprise today. And what Alkira brings us day one today is really the marriage of that cloud-to-cloud, east-west traffic with the company-to-cloud north-south traffic that Lumen already had. So it's really creating a new category at the right time.
Yeah, thanks, Chris, for joining us. I'm curious, could you talk a little bit about how this could impact your outlook as a business? I know that you spoke to investors earlier this year and provided projections for this year. Like, how does Alkira change the business case for you as Lumen?
Yeah, it really changes it tremendously. I mean, for a couple of reasons. When we laid out our financial projections at Investor Day earlier this year, we were planning on building that east-west capability, that cloud-to-cloud capability, which was going to take a couple of years and a couple $100 million to do so. When we saw what Alkira had to offer, which was that and more, we moved very quickly to acquire them because it brings us that capability today. So what we're doing right now is actually just on a meeting before this is looking at the roadmaps, how quickly sales plays can be developed. And over the course of the balance of this year, we're going to be going hard at how we can accelerate our revenue. Now, a couple of just data points below that. What that means is we're not a telco anymore, right? We are not focusing on the legacy business. We'll have solutions for customers who use voice products, but that is being de-emphasized. The full energy of Lumen is going into the digitization of networking. The second thing is that since closing the deal where we can get teams in rooms, the early read is that what we've acquired is even more special than we thought. And so we're going to do everything we can to bring value to shareholders as fast as possible.
Your share price is down about 12% since the beginning of the year. What does that tell you? What's behind that drop? And how concerned are you also with investor concerns more broadly about AI frothiness? Do you expect to be hit by that?
Yeah, so I think there's a couple things. We're still valued like a telco that's underperforming. I don't think the market has really looked at the fact or realized the fact that over half of our revenue is in this growth area, and Alkira only supercharges that. So I think with time and education, that fixes itself. As it relates to the AI volatility, there's a lot of talk about a bubble, and candidly, we're just not seeing it. If you go back in time, when the predecessors of Lumen, Level 3, for example, built these big networks, they were building them at the time the internet was coming about, and really that was a solution looking for a problem. This is the exact opposite. The problem is real, where data volumes are exploding. The data is getting further and further away from where companies need to access it. They need to quickly move that data to where workloads can be processed on GPUs. And oh yeah, throw in energy constraints, which only make that more complicated. Am I sending the data to the right place? What we have in Alkira now is the nervous system, if you will, of AI, and that's needed by whoever the winners are going to be. So who the winners and losers are is less important to us. We are deeply ingrained in a lot of the AI infrastructure that exists today, and the capabilities that we now bring to market allow enterprise to program it in a programmatic way, manage their networks, which has never been able to happen before. This is gonna turn networking upside down.
So, Chris, you mentioned AI. When do your AI investments start translating into earnings growth? Because your valuation has rebounded, but your EBITDA is still expected to decline this year.
Yeah, actually, our EBITDA will inflect this year. That's a commitment that we've made to the street. It's not a huge inflection because we are still managing that legacy base, but it will grow from there. And we expected at the time of our Investor Day revenue to inflect in 2028. Again, the work that we're doing right now between now and the end of the year to accelerate that will inform, if we can pull that forward or not. But the early indications are we can. So it's starting to show up. The big builds that we did with the hyperscalers are 20-year agreements. So that revenue is slow to move in. Those projects are on time, well underway, and bring great margin to Lumen. The thing that we're not going to chase is a bunch of new build it and they will come builds, because there's just no return in that. Our focus is really on monetizing the soon-to-be 58 million fiber miles that we have in the ground from 12 just a few years ago. and really unlocking the network in the cloud, bringing things like firewalls and zero threat and load provisioning in the network fabric itself. So the opportunity here is for enterprise to really have the easy button for network consumption and not have to engage in co-location facilities and firewalls and a whole bunch of complex equipment wired together to make networking work. That's where this goes from here.
Thank you, Chris. Just wondering, you also, of course, closed an acquisition, a sale earlier this year to AT&T. You brought in over $5 billion selling your consumer business to them. You improved your finances quite a bit since then. You restructured debt earlier, but you also at the time axed your dividend. What's your message to investors with regards to the dividend going forward?
Yeah, really the message is this is about growth. And every resource that we have is focused on growth right now, and we see lots of opportunity to invest those funds in an ROIC manner that is very accretive to shareholders. So that's our focus. But again, I want to just touch on what you just said. What allowed us to acquire Alkira and really revolutionize enterprise networking is all of that restructuring, selling non-strategic assets, recapitalizing the company, fixing the maturity curve, going from 3 credit entities to 1 so we have alignment across all of our investor base. It's been an enormous amount of work, and Alkira was really that, as well as the adoption of our network as a service product, are really the first indicators of where we're going, and we're just getting started. So we've moved from defense to offense, and here we go.
Chris, just got about 45 seconds left here. I want to go back to where we started, talking about the closing of Alkira. You also closed the sale of your consumer business to AT&T. So any other deal making to further build out what you call the nervous system of AI? And again, just got about 45 seconds.
Yeah, we've got a lot to work with Alkira already. And again, as I said, we're finding more and more in that. But we will certainly look for things that expand that footprint and keep our lead in place. We'll also look at options around the legacy business and continue to do that. We have been doing it. But as I said, we're de-emphasizing that. We're really focused on the new way of networking.
Well, a super perspective, certainly on AI. And I, too, from what you're talking about, are hearing a very different tone, not so much focus on the data centers, hyperscalers necessarily, but how do you, as an organization, kind of coordinate all that data that's across different offices of the company, if you will. Chris, great stuff. Chris Jansbury, he is President and CFO of Lumen Technologies. Chris joining, of course, our own Nina Trentman, Bloomberg News Senior Editor, editor of the CFO Briefing newsletter. You can subscribe at Bloomberg.com/CFO Briefing. A new one is out this weekend. Check it out. For more coverage of CFOs, check out the latest episode of the Chief Future Officer series. There's one out right now featuring the CFO of Wayfair. I caught up with in Atlanta at their new 150,000 square foot store. Yes, indeed, their store. All right, we're back in a moment.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ very much in the green. S&P 500 index on track for a second week of gains. So far this week, up by roughly 1.2%. The big stock focus today, SK Hynix. Its ADRs surging above their offering price. This after the company raised $26.5 billion in the largest ever American listing by a foreign company. Right now, we do have shares, the ADRs, advancing 13.1% out the gate this morning at 149. Last price quote, 168.59. Again, a gain of roughly 13% on SK Hynix. S&P up 0.4%, higher by 27 points. The Dow up 0.3. NASDAQ right now up 77. For NASDAQ, a gain of 0.3%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, up by 0.1%. The 10-year, 4.56%, with the 2-year, 4.21%. Gold now at 4,100 even the ounce, just ticking below that, down $24, down 0.6%. Crude WTI down 0.7%. West Texas Intermediate crude slumping 0.7%, 71.57 a barrel. Interestingly, though, the oil majors all higher right now. ExxonMobil up 0.4%. Chevron up 0.5%. ConocoPhillips up by about 0.2%. Again, recapping, SK Hynix is advancing by 13.1%. The S&P up by 0.4%. I'm Charlie Pellet, Isabel and Carol. That is a Bloomberg Business Flash.
All right, much appreciated. Charlie Pellet there. Hey, against the back of the World Cup, something that caught our attention, and that is the Gotham Football Club announcing that the club will play their home matches at New York City's football club's new stadium. It's Etihad Park. It's starting in the 2028 season. The club's initial lease at the venue lasts 5 years, options to extend it up to 15 years, according to some reports. That makes it the first women's professional sports team with a permanent home in New York City. And it is I do too. A major milestone that reflects a long-term vision of building one of the world's most iconic women's sports clubs. And we have some other news. Gotham also recently announced it signed one of the world's top women's soccer players in Australian striker Sam Kerr, playing for the club from 2015 to 2017 before leaving the NWSL to play for Chelsea in the UK. So there's a lot going on. Let's get to it, because with us is our own Vanessa Perdomo Maglione. She is Bloomberg News sports business reporter, co-host of the Business of Sports podcast. She joins us out there in our Bloomberg newsroom in Princeton, New Jersey. Delighted to have two back with us. Carolyn Tish Blodgett, governor and lead owner of Gotham Football Club, National Women's Soccer League team, of course, founder and CEO of Next 3 Ventures. That's an investment firm in sports, media, and entertainment. Also co-owner of the New York Football Giants, a member of course, the Tish family that has long owned the team. She joins us remotely in New York. Vanessa, I'm going to let you kick it off, because, man, this is your world.
You know, thanks, Carol. And Carolyn, it's great to talk to you always about everything going on in Gotham. Next week is going to be a huge week, you know, kicking out in Queens for the first time with the Queens Classic. Almost 40,000 tickets have been sold already. 70% of those is first-time purchasers, which is I'm really interested to hear your take on why you think that is. Is it because of all the excitement of the World Cup? Is it because the World Cup finals in the market a couple of days later? Is it New York versus New Jersey? What is it for you, Carolyn, do you think?
Yes, well, it's so good to talk to you again. I really appreciate you having me on the show. So a few things. So yes, just to explain what we're talking about with the Queens Classic. So Gotham will be playing the first ever professional women's soccer game in New York at Citi Field on Wednesday night. That is a few days before the finals, as you said. And when we made the decision to play this game, we knew that we didn't have access to our current stadium at Sports Illustrated Stadium in New Jersey because they're having a watch party. But we said, you know, the World Cup is coming to New York. Everyone, all eyes are on soccer right now. We want to be a part of it. We want to lean in. And so we created the first ever Queens Classic. This will be our first time playing there. And as you said, the excitement, the momentum around it has been tremendous. So just to put so right now, as of this morning, we're at 38,000 seats sold. We set out to break the New York women's sports record, which is 28,000. So we are on track to beat that. And just to put those numbers in perspective, our average attendance when we came in as new owners 2.5 years ago was about 4,000. So to get a stadium almost full, hopefully sold out by Wednesday, full of 38, 42,000 people all watching a women's professional soccer game it's really part of the vision that we set out to from the beginning, but it's a bit of a pinch me moment when it happens.
Carolyn, we've talked a lot about how, having the World Cup in this market, how do you capitalize on all the attention that's happening on soccer? Sounds like you're kind of doing that with the Queen's Classic already, but how do you take those first-time purchasers and turn them into lifelong fans?
Yeah, absolutely. I think that is the goal of every team, every league. That is really our duty, is to take these national, global moments like a World Cup every few years and turn them into lifelong fandom. The Queen's Classic is certainly part of it, but I'd say it's just the beginning. I think, as you said, 70% of the people that are coming to the Queen's Classic are first-time buyers. So now it is on us to bring them, so first of all, show them a great product, show them a great experience, so both the players on the field and the fan experience around it, and then bring them into the fold, have them understand, you don't have to wait another 4 years to see World Cup soccer. We have many players on our team that are World Cup winners and World Cup competitors every few years. So that's really on us as team owners and league stewards to then bring that fandom back into the teams and leagues.
A lot of World Cup winners on your team, Carolyn. As we're talking about, this year's World Cup and the U.S. and the men's World Cup, do you think, as we've spoken, did the men's team, in their departure in the round of 16, does that have any impact, do you think, on what you and other team owners were expecting to be a huge boom for soccer? Are you seeing any damper on that, do you think?
Yeah, obviously a disappointment. I wish I was on a plane to LA right now going to watch the U.S. team in a semifinal game, but I think we all do. But I think it doesn't take away from what this team has done for this country, I would say, more globally. I mean, I think this country has never felt more united than it did maybe Monday afternoon before the game, or Sunday night rather. And so I think this, I think the team overall really brought this country together in a really special way. But when I think about it from a soccer perspective, people are continuing to watch. I mean, you saw the Mexico-England numbers, which was, separate from the U.S. game. So again, I think the World Cup is bringing in these moments of, bring in a casual fan. And then we then as team owners need to convert that into our fandom. But I don't think that changes with the U.S. out of it.
Hey, Carolyn, this is Carol here. I wanted to jump in. We announced in the lead about your guys' plans to play home matches at New York City's football club's new stadium. Why is it right to make this move, play in Queens starting in 2028? And I'm curious how it might, in your view, kind of expect it to maybe improve the business.
Yeah, so when we came in as new owners, really just 2.5 years ago, there was really a question of if this league was going to survive, if a women's professional soccer team could exist. Now the conversation is so different. Now the conversation is, what is the best possible venue for this team that has very large ambitions? Where is the best possible place for this team to play? And our decision was to move it to New York and play in Etihad Stadium, which will be truly a world-class venue. And so if I think about, when we came in as new owners, we said, there's no professional women's team that is really a global brand. There's when people say what their favorite brands, soccer teams, or when they say their favorite soccer or sports teams are in the world, they really never say a women's team. And our goal is to be that first team. To do that, we have to match the ambition of on the soccer side with the business team, and to be able to play in the greatest sports city in the world in one of the most beautiful venues that will ever exist. That is why we have to go play at Etihad Park.
And Caroline, we have just about 30 seconds left. Why is MetLife the right place for the World Cup final in your view?
Absolutely. We are so excited to be hosting the World Cup final next weekend. As I said, New York is the best sports city in the world. We will have, obviously, people will be coming from around the world to experience it, but they will get to experience every culture, every different restaurant, every different kind of all the creative options there are to do in New York. And I think you can only do that in New York.
All right, we're going to leave it there. Thank you so much. Carolyn Tish-Blodgett, she's governor, lead owner of Gotham Football Club, founder and CEO of Next 3 Ventures, and of course, co-owner of the New York Football Giants. And I've just got to say, Carolyn, as a longtime Giant fan, I'm looking forward to the fall season. Thank you, thank you, thank you. And of course, our thanks always to Vanessa Perdomo Maglione. She is Bloomberg News sports business reporter, co-host of the Business of Sports podcast. Find it wherever you get your podcasts. Stocks on the Move when we come back.